Hey, what's good, team? Thanks for joining me on another episode of Chat with Traders. This week, we're pulling back the curtains and shining some light on the often dark and mysterious inner workings of our financial markets. Folks, meet Peter Zhang, a major in quantitative finance who was once without a home, dirt poor, and had the odds stacked against him. But with a point to prove and the hustler's ambition, he chased down a mentor who carefully showed him the ropes and gradually transformed him into a trader who could make smart decisions and smart trades. Fast forward a few years, Peter now leads the hedge fund operations at Xauusd Capital Partners, including a completely automated high-frequency trading fund. He also has a mind-blowing understanding of market structure, as you are about to witness. But just before we get into it, don't forget the Lucci Method giveaway is now in full swing. So if you haven't entered already, be sure to make your way over to chatwithtraders.com/giveaway and enter now. The Lucci Method is a premium trading package offered by today's guest Pete and his team at Xauusd. You can purchase this any day of the week for $2,699. But for listeners of the show, we have one to give away 100% free. So the Lucci Method includes an extensive session with Xauusd. And there's a bunch of other things the guys are throwing in there as well. So to enter, just go to chatwithtraders.com/giveaway. You'll receive an additional 10 entries. So if 10 people enter through your unique URL, you score 100 entries. It's very easy to dramatically increase your chances of winning. Alright guys, now brace yourself. We're about to go deep into the markets. Here is this week's interview with Peter Zhang. All right, Pete, what's going on, man?
Not much, man. How are you?
Good. How's your day been?
It's been busy, as usual. You know, I'm always running around, juggling a million things.
Fair call. You've got guys in the office this week for the live Lucci Method, is that right?
We do. We certainly do.
How's that going?
It's gone. We actually have Lucci filming on the other side of the offices right now. He is yelling at half the people in there, so I think it's going well.
Nice. Sounds good. Well, thanks for coming on. I really appreciate it. And there's a lot I want to talk to you about today, especially market structure and a little bit about automation too. So both really interesting topics, and I know you know a lot about both. So and of course, if you want to add anything or go further into a certain topic as we're going, then feel free to do that.
Sure, will do.
But I mean, before we get into that, I know you have a really interesting story on how you came up. So do you want to just take us back to the beginning and, you know, tell us a bit about where did it all start for you?
Sure. The very beginning, huh? All right, so let's see. The very beginning, well, I studied essentially finance, quantitative finance, which is, you know, pricing options, present value, future cash flows, stuff like that, econometrics with a minor in math and economics. So I had a pretty early exposure academically to I guess the markets. None of this was actually really, applicable for a long time. And so this was back in so I went to school 2005. It was about 2008 when I started actually trading. Didn't have much money. So actually, just like the majority of traders out there, the first thing you do is you go online to look at kind of like what the heck can you trade. So found out about shorting pump and dumps. And even though I was learning, Black-Scholes equation, Monte Carlo simulations, and programming in Java and C++, I still gravitated towards, shorting pump and dumps because I had a small amount of money and seemed like, easy way to, make some cash flow. Open up an account, blew up a couple of accounts, it was a rocky road at first, and then nailed a couple big options trades. Actually, I had a Thinkorswim account at the time. Nailed a couple big options trades, and then continued to kind of explore the future space. Open up a prop account, which I was doing okay in. And I guess the interesting side of the story is the life side of the story, I guess. So at that time, I was relatively young. I was just getting out of college in 2009-ish. And in 2009, quantitative finance or financial engineering was frowned upon by the entirety of Wall Street because that was right after the crash. And they blamed the quants for not knowing what the heck they were doing. So even though my graduating class only had 7 people in, my major, we were, seen as pariahs. And so there weren't really many jobs out there for me. And honestly, I wasn't the best student. Always loved to cut corners, always loved to get in trouble here and there. And so, studying wasn't my forte, and also obeying other people's rules was not my forte either. So any job that I had, essentially I found a way to make money at the job by going around my bosses to their bosses. And so always, had a great time getting in trouble with employers. And so at the time, still trading, actually had gotten married, moved to Florida, had a tiny futures account, which was not doing too hot. And, unfortunately, because, kind of the natural progression of, moving and just getting married and then not having a stable job and not making that much money in trading, I actually got divorced. And it was probably one of the, worst times in my life at that time. And so, thankfully, I was, under the tutelage of some decent traders out there. They saw some hope in me, and this was actually Kunal from Bulls on Wall Street. That's where I originally started learning more in depth about, a little bit of technical analysis, developing stomach tolerance and all that type of stuff, and also helping build businesses. At that time, Bulls on Wall Street was also just a fledgling, and at that time it was just Mary Beth, Kunal, and myself. I was scanning through 400 stocks a night, learning the double bottom booty bounces and stuff like that. And I got pretty good at it. Any money that I made at the time, I essentially sent back to my ex-wife, and it was a very depressing moment in my life, and I was actually homeless for a little bit. Whenever I could get my hands on a computer or some Wi-Fi, I would be looking at charts, talking to Kunal, and trying to get my life together. Found a couple odd jobs. Fast forward a little bit. Traded myself out of being an idiot. Actually, through a bit of scalping, did relatively well on a couple of accounts. And essentially, at that time, whatever money I did made was sent away, and I really only had about, always fluctuating between negative $50 and like $100 in my bank account. And so, after spending a lot of time online, I met, I found out about Xauusd, crazy options trader. I had some options background. Thought about it academically and thought about, what Lucci was doing generally with his returns and how he was a good trader and how he had a good reputation on the street. And so I told Kunal that, I wanted to go meet Lucci. And all I had was $60 in my name at the time, which you can actually buy a ticket from LA to Las Vegas with $60. And so what had happened was that Tim Sykes was actually putting on a show at the time in Vegas. Kunal was going to be there, Lucci was going to be there, and I was like, I got to go to this thing. So I go with all the money that I had, expecting that Kunal was going to pay for everything for me. I crashed on his floor for the few days that I was there, and somehow I convinced Lucci to start a hedge fund together. And I was like, hey, you've got great returns. We should start a hedge fund, start expanding out some operations. And so he was like, whatever, this is some crazy kid that wants to do something. And so he actually said, "Hey, stay in touch and let me know if you actually want to do this, and if you can get all the backing together, all the work together, and do all the legwork. I'm down." And so, fast forward a little bit, we end up in New York, and we started St. Lucie Capital Partners, and Lucci has been trading that. He has been the head trader there. And the time in New York that we spent together, we bumped into Chaim Bodik as well. There's a whole entirety of a story there. I won't go into too much depth there, but kept going and kept going. Formed another hedge fund that is actually now a fully automated high frequency trading fund. It's pretty fancy. We picked up Ezra Rappaport, which hopefully you will get to speak to at some point. We kept expanding. We were at a loft at first. Everybody knows the infamous Lucci loft. We were there for a little bit of a while, expanded operations, made some money, beefed up the educational business. And then now, we are kind of guinea pigs for WeWork, the co-working space. So they actually shove us into their new offices to show off because we have so many screens. And lo and behold, we've got 2 hedge funds now that are running very well, and we're here now.
Awesome. That's quite a story. Let's just backpedal a little bit. So in the first place, where did the interest in trading actually spark from?
The interest from trading sparked from the idea of not having to work for anybody. I had the general inclination for disobeying bosses and stuff. So I was just like, I need to find a way to be sustainable on my own. And, growing up as, first generation Chinese out here also, you have something to prove. Usually I feel like that is the trader story. They want to prove something to either themselves or to somebody else. So.
Yeah, I think a lot of people could relate to that one. So you've got some pretty serious qualifications behind you, such as the major in quantitative finance, etc. A lot of traders don't really go down that path of trying to get a higher education. So what was your motive in taking this route? Were you trying to end up in investment banking, or do you want to dive into that a little bit?
I actually did not want to even do it. My first year in college, I wanted to go become somebody in the field of physiology, and wanted to go down that route. Quantitative finance was actually something that my dad had forced me into. It was kind of like, you either do this or we're disowning you type of deal. And so there was a lot of resentment. Honestly, was not my cup of tea. Found some things I liked here and there. More along the lines of econometrics and learning how to follow like logic trees, backwards and forwards and all this type of stuff. But honestly, I did not like it. It was not my cup of tea. I did not want to do it.
Okay, sure. So I'm sure it's helped you out a lot to where you get to where you're at right now, though.
Honestly, this is something, I've actually gone back to James Madison, my college, and I've actually talked to former students or students that are there now. And honestly, I would say that I use less than 10% of what I learned in college, even in quantitative finance, and then somehow coming full circle into options market making and stuff like that. I would say that I've used less than 10% of it. What I've learned mostly, where I picked up most of the skills, is actually just being exposed to good traders, to being open-minded and just having a little bit of rigor behind. If I'm interested in it, I'm going to chase this down until I understand it. And also just hustling, it's, being divorced and then being in, semi-homeless for a little bit and then, having nothing in your name, what's that saying, where, essentially necessity breeds innovation. And that's kind of how, I actually was able to sink my teeth into a lot of the complex stuff that we do now. I would, again, like the schooling, the way they taught it, my ability to soak it up was minimal. I was actually much better at just being surrounded by a pool of really good traders, and I was able to learn from a fixed income trader about yield curves, learn about vol curves and market making around theoretical values through high frequency options market makers, and then understand flow relationships just based upon the very simple dynamics of how to trade. When you buy and sell stock, you are engaging in a real market, and everything that I've learned in terms of diving into market structure, negotiating flow deals, clearing relationships, and just setting up even the hedge fund. It's all about the trade. Can you understand what your counterparty wants? Can you understand what their angles are? Can you understand what we call the symmetry of the trade is? Where do you have asymmetric returns, meaning that you actually have a little bit extra knowledge, you either understand the angles better, or you have ways of pairing up these trades where you gain more profit than your counterparty. And that's honestly how it all grew. Very, very basic, just learning to understand others, listening, and just being real into it. That paid off much more for me than what I learned in school.
Okay, yeah, that's really interesting. I'm surprised that sort of only 10% of what you learned you actually use today. So, I mean, that's just a fraction, isn't it?
It is totally a fraction, and that's like sorry to interrupt, but like it's just kind of like it's the same story for floor traders, and even some of the best traders out there that I know, even some of the best CEOs of companies are dropouts from their schools, and they learn from just being surrounded by it. A lot of the best floor traders that went upstairs, they did have some schooling in math, but they learn and they really able to sink their teeth into things by going onto the floor of trading. Being surrounded by, seeing people bid, seeing people offer, and then seeing scary events happen. That's how they actually learn how to trade the markets.
Yeah. So they learn by becoming pretty much a product of their environment.
Exactly.
Yeah. So you spoke about how you met Kunal from Bulls of Wall Street, and he sort of became a mentor to you. How did you actually sort of land him or sort of come across him or get introduced to him?
Sure. Honestly, everything has been through Twitter. A friend of a friend of a friend was like, you should get on Twitter and follow these guys that are talking about these stocks. And so that's what I did. And Kunal had a very large following. He posted a lot of really good P&Ls. I was like, oh, this guy should know his stuff. And so I just reached out to him, and that's just kind of how things grew. And the funny thing is that the majority of the business that we do and the recruitment, even whether it's the technology recruitment or portfolio manager recruitment, is mostly done through Twitter. I've had a lot of introductions through other broker dealers, cap intro guys, recruiters, and all that. Those are more hit or miss than me just reading and seeing what people are saying on Twitter. There's a certain way a real trader speaks on Twitter where, if you get enough screen time, just like if you're trading and enough screen time, you can actually see who's for real and who's not. And Kunal was the first one, then Lucci. We even found Chaim on Twitter too. Charlie was reading Dark Pools, and he was like, you guys should, read this book. And I was like, screw it. I actually didn't even read Dark Pools. I was like, I'm just going to reach out to this guy. And I hit him up on Twitter, and that's actually how we landed Chaim too. Ezra now, one of our flagship portfolio managers, I met on Twitter as well. He was talking about, Highland Park and Treasury futures. And I was like, this guy seems cool. We should just invite him over. And lo and behold, we're now doing business with him. So,
yeah, that's crazy. Like how many traders are just so active on Twitter these days? How important do you think the role was that Kunal played in your sort of upcoming in education to you becoming a better and more profitable trader? Like, do you think that if he hadn't come into the picture, you would maybe not be where you are now, or your learning curve would have been much more drawn out?
Definitely. I was on a horrible path by myself. not having best practices on how to understand risk, not having best practices on understanding that there is a whole emotional side to my trade. I was just gunning for trades left and right with my prop account. And Kunal was really, even just the role of doing his scans for him, scanning through 400 names every single night for like an entire year, just made me that much better at being able to pick the cream of the crop setups versus, some okay setups and then the worst setups, and, that speaks lengths to the types of markets that we're in now. We actually did an interview recently with a market veteran, and back in the day, in the 90s and early 2000s, because we were in a raging bull market, you usually throw darts, and somehow all the technicals worked, to the long side, and that's not the case now. With how smart, automated trading is, how most of the counterparties are automated traders versus, dumb retail flow, you really have to pick your spots. Generally, I would say that Kunal's biggest effect on me is to remain patient. Let the trades come to you. And I know that's always hard to do because you want to chase after the most active trade. You want to chase after the biggest hyperbolic move or whatever it is. But really, you have to let the trades come to you because you need to be prepared for it and you need to have a game plan. And if you don't, especially with the general failure rate of traders, you're just going to expedite that process of you failing. And trading is all about just getting as many, variables on lock. Essentially, you have to be able to assess for everything, and the only way that you can really do that is by having proper preparation, and then just a steady head and following your game plan into a lot of these trades.
Yeah, that's really good. I like that. So, do you have any sort of tips for younger traders who are coming up on how they could potentially land a mentor or a trading coach?
Check out Xauusd.com. No, I'm joking. I would say, go on Twitter. Check out Bulls on Wall Street. Check out Xauusd. A general tip is don't be afraid to ask for help. A lot of young traders out there either are too cocky and they look at a lot of charts and they say that, oh, that's an obvious trade. I could have made, $100,000 on that trade. You must be humble. One of the worst things you can do is, rage into the markets like you're a super cowboy and then just blow up all your money. Always look for, traders that have an established track record, and all that type of sorts. Go on Twitter. They're all over the place. Unfortunately, there's a lot of con artists out there. After a while, I learned that the entire pump and dump world was also kind of a scam. And unfortunately, every trader has to kind of go through these processes. And I would say that, if you're going to go through it, take your time. Find a real mentor. Honestly, I have to plug Xauusd. We're over here trying to, do the right thing for all the traders out there, and make sure that you don't have to make all the mistakes. But yeah.
Yeah, no, that's really good. So, when you mentioned that you were scanning like 400 charts a night, what sort of things were you actually looking for when you were scanning through these, and how much time was this taking up out of your day?
So at first it was taking me about 3.5 hours to 4 hours a night to scan through 400 names. What I would do is look for flag patterns, pennants, double bottoms, triple bottoms, chop setups, all types of stuff. Essentially your best looking technical setups, right? And then there'd be some layer of some moving averages. Now, I was taught from an early age that moving averages, for the sake of moving averages, is not true supply and demand. It's just kind of to help you guide you on sentiment. So, for instance, like a 200-day moving average, if it starts turning upward, that doesn't mean that your stock has to touch that moving average at all. That just means that your trend is starting to change. And so, I would actually use this. I'd be scanning for things that were kind of perking up a little bit, slowly turning into a potential breakout or a potential breakdown. It took about 4 hours every night for the first couple of months. And then I was able to get it down to about 30 minutes, 35 minutes probably, was my best times for running over 400 names. You literally just be able to click, and be able to see, best setups like that. So,
yeah, that's pretty good. That's really good.
Are you ready to get serious about options trading? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including a $10 cap per leg on options trades, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, and more features to help you trade smarter. Manage your positions with speed and precision using Active Trader Mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory, exchange, and clearing fees still apply. Options involves risk and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Ever watched a stock explode and thought, if only I had the capital, or sat on the sidelines because your account balance felt too small to matter? Good news. With Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, and even the newest IPOs, and short anything you like with zero locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. It's a game changer. Create your account and start trading real shares within minutes. No subscriptions, no minimum deposits, just a one-time evaluation fee starting at $47. That's it. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence, risk-free before you ever pay a cent. Every decade, the market reinvents itself, from online brokers to commission-free trading. Now, the new era of limited risk trading has begun. Click the link in the description to start trading with Trade the Pool's capital.
So moving along now, you're leading the hedge fund operations at Xauusd. Are you still trading a personal account on the side?
I am not. So there was a little bit of time where I actually traded with Lucci in the Xauusd Capital Partners account. We were running strategies together. He was going purely directional on a lot of these trades. And you guys will learn eventually that, there's different types of accounts you can have out. There's a Reg T account. There's a portfolio margin account. At the time, we had a portfolio margin account. And, our brokers were telling us, hey, you should be, taking advantage of the fact that you have a portfolio margin account. And, part of the advantage here is, when you're taking a directional trade and you put a hedge on, which just means that you're putting some position on in the opposite direction, that you can actually reduce, quote unquote, the exposure of your portfolio. So a lot of times when Lucci would be going freaking, all in on a lot of these long calls, a lot of the names out there weren't moving, and my bread and butter was actually Priceline. And what I would do is that I was actually a spread seller in Priceline. So I would look at kind of how Priceline would be turning at certain times during the day, and I would sell out of the money calls, and then I would hedge it as it came in with the stock, or sometimes with other options. A lot of times I didn't have to do it because Lucci was actually betting on, Citigroup going up. And so, while he was doing that, I was selling premium in the fund.
Okay, right. So, I mean, I believe your focus nowadays is more in the direction of automated trading rather than sort of discretionary anyway. What sort of brought about this change? Does it sort of go back to your original education in quantitative finance, or is it sort of the fund that sort of pushed you in that direction? Like, what brought that on?
I guess it was actually Lucci's trading at first. As many have seen, Lucci likes to swing for the fences, and sometimes there's a lot of volatility involved there. There's a lot of emotions involved, and to his credit, there are very, very few traders that can actually be able to manage their emotions and manage big positions like that, running solo. And it was, kind of my duty and kind of, like what I was looking into, generally to find ways to get similar returns to Lucci and, do away with a lot of the volatility. This was paired up with actually meeting Chaim Bodek. So Chaim came out and to the Lucci Loft and, was just machine gunning information. And so he kind of explores, he explains to us the ivory tower of trading. And the ivory tower of trading was filled with quantitative traders where you can have one guy manning a ship, essentially of, 1,000 names that they trade. And then, a whole bunch of options underneath, and then potentially a whole other hedge book and a completely different market, maybe the Korean markets. And they're able to do this all by, trading around theoretical values, and they're able to make tons and tons of money. Because again, market making strategies and automated strategies are all about scale. That thought was just great to me. If I can lever up my money in the right ways, get the right type of portfolio managers in, and have equal or better returns than Lucci himself, and have almost zero of the volatility, I look like a golden boy. So honestly, it was more of me getting tired of some of the volatility and wanting to go learn more from Chaim that I started getting exposed to it. And I got to tell you, the automated world is amazing, literally amazing. One guy could be quoting, literally 1,000 names. Mark can make 1,000 names, and if he really wanted to, he could press the stop button. And he would just pull all the quotes out, and you could lock in your P&L, and you could just be floating there. Whether the market was crashing, 1,000 points or not, your P&L can be relatively stable through a lot of crazy mess, and that's what I was really interested in. And the interesting thing about it is, crossing over from a directional trading, technical trading side to an automated trading side, you view trading completely differently. And I think this is something that the entire industry is going towards. And I think that traders really need to learn some more quantitative skills, at least in the way that they treat their P&Ls, and at least in the way that they view the rules around how they trade. Because one thing that hand traders would do, smart hand traders would do, they'll keep a journal, right? They'll look at the good trades that they make, think about the money that they've made per week, and then try to do some sort of projection on what their total P&L will be over time. Quantitative trading, on the other end, where they're market makers and that they can automate a lot of trades, they view trades in what is my P&L per share? What is my P&L per contract? And once you start viewing markets this way, it really opens up a whole different aspect of trading. And one of the things that I dug really into was the fee structures and the microstructure of the entire space. And I help manage right now another fund that has a lot of traders, a big group of traders, and I see it from the portfolio aspect as a whole. And what's really funny is that there were times where we had relationships where we were selling the flow and getting some rebate back, but that flow was getting completely chopped up. And what ended up happening is that you could see it in the P&L. The actual portfolio of, say, 100 traders is extremely hard to manage and deal with when your flow is being sold, because the P&L is just getting killed. Each trade is getting gamed when your flow is getting sold. And so moved around some executing brokers, and I'm actually able to connect to IEX, one of the infamous Flash Boys, Golden Kids, IEX, and the flow stopped being sold, or the selling of flow was reduced, and there was a little bit of juice added to their execution smarts. And what ended up happening is that instead of these traders, whiplashing up 20 grand, down 20 grand, and then being ultimately down 100 grand type of thing in the entire portfolio, you could actually see complete stabilization across the board. And it would just be like, they'd be up a couple hundred, down a couple hundred, and very, very manageable. And I was actually able to see that over time, not even a lot of time, but like over 6 months, the trader was actually only losing the spread over the amount of volume he was trading. And this is a very hard thing for traders to kind of come to terms with. When I talk about the spread, is that when you enter into a trade and you're pressing the buy button, you cross the markets, all right, and you've crossed the spread. And just think that over time, in 6 months, what you actually lose is just the spread out of the P&L per share that you have traded. Okay, meaning that if you were not crossing the spread on all those trades and you were actually bidding and you got filled on the bid instead of crossing the offer, you would be making money. And this is a way that technical traders have no way of thinking about their trading, and they don't even think it matters. And, this is kind of how, Chaim and I would kind of laugh at it. It's kind of ridiculous, but it's like kind of the HFT joke, that regular market participants can't even view their trades properly and see that in the very end, it's just about how they interact with the spread. And that defines the difference between a good trader and a bad trader, 80% of the time.
Yeah, that's really interesting. Can you just explain a bit more about what selling the flow means or refers to?
Sure. So when you go open a brokerage account at a lot of these brokerage firms, they have this thing called a smart router, right? And the smart router, they don't really tell you what the smart router does. They just tell you that it's smart and that it's going to make it so that you have free commissions, or it's going to give you a rebate of some sort that looks really juicy, 30 cents per share or whatever have you. And what you end up doing here is that when you send your flow through this smart router, you actually, so remember again, the markets are 70+% electronic traders, so a lot of market makers and a lot of really smart participants out there. When you shoot your order down through this router, it flashes to everybody what your intentions are, that you want to buy 1,000 shares. Again, think about the spread. Does this market maker can essentially look at your flow and say, do I or do I not want to trade against it at this very moment? They could say no, and if all of them say no, they will wait till the price moves. So it goes in their favor that they can say, okay, now I want to get a trade against that 1,000 shares, and I want to flip it for the spread. So you just executed what looks like to be, a few cents different, and you got a tiny little rebate for it. But you actually just got gamed. You actually just got filled and then, flipped for a positive trade for the market maker. And over time, this bleeds out every single trader. And a lot of times during fast-moving markets, right, where traders are most likely to make mistakes on breakouts or breakdowns or buying the dips and all that type of stuff, when markets are moving fast, it's really important that you're able to get the best fill at that time. When you want to buy at 100, you better get filled at 100. Because if you don't, and the markets are moving fast, most likely you're going to make a stupid mistake and chase the name too high. And that's what happens when you sell your flow. is that when you actually have a good buy order, you are not going to get filled on it, or you're going to get filled on a certain percentage of it. And that's going to cause you to make mistakes. And if you interact directly with the markets, which is relatively tough for a hand trader, you're actually able to go and pick your destination, and you don't have to flash your orders to a market maker where you get gamed and you get juked out of good trades.
Okay, right. So is there any simple way around this?
Unfortunately, there currently is no smart way around this right now. There are execution routers out there that may tell you that they are not selling your flow. So Haim actually has a smart router out there that can help you execute better. We actually have technology that we're releasing out that essentially will, when you send your buy order, right? So this is how a super smart router actually helps you, and this is how HFTs execute. Is that, say that you want to buy a breakout at $5, right? The bid and the offer are fluctuating. What's going to happen is that this super smart router is going to see that you want to buy at $5, and it's going to wait till it's the best tick. So it's actually going to tick for you at $4.98. $4.95 potentially, and then buy for the breakout before $5. There are some smart routers out there that do this, but it takes a lot of investigation into, you have to be pushing a lot of volume to even garner any interest from the service providers out there. And that's kind of how I personally think the game, quote unquote, is rigged. It's where you don't, as a small trader with a small account or going to a retail broker, you're not going to have access to these type of tools. Again, not to shamelessly plug here, but we are planning on releasing this to the public and trying to be, kind of the Bloomberg for the people and the smart routes for the people. But unfortunately, for retail traders, there's not much you can do unless you know how to code and access the markets directly. It's very, very tough.
Yeah, okay. So you talked a little bit about breakouts in there, and I've heard you speak in the past about how the majority of breakouts fail. Do you want to give us a bit of a rundown on the mechanics and the workings behind why these breakouts fail so often?
Sure. So I guess the general idea here is that, there are the different types of breakouts that you're looking at, whether it's a continuation breakout or if it's been a long-term trend down and then it's breaking out to the upside to recover. It's all about the supply and demand at those points. And a lot of times what ends up happening is that traders are always going for every attempt at that breakout. And the general market dynamics at those times are just not met with the right participants. And what I mean by the right participants are that you have to think about, again, the supply and demand during certain price equilibrium points. So for instance, if I'm quote unquote consolidating between $8 and $10, there are buyers and sellers willing to transact at those price points. And unfortunately, a lot of the times when I'm at $10, there are enough sellers to bring the price back down. And there are enough buyers at $8 to move the price right back up. And this is washing, dumb retail traders back and forth, back and forth, back and forth. And, at a lot of times at these specific price break points, market makers know that there's a lot of dumb flow coming in. You can actually see it. If you're a tape reader, you can actually see a lot of dumb flow trying to buy breakouts at those points. And that just does not work. And the unfortunate, statistics here are that I think it's like under 28% of breakouts actually work. Because generally, when markets are fluctuating, they have equilibrium points. Markets are more choppy than they are trendy in the intraday space. But yeah, it's generally just pretty tough to try to go for breakouts, especially when you're not in a trending market.
Okay, that's really good. Thanks for breaking that down. Another thing I've often heard you speak about, and that is it's important to understand your counterparties and who you're competing against in the market. So do you just want to elaborate on that a little bit more and sort of explain that in a bit more detail?
Sure. So to not get too complex with this, transitioning from being a technical trader and somebody who looks at momentum the way that I do, and then also learning about stat arb participants, learning about mutual fund participants, learning about scalpers, learning about high frequency traders, looking about vol arb traders. When you are trading in certain time frames, you are interacting with the markets, and you care about prices, according to the time frame that you're in. And there are other participants that are in the same space as you. And it's very, very important for you to understand that, because this helps dictate a lot of times, where your stops are going to be, and understanding kind of, where the day traders are going to care about versus where the big mutual funds are going to care about versus where the stat arb traders are going to care about. So a lot of times, Aaron, like we've talked about in the past, is like, when you're going for swing positions, why are you going to set your stops so tight a lot of times on swing positions? Because if you think as a longer term trader, and one that does not care about the current price of the stock, or even if it fluctuates 20, 30 cents, because you're looking for a $10 gain, you are now interacting with the markets as a certain type of participant. You're a longer term trader, and there are others there with you. And the more you can understand the steam that's behind you, or the market participants behind you, the better you're able to avoid bad trades, avoid acting like you're a day trader, and act more like a swing trader. And now if you are a day trader, you have to be more price sensitive and more understanding of what the day traders are doing. Where are their stops? Why are they interacting at these price points? And how can you actually be ahead of the curve? And again, in the end, it's just about being a little bit ahead of the curve and understanding where the market participants are willing to interact with.
Yeah, that's really important. So the next question I've got, I think you'll be able to share some really good advice on this one. And that is, there seems to be like a disconnect between having the knowledge to trade profitably and actually being able to turn that knowledge into a profit. I know a lot of the listeners or the traders who listen to this podcast are, caught on this hurdle. So what do you feel is the best way to overcome this problem? I mean, would you simply put it down to screen time, or is there something more to it?
It's a combination of screen time and trading live. You can get a lot of screen time in simulation, which is kind of misleading, because a lot of people think that, if I do well in simulation, I'm going to do well in the real markets. And that's just not the case. I've seen it over and over and over again. And this even goes for those who are just, studying the markets. Just because you can pick up on 400 names, in one night and be able to pick out the best plays and they're all making money the next day, doesn't mean that you can actually make money on it, because you don't know how to place the bet at that time. And a lot of times it comes down to your stomach tolerance and how much, sensitivity you have to putting your order in. And, I've seen traders make $1,000 every single day on simulation, just buying breakouts, because they buy at the right price points, they don't freak out, and they take the name up, they write it for a point or something. Unfortunately, when they're live trading, they don't go for the full size, they don't execute at the right points. They freak out at some points. They go back and forth, wishy-washy, all in, not all in, and they just chop themselves up. All mostly based on, their psychological issues and the inability to get some stomach tolerance underneath them. And, that kind of, is the center point for a lot of hand traders out there, is actually just your ability to, work your psychology out. In the end, it's you projecting your behavior and your ability to analyze and your ability to hang on onto the markets. You are actually projecting your personality onto the markets. I've seen Lucci do this time and time again. When he's in a good mood, I can see the good mood in how he's trading. And if he's in a bad mood, I can see the bad mood in how he's trading, just based on a couple of the trades. And it's a really hard thing to quantify, and it's a really hard thing to come to grips with, that you can do all the studying in the world and that you are not going to get it just because you don't have the stomach tolerance or the experience or just the ability to manage your psyche in the markets. And honestly, that is probably a pairing of coaching and a pairing of screen time and having a little bit of balls. Putting on some risk, holding on to it, and learning how it feels to have a good trade under your belt versus a whole bunch of bad trades.
Yeah, that's really good. So kind of a little bit similar to that, but why do you believe the majority of traders never see the huge success we set out to achieve in the first place? Is it a lack of hustle? Is it not wanting it bad enough? What does it boil down to?
That's a tough question. I think there's a couple groups of types of traders out there, or aspiring traders, right? There's a lot of traders, unfortunately, are looking to get rich quick. So they're always looking for fish out there. They're looking for services that give them picks. And a lot of times, they get addicted to a couple good trades, even though they're losing money over time. And they go down on this, kind of spiral. I've seen traders go down through, I'm, a pump and dump trader. I nailed a couple good trades. I just need a better service provider. And then, they don't own up to the fact that they don't know how to trade. And they're just following everybody's picks. And you have this, kind of vicious cycle of kind of like a gambling addict. Where they just continue to find more and more service providers and they dump money into it, and they can't come to grips with it. They never, ever even get to the point where they can address their own psychology because they're not even really trading. They're just piggybacking on everybody. I think that's a big majority, unfortunately. Then there are those that are really trying to trade. They may open up a prop account. They actually go find some good education. They learn some of the best practices. And, a lot of times I think the difficulty for a lot of those traders is, that, they may not be losing money and they're just scratch, which actually could just mean that they could, be a maker in the markets versus a taker, meaning not crossing the spread, and that'll actually turn them into profitable trading. Or they don't learn real stomach tolerance. They always get stuck at this, 200, 500, or 1,000 share position area. They don't actually come to terms with the fact that, the reason why they're making mistakes is because they don't have the right stomach tolerance, that they cannot just say that because I buy 1,000 at this breakout right now and I can make a couple $100 or break even, that I should just move it to 2,000 and that's how I'm going to make money. It doesn't work like that. For a hand trader, you are not what we call linearly scalable because your emotional and stomach tolerance is not scaled that way. They don't ever learn kind of the art of working in order into a trade, letting trades breathe a little bit more. And these are more professional hand trader ways of looking at the markets, which is tougher to quantify, but at least it's kind of like it's an area where it's to scale up your trading and to actually turn yourself from break even to profitable. You have to really learn a little bit more about understanding yourself. And, a lot of traders, again, unfortunately, are not in the camp of learning how to fish. They don't look in the right areas. And the problem most of the time is just right there. It's just them. And being able to project, properly onto the markets and being able to kind of look back and say, this morning I did not have a good morning, and so therefore I'm going to make sure I trade 50% less than I usually trade. It's really hard for traders to come to terms with the fact that it's actually their own ego that prevents them from being successful. Because in the end, you are placing bets. You are a lot of times trying to match your ego with the next best guy, who's trading alongside you. And it's a very difficult, kind of path to go down because, you could get traders that go seek out coaching in psychology, and there's a breaking down of their psyche, and then they actually lose the ability to trade. And then there are those that can actually reflect better and learn something from this coaching and be able to make the next step. So again, I think it's, one, the environment that you're in. Do not surround yourself by trash. Surround yourself by real traders. And two, it's understanding your psychology, understanding who you are as a person, and what your lifestyle is and what your behavior is, and learning how to use that to your best ability. I know that, I hate breakouts. So if it's a breakout market, I'm actually going to scale back. I love when the markets are choppy. I'm a premium seller. So I know that at those times, I should be moving up my exposure. I should be, playing a little bit more aggressively because that's my type of market. Unfortunately, traders, in the first year, even 2 years, are always just looking for the hottest thing that's trading out there, always looking for a hot pick. And they don't ever get to the point where they can actually try to do a little bit of reflection. And that's just the unfortunate nature of the greed that is sold out there. Even just the greed of going into the markets. It's very, very hard to be reflective. And, that's just one of the unfortunate truths for aspiring young traders or even older traders. It's sometimes even tougher with older traders that are trying to make it.
Yeah, I think that's really well said, Pete. So thanks for really breaking that down. Now, we sort of spoke a little bit about your trading earlier and how you're sort of moving towards sort of automated trading and that sort of thing. So how important do you think it is for new traders of today to maybe not necessarily start, but to consider that learning how to code some sort of trading system may be a beneficial move in the future?
I think it is the future. Automated trading, as you can see from the stories of pit traders, completely decimated into electronic traders, and now even hand-clicking traders are going to get wiped out into automated trading. I'm sure there will be services out there that will do a lot of the automation for you eventually, where you can say, potentially, I just want to be bullish on Priceline. And it will actually go look for quantitatively the best technical setups to go long a certain trade. And it'll automatically set stops. It'll automatically do a lot of that. I think that is a convenience that the high-frequency trading and automated trading space is slowly going to provide to a lot of traders out there. But unfortunately, this takes away from your ability to, really be specific. And unfortunately, the art of trading is going to become more of the mechanics of trading. And I think that if you want to be, again, I know there are tons of lazy traders out there that make money, and a ton of very meticulous traders out there that make money. And if you really want to know what's going on with your trades and what you're doing, I think it's imperative that you at least get a little bit of exposure to systematic trading. And that doesn't even mean that you have to learn to code. It just means that you have to understand what we call pseudo logic or pseudocode, where you have decision trees. If this happens, then this happens, and then try to have a unified type of process for how you're entering trades and exiting trades. And Aaron, you may see this as something that's relatively familiar to you because I think you're pretty systematic with your trading. But the majority of traders don't even understand that. They can't even think of the fact that their quote unquote signal to enter a trade should also be the signal to exit a trade. Or that the risk parameters generally can be dynamic just by rules. These are all foreign concepts, and unfortunately, they're going to be left in the dust. And if they aren't, then a service provider is going to come to them. Just like how you have robo-advisors in the mutual fund space, it's just going to be like, okay, do you want to be a day trader? Just tell me if you're bullish or bearish on a stock, and my machine will do all the work. Personally, I don't like that. As a trader myself, I would like to know more about the actual trades and how it's being worked and the logic behind it. It's just something that interests me. But I think it's really going to be kind of, the new norm relatively soon in trading. Either you could be a lazy trader and tell the machine what you want it to do, or you could interact with something what we call an API that you can actually plug in and really define how you're interacting with the markets.
Okay, sure. So if this is something that listeners are interested in or would like to find out more, where would you suggest is perhaps a good place to start learning about that side of trading?
You can check out Xauusd.com. We cover a lot of electronic trading and momentum trading. You can check out Haim Bodek's stuff. And find people on Twitter, follow Ezra Rappaport and, kind of just see what the entire community is doing out there. It's pretty tough, though, I would say, to find the right spots to get into the forefront of automated trading. But again, Xauusd.com is a great spot. Come check it out. We show a lot of great things. We walk the line between momentum traders, directional traders, and automated trading. And I think a lot of times, at least in my field, what I've learned is that, it's very difficult to have developers and automation experts be able to communicate effectively with a trader who doesn't really feel like they have a system. And I think Xauusd does a pretty good job of making both worlds meet.
Okay, great. So just one more question before we go to the closing bell. And that is, looking back on where you've come from and where you're at right now, do you think your view on money, or do you think you view money differently to the average person, seeing as you had that pretty humble start and introduction to the markets?
Yes, I would say so. This is almost something that I would say that I'm still learning to come to grips with. But, when I see Lucci's P&Ls and even the group of, great portfolio managers that we have and their P&Ls, and I'm seeing, $100,000, $200,000, or even, like a $20,000 loss, $250,000 loss, it makes me look at money differently when I'm interacting with it in the outside world. I don't understand, or I have less of an appreciation of those that look at money as in, I make, $20 an hour or $13 an hour. That just does not compute for me. And I think that's also, kind of a factor coming in as an entrepreneur and startup culture on how viewing money is. But I think this is something that all traders are going to have problems with. They're going to be spending money on a credit card and then say, oh, I can make that back in one trade. And it's interesting because that trait a lot of times motivates the trader to actually make the step forward in making bigger trades, potentially better trades, a lot of times worse trades. But sometimes that's what it is that pushes them to the next level. But at the same time, in the real world, it really makes it so that you're different from a lot of people. And I'm sure there's a lot of traders that who have been around long enough that have friends that are not even in trading. Some things just don't compute anymore. Like the way somebody looks at money, when picking up a bar tab or talking about paying bills. Honestly, I haven't really come to terms with it. I'm still figuring it out. I put some very, very interesting parameters around my own spending now where, Charlie, my business partner, I make sure that he's actually holding the majority of my money. because I know that, if I have too much money in my bank account, I'm just start looking at it like, okay, this is just a few grand here, and I could just have one of these portfolio managers make it back, and it feels no different for me, And as a trader, I think it's really, really important to be able to, one, stay diversified and kind of malleable in your brain by interacting with others that are not in the markets, but also, staying humble to the mighty dollar. Unfortunately, again, interacting in the markets, you are surrounded by greed, and you're surrounded by sharks, and sooner or later, you will be consumed by it, and there will be something that triggers you in that direction. And I think one of the only ways that you can stay out of that is by surrounding yourself with a diverse group of people in a diverse environment. And like we talked about in the past, it's you are a product of your environment, and you have to make the best of it. So make sure that you are, being active in placing the right people around yourself.
Yeah, that's really good. So this sort of brings us towards the end of the interview, Pete. So, really appreciate you coming on, and thanks again. So we'll just take it to the closing bell, which is just a few short questions to take us out.
Sure.
The first one would be, is there one piece of advice that has stuck with you ever since you read it or heard it?
Ever since I read it or heard it. Yes. It's by Bruce Lee. Be like water. You need to always be able to adjust to the situations, whether it's your trading plan or the way you treat your life, or the way that you go into deals, the way you talk to your brokers, to your girlfriend, to your boyfriend. You must always keep an open mind. There is always an additional angle somewhere. There is always at some point for you to be more humbling, always points for you to be more aggressive. And, it's kind of Zen-ish or Buddhist-ish, but, being like water, you can, just like Bruce Lee said, you can fit into a teapot or you can crash, and you have to be able to do those things, and that has to be able to be natural to you. And I think it's super duper important for just being a market participant generally.
I like it. Cool. Is there one book that you believe is a solid read for any new to intermediate trader?
New to intermediate traders. No.
No. Well, I
no.
mean, you're not a big reader, are you? So that probably makes sense.
I am generally in the camp of if you're reading, read something where somebody is spewing out knowledge at that time. And if you find them interesting and you see that there's good information, investigate more behind that person. I'm extremely, extremely in the camp of, finding a coach and finding a mentor where they can give you real life examples. Unfortunately, a lot of the books out there talk about what's happened in the past, and those that have made it in the past, and you can't get access to them anymore. And it's almost like it's always selling you dreams, and that's okay. I would say that, reminiscence of a stock operator, dark pools, Xauusd's Introduction to Options, Surviving Trading. Those are all relatively good books. But, the one thing to be careful about books is that they are historical accounts. They will drive you to want to desire more, which is good. But always try to find someone who's able to give you real life examples, one-on-one coaching, hold your hand a little bit and experience these things with you. Because, in trading, again, screen time and emotional intelligence. A lot of that just has to be through constant reinforcement, back and forth, back and forth, back and forth. The best pianists out there, a lot of times they just have to spend a ton of time with their piano teachers, and then, reading music theory, and then going to getting a little education from a music theorist. It's not all about sticking your nose into a book. It's about having real examples in front of you, real mentors and real participants that can really accelerate your trading.
That's good. I like it. So, last one. Knowing everything you do now, is there anything you would have done differently come day one again?
Not at all. I think that if you asked me this question 3 years ago, I would have said I wanted to do everything differently, because that was just a crazy time in my life. But I think right now, with where I am mentally in my head, and where now I've taken on a ton of responsibility. Whether it's a good experience or bad, there's always something to learn from it, and it's really important to. Unfortunately, there's people think that I'm the consummate optimist, and I don't think that's the case. I think that, in the end, being like water and being able to always wake up the next day, be motivated, you have to be able to find every ounce of juice and every ounce of positivity out of every experience. And there will always be, no matter what. It may be very difficult for you to see at the time, but in the end, there is something there. You just got to find it. And if you can learn from it, reflect on it, and take it to another day of your life, it's a great thing.
Yeah, that's so true. That's so true. All right, Pete. Well, that brings us to the end of the interview. So I'll just mention that we're still running the giveaway for the Lucci method. So maybe do you just want to give us a quick overview on what that actually includes?
Sure. The Lucci method is our flagship product. You get umpteen hours. It was hundreds of hours of time with Lucci himself, one-on-one during weekend sessions, small group sessions. You get to be in a chat room that's not your typical chat room, because you're actually listening to Lucci actually work into positions and out of positions. That's great reinforcement. You have tons of modules of videos, a video vault. We have this program called LearnDash, where you can actually, essentially it feels like an online college course where you finish questions, there are quizzes, you can bring them to the weekend sessions, and overall I think it's one of the best products out there. Even competing with a lot of these prop firms that teach tape reading, they teach you tape reading in a box, because their incentive as broker-dealers out there is to get you to trade a lot of volume. Our incentive is to grow the right community. And that is through trying to teach you, again, being like water, methodologies that you can take to whether you're a breakout trader or you're a dip buyer. The whole idea with the Lucci method is to really bring you to one community and have it be the last community you have to join, because again, we're here to help.
Yeah, so if anyone wants to enter into that, just go to chatwithtraders.com/giveaway. When you get there, you'll need to answer a very, very simple question, multi-choice answer. Then you'll just need to put in your email address. And once you put in your email address, you'll get a unique URL. You need to take that URL and just share it on Facebook, Twitter, anywhere you can think of, because any person you get to enter into the giveaway through your unique URL, you'll score another 10 entries. So if you get 10 people to enter, you'll have 100 times the chances of winning. Because if you just put your email in and do nothing else, you've got one entry. So get busy, guys. That ends, I think, in about 8 days from now. I can't remember what the date was, but yeah, so chatwithtraders.com/giveaway. And Pete, before we let you go, do you just want to share with us where we can find out more and maybe follow along with you?
Sure. You guys can follow me on Twitter, PZ_SL. You can go to sanglucci.com. That is my team. That is my home. You can find out all about what we do, the funds we operate, the media we get access to, all of it.
Awesome. All right, Pete, thanks again. It's been real, and let's talk soon.
All right. Have a good one, Aaron.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Every decade, the market reinvents itself. Online brokers opened the doors. Mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool. Limited risk trading. From now on, your trading risk is capped and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade large positions and scale your strategies without risking your own savings. It's time to trade with more capital, actually worth more of your time and effort. Ready to trade the pool? Click the link in the description and join Stock Trading Revolution today. Doesn't your portfolio deserve the best? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Trade smarter with advanced charting tools, backtesting, a pre-built strategy selector, and more features. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory, exchange, and clearing fees still apply. Options involve risks and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Hey, what's up, guys? Thanks for tuning in to another episode of Chat with Traders. This time it is episode number 10. Can you believe we're up to episode number 10 already? These weeks are just flying by. It's nuts, but let's talk about today's guest. So today's guest is Tim Grittani, and many of you may know him also by CroyRunner89. That's his Twitter handle that he goes by. And this guy is a very, very talented intraday trader. He originally started with roughly a $3,000 account, and over the years, he's transformed that into well over $2 million and getting close to that $3 million mark in just a few years. So he originally sort of kicked things off in 2012 when he first ventured into the jungle of penny stocks. After catching on to how these markets operated and really got an understanding of the manipulation that goes on, he was able to master a few setups that he could identify very well. And obviously they paid him quite generously over and over again. But eventually he hit a few limitations, and now he's predominantly a short seller of NASDAQ stocks, which makes for a very interesting segment during this interview. What's also interesting is the 5 key factors that Tim contributes to the majority of his success to date. And he really breaks down each one of those throughout this interview. So definitely some great insights you'll pick up from there. You'll also hear about the events that led up to his gigantic single trade loss of $290,000 during October last year. This will definitely give you a great appreciation of just how bad things can get when you go against your trading rules. Because as you'll hear, when the ongoing problem surfaced, it got ugly very, very quickly. And just before we roll into this week's interview, I'd like to remind you guys that the Lucci Method giveaway is still rolling on. So we'll actually be wrapping that up this Sunday. So that is the 8th of March at 7 p.m. EST. And if you have missed it, what that does include is it's a product offered by Sang Lucci. So these guys are selling this product at the moment for $2,699. That's actually what it retails for, no made-up value. And what that includes is an extensive online course taught by Lucci himself, which has over 75 training modules. You also get access to the Sang Lucci chat room, which is a great community, plenty of traders of all different levels. You'll also get access to the weekend sessions. Now, the weekend sessions are really cool. They're actually like a webinar that goes for about 2 hours every weekend, and Lucci's actually running through his trades and any interesting tape movement that he's spotted during the week, and really sort of runs through all of that with you. And it's also a good opportunity where you can hit him up with any questions you might have about your own trading. Included in that is also a one-on-one session with Xauusd. And this guy's just crazy when it comes to VWAP. I think I might have mentioned that before, actually. So you'll get a one-on-one coaching session with him for about an hour. And I'm actually got him on the show next week. So look forward to that one, guys. Also, you'll get access to a truckload of videos, like hours and hours of footage that the guys at St. Lucie have put together. So much packed into this giveaway. So make sure you enter. Just head over to chatwithtraders.com/giveaway, and it's all pretty self-explanatory. All right, guys, let's roll into this week's interview, and I hope you enjoy it. Tim, how's it going, man?
Good, how are you?
Good. How's trading been going for you in the first few weeks of 2015?
It's been pretty good for the most part. I had a really hot start to last week and then kind of just fell into some dumb mistakes and emotional trading at the end of it and gave it back. But solid start to this week. I'm building it back, so that's good.
Nice. Good to hear, man. So let's just jump right into it, eh? So what sparked your interest in the stock market back in 2011 when you sort of first got started?
I guess it was that I was a finance major, and I had gotten most of the way through my major at Marquette, and I was already going a semester long in school because I had transferred schools midway through, and kind of got most of the way through the major and figured out I didn't like a whole lot about finance, or there wasn't a whole lot I felt like I could do with it that would be interesting to me. So what I did was I kind of stopped and thought about it and was like, well, if I'm going to stick with this major, which, was the goal, one thing, like the one area that interests me the most is the stock market. And I think I was kind of drawn to that just because it was the idea of, take money and turn it into more money. I'd kind of been into like the whole poker scene and, betting sports a little bit and stuff like that before. So it was kind of like along the lines with some of the more risk averse stuff I had enjoyed beforehand. But this was just, a bit more legitimate. And so, I got into studying stocks because I just kind of figured, okay, if I'm going to come out of school and be looking for interviews for some kind of trading job, I should try to at least have some idea of what I'm talking about and maybe have a little experience on my own.
Okay, sure. So just before we move on there, how'd you go with your poker experience? Did you have much luck there?
I think it, was one of those things where there was some beginner's luck. I'd been playing since I was in high school, really, and I guess first couple of summers I did pretty well, and then after that, really not that much success, and I never made any kind of serious money off of it. But I enjoyed it. I enjoyed the game greatly. I really did have fun with it.
So you still play in your spare time, right?
Oh yeah, I still play here and there. Mostly just like free poker at bars or stuff like that now, though.
Yeah, nice. So I sort of take it that what you're learning in your degree didn't really sort of teach you how to trade the markets.
No, it really didn't.
Yeah. So what were the first sort of steps that you took once you decided that the stock market was sort of something you wanted to look into a bit more?
Well, I guess the first thing I did was I wanted to open a trading account and just trade on my own a little bit and just sort of see what I could pick up along the way. And so I think I funded some broker called Share Builder or something like that. It was just some small broker that really wasn't all that great for anything in particular. I think it was probably just the first one I found. And I just was really randomly trading, and that was about it. I had taken part in this class activity back in high school that I remembered, where it was everybody in this economics class, I think it was, basically had a virtual trading account, and there was a semester-long competition for whoever had the most in their account at the end of the semester would win. And so, I don't remember doing all that well in that, but it was just something that I had kind of found fun and interesting along the way. And back then I was just kind of randomly buying and selling, so I think I just kind of wanted to go in with the same strategy where it's just, practice executing trades, see if I can make a little money. And it really was just kind of the naive idea that, I can just buy this, 30-cent stock, and within a couple weeks, I'll try to sell it for a 10% gain or a 20% gain. And it's just that easy. And within a couple weeks, I had lost half my account and had to, kind of take a step back and stop trading and reassess what I was doing.
Okay, sure. Yeah, it's funny you mentioned that. Actually, I interviewed Matthew Owens, Triforce trader, and he had a similar story about trading in high school in a class he had there, and told me he won the competition by just loading up on shares in Apple, and came out on top at the end of the semester.
Oh wow!
So I've heard you say that the first 6 months were quite a struggle for you. So what were some of the things that you really sort of struggled with during that time?
Well, I guess the first 6 months I actually traded. I was a member with Timothy Sykes. I was on his penny stocking silver package, and I had spent a few months watching video lessons and paper trading a little bit and trying to get comfortable. But then once I dove in and actually started trading for real, it was a combination of factors. One being that there was so much emotion for me, at least those first few months, tied into entering a trade, and just the fear of having money on the line. And it was really different to experience it like that compared to when I had just been paper trading, because when you're paper trading, it's the easiest thing in the world. But when your mind is clouded by those emotions of having money on the line, you're not thinking as rationally, you're not making smart decisions. And so I had a lot of trouble with that. And then also I was trying just to blindly follow trade alerts at the same time. I was trading my own ideas a little bit, but anytime I saw a trade alert by a guru that I was following, I wanted to jump in and try to do the exact same trade as them, because again, by my kind of naive thinking, it was, oh, well, they're a guru. They know what they're doing. So I should just follow them and I'll make money too. And it really wasn't practical because I just couldn't match entries and exits.
Yeah. So what would you say to someone who is following, say, a so-called guru's sort of alerts? How should they be trading them instead of trying to follow them into each trade?
I mean, what I would recommend doing is just learn the reasoning behind the trade. I don't think, other than maybe trying, if the guru has a big following and you know that their alert can move the market, maybe you can try to scalp along based off of that. But that's about all I would do with it. Otherwise, the whole idea for me, and kind of what helped turn me around a little bit, was starting to focus more on the why behind the trade and the thought process, and then I could learn to do it on my own with other setups.
Yeah, no, I think that's really important, that last bit you said there. So you also mentioned there the emotion side of it. You sort of struggled with a little bit. So what sort of things did you do to overcome your emotions, or at least sort of keep a cap on them?
Well, one of the first things I did that I noticed made a big difference, and it probably took me about 4 or 5 months to do this, and that was around when I started to turn things around. I hid my unrealized profit loss column on my brokers, because I kind of realized that I'd be sitting there in a trade and I'd see, oh, I'm up $100, or oh, I'm down $100. And just having that number staring me in the face, that would kind of feed the emotional side of it a bit. And I'd get either scared of losing a profit, or scared that, my loss is going to get worse, or whatever. But I'd start thinking about the money instead of the trade and about the setup. And really, I'd lose sight of why I was in the trade in the first place. And I would really just close trades out randomly based off of the money, rather than off of, what I thought was going to happen based off of the chart. And so once I hid that, it was, I still kind of knew in the back of my mind how the trade was going, and if I was up or down, and a general idea of how much. But just to not see it in front of me constantly made a huge difference. And I noticed that really got the emotional side of it down for me.
Okay, so by hiding that sort of the P&L column, you could just sort of really focus in on the price action and sort of stick to your plan a little bit more.
Right.
Yeah, cool. So you've obviously day trade full time now. So at what sort of stage did you feel confident that that was going to be it and you were going to trade full time?
I'd say it was about 6 months into trading, right around that time where I had 6 months of struggles. I had dug myself into about a $1,300 hole in my accounts. I was And I mean, that was a lot of money for me at the time, but it wasn't an insurmountable amount by any means. I had worked a summer job and made 3 times that. So it wasn't like it was an unrecoverable sum. So it took me a couple months to dig out of that hole. And then in November of 2011, I got back to the break even mark and then hit my first big trade, which was buying a promotion early and selling it 10 minutes later into a huge spike, and made about $2,000 on that. And once I got past that break even point and, I had seen a couple of consistent months of results and I felt really comfortable that I knew what I was doing finally, that was kind of my moment where I said, I'm graduating in a month, but I don't want to get a job right out of college. I want to give this more time. I want to keep trading full time and really see if I can turn this into something.
Yeah, awesome. So that 6-month period, I mean, that's really not very long at all. So how do you think you were able to sort of pick it up so quickly?
Well, I think that 3 months of preparation time before I started trading was very helpful to me. I mean, I still made a lot of mistakes during that 6 months that I started trading, but I think that I made far fewer because I did have a little bit of, a background in it at that point, I guess. Like I wasn't just diving in blind on day one. I had a little preparation time to learn some of the ins and outs. But really, I kind of just remember along the way, especially, I feel like there was like a solid month in there where every single day I just felt like I was learning something new or making a new mistake or just like figuring out something I could improve upon. And it really was just that I was very self-reflective about what I was doing and trying to take away from every single day any improvements that I could.
Okay, so were you maybe like writing these down, recording them? I know you've got a blog now, but were you sort of writing about it or journaling this in any way when you were sort of starting up?
The only journal I really kept was, I guess one of the big turning points for me was I decided I wanted to focus in on just a couple of setups because early on I had traded a lot of different setups and was having very mixed results. So I chose to focus in on what I was good at, which was over-the-counter stocks, the pump and dumps, and it was buying promotions early, and then it was buying multi-week breakouts or 52-week breakouts or something like that on the daily chart. It's like big-time daily chart breaks. And so I wouldn't so much journal like my emotions and stuff like that or just like little lessons, but I did start tracking those setups and putting them into a spreadsheet and just sort of keeping tabs on how they performed and what typical returns looked like. And just, having some idea of past performance so that when the next one came along, I could try to put my plan together a little bit better.
Okay, cool. So let's dive into that a little bit more and just talk a little bit more about your actual trading style. So
okay.
I know these days you're right into your NASDAQ listed equities, but I'm really keen to get into that also. But before we do, I mean, you obviously started out playing penny stocks and the OTC markets. So what was it that really attracted you to these particular types of stocks?
Well, it was partially, after I'd had a lot of experience and I'd tried trading, the listed stocks that are earnings winners, and I tried pretty much everything. And I would get really frustrated with some of the listed stocks because I'd be trading a setup that looks great. I'd be buying a stock breaking to the new high a day, and then something like the overall markets would dip and the breakout on my stock would fail because the overall markets dragged it down. Or there were just so many more factors that seemed like would influence those more expensive stocks. And it really was frustrating to me. So in watching the OTC stocks, they kind of traded in a world of their own. And they didn't tend to follow the overall market, at least from what I could tell. It was just more about who was promoting it, how effective the promoter is. And really it was just purely based off of technical analysis because these were companies that had no fundamentals whatsoever, and everybody knew that eventually they're going to zero. But the question is, the people who are manipulating it and controlling it, how far are they going to let it run first? And so the only way to really play off of that and figure out what people like, what their intentions might be, was just to try to anticipate the chart patterns and learn, which patterns repeated themselves.
Okay. So you mentioned in there about promoters. Can you just give us sort of a brief rundown on how these sort of promoters work?
Yeah, absolutely. So I guess the best way to put it is, especially with some of these big time promoters, the guys who were really running some huge plays back then, what they would do is basically they would create a company from scratch. And all of the free trading shares for this company would be insider owned. So they could control at what pace they sold their shares, and whether they're going to drive the pick into the ground or if they're going to support it and keep the stock moving up. But basically, they were taking these stocks that were very easy to manipulate. They had millions and millions of dollars, so they were completely in control of the action. So it was really more of a game of trying to follow what is the big money doing. And so they would come out with a new pick, and send out an email blast to all their subscribers. They would have these email newsletters with thousands and thousands of subscribers and say, our new pick is XYZ or whatever. And then usually what you would see is a really big, strong spike on day one of the promotion, most of the time ending the day up 50% or more. And then after that, it was just a question of whether they were going to turn it into a multi-week promotion or not. And that really, again, was just, you could predict that based off of the chart patterns and how they were controlling it.
Okay, so once you sort of saw these things, could you give us a bit of an overview on how you might have traded that, or if you weren't trading that, what you were looking for, like what setups you were watching for when you were trading these OTC stocks?
Yeah, okay. So, the two big ones for me early that kind of turned me around, like I said, new promotion releases. And the idea behind that was, as these promoters, with every successful pick they put out, more and more people became aware of them, and more people wanted to play the next one, because the idea was, oh wow, their last one went up 1,000%. Well, this next one should be great too. So I really tried hard early on to make sure I was one of the first people to get an email. So that came down to knowing all of the connected promoter websites, signing up to multiple email addresses. And basically, as soon as they sent out an email and said, this is our new pick, I was buying. And I was trying to get in as quickly as I could and to beat that rush in of people who wanted to get in. And I mentioned earlier, my first big win was a stock that spiked huge in about 10 minutes. I think that was a 70% win in about a 10-minute window, because I was one of the first people to get fills, because I got my email set up in an efficient enough way that I was getting the emails quickly. So anytime a new promotion got released by one of these guys who had a good reputation, I guess you could put it, I was trying to get in quick. And then beyond that, it would just sort of be a matter of letting the chart develop. So after a few up days, or after maybe a week or two of promotion, I'd look and I'd see, okay, what is the high that the promotion has reached so far since this stock started getting pumped? And if it started to break past that high and reach new all-time promotion highs, that was a breakout on the daily chart. And that was another setup that I really liked. And I would buy it as the stock was breaking those new highs in anticipation of it having another up day or two or three, and really running and squeezing.
Okay, so you talked about getting in early there. Pretty much like as soon as you got the email, were you just diving right in, or were you sort of waiting for a confirmation that something was going to come out of this?
No, I really would just dive right in, because the email was the confirmation.
Okay.
Because once I get that email, everybody else who signed up to that email list is going to get it as well. And because these guys, that's why promoter history was really important to me. I wouldn't do that with just any random promoter. It was the fact, though, that these guys had put out, a few good promotions in a row. And all of these, it really was just a very predictable spike where you get 10, 15, 20 minutes of just straight up spiking action, because everybody's trying to get a fill and trying to get in early because they think this is the next big promotion.
Okay, and how legitimate are these promotions? Like, is what they're doing there, is this sort of a legal operation they're running there?
That's kind of tricky to answer. I'd say because there's a lot of very fine lines that they toe. I mean, technically, promoting is not illegal. I think what's illegal is if you're promoting a stock and you're selling shares without disclosing that you have those shares to sell. Or it's a very fine line, and I'm not really clear on the distinction. But basically, as far as legitimacy goes, these were all worthless companies. And I think pretty much every single one I've ever traded is probably at sub-penny levels now, or very close to zero. So, I mean, these were just, this was, just a promoter trying to dupe people and trying to take their money. And that really is all it was.
Yeah, okay.
Are you ready to get serious about options trading? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including a $10 cap per leg on options trades, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, and more features to help you trade smarter. Manage your positions with speed and precision using Active Trader Mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory exchange and clearing fees still apply. Options involves risk and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Ever watched a stock explode and thought, if only I had the capital, or sat on the sidelines because your account balance felt too small to matter? Good news. With Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, and even the newest IPOs. And short anything you like with zero locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. It's a game changer. Create your account and start trading real shares within minutes. No subscriptions, no minimum deposits, just a one-time evaluation fee starting at $47. That's it. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you ever pay a cent. Every decade, the market reinvents itself, from online brokers to commission-free trading. Now, the new era of limited risk trading has begun. Click the link in the description to start trading with Trade the Pool's capital.
So last year you sort of started leaning towards the NASDAQ listed stocks. It was clear that you're already having great success and making really good money trading penny stocks. So what influenced the change there?
Well, a couple things. One is that NASDAQs are a bit more scalable. With the OTC market, one thing I learned along the way is that volume and liquidity is very, very important to being able to enter and exit trades. And so, I mean, a lot of these patterns, even though they repeat and even though they're predictable, there's just simply not enough volume traded in them to be able to take very large position sizes. With NASDAQs, the volume and liquidity is much, much higher. So I think there's more opportunity there in that sense. And I was kind of interested in it for a while because of that. But I was kind of forced over there a little bit sooner than I had planned on. And that was because first the SEC started to crack down on some of these promotions in the OTC market. And you started to see some of these plays get halted. And when an OTC promotion would get halted, it would reopen 2 weeks later, and most of the time it would be down 50% or more from the price it was halted at. So that scared a lot of people away from the OTC market because nobody wants to play these stocks that get halted at any minute. And that really dried up the volume and liquidity over there. A lot of the major promoters that I had been playing for those first couple of years, either the people who were running them got arrested or the sites got shut down. But basically, most of the major promoters went away. And so the OTC market, aside from a lot of the crappy marijuana stocks running, the first 3 months of 2014, really has not had much activity in the past year.
Okay. So when you did start trading these NASDAQ stocks, did you bring the same approach with you, or did you have to make a few changes to adapt?
It was a similar idea. I was trading, at that point, I was mostly a short seller. I'd gotten away from buying some of these promotions a little bit, and more towards short selling them once they had really spiked a lot and seemed like they were overextended to me. So I took that same sort of approach over to these NASDAQ stocks because I felt like I would see it a lot on those as well, where you'd have, maybe some good news hit a stock or good earnings or something like that. And for a few days, the stock would just go vertical. It would, maybe go from $2 to $5 or something like that. And then it wouldn't collapse as fast as an OTC promotion would. But a lot of times you would just sort of, if you look back on some of the old ones or the old spikes, you would see that over the course of the next month or two, it just slowly faded back to where it had come from. So it was pretty much the exact same pump and dump pattern as I had seen on OTC stocks. So that led me to believe, okay, it's happening to a degree with some of these listed stocks as well. But I did have to adjust how I traded a bit. I had to start looking for a smaller profit window because, again, I wouldn't hold short for a month or two. It was, I would try to trade a couple days when the stock was the most volatile and the most liquid, and then just move on to the next one.
Okay, so one of the big changes would be that you were sort of holding for slightly longer, even though it wasn't a month. You might sort of hold it overnight.
Sometimes I would go overnight with these. Although usually if I did, it was because I'd gotten stubborn with a bad entry. But no, I think it was just more that I would, if I shorted an OTC that went from $2 to $5, I would expect a 50% gain in probably a day or two. With these listed stocks, I wouldn't have that wide of a profit window because, like I mentioned, they came down a lot slower, I noticed. So I'd really be looking for more like 5%, 10%, or 15%. I'd just try to find the predictable part of the move where I could take my piece, of the easy profits and then just leave it alone after that.
Okay, yeah, no, that makes sense. So here's something I want to ask you, and that is a lot of traders will say that you need to have an edge to succeed as a trader, right? So how would you define your edge?
My edge, I think, is really just that I understand chart patterns, or at least I feel like I do. And I have, basically I could call it a list of setups where if I see a certain pattern forming, I immediately know what to do because I've seen that pattern time and time and time again. So as I've gone on, I guess my edge is experience, I guess you could say. That now I get a better idea of what to look for.
Yeah.
But I guess that also comes from the fact that I am able to recognize chart patterns and recognize, which ones are predictable and repeat.
Yeah, so it's just sort of getting really good at picking a sort of particular or specific chart patterns that you recognize. And, time and time again, they've proved that this is generally what follows if you sort of see that setup come together.
Right.
Yeah, right. So as a day trader, I mean, you're pretty well connected to the market while it's open, but I'm keen to know how much time would you say you spend researching and studying the market after hours?
It usually fluctuates a bit. If I'm at a point where I'm comfortable and I'm trading only setups that I'm familiar with and have been doing for a while, really the only time I'm putting in aftermarket hours is just to put together a watch list for the following day. And that takes me maybe 15 minutes a night. Now, if it's me trying to learn a new setup or trying to improve on a new area of the market, then the time goes up a bit because then I'm usually putting data into spreadsheets or saving charts and studying charts or just doing a little bit of, extra after hours work trying to, familiarize myself with that next setup that I'm trying to move on to. And then I'd say, it's more like an hour or 2 hours a day after market.
Okay, cool. Here's one thing I wanted to speak to you about, and I hope it's not too much of a touchy subject. But October last year, you took a whopping big loss on. I think it was about 270,000 on
290.
290.
Yeah,
Okay. Trading late when the bowler stocks were really hot and they were all sort of surging. But I mean, in relation to your trading capital, it wasn't crippling, but nobody could say that isn't a huge amount of money to lose. So I wanted to hit you up about it because there's definitely lessons in there for everyone. So
for sure, yeah.
Tell us what went wrong and what were the tough lessons that you walked away from this one with?
Well, with what went wrong, it was really almost a year-long problem that just had taken that long to surface, and it was that I was refusing to cut losses. I had transitioned over into these NASDAQ stocks, and I think it was, I guess, May of 2014 that I transitioned over. So I'd been trading them for about 5 months at this point. And I'd always kind of had the attitude with these that they're a lot choppier and there's a lot more fake outs. And I just, they were a little trickier than the OTCs. And a habit that I had gotten into, mainly short selling these big runners, was if I mistimed my entry, I was just gonna hold and let it squeeze me and look to add higher, and that would be fine. And so I started doing this in May or June, I think. And every now and then I'd get stuck in a stubborn trade, and then it would squeeze me, and I'd be down, $10,000 or $20,000. But it always ended where it would come back in my favor, and I would take off for either a small gain or a small loss or a break even. And basically it worked out okay every single time. And so by the time Lake came around, I took my entry in Lake on the short side, and I think it was probably about 990 or so that I entered my short at. And I had a small gain on it. Some kind of press release came out midday and spiked the stock a bit. And I was pissed that I couldn't cover my position for a gain. Like I had maybe a $3,000 gain on it, and I watched that disappear, and I was ticked off. So I just figured, okay, screw it. I'm going to hold it till it comes back down and fades again. And then it started breaking out. It started going to new highs. And because I had conditioned myself with that bad habit of not cutting losses, I was getting squeezed, and I was really uncomfortable, and I was down unrealized a pretty ugly amount of money. But I just kind of figured it would end like every other one, where I would either add higher and get my average up, or it would just, maybe squeeze for a day and fade back off, and I'd be fine. But this one, it didn't work like that. And I made the mistake of adding too early to my position and then getting stubborn on my ads as well. And really, it was just a snowball effect where I took a bad situation and I kept making it worse and worse and worse because I couldn't let go of my short bias, and I couldn't admit that I was wrong and take, what would have been a very manageable loss. And instead, before I knew it, I was down this huge sum of money, and it really was mentally tough to deal with in the trade and then the days following.
So what were some of the lessons that you took away from that? Like, was there something you made like a mental note of like, I will never do this again sort of thing?
Yeah, it taught me that I had to cut losses. And the big one for that one was that that I held through as it was breaking out to new all-time highs. Or I guess all-time in the sense of since it had started trading with volume when all the Ebola news had started coming out. I kind of looked at that as like the period of the pump, I guess you would put it.
Okay.
And so the high it had gotten to in the previous 3, 4, or 5 days or whatever, when I was first starting to short it, was somewhere in the $10 range. And so once it started to break past that, I should have just been done and should have been out and respected that it could go higher. So that was my lesson. My never again lesson is I'm never going to let myself go on all these rides like I did over the summer, where I'm just holding through big unrealized losses and trusting that it will come back down and everything will be okay. It re-taught me that I have to cut losses and I have to respect the trend.
Yeah, good one. So you actually did a really awesome write-up about that on your blog, so I'll make sure that I put a link to that in the show notes.
For sure, yeah. I know that's a lot more detailed than I can get into over this.
Yeah. So listeners, definitely make sure you check that one out. It's awesome write-up. So let's get a little bit more advice for sort of traders, because I know you did a presentation towards the end of last year in Las Vegas, and you spoke a lot about sort of advice for entry-level traders and sort of on the subject. So at the presentation, you gave out 5 factors that you sort of linked very closely to your success. So I know we don't have, an hour, 2 hours to go through them in depth, but would you be able to briefly run us through each one of those 5 factors and why it's so important to get each one right?
For sure, yeah. The first factor was have the right brokers. And I think that is one of the most key things. You need the right broker for your trading strategy. You need to know what your broker's strengths and weaknesses are. Just an example of that, I've been talking to a trader recently. I was talking earlier here about how buying new promotions on the OTC market was a huge strategy of mine early on building my account. And for that, you needed a broker that would get you good OTC executions. And the best broker for that was Speed Trader at the time. And I think they probably still are now. And so I made sure that I had Speed Trader because I wanted, if I wanted to buy promotions, I needed to have the best tool for it. And it drives me crazy because some traders, like I remember talking to a trader who was trying to buy OTC stocks with a broker where it would take him 5 minutes to get an execution on one of his orders. And I was saying to him, like, even if you have a stop loss level in mind with your position here, if you are trying to get out of this trade when things are going bad, like if your support level breaks down and you want to sell, you're not going to get that fill. Like you might only want to risk, 2 cents a share, but you probably will wind up filling at the bottom of the panic because your broker just is not equipped to sell you in a timely manner. So it's really just the broker is your main tool for executing your trades. So you need to make sure that you're using one that fits what you need. The second key to success was focus only on liquid and volatile stocks. And I mean, I guess that's not for everybody because I do know some traders who are successful trading lower float plays or lower volume plays. But for me, it was very important for anything I trade to be liquid and volatile because I need the volatility in order to actually make meaningful returns. And then as far as liquidity goes or good volume, I've found that I'm far more comfortable and it's far easier to trade size and far easier to get fills on your entries and exits if the trade is going for you or against you.
Awesome. So what's number 3 there?
Number 3 was identify and focus on your niche. And what I mean by that is my big turning point, I think, as a trader is when I cut down the number of setups I was trying to trade. I went from trying to do everything to just trading those 2 OTC setups that I was comfortable with. And I poured all of my focus and all of my attention into those. I stopped trying to follow guru alerts. I stopped, doing random earnings winning plays. I was just looking at the OTCs and just looking at the new promotions and at the breakouts. And that focus on what I knew that I was comfortable with, what I was good at, that really made a meaningful difference to my accounts because I started to see far more consistent results. That's how I built back to break even. That's how I started to, build up my account a little bit and be profitable. And then once you feel like you've really mastered those and understand those, you can always branch out from there. But when you're first getting started and you're first figuring out who you are as a trader, don't try to do too much. It's okay if you miss, this huge short sale that everybody else is beating their chest about and saying, "Oh yeah, I killed it." If you're not a short seller, you're always going to miss stuff in the market, no matter who you are, no matter what setups you like. You're going to miss things, and that's fine. What you need to do though is you need to figure out where you succeed and just focus there and make sure that those are the ones that you profit on.
All right, and number 4, what have you got there?
Number 4 was don't believe the hype, trade charts and price action only. And that one was, that's also been pretty key to my success because I see, especially now with these listed stocks, I think, everybody kind of knows, okay, OTC stocks are usually garbage. But with listed stocks, the fact that they're on major exchanges, I think everybody kind of gives them a little bit added of a degree of legitimacy. And we'll just assume like, oh, well, this company put out news, so that's got to be great for it. That means it's going to go up. And yeah, maybe it goes up for a little bit, but when that chart momentum turns and it starts coming back down, far too many people just hold and hope and still think, oh, well, that news means that it's got to go up, it's got to keep going. And that really goes for both sides of the play because also, that's exactly what I did with the Lake trade. Was I ignored what the chart was telling me. I ignored stock was breaking out. I just was so latched onto my short bias because I thought that the company was garbage. So whether it's a good bias towards the company or a bad bias towards the company, it really doesn't matter. All that matters is what the market is telling you, and that's best deciphered through charts.
Absolutely, no, I completely agree with that one. So fifth and final, what's that one there?
That's cut losses intelligently. And I kind of specify there, not necessarily quickly. And it's really funny because I did talk about this in Vegas, and this was probably a week before my Lake loss happened. And, looking back on it now, I still agree with that to a degree. You should cut losses intelligently. For me, an intelligent loss cut on Lake would have been when it was breaking new all-time highs. That would have been the intelligent move because I would have respected that it was a breakout. Now, what I think I meant more by that with cut losses intelligently, not necessarily quickly, is a lot of people will have preconceived numbers in their mind. Like, I don't want to lose more than 1% per trade, or I don't want to lose more than 3% per trade. And, if their stop loss gets hit, they're out. And what I mean when I say cut losses intelligently is don't base it off of some preconceived number necessarily, whether that's a dollar amount or a percentage figure. I like to base it off of the chart. So basically, if there's a huge support level on a stock that's 5% away from my entry, I don't want to be cutting my loss at 2% when really the chart never broke down and there was no real reason to get out other than I had hit some preconceived number in my head. I want to be trading off of the action and off of the chart in front of me.
Okay, so you can still predetermine where your stop's going to be when you enter a trade, right? So by looking at the chart and the price action previous to where you enter, what you're saying is you can still put your stop loss on as you enter the trade, but don't have like a hard and fast rule like it's going to be this far behind my entry.
Right, exactly. This is how I think about risk. So let's say you've got a stock that has a huge support level at $1 per share. If I enter that stock at $1.10, that means I'm risking 10 cents a share or 10%. Now that's 10% is a pretty big percentage loss to take. So I would figure out my risk based off of how much size am I going to take. So if I'm taking that $1.10 entry, risking off of $1, and that's 10%, I probably don't want to be playing large size. I probably don't want to be all in. I'd probably play smaller size because I'm using a wider stop loss. But if I get in at $1.03 and I'm only risking 3 cents a share or 3%, then maybe I'm willing to size up a little bit more. So I think in terms of, I guess, dollar risk and what it means to my account. But I would use the same stop in both situations. It's just a question of how much would I size in based off of how far away from that level am I.
Exactly, yeah. No, that makes sense. So, all right, Tim, well, this sort of brings us close to the end of the interview, and it's been really good. So thanks so much for coming on.
Absolutely, yeah.
But let's take it to the closing bells. So just a few questions that we asked all the guests. And the first one would be, what's the best piece of advice you've ever received?
I'm not sure it was directed personally at me, but the best I've seen is from Nate or Investors Live, and his little phrase, trade the ticker, not the company. And that goes along with what I was talking about earlier, where I want my trading decisions to be based off of what the chart is telling me, what the price action is telling me. not some kind of preconceived notions about how good or bad the company is based off of news or fundamentals or whatever other factors.
Yeah, cool. I like that. I really like that one. So, what is the number one trading resource you couldn't live without today?
I think it would have to be market scanners. For me right now, I'm using stocks to trade, but I've also used Equity Feed or Interactive Brokers, the scanner on their platform. But I think a market scanner is really key to what I do now, because that's just how I find my plays. I will punch in, my criteria of what I'm looking for. Usually it's just top percent gainers that have certain volume requirements. I look for the ones that have traded, I'd say at least probably $5 million on the day for listed stocks. And half of these I'd probably never even know about if I wasn't using my scanner at the end of the day and running through the list of these plays and then pulling up charts based off of what it finds.
Yeah, cool. So that's how you create your watch list for the following day, right?
Mm-hmm. Yeah, it's almost entirely scanner based.
Awesome. So I know you're not a huge reader on books and that sort of thing, but is there any one book you believe is a must read for any trader just starting out?
No, there really isn't, because I really haven't read many trading books. Actually, I don't think I've really read any. So, one thing I do want to check out this year, as I continue trying to improve a little bit, I want to get into some trading psychology books. So I think that's the most useful area if you're going to read books on trading. Is don't worry so much about a book that's trying to give you the holy grail of all trading systems, but maybe worry more about the books that will help you be psychologically right while you trade, and maybe learn to control those emotions better, stuff that is a little more practical and useful.
Okay, cool. That's probably a really good answer, better than a specific book. So yeah, thank you for that. Knowing everything you do now, is there anything you would have done differently come day one again?
Oh, definitely. Yeah. I would have absolutely dove in without trying to follow alerts. That's the first thing. I would have never wasted my time trying to follow trade alerts or mimic people's trades. I would have focused a lot more just on what I was doing and tried to, I think that's how you build confidence as a trader, is you make your own trades, you make your own mistakes. Yeah, you're going to take losses along the way, but then you learn from those losses. So I wish I had kind of gotten started with that a little bit sooner, with the, being a little bit more self-reflective and saying, okay, well, I just lost on this setup. Why did I lose? What did I do wrong? Or what did I do right? If I was just cutting a loss on a setup that just didn't work. But the other thing is I wish I had been a lot more mindful about volume and liquidity, because one of my earliest losses that I can remember, like my first big loss I took, was because I was trying to trade a very thinly traded stock with the same rules that I had been applying to some stocks that traded with more volume. And I didn't really understand the difference, and I took a huge loss as a result, because the bottom dropped out of this one so much quicker than it did on any of the others, because there just wasn't the volume there to support it.
Okay, awesome points. That's really good. So that brings us to the end of the interview, Tim. So thanks so much for coming on.
Absolutely, yeah.
It's been awesome. So before we wrap things up, do you just want to share with the listeners where they can find out more about you and connect?
Oh, sure, yeah. Well, my blog that we mentioned earlier is tradetheticker.blogspot.com. And I've put a lot of posts on there that I try to gear towards beginners and helping people along and get started. And then also I have a Twitter. I believe it's at CroyRunner89. I believe I have the 89 in there. Yeah, I do. At CroyRunner89 is my Twitter. So I'm on there. I'm somewhat active here and there. But yeah, those are the best two places to look for me.
Okay, awesome. And all the links and everything mentioned in the show will be on the show notes at chatwithtraders.com. So definitely make sure you check out Tim's blog. There's some awesome posts on there, and plenty to learn. So thanks a lot, Tim, and we'll speak soon.
All right, sounds good. Thank you.
Okay, now that brings us to the end of this week's episode. So I hope you guys found some value inside of that interview. Tim's a very switched on guy, as you can tell, and doing a great job, doing a very, very great job. So Just a quick reminder, the Lucha Method giveaway is wrapping up this weekend on Sunday at 7 p.m. EST. So guys, make sure you're in that. It's a massive prize. Just go to chatwithtraders.com/giveaway. All the details are there. All you got to do is just answer a very, very simple multi-choice question and put in your email address, and that's it. You're in. If you want to increase your chances of winning, you'll be given a unique URL. Take that URL and just sort of share it around. Anyone who enters through that URL, you score another 10 entries. So very easy to dramatically increase your chances of winning too. All right, well, I look forward to speaking with some of you throughout the week, and new episode coming same time next week. Take care.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Every decade, the market reinvents itself. Online brokers opened the doors. Mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool. Limited risk trading. From now on, your trading risk is capped and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade large positions and scale your strategies without risking your own savings. It's time to trade with more capital, actually worth more of your time and effort. Ready to trade the pool? Click the link in the description and join Stock Trading Revolution today. Doesn't your portfolio deserve the best? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Trade smarter with advanced charting tools, backtesting, a pre-built strategy selector, and more features. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory, exchange, and clearing fees still apply. Options involve risks and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
All right, what's going on, team? It's great to have you with me, like always, and I'm really stoked to be sharing this week's interview with a VWAP mastermind. This is also the longest interview I've recorded to date. But if the term VWAP, which stands for Volume Weighted Average Price, is completely foreign to you, then that's okay. You're about to be rapidly brought up to speed. And on the other hand, if you're already somewhat familiar, then I can promise that you will learn a whole lot more and really benefit from this week's guest, Xauusd. Zach is an independent equities trader, a trading coach, systems developer, consultant to emerging hedge funds. He's also a consultant to prop trading firms and, most of all, a VWAP mastermind. For Zach, VWAP forms the lifeline of his trading, and for good reason. This indicator is heavily relied on by many institutional and algorithmic traders. So over the next 2 hours, that's right, 2 hours, Zach delivers a thought-provoking introduction to VWAP and shares many insights around his trading philosophies, psychology pointers, and what it takes to code a trading system. And take note, Zach is offering a 30-minute one-on-one coaching session at absolutely no cost, exclusively to listeners of Chat with Traders. All you got to do is listen to the full interview for details on how to take him up on this very generous offer. All right, guys, hope you enjoy the interview and we will speak soon. Zach, what's going on, man?
Not much, Aaron. Thanks so much for having me on.
No, I really appreciate you taking the time to come on. I mean, I know it's Sunday night where you are right now, isn't it?
Well, if you're a trader, you definitely respect that you don't work typical hours, and that's something my friends, my girlfriend can attest to. It's Sunday nights, middle of the night, early morning. The only time I tell people I'm busy is 10 a.m. to 12 noon Eastern, because that's, prime time trading. And that's the only time I don't take calls or appointments. Pretty much every other time I'm on the clock.
Nice. So anyway, it's great to have you on, and I've really been looking forward to this one. So, I mean, you were saying beforehand that you're going to try and not get too carried away with your answers, but I mean, I know firsthand how deep you like to go on certain topics. So seriously, and I mean, I'm speaking on behalf of the listeners here, so we're hungry for good, solid knowledge, and I know you've got a lot to deliver, so
well,
don't hold
I was really
back.
hoping to just wrap up my answers as quickly as possible and give you just a few tasty nuggets and then get out of here. No, I'm kidding.
Just tease us.
Yeah, exactly. Right. No, this is not internet marketing. This is, I totally understand. And I'm eager for the exposure and to be talking to hungry traders. I like it when guys are in that intermediate, developing stage. And that's what attracted me to talking to you early when Pete and Lucci and the guys said, we've got the guy for you to talk to. He's a self-starter, not to, trumpet sing your praises, so to speak. But seriously, man, you've impressed the heck out of us too. So it's a good pairing.
I appreciate it, man. Thank you. So here's what I'm thinking. So let's go right into your journey. We'll cover your early experiences, things you've struggled with early on. And
I got plenty, yeah.
And then from there, we'll roll into your actual trading methodology and how you actually tackle the markets, which I know will involve a lot of discussion about VWAP and systematic trading. So I'm really looking forward to that.
Very cool.
And I know you battled with your trading psychology early on. So I'm going to bring this up as well, because I think you've got some really good points to share on that topic.
I'm going to mistakenly refer to this proverb, but it's something like, pay attention or, take heed of others' misfortune so you may not have to learn the same lesson through experience. You can hear about it and kind of empathize, and happy to share that, this leads right into my trading journey. I graduated from Tufts University in 2008. I always tell people that's the best and maybe worst time to start trading. I think 2007 would have been the worst, because you actually would have been trained just a tidbit on what the markets could be like when they're easy, and I think lulled into complacency. So I'm thankful that I started during a very volatile time. On the downside, it kind of got me prepared for making or losing $5,000 a day when the markets have obviously in the last 6 years or so evened out a bit, let's say. But 2008, what a time to graduate. Not only a difficult job market, I think it represented tremendous financial markets, obviously, opportunity. I remember I was writing a paper, I think this must have been March of 2008, actually, come to think of it, writing a paper about systemic risk to the banking system. This is right when I was transitioning from being an English major to an economics major. So for all of you aspiring traders out there who have a non-traditional major at university right now, it's all good, guys. You just got to transition at the last second. I'm kidding. But 2008 was, it was a real opportunity. I was speaking about the paper I was writing at the time, Systemic Banking Crises, and it was happening. It was unfolding right in front of me. I realized I was onto something, and I needed to participate in that instead of being an English teacher. So perhaps there's in an alternate universe, I've been focused on the written word instead of the technical, the chart basis. But I'm happy with this one. And so I'm fast forwarding a little bit, kind of zooming through those first, I'd say 2 years, 2008, 2009, and a little early 2010. I feel like everyone in the markets was kind of lost. The specter of HFT was kind of on the rise. People perceived algorithms impacting the markets, but they couldn't really put their finger on it. I'm not much of a scientist, so I'm struggling with a proper analogy here, but it's kind of like dark matter. We all know it exists, but like we regular people, we non-scientists, have a really hard time conceptualizing what it is that's impacting the space around us. And so I think traders were going through a similar sort of awakening to, I'm trying to trade by hand. I know there are guys who are using the technology better than I am. How can I possibly get an edge if I'm not a quantitative finance PhD? What if I'm not Peter Zhang? And of course, I say that, Pete, lovingly. Obviously, we just listened to your last interview with him, by the way, which is great. And, everyone on the Lucci team is kind of a good example of the same thing. In the last 10 years, they've recognized that by putting in not only the screen time, but the code time, they can gain an edge as an independent trader, as a retail guy, advancing through to the advanced tiers, let's say, of retail into professional trading. So,
yeah. So just going back there, what actually pushed you into doing a major in economics?
I think it was the fact that everything on the news sort of happened around the economic space. No, it was a recognition that the people who were going and applying for, and I can think back to, I think it was like September of 2007. I had a buddy who was applying at Goldman. Of course, he got hired. Fast forward a year, he's out on the street. He's frustrated because not only is he, and of course he had family money. That's the type of guy who ends up at Goldman. But he was frustrated that he had put all his eggs in one basket. And while I liked the topic, the subject matter, I realized I liked the independence and the potential for trading that it offers. Not many other jobs can you put in extra time and really fairly get compensated. And of course, the downside, I mean, every trader knows this. This is one of the few jobs where you're really not paid hourly. You can go to work for 18 hours and lose money. And that, in a sense, excited me. It forced kind of a meritocratic, I think is the word, appreciation. I liked that what I put in, typically I got on the output side. So while other, my friends, and I do kind of regret this, so my Tufts friends, if you're listening, sorry, boys. I regret that I didn't party harder and have a more fun time the last 6 months, let's say, that I was at college. But I was locked into what the markets were doing. I mean, that was an exhilarating time. I know SKF, the 2X inverse financials, was just coming out at around that time. There was so much potential, so much inefficiency. I mean, this is where a guy like Peter Zhang would be great to speak about. The opportunity that was being carved out for people who understood the products and could trade them. Similarly, my kind of options education began at around the same time. I was taking a financial markets course, and the instructor, as many the instructors in these kind of stories do, he took me aside. He said, "Hey, look, you gotta stop asking about complex options trading, methods. Like none of these kids are going to be options traders. This is a financial markets course. This isn't a how to trade for a living course. Like, I'm happy to talk to you about it, but if you're trading now, the best thing you could do is put in the time trading. Seriously, go do it. Even if it's with $4,000 or something like that." And followed his advice. And I don't want to put it off on him like it's his advice. I actually, something I'm very happy with is that I started with the absolute minimum. So I got to get my feet wet without, risking everything that I had accrued up until that point, because that money was gone in a flash. It was like 6 weeks. And I exploded the account, didn't understand what was happening. And that was, fortunately for me, the only thing it took. It was like a small car accident to make you realize you got to be a better driver. I'm very thankful I didn't start with my entire life savings. It was 2008. Money was moving quickly. Like I said, traders had no idea what the inverse or any leveraged ETF could do or should do or was designed to do. I think many traders nowadays don't actually still know what FAS or FAS are even pegged to, let alone how the daily leverage is calculated. So it was kind of an appreciation for having an academic edge gave me, a potential profitability edge in the markets, as well as I could put in the time. And it's something that, we didn't talk too much about. I was an English major before I was an economics major. Something about the qualitative, almost like visceral connection I had with chart patterns, that I understood that they weren't just pictures, but they were stories, that they were, how do I say this, indicators of characteristics. Sort of like if you put a chart to how a party went. I know that sounds kind of ridiculous, but you really could. You could actually draw out, here's where so-and-so got in a fight with so-and-so, and it kind of got awkward for a few minutes. And then by the end of the night, everybody was having a good time. So-and-so showed up. You're putting like a actual visual kind of basis for how to understand or synergize and synthesize, I think is the word I'm looking for, synthesize the world around us. And I realized that with markets, they were teaching us how to put maybe a name to something that we'd all experienced in other parts of our life. Not trying to make this, visceral chart pattern connection too strongly, but rather it just spoke to me. Something about it connected with me that you could consolidate and display information on the chart in a way that would take thousands of words or even thousands of lines of code. But once the human mind picked up on that pattern, it kind of resonated very strongly with us. I've seen this framework before. I know how to operate in this framework. And whether it's quantitative or qualitative, that excites me. And it excites me to this day. I always tell people, because those who know me know that I'm really bad at puzzles and like Rubik's Cubes. It's like a Rubik's Cube that I will never solve. And I'm okay with that, versus a real Rubik's Cube where I hate those damn things. Anyway.
Yeah, so you would say that your economics degree didn't really contribute too much to you sort of learning how to trade. I mean, that's sort of what I've heard from other guests as well, asking they've said the same sort of thing.
I'll give a shout out. The two classes that helped me the most were not my financial markets classes. They were AP English in high school and drama. Of all of the classes that I took, those two have helped me more in trading. I tell people English because it taught me to synthesize rapidly, disparate ideas, trying to relate authors that were, existing in totally different time frames and never met and never thought about each other's work, but, what do they say about each other in a sense? I liked doing that with financial markets. They're obviously, whether it's just broadly, equities, options, any futures market or currency market, or stock to stock. I just, something about that, is triggered in me when I found the financial markets. It was just an even more straightforward way of doing it instead of having to read 12 novels to be able to discuss competently about the authors. And then secondly, drama, because it taught me how to read myself and how to read other people, as well as to learn signaling. So signaling is, I always think of like a stage whisper. If you've ever gone to a play and somebody has to pretend they're whispering, they whisper like this. It's really loud, but you can tell they're trying to seem like they're whispering, right? They're signaling to the audience, hey, I'm trying to let you in on the fact that I'm sneakily telling this to the other character on stage, but I'm also trying to say it loud enough so that you hear me. And that's just, one random example, but how markets will signal to ourselves, to us, the traders, the retail traders, how we can pick up on future market action from just a few key clues that also, has stuck with me. And it's something that I think when I speak about those early years, 2008, 2009, first part of 2010, I didn't even understand what it was that I had learned, in high school, in college, that could help me in the markets. I thought that everything that was out there, forums, YouTube videos, friends of friends, other quote unquote traders, meaning guys with an E-Trade account, right? That's a trader at our definition level of like when you're a beginner, it's 2008. It's a bleak universe out there. And Aaron, when you and I first met, I think I told you, God, if you had been around 10 years ago and I could have listened to this podcast when I was learning, this is everything that I wish I had had, because I was desperate to find sophisticated traders who would understand and appreciate that I was trying to put in the time, but I had limited, skill at that moment to contribute anything to them. They'd say, what trades are you watching? How are you doing charting? And I'm kind of like, well, here's some moving averages that are a good benchmark. And they say, yeah. But you're looking at it like checkers, kid. You need to be playing chess. They're played on the same board, but the latter is at a much higher level of sophistication. It made me realize that everything that we were taught was all to make us, this is a literal quote from, something I'd written for St. Lucia the other day, but it comes back to mind. It was all to make us feel better than it could ever make us trade. That a lot of the technical tools and the ways that this is taught, it's by tradition, not by merit alone. You know what I mean? Like it's not Darwinian. The things that we learn aren't taught to us because they are good. They are taught to us Sort of like you give a kid, you give a little toddler baby food. You give them something easy and that they can handle. You don't give them, cognac encrusted filet mignon with like a nice side of like they wouldn't get it, let alone could they even chew through it. When you're a beginning trader, when you're kind of an infant mentality, let's say, you need something that is straightforward enough you can wrap your brain around. Moving averages, pivots, basic support and resistance. These are the things that I totally understand and have an appreciation for why they're taught. They're a good stepping stool into more complicated analysis. And they definitely give you the framework of, I can understand that the concept of support and resistance will play out throughout my entire career, right? Whether I'm a beginning or sophisticated trader, something about that concept resonates with me, but how I look at it may be totally different when I'm a beginner, an intermediate, or advanced trader. So around that same time, around 2010, I had the good fortune of, and I'll tell you this story in a second, but I was introduced to the best trader I know, who is a quantitative trader and fund manager. His name is David. I have to keep him somewhat anonymous because he is an asset manager, but close personal friend. And like the reason I say, serendipitously and introduced to, were it not for random chance, I don't know if I ever would have met someone of this caliber. A friend of mine was actually in a Starbucks watching, drinking his drink, watching people around him. He saw another guy trading on his laptop. And he went over to him. He said, "Hey, my buddy Zach trades. You guys are a little side story. We're here in Ohio. So for those of you non-US listeners, we're in the middle of the country, in a fairly boring place that's not a major city, let's say. So I always joke there are very few traders nearby me. So when my colleague saw David trading in the Starbucks, he said, you gotta talk to my buddy Zach. You guys look like you're doing the same thing. You guys should get in touch." So we shot a few emails back, ended up grabbing coffee, started talking more. He said, "Hey, come up to the offices and work with me for a day. We'll see how it goes." Here we are 5 years later. And he has truly inspired me. I shouldn't give him too much credit. Many people have inspired me to approach systematic trading, but certainly David foremost amongst them. And it was, I think back to something that, believe it or not, a therapist said to me once. He said, "Trust in the process." And I think what he was saying is, you're a young guy. You don't know how the world is going to work out or how things are going to fall into place. And I always point out to him, because he was in his 60s, I said, "Well, of course you would say something like that." He was kind of my trading coach at the time, right? Of course you'd say that, though. You're in your 60s. You've seen the process. Us young guys, we don't trust the process at all because we have no evidence, to found that belief. And seeing Dave, a guy in his 40s, 20-year veteran in the markets who had been a hand trader and metamorphosed to this systematic trader that we all kind of envision and idealize today. What I mean by that is the guy who has great command of the technology in front of him. You and I, Aaron, we were talking about this, I think, last night. Like, we don't dream of being inundated with information. We dream of having command over all the information currently at our disposal. So I think that we recognize all sorts of things about the universe in front of us that we can somewhat discretionarily, ascertain at a point in time. But we know, sort of like trying to, if you're, when you're young, you're trying to catch fireflies late at night. I always think about this. No matter how many you catch, you'll look back at the forest and realize how many more fireflies are out there. We as traders understand that there is, in my world, I always tell people there's about 18,000 potential equities, and that's the universe of trading. I know I'm not going to get more than, 100 trades in a day, and that's being exceptionally aggressive. So 100 out of 18,000, I'm sure I'm missing some. And that's where my own journey of, trying to force my way through the coding languages that I've slowly acquired tidbits of along the way. It has not been an easy journey, but it's something I think we all need to do. And whether it's soft coding or hard coding, so the kind of delineation there being soft coding is where you write in English, here's the logic that I'm looking for. And Aaron, you and I have definitely talked about this. You and I and Pete have talked about this a lot. Building, just broad systematic implementation wherever possible. Where can I turn my brain off and just, plug and chug, as mathematicians would say, where you've got a formula and you know what to put in and you just put it in and let the formula tell you what the formula is going to tell you. Similarly, wherever you can scan, sort, systematize as a retail trader, that's going to be immensely helpful. Then you get to like hard coding where you're operating in Python, C#, C++, one of the big boy languages, let's call it. That's where you're dealing with the stuff that Chaim and Peter and guys like Ezra and Brian, also part of the Lucci team, are dealing with. I speak with reverence about them because I wouldn't put myself among them just yet. But the benefit of being in this kind of intermediary standpoint where I have a foot in both the trading and the coding realm is I'm not so far removed to where I've forgotten what it's like to not know code. I have a great appreciation for what it's going to take of the developing trader to grow and evolve into somebody who can systematically employ, let's just say, a scan, kind of like what we're talking about, where you're just looking broadly for things that meet your criteria versus the hard coding approach of, all right, here's my suite of algorithms. How am I going to deploy them? I always tell people, if you're using the word deploy, then you are probably at an advanced level. You know what I mean? Like when you're talking about it like a drone strike or some massive, architected move. But when you're just looking to do a scan or, make the technology work better for you, you think it's crazy. We have these billion floating point calculation capable, per second computers in front of us, and we use them to display the new highs or new lows or what news is ranking. I mean, that just seems counterintuitive that we couldn't get more out of them. And so 2010, 2011, 2012 was certainly my journey of appreciation of, how am I going to make that transition? And then the most recent 2 years, I would say, have been the actual, all right, let me start on the code. So as you hinted at early in the podcast, detailed answers from Zach Hurwitz live tonight on Chat with Traders. Sorry about that, man.
No, that's great. That's great. That's exactly what we want. So I really want to get into that coding and systematic trading a little bit further into the interview, but just taking it a step back, was there anything in particular that still sticks with you today that you picked up from David when he was sort of your trading coach earlier on?
Sure. I'll give you something that comes to mind and this kind of relates to what I was saying about English and acting as far as being helpful with trading. Learning to create simple stories for yourself about how you should operate as a trader. So David told me one where, and I think he got this from another old wise trader. He said, some days you have to be the mouse. You have to be detail focused. You have to live in the here and now. Some days you have to be the eagle. You must soar over everything and be visionary. And other days you must be the donkey. Shut the fuck up and do some work. You know what I mean? Like where it's really about just carrying the load, being your own beast of burden. And realizing that I'd never put a framework on it like that, but I was struggling to organize myself that same way. If I had career aspirations, but I also wanted to get, my trading system off the ground, but I got to get out of this Walter Energy position. Anyone who knows me knows that that's like my least favorite stock. But it's like at varying levels from eagle, donkey down to mouse, we must not only quantify that, but then start operating in that. So we must say to ourselves, like, I'm going to be the mouse today. This is what I really must do to get ahead on the other projects. I got to get the small things off my plate. I got to work on the details versus other days where you have to say, I'm going to go sit in a park and stare at the sky and dream about what, I want this business to be for me. I'm again making this up, but maybe you're a painter or maybe you're a kayaker or whatever you may be. Do something that for you allows you to kind of dive into that dreamer mentality. I think we as traders don't get to do that very often, and for good reason. I mean, we all definitely see that, make $1 million with just a $7,000 account working from home for good, or, something. We all can dream of that, but I'm talking about what is a dream that we can make tangible instead of a dream that, kind of like those trading tools from earlier in the conversation, they were designed to make us feel better than they ever could actually make us trade. I think once I awoke, or awakened, I think is the right word, to that, that was kind of the epiphany too, that everything we were taught was taught to us for a reason that is separate from the reason we think. And we're going to get that placebo effect of, hey, I'm well equipped to go handle these modern, fast moving markets. I've got my technical tools, my RSI, my moving average. And not to speak pejoratively about those in particular. I just mean the first things you learn in any subject probably aren't the best things to learn in that subject. You know what I mean? I'm thinking of scuba diving or skydiving, any other hobby or activity. It's probably the same thing. You know, you are taught something early on because you are a beginner. And most traders don't want to feel that they are beginners in anything. I always joke that if you ask 100 traders, you know, where are you on the spectrum of traders? I feel like 99 of them would swear they're better than that one other guy who didn't pipe up and say anything. But that one guy who doesn't, he says, I don't know where I am. I'm probably in the middle somewhere. I don't know. He's probably the best trader because he's become humbled, you know, by the awareness of I'm just a person in the markets. I'm not the man. I'm not Superman. From my post on Lucci the other week, you know, we're not Chuck Norris of the markets kicking ass and taking names. I think it's an outdated way of looking at the markets in my mind. I mean, I really think about it that way. It's the 80s and 90s and maybe even early 2000s kind of heyday of I'm going to make a quick grand before lunch and then maybe 2 or 3 after. And who cares? Do some cocaine, fly to Spain for the weekend, whatever. That's just not the business anymore. I mean, listen, maybe the financial crisis flushed that all out. Maybe I came into the business a couple of years too late, but you know, I'm kind of getting at that's still when you tell a non-trader that you're a day trader, that's, I think, what they picture. And I don't think they realize that it's 20 hours a day of quiet, lonely struggle. You know what I mean? That's what I would tell people trading is at first. And it's hard. Another thing, Aaron, you and I were talking about last night, and I'm sorry if I'm jumping around a lot here, but the kind of poisonous self-talk, the terrible shit we say to ourselves. In those dark moments, I always think it's like, you know, 11:30 a.m. The morning session's just ending. You've screwed up. You're down $200. You don't know what you're doing here. You don't feel like you have a good read on the markets. You thought it was going up, then it went down. You thought it was going down, then it went sideways. You thought it was going sideways, then the markets just closed. You know, you have no good read on the markets. And you say to yourself, of course I screwed this up. This is just what I do. Look at how I've screwed other things up. I didn't make it to, you know, varsity soccer, and I did blah, blah, blah. And you're just like, you start compounding and commingling and falsely correlating all sorts of things. I mean, you will blame yourself for friendship issues, relationship issues, health issues. Oh, man. And it's only because we're struggling in a, let's call it non-rational or kind of, I don't want to say irrational because that implies that it's total nonsense, but just not quite the rationality we can ascribe to it. We're having a hard time putting some logic to this environment, is what I'm trying to say. And when we do struggle, you know, we try and correlate whatever we can to make sense of it. And when no one else, you know, we can blame the market makers, we can blame the other participants, we can blame the news, I miss blaming Bernanke. That was easy because he was so easily hated. You know what I mean? We just push the blame off on ourselves. I think that's the easiest approach, and it's unfair. And it obviously has, you know, trading impact on us. But you know, when you're a trader, you are your own boss, you are your own employee, and you're the janitor, right? You're everything about that operation. And so you're going to be the guy frothing at the mouth, screaming, "How could you possibly not put a stop in?" And you'll also be the guy cowering in fear, worried you're going to get fired because you didn't put a stop in. And experiencing both of those emotions simultaneously, I think, really confuses a lot of people. And then that comes back to where the signaling from drama comes in, where once I realize, you know, there are certain times when I can tell I'm being ridiculous, and learning to identify that and tell myself, hey, man, you know, you didn't break up with your girlfriend because you're a bad trader. You broke up with her because it wasn't a good relationship. Separating those two things, well, it may seem ridiculous, right? What does love have to do with the markets? Their common point is that, you know, you're where the rubber meets the road in both of those, right? You're the kind of common point between them, and your brain will correlate whatever it can, even when it's not fair and even when it's rude and awful. You know, we are our own worst enemies, and I think every trader has certainly experienced that, where they've, you know, maybe being distracted in life on you know, another farm. Maybe it's their current day job. I know a lot of traders who are part-time traders who experience this. They say, you know, how can I learn how to be a trader if I have to devote full time, you know, 40 hours a week to my profession? And I say, well, I think that you have to ask yourself that. I mean, is this something that you can afford to give up the time for? They just hope that it will kind of osmose into them over the years. And I'd say that it will for most people, but there's going to be that also silent struggle of, what am I even learning this for? And most people, kind of going back to trusting the process, most people don't have a clear example of where trusting the process would benefit them. So why should anyone buy into this belief or mentality? I don't blame the disillusionment of many traders on them, is what I'm trying to say.
Are you ready to get serious about options trading? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including a $10 cap per leg on options trades, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, and more features to help you trade smarter. Manage your positions with speed and precision using Active Trader Mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory, exchange, and clearing fees still apply. Options involves risk and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Ever watched a stock explode and thought, if only I had the capital, or sat on the sidelines because your account balance felt too small to matter? Good news. With Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, and even the newest IPOs. And short anything you like with zero locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. It's a game changer. Create your account and start trading real shares within minutes. No subscriptions, no minimum deposits, just a one-time evaluation fee starting at $47. That's it. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you ever pay a cent. Every decade, the market reinvents itself, from online brokers to commission-free trading. Now, the new era of limited risk trading has begun. Click the link in the description to start trading with Trade the Pool's capital.
Yeah, so would you say that the psychology side of trading was probably the biggest part you struggled with early on?
I always think like mechanics, like risk management, position sizing, what an indicator is, how to code it, any of this stuff, it's all very tangible. It's the amorphous stuff that is impossible, right? That's where the Rubik's Cube approach comes back in, and kind of the challenge I think many of us are seeking, right? The fulfillment that we get from trading, believe it or not, is in the frustration. And that's because we know that it's forcing us along the path of life as much as it's forcing us along the path of trading. And so, yes, simple answer to your question. Hell yeah. I mean, psychology is what separates, I think, all of us. I'm going to steal a Dan Shapiro quote. So he's another guy who's working with Lucci's group. And he could certainly speak more about it. But he was talking about working at a firm where in 1 month, there's two guys sitting next to each other. They're using the same software and the same system. One guy makes $1.5 million in December, and the guy next to him loses money. What's the difference? And it has to be psychology. I mean, when you look at it, they've got the same interface with the markets. They're sitting literally, they're as co-located as you can get relative to each other, right? There's nothing to separate them other than the way they process the information at their disposal. And so what we can aspire to is becoming more honest and self-aware. That's step one. And then secondly is like the actual mastery or command or control. I think everybody comes to me as a trading coach looking for, how do I get myself, reined in, right? I know I'm a good trader, but I just seem to keep taking these big losses. And I would say, well, then how good of a trader are you? And they say, well, why are you doing this, man? You should be my cheerleader. And I say, no, I should be your coach, right? I mean, we joked about this the other day, right? I don't look very good in a cheerleading outfit anyway. And, being gruff and screaming at you is probably a little more profitable than me just telling you that you're going to make it. You're going to make it. We've got friends and colleagues and spouses, right, for that. I'm here to make you more money, and I'm here to push you along that path. I think with the trading psychology, it's also something that I don't blame people for being bad at. How often are we tasked with being honest with ourselves? I think in many different ways and at many different kind of philosophical levels, we are in charge of deceiving ourselves. Whether it's thinking that I don't want to break this out to like politics or like religion or something, but I guess I'm broadly getting at we are all trying to just feel better, not be better in our lives. And I mean that at every single level and scale and scope. It's about time that we started looking in the mirror and being honest about what it's going to take to advance ourselves, whether that's financially or just, I think, professionally, meaning feeling more fulfilled with the job that we have. That's something, again, anybody who knows me knows that those early years were such a struggle because I had, the friends who didn't get bounced out of Goldman, let's say, but the friends who still had exciting, high-profile careers, I really admired them and I looked up to them. And I wasn't receiving the same kind of fulfillment because I was in a lonely, independent profession where I always think about one of my worst years, I made $35,000 or $40,000. And I have friends who are making 2 or 3 times that. And when you think about it, you're trading $100,000, you make 40%. That's insane percentage-wise. But really? To walk away with only, a kind of medium income in my mind, that's not really what I went to a top 25 school for. That's not what I'm spending 20 hours a day, 6 days a week working on. It's ridiculous. I'm sacrificing my time, my health, my psychological well-being. It was really pretty brutal there. And, I always think back to I don't want to start speaking about my holy grail, volume weighted average price, VWAP, which I know we're going to get to in a little bit, but I really do. I speak about it with reverence because it's something I truly revere. Had I not found something that resonated with me, that made sense to me, I would have given up this business in 2011. You know what I mean? I don't know if I would have made it another year because I was so similarly disillusioned. I didn't believe that the things that I could pay for education. I could continue to try and scrape tidbits here or there. I could try and reach out to people on Skype. And it was a few other early mentors who recognized that I was putting in the time and I was worth kind of giving a shot to. Not so much that I wish I had I was Stevie Cohen's intern or something like that. No, I've never worked with anyone gigantic, a titan of industry like that. But even people who said, "Hey, come to Indianapolis and speak," at the seminar. We need a speaker this month, and you seem like you know your stuff. We'd love to have you. And even just standing in a room with 100 people, listening intently to what I was talking about, it made me realize that I'm onto something. This isn't just me convincing myself to feel better. This is other people who are sharp and scrutinizing and evaluating this and saying, "Yo, you're right. I don't care that you're 24 or 25 years old. You look like my grandson, but I want to hear more about this." It intuitively, it mathematically, and it anecdotally, kind of evidence on the charts, day in, day out, resonated with me, and I've never looked back. I've never found anything else that has so strongly struck me.
Yeah, so let's get on to that VWAP topic now. So how did you first discover VWAP? Did you accidentally stumble across it, or was this something that actually filled a void and something that you were actually looking for?
So it's tough to think back that many years. God, I sound so old. I'm 28 for the record, almost 29. Aaron, you're what, 24?
24, yeah.
24, I want to say. So it's so funny. We're talking about getting old, like a couple 20-year-olds on a podcast talking about getting old. Kids these days. So I think it was a combination of Zero Hedge. Struggling to remember this guy's name. Give me a second. Brian Shannon of Alpha Trends. And also on the Thinkorswim basic platform, one of their beginner studies that they just had included in the platform was volume weighted average price. And so a combination of hearing a few other people talk about it, learning more about the metric on my own, as well as realizing I could put it on my own charts. I could explore it myself. That's the kind of hands-on thing that I think people need. It's why I always caution people whenever there's an opportunity to, hey, I could just follow this guy. I mean, he's got some great picks. It's like, yeah, but you're not really learning anything. And like the odds of you becoming a better trader from seeing good trades, but not being instructed as to how to find the good trades, I mean, it's just very low probability. So it's a mix of all three. Like I said, a little bit of, it was popularized because I think people were talking about Nanex and HFT and kind of like really granular view into market microstructure at the time. And so there was discussion of how often something would be quoted versus traded, let's say. And at the time, they would use VWAP as a benchmark. Now, VWAP has been around like almost as long as I've been on this earth. I think it's been around since the 80s or 90s at absolute latest. And it's an institutional way of benchmarking how a trade is filled. So for all of you who aren't familiar with VWAP, I'll give like the 30-second and then I'll muzzle myself primer on VWAP here just so people can get up to speed. We've all probably seen a simple moving average before. So this is just taking some periodic assessment of price where, 20 bars, and we look 20 bars in the past, add up all the prices and divide by 20. We arrive at a simple average price. We could also do an exponential average, meaning we apply exponentially more weight in that average calculation to more recent price action. So we're kind of trying to make it more responsive to more recent activity versus the longer dated, the older activity. So it's kind of like a Goldilocks. I don't know if you've heard the Goldilocks story. This is too hot. This is too cold. Well, this porridge is just right. Similarly, VWAP was kind of the moving average that was just right. It was dynamic when it needed to be, not responsive when it should be not responsive. And that simply comes down to how much volume is being traded for a given candle as a function of the total cumulative volume for the entire day. So another way to think about this is, we've probably experienced this with our grades before, Aaron, you and I. When you're taking an important class, it factors into your weighted grade point average very highly versus when you're taking an elective class, as they're called here in the United States, kind of a peripheral class. Maybe drama might be considered this. It would only be weighted half of a credit into your ultimate calculation. This is applying more significance to more significant, accordingly, parts of your grade point average. So we've all experienced this math in our daily lives, but we've never really thought, hey, I guess that makes more sense. When there's more shares traded, that's a more important candle than when there were 300 shares traded, during lunchtime. And that really strongly resonated. I know that's the word I'm using the most during this podcast, resonate. But it really did. It struck a chord in me that I've seen large trades happen. I can very easily hypothesize why those might be more important than the tiny little 300 share trades in the after hours or something. I wanted my tools to reflect that same intuitive thesis. I wanted to understand not just what some periodic measure of the average price. This is a joke, Aaron, you and I've made many times back and forth to each other. Like, you don't periodically ask any other question in your life. You don't ask your spouse, hi, honey, how have you been for the last 20 hours? We're looking for like a kind of thematic question, like, how have you been since I last saw you? Or how was that trip? Or you know what I mean? We're asking thematic questions, cumulative questions. And so, trying to summarize all this, again, this is way more than 30 seconds. Forgive me. We're trying to put math around the trading experience. We're trying to build some sort of simple model that, and it's very hard to do. Anyone who's done systematic trading knows this. You can't really build one model to fit all market types. But by letting the market, as it goes on, determine the model, there's some benefit to kind of saying to the market, hey, you're smarter than I am, right? I'm just a guy trying to fit, some curve for understanding a true average price about the market. Could you tell me, Mr. Market, how I should set up this model? And the market says, oh, sure, just, go ahead and follow my volume as a function of the current volume, the current candle's volume versus the total cumulative. I mean, if only it were that easy, but I'm kind of saying that it is. The market many times will tell you how we should interpret or intuit the way it's acting. And that's a very counterintuitive way of looking at it. I mean, typically we're used to, here's an indicator. It lags price by a few bars. So therefore I should, expect to always be a few minutes behind the market. I've never seen anything where the market reacts to this indicator as much as this indicator reacts to the market. And so that ties back in with kind of history of VWAP. It was built for large traders to benchmark their execution quality. Did the broker that I gave this order to wait until the end of the day and then buy at the very highs? Did he kind of screw me? Or did he use his investment acumen and his connections to get me a good price? Is he filling me at the true average price? Let's think about it that way. I mean, it's kind of a misnomer, but an easy way of thinking about VWAP. It's the more accurate, the more honest average price for the day. So it's neat that we finally got the tools to answer questions that we've always had, but never had the tools to answer. When traders ask, how has this stock traded since that news came out at noon or whatever time in the middle of the day? We're not going to set up a periodic moving average that is X number of bars long, depending on how far away we are from that point in time. Because that's impossible. We'd have to start it at 1 bar, and then the next bar, a minute later, we'd have to set it to 2 bars moving average. Next bar, 3 bars. We constantly have to go back and keep changing it. That is unrealistic as far as what we're going to do in just a pure workflow perspective. I mean, that's just annoying to have to go in and edit your technical indicators all the time. But that question remains. How has this stock traded since some important event? Or how has this stock traded for the day? Who cares about 20 periods or 50 periods or 200 periods? Those are arbitrary benchmarks taught to you when you're a beginner because, like baby food, it's what you can handle at that time. And if you're listening to this podcast, I mean it, you are not a baby food consumer. You are at the very least an intermediate trader. And I mean that because if you're putting in the time, if you're spending an hour to listen to traders talk about the craft, then you're certainly not an infant in trading mentality. And those are the guys that I feel like you and I, Aaron, we're looking for. We're looking to connect with more traders like that. I always feel kind of bad. Let me go off on a little tangent here. I always feel kind of bad when an absolute beginner comes to me for coaching. They're very eager. They say, my buddy referred me to you. You say you're the best. I say that's great, but maybe I'm not the best for you. Like maybe it's better for you to do the kind of legwork of getting what's available for free out there. I actually many times have referred in the last couple of weeks people to Chat with Traders, saying this is a killer resource for talking to traders and hearing what they have to say about what is my life manual? How can you learn from my experience and get further ahead today without spending 7 years stuttering through the markets as I have? I guess I should only say 2.5 years really, stumbling through. I've done a little bit better in the last couple of years, so I can say that with a smile. I don't know. I think about how often beginning traders are the ones most eager for education, but also the ones least suited for it. And so it's that kind of counterintuitive where if only we could talk to the people who feel like they're in a rut, the people who are crafting their next strategy, but want to go about this one better than the last one. Those are the people that I love connecting with. And I honestly, I learned quite a bit from them too. We were talking about this. Sorry, I keep pulling back to our conversations from other days, Aaron, but I feel like any listener would want to hear this. We were talking about watching LeBron James, let's say, versus watching a collegiate athlete or an Olympian, even some amateur level, non LeBron James level. It's a lot easier to learn from the developing athlete. When you're watching them, you can see when their footwork is off. You can see when their balance or posture is slightly off. For a developing trader, it's much the same thing. The best traders make it look so easy, and I think there's a certain humility and respect for what it's like to be at the beginning and intermediate stage of that journey, that spectrum. Understanding that it is still a grind and a struggle, and why it is still a grind and a struggle. And if I had to kind of answer that own little question in a nutshell, I'd say it's traders don't do a good job of using the technology in front of them. And so that's been my kind of philosophical mandate. how do I convince people, whether it's on coding or just if they're still going to be a hand trader, how can I make their workflow better? That's where it will not only make you feel better, it'll make you trade better too. And VWAP independent or related to VWAP, that's something that I'm really proud of doing over the last 2.5, 3 years. So,
yeah, no, that's really good. You put that well. So, let's just make it really straightforward for the listeners, so they can sort of picture how a VWAP line is actually plotted on a chart.
Sure.
So what is it that pretty much moves that line and plots it on the chart?
No problem. So it looks just like a moving average. It acts just like a pivot. So I always tell people this is a positive transference of, if you've learned support and resistance, you've done pivots, you've learned moving averages, you've seen moving averages, congratulations. You are pre-approved for learning volume weighted average price because you've already got the requisite skills. It is a slower moving average than people are typically used to. So a lot of people, when they first put a volume weighted average price on an intraday chart, they say, this thing is broken. It's not really following price. And I say, but that's the benefit. It is telling you an honest benchmark of average price throughout the day. Now, price's relationship to that and some characteristics of the line itself are what we try and pay attention to as VWAP traders. But the simplest way to picture it is early in the morning, it's very responsive. In the middle of the day, it starts slowing down. Towards the end of the day, it'll slightly pick back up speed. And that's because of the nature of a volume profile of the day. You can all kind of picture this. I'm sure we've all traded enough charts to see this and visualize this. The first 30 minutes and the last 30 minutes of the trading session are typically the highest volume periods. And so because it's a volume weighted average price, two things can impact this, right? We can separate VWAP into VW, volume weighted. That's one way to impact it through the volume. And then average price through price. That's the second way to impact the VWAP. So if price moves exceptionally far away, many, many standard deviations from the volume weighted average price, it will begin pulling the VWAP with it. Similarly, it doesn't have to be very far away at all, but if there's heavy volume being traded, then the volume weighted average price will rise to meet that new information. So I always tell people, if you've ever dreamed of what are the big boys using, because they're trading millions of shares, what could they possibly be using? Are they using an RSI? Are they using something? What they're probably watching is something similar to this. They're trying to understand how other large traders are interacting with this average price. Are they aggressively trading higher and higher away from it, more and more eager to put their money to work, even though we haven't pulled back to a safe point to launch the trade from, kind of an aggressive market, let's call it? Or are they more hesitant? Think of the Warren Buffetts on an even, I'm kind of assuming Warren Buffett is an intraday trader, but if he were, he would be trying to buy, I don't want to call it the bottom of the chart, but, a fairly valued, let's just say, we'll leave it very general and vague, right? Fairly valued investments. He's looking for safer pullbacks where he can put his capital to work and not feel like he's chasing something. There are many strategies that you can trade around this. And I like that even if you weren't a strategy trader based on VWAP, let's say you had some other system that you like to trade, it's a great interpretive metric for how should I be biased about this day. And so that's another thing that I don't see enough traders doing. It's sort of like, what do I need to wear today? Well, what's the weather? Well, you're not even asking if it's day or night. You should ask that broad delineation of is this something I should be trading or not? You know what I'm kind of saying? Traders don't do enough low-level assessment. They want to jump right into, well, where should I enter? Where do I put my stop? How many shares should I trade? It's well, what about, is this a market I want to trade? Does this meet broad criteria that even would put me into the right space? So I'll throw this out there, and forgive me for the meandering, the tangentials and stuff, but this strategy directs people, to better trading principles, like trading high liquidity names, mega cap securities, not to dish on anybody who can make money in small caps or mid caps. And I mean that. I am not good enough of a trader to be trading small and mid caps, so that's why I'm not trading them. But this strategy inherently leads you towards trading very liquid securities. I love trading the boring names that everybody else says. How are you trading JP Morgan today? That thing barely moved. Say, yeah, well, it moved 45 cents, during this one part of the chart. That's really all I need. I need something that is boring and predictable, not chaotic, news-driven. Forgive me, when people say I trade stocks that are in play, I want to slap them in the face and be like, why are you, following along with where everyone else is when there are a million other opportunities? If this were a really dried up market where the only things that moved were things that had, news on them, okay, I understand, right? You're going, you're a hunter. You're going where the prey is, so to speak. We have thousands of equities at our disposal. There are patterns happening more than I can programmatically identify and capture and trade every day. I don't know how we aren't trying to trade more of the reasonable stuff. And I think that goes back to it's designed to make us feel better than it could ever make us trade. I think that's bullshit, and it is high time that people like you and I started talking reasonably about it. It's something we've all experienced. That's why I keep promoting this concept. Is we all know this to be true. It's like if you've ever seen good comedians, Mitch Hedberg, George Carlin, both of whom have passed away, but their style of comedy is, don't you know it when, or haven't you ever experienced it when? And people typically laugh along because they say, yeah, you're right. It does happen to me and my girlfriend. Or, oh yeah, it happened to me at work the other day. I definitely, I don't know. I have great respect for building a realistic plan rather than an idealistic plan. That's where you got to come down out of eagle mode and spend the other 2/3 of your time in mouse and donkey mode, so to speak. Again, not a really a glorified analogy to call yourself a donkey some days, but I think we all know what we're talking about. Aaron, a good example of how you do that, you put in the time going through hundreds, if not thousands of daily level charts to stay abreast of when things, especially those on your more selective watch list, are coming into an important zone for you. That's admirable. Most people don't ever get to donkey mode. They kind of fly around as an eagle, spend a minute as a mouse, and then never get to the donkey. You know what I mean? It's a fool's errand, is what I'm saying. So,
yeah, well put.
Thanks.
So who would you say benefits most from this indicator? Is it most effective for intraday traders? Or what about swing traders? Can they also take advantage of VWAP? So who would you say it's best suited to?
Well, it's okay. You're hitting a good point there. It's definitely best suited for intraday and equities traders. I've done commodities and bond futures with it. I've done Forex futures actually with it. The reason we can't trade currencies typically is the lack of centralized volume. So a volume weighted average price would be very difficult to create. On the futures markets, of course, where we have a volume that we can assess and create a VWAP for, it's amazing how closely those markets proxy the normal kind of VWAP trading you'd expect. So again, to answer your question more directly, if you are a mid cap, large cap, mega cap equities trader, if you're an intraday trader, and you are a technical trader, first and foremost, I guess I should really clarify. It does have some applications to swing trading, but I got to be sensitive to that. That's not a strategy that I've developed or put in practice nearly as much as I am an intraday trader. So I want people to recognize that the principles we learn, whether it's RSI or VWAP or lunar calendar or whatever, some other system is what I'm trying to say. The markets are fractal. So what we learn on an intraday level will apply to a multi-day or a week-long, let's say, level. It will apply to a daily level or a weekly level, even bigger, zoomed out. So it's something that can certainly apply to kind of all styles of trading, but definitely focused in on the intraday. That's where it was developed. That's where we're going to see hundreds. And I mean that, hundreds plural, more than I can handle. So that's why I'm trying to find other traders, to keep tabs on this. I think it's fascinating that there are so many opportunities. Usually when you find a trading system, it's frustrating because, the challenge is, well, how am I going to find this very particular setup? For me, it's like I'm trying to be an octopus, and each of my octopus arms needs a little octopus at the end of it to manipulate all the things that I would need to be watching. And this speaks to obviously how I grew into more of a systematic trader. I realized that my brain was never going to be good enough to deal with all this. I think very highly of myself, and I'm still too stupid to manage all of this. So, intraday traders mostly. I've definitely coached on the swing trading side with volume weighted average price, and it can certainly be applied to longer dated timeframes. I think the challenge is that, and certainly people who are familiar with a volume weighted average price, and when Aaron was asking just a minute ago about visualizing it on a chart, that's something that I hope to have ample examples of. Ample examples, wow, I'm rhyming. Tons of examples, there we go, on Sangalucci's site, so that we can talk more about it and kind of add a visual aspect to it. But people will understand that a VWAP moving slower and slower throughout the day, up until the very last 30 minutes or so, it's unfamiliar to most people. Why isn't it following price more closely? Why am I not getting 15 signals per day? I always tell people, because you only need 2 or 3 signals per day to actually determine the major moves in the markets. When you extrapolate that to like a week or multi-week or many weeks time frame, you can go weeks or months without interaction with a long-dated VWAP, and that frustrates a lot of traders. So I tend to shy away from coaching on the swing trading side if I can avoid it, only because I know it's an inherently less kind of mentally rewarding approach. It's also something that is easy to extrapolate what we've learned intraday to swing trading, but it's very hard to go the other way. So to any guitarist out there, you'll appreciate this. I started playing guitar and I learned on an acoustic, I learned on electric and then started playing acoustic shortly thereafter. And most people go that kind of normal transition of, I started playing a little bit of acoustic guitar and then I learned how to play electric. I started a little too crazy and thought I was going to be, Van Halen and Jimi Hendrix and all this stuff. I needed to learn the basics. I needed to learn the fundamentals. And I would encourage people to not make that same mistake where they try and jump in at the crazy level. Start at the basics and, learn the history of volume weighted average price. I know most people, will not be disappointed with finding their own examples on the charts, the next day often. After I give them these studies. And that really excites traders too, because they feel like they are actively participating, not in just I heard about the study, it sounds cool, hey, here's an example, but wow, I have a new method for interpreting when something is likely to go higher, lower, or sideways. Okay, that's something I could definitely use, you know what I mean? It's not asking them to come too far out of their comfort zone, and certainly giving traders what they want, so...
Yeah, we might try and maybe get together a couple examples, or just not really examples, but just maybe some screenshots and some visuals.
Right, a depiction. It's so hard for people to accurately visualize because they've never really thought about, well, what if it was kind of a variable equation throughout the day? Most things are just a simple or exponential moving average. It's kind of predictable. So I appreciate that you're pushing me to describe it a little more for people who may be unfamiliar with it. I'll tell you, and I may be just bringing upon a total overload of requests with this. I hope I am. This would be wonderful. But if anyone is interested in taking a look or having an early conversation, I should have mentioned this earlier in our conversation, Aaron. Happy to do a free 30-minute consult with them via Skype, similar to how you and I met initially, Aaron, introduced by Peter Zhang, of course.
Awesome. All right. Well, there you have it. So just drop a comment in the show notes. So if you just go to chatwithtraders.com/Zach, that'll take you directly to the show notes page, and you can just scroll down the bottom and drop a comment there. And with any questions you have, and Zach will take care of you.
Absolutely. I always tell people, I may sound very jaded or disillusioned, but I'm actually quite a personable person. I really love connecting with traders. I mean, that is. We talked about this, Aaron. The business is lonely, and having a trading comrade, let alone a colleague or a trading coach, is valuable. I totally know that. I was speaking to a trader in Hong Kong recently who said, look, man, I just need somebody to bounce an idea off of every now and then, and you seem like such a sharp guy. Could I sign up for a session here or there? I said yes. That is exactly what I'm there for. Wherever you are headed next in your progression, learn from experience. Don't waste your time. Don't waste your hassle. Don't go it alone. And I'm really looking forward to. You seem to have built an incredible community here, Aaron. And like I said earlier in the podcast, if you're listening to this, you're probably a leg up over the average trader. I don't think the average trader spends his time listening to other people go in this much detail. And I admire that, and I really respect that. And like I said, go back in time and save young Zach Hurwitz. It's like a Terminator thing. Let's go back and start Chat with Traders 10 years ago, and maybe I'll have a little more of my sanity left. No, I'm just kidding. Fine. It was a great opportunity. Yeah, if you have any questions beyond that, I don't mean to cut you off, man. I got plenty of time. I'll talk your guys' ear off and turn into a 4-hour podcast.
Well, I've still got a bunch of notes here, and I'm keen to work through them if you don't need to run away.
No problem. Like you're saying, it's evening time on a Sunday here, but I love Sundays because they are, one day of respite before the insanity starts again. So no, I'm happy to, man. Plug away, and then whenever you want to wrap up, I'm good to go. So,
awesome. So, I was going to add in before as well that we'll try and get maybe just like some screenshots and visuals that we can put in the show notes anyway. So that people can sort of visualize, might sort of get you to put a couple notes with them and that sort of thing. But
absolutely.
Yeah, so if someone is listening and interested in learning more about VWAP, like, where's the best place to sort of get like some sort of free info to sort of start the ball rolling, if you know what I mean?
Yeah, like I said, if anyone's interested in talking to me, obviously I'm happy to give a free half-hour consult. But I totally understand what you're asking, which is like, let's say they're just wanting to learn, they want to watch a YouTube video or something.
Exactly, yeah.
So first of all, this has actually challenged me to get a better VWAP video out there. I actually, just two nights ago, I was watching someone else. I won't name them because I'm going to talk a little smack about them. But they were talking for about 45 minutes about volume-weighted average price. I feel like they covered like 2 or 3 key topics. I was just really surprised that they took as long as they did to not really communicate very much. I don't know how much good free VWAP education is out there, but I think that's also because people understand it at a basic level, meaning they understand it is a benchmark for execution, meaning they understand the kind of historical context of VWAP. Not many people are using it every day to trade. So I think that's the level 2 kind of application that many traders really aren't going to be eager to share. I think Brian Shannon, I will give him a shout out because, he is excellent. I don't know how much free education he has on there, but alphatrends.net, I believe, is a great resource, and he's a wonderful educator and a nice guy. So can't speak highly enough about him. Obviously on Sangalucci's website, sangalucci.com, I will be writing, as well as some of the other guys, about this topic in particular. So we'll try and have some free resources there for people. The hardest part about this is that in the last 5 years, I think people are starting to awaken to this being a potential strategy, but many people aren't even sure where to begin with it. I think they're treating it like it's every other tool they've ever encountered, meaning they're pretending it's another moving average, or it's a special type of moving average, or they should put it on their charts with other moving averages. I tell people this is the broad framework that tells you where the market's about to head. You want to make this as minimalistic on your charts as possible. You want to put only the important lines on there. We're not trying to carpet bomb a range with support and resistance or, a million moving averages, because it's unrealistic. Why would you possibly think you're going to get, clear trading signals off that? So that's where, the consult comes in. I'm happy to get people set up. The platform that I still do actually a lot of my charting on, believe it or not, is Thinkorswim, TD Ameritrade. And though I am not a shill nor a referrer for Thinkorswim, I probably should be at this point because I've used their platform for 7 years and I like them a lot. But no, they're wonderful. They even on the paper trading, the free demo platform, that'd be a great way for people to have access to volume-weighted average price on their charts for absolutely $0. So I'll tell you guys, anybody who signs up for a paper money account, please do reach out to me, because if you've gone to that much trouble where you say, look, man, I'll install the software, I'll go find this study, I'll take a look at this. you are like I said, putting yourself a leg above the other traders. And those are the people I want to be talking to. I want the traders who are putting in the time and feeling like they're not getting enough out of it. I know that feeling well. I still feel that sometimes. I think we all do. But then we say, no, this is my time to be the donkey. I got to bear the burden. You know what I mean?
Yeah. No, that's really good. I appreciate you sort of offering that to the listeners. That's really good.
Well, I know you have like thousands of podcast listeners. So like as I'm talking about this, I'm like, what have I just done? I've just offered free consults to like 2,000 traders each week. Jesus Christ, what am I going to do? No, I'm sincere though. I mean, look, I'll make you guys a deal. If you're listening to this podcast, if you guys be flexible with me on the scheduling, I will find a way to get in touch with you. I am that committed to dealing with traders. I feel like, we've all been there where it's like, oh yeah, I'm a trader. And somebody looks at you askew. They don't even know how to talk to you. They don't know day trading. They don't know financial markets. They kind of look at you as, like we were saying before, that old 1990s heyday, cocaine cowboy, going to make a ton of money and, screw someone over in the process. I don't think they realize what job we actually have. And I think talking to another trader who gets it, another little anecdote, Aaron, you and I were talking about working with younger traders versus working with older traders. I was talking to a 19-year-old trader who I offered, for our first session, let's do the coaching session with either your father or mother on the phone. He was like, oh no, that'd be awful. I say, no, trust me. I know it sounds like the worst thing in the world, but it's important to not only have respect for how your family will factor in, specifically being a young trader, kind of being backed by your parents in this one context. But, you want them to appreciate how much work is going in on your end, that they don't think that you're just sitting there playing basically a grown-up's video game all day. This is the highest level of intellectual challenge that many of us have ever or will ever encounter. It's worth putting in that same effort and therefore, engendering that same kind of respect. I always tell people if he was, if this trader was going to get his master's degree, would anybody in his life doubt him or tell him he's screwing up? Like, probably not. You know what I mean? But that's a master's degree. And I think we all know, especially in the last 5 years, that is not the guarantee that it may have once been, let's say, for future prospects. It's just as much of a risk in a way. Let me take that back. It is a comparable risk reward, meaning there is an emphasis on commitment and time, not only time but effort. Wise. I think a lot of people underestimate what goes into creating the best traders out there, and I think a lot of people feel like, well, if I was born with $1 million, or if only I played lacrosse with somebody who was a quantitative finance major. I'm kidding, but that's not the way any of this goes. None of the best traders have stories like that. I think those stories, again, are made because they make us feel better than they make us trade. Are you noticing a common theme throughout this conversation, Aaron? It's all about, the world around us is not designed to make us better traders. It's designed to make us feel better. It's the placebo effect happening over and over and over again. And whether in the jargon, I'm going to write about this week, the jargon that finance as an industry uses. You ever notice that they're not stocks anymore? They're equities, because equities sound safe. Stocks go up and down. You can pick a stock. It goes up, it goes down, it goes sideways. Who knows? It went out of business, But an equity sounds strong and robust and long-term. And it's ridiculous because they're literally the same thing, right? I'm not an options trader. I'm a derivatives trader. Oh, a derivatives trader. You must be doing algorithms. And truthfully, you're just clicking buttons, just the same as every other schmo out there, right? You don't know your Greeks from Greek food, let's say. But, you want to tell people you're a derivatives trader. The verbiage that we use is very, and this goes back, of course, to my English background, having a great appreciation for the words that people use, why and how and when they use them, as well as the intonation. And I know that sounds like such a small point. Now we're getting into the drama stuff, but you can learn so much from people if only you pay attention. And most traders don't pay attention. They don't pay attention to themselves. They don't pay attention to other traders. They don't pay attention to the markets. What can I say? It's an incredibly lonely and difficult business. And I always feel like it's grim to realize that about 75% of traders every year kind of go away. You know what I mean? There's immense turnover in this business. And so that's something that you and I could learn from, and your other young listeners, Aaron, especially if you've made it an hour and 15 minutes into my rants and raves. Seriously, it's not being a young hotshot that impresses anybody. It's being a calm, even-keeled, measured veteran of the markets. The guys that I respect the most have been around and have not been fired, have not blown up too many accounts. I mean, they've probably blown up one or two along the way, but you know what I mean? They're the guys who don't make a giant name for themselves. They just silently accrue money. And I want you to realize, you, the listener out there who has a dream of making $1,000 a day, driving a Veyron, you know, everybody wants a Bugatti. Why not, right? Just give up. Literally give up on your dreams. Stop that right now, because, and I'm stealing from my Xauusd posts earlier this week, but seriously, the sooner you give up on those unrealistic dreams, the sooner you'll start building realistic dreams, and you'll start achieving them, because the bar is set a little lower, because you come back to reality, away from whatever perception it was that motivated you initially to get into the business. And I don't know how else to say it other than that's not a popular thing to tell people, as you may imagine, but I pride myself on being the guy who will say the stuff that everyone else is terrified of saying. Here's a good kind of impact quote for you. You can definitely put this in your quotes. You know, we all know this business is dominated by dinosaurs. I'm the fucking comet. Like, I want to be the thing that wipes the landscape clean and starts anew. That sounds very apocalyptic and terrifying, but you know what I'm saying about being radical. You want to do things differently. You want to shake it up, because I think this is not a groundbreaking statement, but this business is feeling a little heavy in some ways. You know what I'm saying? There's a lot of people who aren't doing this right and should be. And I want to help. I want to teach traders how to swim. You know what I mean? I want to teach them how to rise with the tide instead of drown alongside it. So.
Yeah, no, that's really cool. So just one more question on VWAP, and then we'll keep it moving. But do you rely solely on VWAP, or are there other things that influence your trades, such as, you know, certain technical levels, or even, you know, news releases? Do they have any factor on your decision making?
Well, fortunately, based on the way that volume-weighted average price works, I always tell people whenever a news event hits, I'm going to see the reaction on the charts. I know this is the kind of, it goes back and forth between news-based traders and technical traders. Each side swearing that they've got a leg up on the other, right? Like, well, if I can synthesize news reports faster than these guys can deal with the charts, I'm going to be better informed and know exactly how to trade by the time that these guys even read the news report. Well, yeah, same to that guy. I'm going to be already in the trade for 3 minutes while he's still trying to figure out what he should do. Meanwhile, the market's ramping, and I don't care what the news was. I mean, people are excited about it. I will trade it in that direction until my thesis is invalidated. And I think that's where, okay, so you asked the question about, you know, other indicators. This is part of the reason why I'm working closely with Xauusd. I think they brought me in because Lucci is an absolute beast about telling you when to enter the trade. He knows the minutia and the timing and the market microstructure to know exactly when is optimal to enter the trade. Position-wise, kind of the where on a trade where on a chart should I be trading this? That's what I specialize in. So broad, and this is what has freed my mind in the last 4 years with volume-weighted average price. When I stopped worrying about where to get into the trade, I started worrying about just identifying if it's going to go higher or lower. And people may say, well, that's no good. If you can't get into the trade, then who cares? Yeah, but what if you knew it was going higher? Would you really care where you entered the trade? I mean, if you really knew that it was like 80% or 90% odds to go higher, why are you so worried about where to get in? Participate with maybe half your intended size right now. Get in the trade. If it's that compelling of an opportunity, you don't need to be that right. You don't need to be the guy trading it at the bottom. You don't need to be the guy exiting at the top. What you need to be is the guy who recognizes how much money is made in between those two entry points, or entry and exit points, I should say. Right? I mean, it's one thing to look back and go, well, if I had realized that was the bottom, and then I realized that was the top, I could have made $1.50 on this security. Well, that's great, but what about in the moment? Can you still capture 75 cents? Because if you could, and you're doing it at 20% of the effort or mental capacity required, you've definitely got the leg up on the trader trying to get the bottoms and tops. So, sorry, that was a meandering answer to your indicator question. I have found some success with things like the RSI, but on what I would call non-traditional settings. So without sounding like this is a particular recommendation, I'll keep it really broad so people don't feel like I'm misleading them if this ends up not working. A shorter term RSI, let's just say. And the reason I say shorter term, meaning typically it's a 14 period RSI setting. The shorter, the more responsive an indicator will get. I'm sure people have conceptualized this before. It's kind of a spectrum. The analogy I've used is like when you're sharpening a knife. If it's really robust steel, it won't rust, it won't break, it's very strong, but it won't hold an edge very nicely. Versus if it's like a cooking knife where it's very fine, very delicate, very sharp, but not very strong. So similarly, it's like we're trading off responsiveness for credibility in indicator settings. And so I'm encouraging, the RSI is a typically good confirming tool. Perhaps examining it on a shorter time frame may be valuable to balance out a bit of that. We need maybe a little more responsiveness. Maybe we need a little more. But I'll tell you, I'm not an indicator guy. That is not where my heart lies or where I put most of my focus. That's, I would only use that for a confirmation. When I've already identified a likely trade setup and know pretty much everything else about the trade, I'm just looking for when and, where am I really down to the, split second, when am I looking for that entry? Does that address, I think, what you're asking?
Yeah, absolutely. Yeah. No, that's really good. So just sort of moving along a little bit, I wanted to talk a little bit more on the coding and the systematic sort of approach that we sort of touched on earlier. So,
sure.
So you've sort of transitioned from sort of being a hand trader or what do you call it? Sort of like discretionary qualitative trader.
Yeah, a bad trader. I'm kidding. Yeah.
To now sort of actually coding systems and almost at the stage where you've got your trades running on autopilot. So what was some of the key benefits that you saw and the motives that got you heading in this direction?
Okay, so, and what a great question, by the way. I think for me once, and this is a comment from Dave, the quant trader who I met many years ago, he'd say, what good is this if it doesn't apply to everything in the market the same way and yield positive expectancy? I mean, who cares? You're basically just finding an artifact, some one random occurrence that may lead you to think you're onto something. But unless you can apply it to 100 stocks or 1,000 stocks and show that it has broad potential, it's not worth your time. Because once you start applying this to more than a few stocks or more than one stock at a time, you start realizing I don't want to waste my time on something that doesn't apply, to many securities. I don't want to build a trading system that doesn't give me enough signals. I don't want to build a trading system that is overly particular. I mean, all these challenges of, you can kind of think of it like we were talking about the analytics program that I used last night, Aaron, and we were talking about a dartboard. When you start, you're just trying to throw the dart at the dartboard and get it to hit somewhere on the dartboard. It doesn't even need to be a good throw. It's just not hitting the wall. So that's like starting from 18,000 equities and saying, I want things where this moving average is above this moving average. And we filter that down to, 10,000 stocks meet that criteria. And then we say, well, I want the moving averages to also be this far apart, at least. And we filter it down and, there's 3,000 equities that meet that criteria. And we filter it down further and further. And that's the bull, we're getting closer and closer to the dartboard bullseye with each throw until we really can nail down, for anyone who's a scientist, you probably yell at me for trying to talk about type 1 and type 2 error as a non-scientist. But in my own little interpretation, it's easy to think about type 1 error is where you're getting signals that you shouldn't. Type 1 error is you're receiving signals that aren't actually, I'm sorry, I'm getting this backwards. What is it? Type 1 error is where you get signals that you shouldn't be getting and then type 2 error is where you're receiving false negatives, right? False positives and false negatives, roughly. Where you get signals that should not be signals versus type 2 error, where you are missing signals that should be identified but are not. There we go. My brain was struggling there for a second. But you have to balance between not being, not capturing everything, knowing that some are going to get away, but also not being so open-minded that you identify a lot of things that aren't actually your trading opportunity, that you misidentify and say, oh yeah, go ahead, let it into the system. It's a constant struggle. It's kind of like running on a knife edge, so to speak. There's just a very fine line of profitability versus falling to one side or the other, and either being too broad or too restrictive, to where the system fails. And I think that higher level of scrutiny has challenged me to evaluate my trading systems on that same level. So rather than, hey, is this something I've made money on in the past? Is this something that I expect to make money on in the future? And that distinction, like the way I just asked that question to myself, or, your listeners, or you, Aaron, would ask yourself this question, that was a change in mental approach, because I used to think, oh, well, who cares? I made $6,000 in the last month with this approach. Well, that's great. But, how random is that? How expected is that? I mean, were you trading abnormal size? There's so many other things that factor into profitability. I didn't have a very sophisticated or mature, view of profitability. I thought about it very simplistically. And now I know I'm just meandering here, but other little thing worth bringing up. Most people think about profitability as a function of risk reward. And anybody who knows probabilistic determination would be like risk reward times probability of outcomes. Like, how likely is your risk? How likely is your reward? Otherwise, you're assuming literally it's just a coin flip. Oh, well, it's 3-to-1 risk reward. I expect to make 3 for every 1 that I lose. Yeah, it's not quite that simple. And also, what's your position sizing, and how do you manage stops? And do you do partial exits, or do you do all in, all out? There's so many different ways to look at it. Similar to how an options trader would look back at equities and say, man, that was such a linear environment. Things either went up or down. In options, there's non-linearity and so many more dimensions, but it's exponentially more complicated, let's say, than just adding one new dimension, or it's not just a little more complicated. It dramatically overcomplicates things when you move to systematic trading. And that's something that I did not expect. I did not look forward to, I guess, but I have grown accustomed to it and realized that higher level of scrutiny is a good thing. That we need to ask ourselves every time we want to put a trade on, is this a trade that I will be taking tomorrow when it sets up? Is this the kind of trade that I would have taken 6 months ago? You want some consistency in your approach. And that's where I've moved towards trying to programmatically identify these intraday trades. It's so much easier than just visually assessing on a chart. And even though I'm very good, at this point, having done it for 4 years with these patterns, there's nothing that will ever be, until they make Jarvis, the AI computer from Iron Man, where I can talk to it and say, Jarvis, show me all stocks trading above their 200-day moving average. And it'll be like, computing right now, Mr. Hurwitz. They're not going to make a better tool for us than what we've got in front of us, which is the coding language, where we can, dream in plain English, right? Where you write out the kind of broad logic, and Aaron, you and I have done this. We write out kind of the broad logic for the system. And then, it's your job or a developer's job. You can hire, an outside developer or a friend of yours, let's say, who's a good coder, or someone like myself, who can take that plain English and turn it into what I'd call pseudocode, or like we're saying soft code. And then eventually, if it's successful enough, and here's that great word, deploy. If we're looking to deploy it at an automated level, that's when you get into hard coding. But that's a wonderful problem to have when you're worried about market impact and scalability and a lot of things that Peter was talking about last week. I remember on the podcast. So.
Yeah, no, that's really cool. Bringing that back to sort of people who definitely aren't at that level yet, but sort of aspire to get into that coding sort of field. I mean, trading can often seem like a daunting task just on its own, but now you're sort of adding another layer on top of that with coding and developing and that sort of thing. I mean, how clued up do you have to be before you even start dabbling in this area? I guess the question is it a realistic goal for retail traders to work their way towards this?
Okay, that's another really good question. So here's a good free resource that I should throw out there to people. I know we've talked about it before. Finviz.com, that's FINVIZ.com. They are a wonderful starting point, especially at the kind of free or retail level, for people to start thinking about. And I know anyone who's familiar with the site is like, what are you talking about, Zach? Those guys aren't coding. What they are is systematic kind of identification. Select a few criteria and then show me the stocks that meet that criteria. It's very user-friendly, very engaging, very easy. I want people to start there because once they create, let's say, a basic scan that they like what the output is. Oh, wow, look at all these chart patterns. Look at all these channels, right? This is what I'm really looking for. Upsloping channels that are above their moving average and are part of the S&P 500. I'm making this up, but let's say that's your scan. What most traders don't realize is they've pretty much just done all of the basic coding they need to do to look for their first system. Now, obviously, we're still assuming they're a hand trader. We're not expecting them to begin coding anything. We're just expecting them to start logically. So separate, and when we say coding, guys, separate logic from syntax. The logic is the stuff that I don't care if you've never looked at a line of computer code before, you could probably create. Like, okay, stock must be uptrending. Stock must be above its moving average. Stock must be breaking out of new highs, whatever these logical conditions are. And then let people like me figure out the syntax to get them into the actual coding language, right? But starting at something like Finviz for scanning, I think that's how the average, beginning or intermediate trader would probably start with coding. Second resource would definitely be Thinkorswim. They have built one of, if not the best, beginners coding languages. I would not have been close to ready for some of the more big boy tools that I'm using now had I not started in Thinkorswim. They have a very engaging, easy to read manual. They have, I was going to say ample examples again, an ample number of examples, right? They have a great trading coding community as well. So, that's a little more intermediate, but still kind of somewhat beginner level. And then start talking to other coders. That's the other thing. They will, much in the same way I'm trying to relate all of my VWAP and trading psychology and coaching experience in an hour or so, reaching out to other systematic or very code literate traders who you may know or be able to come in contact with. It's very easy to say, hey man, sum it all up for me. What are the kind of things I need to start thinking about? And if you were I'm going to go into code for a second here, guys. Hold on. Batten down the hatches. Zach is talking about code, but Aaron, I think we even talked about this. There are input statements, things that the user can change. There are def statements, define statements, where you're kind of like defining a variable that's used in the calculation. And then plot, which is what do you actually want me to put on the charts. Now, granted, this is all in Thinkorswim code language, but it's simply to show that those three things, inputs, define statements, and then plot statements. That's pretty much coding right there. And if a former English major turned econ major, never done any coding in his life, can teach himself how to code and evolve into a systematic trader, I promise you there are people out there way smarter than me who are listening to this who have doubted themselves. You know who you are. I'm talking to you right now. I don't know who I'm talking about, but you know what I'm saying? Like, the people out there who are listening who say, yeah, I probably could do a little bit of coding. It doesn't seem that hard, and I could read a manual, and I'm a smart guy. You probably are. You're probably exactly the right guy to start coding. And especially in the last 5 years, we've had such a great democratization towards the trading utilities that are at our disposal. It would be absolutely backwards to not exploit this, especially right now when it is so right at our fingertips. I mean, it's a free download. You know what I mean? If it were 10 years ago, you'd have to know MATLAB. You'd have to know an actual hard coding language to ever begin. So the barrier to entry, the kind of learning curve would be ever steeper. Yes, 5 years from now, it'll probably be even easier. But I'm going to tell you the truth. Guys like Aaron and I are going to be taking your money at that point. So you better get started soon. I'm just kidding. But like, seriously, guys, and I'm speaking away from Aaron for a second. When I first met Aaron, I mean this, I said to myself, damn, kids these days, because he's a couple years younger than I, but like you can tell immediately, he's a hardworking self-starter. He's going to go far in the business. You will probably, you who are out there listening to this podcast, an hour and a half, gosh, long. If you're listening and this resonates with you, you know, guys like Aaron and I will be coming for you in a couple years. It's best to get a head start on us and start learning systematic trading whenever and wherever possible. And that's what Chat with Traders is kind of all about. When you want to advance yourself and you don't know an expert trader, how are you ever going to have access to them? This is the kind of public service that you're doing, Aaron. So I applaud you for that.
Yeah. Thank you. No, that's really good. So those few things, resources you mentioned there, I'll put links to those in the show notes, so listeners can definitely check those out and get amongst it if it's something that they're interested in.
Yeah, of course. And please, I encourage people to reach out to me. Sorry, I'm cutting you off, Aaron. Just so people know, don't feel like I'm up in my ivory tower. I'll give my email address, and obviously, if you guys have any questions, you can always reach out to Aaron. He'll put you in touch with me. So long as I haven't inundated you with requests, right? You're going to get 1,000 people to try to sign up for a 30-minute coaching session with me. I'm going to be swamped.
The more, the better.
I know, all the better, right? Yeah. No.
Yeah.
I would love that. I think that would speak to how many people are out there who are eager versus, just expecting that it's going to fall in their lap. Those guys are going to, screw up and blow up an account anyway. Let them go off and do their own thing. Those of us who are putting in the time on a Sunday night or Monday morning, whenever it is you're listening to this podcast, you're in good company. That's what I would leave you with. You know what I mean? I think that's what people need to realize, is that they're not so far from their dreams. They're actually a lot closer in some cases than, So.
Yeah.
Sorry, go ahead. You were going to say something.
No, that's really good, Zach. So we should probably sort of start wrapping this up. But before we do that, I'm just going to run quickly over my notes here to see if I've missed anything I was super keen to ask you. One thing I want to hit you up about, and that is, what do you think separates the traders who succeed and the traders who fail? Or maybe the traders who are just constantly treading water and never break through. Is there a common trait that you see, especially with your coaching background?
Sure. I mentioned this in the Xauusd TV interview that I did, and so I'm sorry I'm like quoting myself, but I realized like this is what traders need to hear. It's that most traders, certainly risk management. I mean, that's obvious. Like that is not a groundbreaking assessment of traders, right, and why they fail. It's the absence of mastery of one subject. And what I mean by that is not like, oh, they're a great Elliott Wave trader, or oh, they're a great so-and-so style trader, and that's just what they do and they've found success, because that's very hard to imagine when you're a beginning trader. Well, how do I even know what I need to go master? But that speaks to why the trader experience is the way it is. Not knowing what to master, they jump around from thing to thing to thing. And whether it's system to system or indicator to indicator or options to Forex to futures to... And I'm guilty of this too. Early on, I bounced around between options and equities and futures. I've never traded Forex, thank goodness. But I did the same thing. And I realized I wasn't learning enough about any of them to become competent. I was only becoming confident. And that's dangerous, because you need competence before you gain confidence. It's easy to teach someone, hey man, you're a better trader than you realize. Look at the evidence. It's very hard to teach people to be humble and kind of respect that they need to build more skill in an area. So I always advocate to people, whatever it is that you are passionate about or resonates with you or you have had success with, drive it into the ground with investigation. Find out everything you can. Talk to the experts. Read the white papers. Learn everything you can about that subject. Once you've mastered that, if you're still hungry for more, my God, there's a million other trading styles that you can learn to incorporate and take something from. It's the people who are constantly looking for the easy solution. Well, what should I trade? I mean, just tell me what I should trade. Where should I be? It's never going to work. Nothing is ever going to come from that. Because the people who are eager to tell you, oh yeah, you're just looking for something right now, I'll give you that quick fix. They're not your buddy. They're there to, here we go, the same old quote, right? They're there to make you feel better than they could ever make you trade. And I hope that people are hearing that and feeling it when I say it, because like, those kind of quotes to me, they stick with me too. This is I don't want to say predatory business, but it's something that you must be cognizant of, that especially as a developing trader, you're like a baby duckling, and there's hawks out there looking for a little snack. It's very easy for people to convince you, oh, you got to go with this. You got to go with this. You got to try my method. You got to try my method. You got to go with the people who are the most real, right? The most earnest, honest individuals out there. The people who are going to give you access to them, to talk to them whenever you have a question. I always tell people that psychology does not work on a 9 to 5 schedule. It works on a 5 to 9 kind of schedule. You know what I mean? Like your psychology is what happens all of the off hours. I mean, it certainly happens during the on hours too, but it's the what trading does to you when you aren't in front of your screen. And people don't do enough examination of that. So I'd kind of condense this approach. It's not only a bit of mastery of one subject. The traders who master one thing get better at mastering any subject. But also they recognize that psychology is just one more subject. It stops being this white whale of, what I'm after all along. If I just master my psychology, eventually it becomes, oh, well, I learned how to trade VWAP. I learned how to be disciplined with VWAP. I could be disciplined with myself. I could learn myself. I could do this too. And so it's a confidence building exercise, as well as it is organically the right approach to take. That you aren't going to retain a little bit about options and a little bit about Forex and a little bit about this style of trading, and a little bit about day trading, a little bit about, that just doesn't matter. You don't want to be a jack of all trades, master of none. It's a stupid approach. And I swear to you, when you're explaining, here's the thing that should connect with traders out there who have had to explain to someone, yeah, I'm a trader. And they say, oh, what kind of trading you do? And you say, well, I do a little RSI trading. I do a little support and resistance trading. I also trade some chart patterns. I also trade point and figure, and I trade Elliott wave, and I trade. You sound like an idiot. You know what I mean? Like any real trader is going to be like, what? Which of those do you actually trade? Do you trade all of those? Do you trade none of those? Do you know what you're talking about? You want to be able to say competently, well, most recently, for the last 8 months, I've been focused on, doing analytics on options volatility, comparing implied to historical. And I've adapted a system that I've developed with the Black-Scholes model of discussion. It's just like, whoa, that guy sounds like he knows what he's talking about. So not only from a perception or like interpersonal standpoint, but also like, don't you actually want to have that expertise such that you can say, I've dove as deep as the pool will go. And I've come back up for air. Now maybe I'm going to go explore another ocean. Maybe, before I jump into the Mariana Trench of whatever trading systems, or maybe that's coding is kind of like the deepest, darkest recesses of the ocean. You know what I mean? You gotta really prep yourself for that. But who knows? I haven't come up for air since. So what can I say?
No, that's really true. So thanks for breaking that down, Zach.
No worries.
So let's just run into the closing bell, which is just a few short questions to take us out. And sure. These are totally generic, so I ask them to...
My favorite color, what I want to be when I grow up, favorite type of pasta...
Pretty much.
Yeah,
no.
All right, go for it. I'm all ears.
Yes, so the first one would be, what is one piece of trading advice that has stuck with you ever since you initially read it or perhaps heard it?
Okay, I'm going to try and say it in the same accent that it was said to me. It was by Ben Lichtenstein, who, what's the company called? I think it's like MarketCast or like Traders Audio. They're the guys who run the S&P Pit feed. And he says this pretty much at the end of all of his, trading squawk sessions. He says, if you want to be here for the good days, you got to be here for all the days. And what he means is like, you have no fucking idea what the best days are going to be. You have to show up every day and apply the same level of intensity and focus, because the minute you look away, it's going to be a good day. You're not going to capitalize on it, and you have no idea when the next one's coming. And that is what builds that kind of negative, reinforcing, shitty self-psychology that I was talking about before. Well, of course I slept in today. Of course it's going to be the one day the SPY moves. I had all my puts on. It's like that negative poison that we spew to ourselves. It's unfair. And it was totally random. But because we don't follow through with kind of having a healthy respect for here's one more class that did help me at Tufts. I should have mentioned this. Introduction to Socratic philosophy, looking at Socrates, who, kind of paraphrasing, really brilliant man, but he said, the one thing I know for certain, the one thing I really do know is that I don't know everything. I can't ever know everything. That is my one absolute, is that I'm not the man. I'm not a genius. I'm just another man. Right? I'm another human on this planet. And kind of healthy, humility, right? A very honest humanistic approach of like, I am but one man in a group of men. And realizing that, that's really powerful to me. I stopped trying to swing for the fences and realized that if I just made a few $100s a day, I'd probably end the week really positive and be happier and healthier and more balanced. I did that for a week, went well. I'm going to try that next week. And then here we are now 4 years down the road, and I've never stopped. I think I would psychologically collapse. I would just like fall apart if I had to trade the way that I had traded for the first 2 years, for the next, 4 or 5. It takes too much. Not only time, but effort and energy and psychologically, like it just, I would be balding. I would be like Kenny and Lucci, right? We joked about this. They've got shaved heads, they're losing their hair. Guys like me, same sort of thing. I probably would be ripping clumps of my hair out. I'd be balding by now. So there you go. If you want to be here for the good days, you got to be here for all the days. You have to treat every day as an opportunity with the same respect and humility, rather than dynamically sizing, well, today's the big day and I'm going to go, who cares? Who even knows if you're right? I mean, the market will tell you if you're correct or not.
Yeah, no, those are two really great quotes. So really cool. Is there one book that you believe is a solid read for any new to intermediate trader?
I have two. Reminiscences of a Stock Operator. I love that book. Edwin Lefebvre. I don't know if I'm pronouncing his name right, but that's my attempt at a French accent. Lefebvre. I don't know how to, whatever. Reminiscences of a Stock Operator is the fictional-ish account of Jesse Livermore, one of the best traders to ever live. Anyone who knows the story of Jesse Livermore knows why I put emphasis on that, the greatest trader to ever live. Anyway, it was a fascinating story, and the parallels ring true in 1908, 2008, 1808, doesn't matter what year. He's talking about human psychology, and there's so many good anecdotes from that book. I know that's an oft quoted, and people will refer back to it, but I love it too. It's one of the few books that I've read in the trading space, and by design. I didn't want to kind of impact my own view of the markets by having 16 other books that had kind of designed my course for me. I wanted to meander. I wanted to build it kind of my own way. And partially, I think that's what Livermore's story is about, is building a visceral or qualitative connection with the markets, as well as having a quantitative appreciation or understanding of them. And then the second book would be anything by Jack Schwager, anything in the Market Wizards series. And the reason I suggest that is it is so easy and fun to read. Oh my God, I can never put those books down. They're interviews with traders. I mean, do you want to hear about the best people? Where are we right now? We're on Chat with Traders. If you're interested in this type of stuff, over the last 20 years, Jack Schwager's interviewed some of the best. I actually have hedge fund Market Wizards that I'm 2/3 of the way through right now, which is a wonderful read. And it's a little more modern, not to say that the old ones are archaic. I think the oldest one is like 1992, I want to say 93. So a little bit dated in some of the references, but I think it's also, it's almost like reading a Dan Brown novel or like a Michael Crichton novel, those airport bestseller type books. It's like, it's that level of, I could just sit here and just churn through these pages, but that's not doing it justice, because it's obviously, I think, a higher depth of read than Michael Crichton or something. But it really, it resonates with me that strongly, that you get to hear in their own words with their own anecdotes. And Jack Schwager does a tremendous job talking about the context surrounding the person. He does a lot of research on them and tells you, more than you'd expect to get. You expect it's just interview questions, but he's like, look, when I met with them at their offices looked like this. Can you picture, being on this side of a cliff with blah, blah, blah. I'm making this up again, but he really sets the context or sets the scene particularly well. He's a great author, and the interviews are incredible. And the fact that it's vignettes, it's not one book of this guy's story. It's 70, market masters over 2 decades, So clearly I'm also repping Chat with Traders too. Like, I'm serious. I didn't even realize, like, I was looking at the book and I was like, wait a minute, like, what's a modern version of this? Like, it's exactly what we're doing right here. And I mean this, man. I told you before we hopped on the podcast, but I admire you too. And tremendous respect for what you're doing altruistically for other traders too.
Thank you. I appreciate it, man. Yeah, those books are the real deal. I'm actually trying to convince Jack Schwager to come on the podcast.
Oh my God.
So
I'll send you like a piece of paper. You can ask him for an autograph from me or something. I'm kidding. I'm such a fanboy though, but like really, he's a huge name. And you've already had some great people on the podcast, man. Props to you for that. I felt like, well, if he really wants me to have me on, I guess I have to go. I'm kidding. I have tremendous respect for just guys like Pete and Lucci, Tim Sykes, who I know, obviously I went to college with. We didn't know each other at Tufts, but we were in the same dorm. Coincidence, right? Trading lightning may strike twice. I'm kidding. But yeah, it's a tremendous community you're building too. So.
Yeah. Well, I mean, that's the whole sort of, was sort of one of my motives for starting the podcast, was to sort of meet other like-minded traders and connect with them and sort of...
Let me speak to the listeners for a second. Do you guys realize what Aaron has done? He had a dream, he made a website, and he did it. He didn't, the phrase measure twice, cut once. He didn't sit around and measure 6 times and dream about what it'd be like to interview these traders. He just called them, he organized it, started disseminating it. People like yourself, like myself, are listening to it now. That is the example that you should be really picking. I mean, really, Aaron, you should like have me interview you for your own podcast. But seriously, because I really mean that. I'm not trying to just blow smoke up your skirt. I'm telling you, like, most people would never, let's say we're talking about, I have an idea for a system, but I don't know if I'm ever going to code it. There are people out there who will help you. That's the lesson of this podcast. Wherever you are, whatever you need, wherever you're headed, the world is a big and friendlier than you might imagine place. And Aaron, we talked about this. I mean, we're in diametrically opposite parts of the world on diametrically opposite time zones. And the fact that we can connect, share ideas, share screens. I mean, we live in a wonderful day and age. Take advantage of that, people. Get out there and start making whatever your eagle vision is. Be the mouse, draft the details, and then be the donkey and get this into reality, whatever it is.
Yeah, yeah, that's really true. One of the last questions would be, knowing everything you do now, what would you have done differently come day one again?
I think I would have told myself that you're not going to get rich if you quadruple your account. I think that's something that I kind of had an epiphany about a couple years back that, I always tell people, think about your account and double it or quadruple it. Are you life-changing rich? Oh, no, you're not. You just have a little more money now in this hypothetical. Okay, then stop trying to quadruple your account now, right? It's not about, I was thinking of very oversized trades that I took early on in my trading career that oftentimes I was like right about the thesis, but I was really bad in the execution. I wasn't very smart about where to put the trade on or how to add to the trade, how to do position management. Don't make the stakes so high is what I think I'd tell people. That this seems like a really intense game you want to participate in, and it's where the big boys play, and we got to really, you're trading against the best and the brightest and all these other algorithms. Yeah, I mean, sort of. You're really more trading against yourself. And I think people they feel kind of foreign when they hear that. They're like, well, what do you mean? No, I've never had to do self-control, in anything before. I have other people who are my managers or my boss or my parents or somebody who's my kind of overseer. You're on your own, kid. You're out in the cold, solo, and you've got to. It's kind of like I'm an amateur pilot flying a plane by yourself. It's not something to be taken lightly. Like, the stakes are pretty damn high. You know what I mean? But when you're in a simulator or you're in a classroom and you're just taking a test on basic aviation, stakes aren't that high. So don't treat yourself like you're in Top Gun there. You know what I mean? Like you're not, especially at the beginning, you are not at that level of intensity yet. So partially it's, what I'm trying to say is don't fool yourself. Partially what I'm saying is don't make it harder on yourself. You know what I mean? Like trading is a hard enough business, and adding the emotional intensity to it only compounds that, exponentially. Again, it just makes it really, really, really hard to deal with. I've seen many traders mentally collapse more than I've seen traders financially collapse. I know that sounds weird to say, but I really mean that. I've seen more traders who stop trading because they don't know how to succeed, they don't feel fulfilled, than they blew up their account and they ran out of money. The kind of grandiose explosion of a trader, when it happens, it's memorable, and therefore we talk about it a lot. Like, oh, did you hear about so-and-so? He lost 100 grand or something. I understand that. That's a high profile or high intensity example, that we may look back to. But the average failed trader is somebody who just can't get what they are looking for out of the markets. And so I would stop trying to peg it to dollars and cents. Start looking about it as intellectual fulfillment. Treat this like a puzzle that the stakes are pretty high, but they're not life or death. You are learning how to solve the puzzle ever more with each passing day. And it is the smartest man in the world who can learn how to gain an education without taking the risk that others take in order to gain said education. You know what I mean? Like, the market will teach you what it needs to teach you. Whether that costs you 6 months or a year or 5 years or 50 years is up to you. Whether that costs you $1,000 or $5,000 or $50,000 or $500,000, I mean, that's up to you. You choose your tuition in the market. And being cognizant of that, I mean, like, I think because I just gotten out of 4 years of undergraduate, I was a little blinded, let's say, or saturated probably with the academia thing. But I didn't do too much planning for my own path. I just, as 2008 financial crisis hit, I started trading, and I figured I would, dig my way out once the whole thing settled. I should have done more planning. I should have had more foresight as to how am I going to be a happy, balanced person. And that's the biggest also change that I would say, man, it's certainly more personal than professional, but learning how to build a happier life for myself. And that's when we get beyond to make ourselves feel better than it could ever make us trade, to make us be better than we could ever hope to trade. And that's when you've really won, when you feel happy, when you feel fulfilled, when even if trade goes bad, it's just a trade that didn't make money. It's not a failure. It's not a personal loss. I didn't screw anything up, and I don't deserve to feel so bad about it. What I do deserve is to do some honest assessment about why that trade didn't work and how I could have done it better. It's like when you go off a diet, do you starve yourself for 7 days to make up for, eating a piece of cake? No, you just go back on the diet the next day. We need to get over this kind of, cinematic level of intensity to our trading careers sometimes. I think that's what I'm broadly getting at. Don't make it harder on yourself than it has to be.
Yeah, I really like that. That's really good. So
on the bright side, this podcast is going to have a lot of great quotes that we can pull from it. So the people who go down and they say, too long, didn't read, or oh my God, 2 hours, didn't listen, which I don't blame you. If you're skipping through and you just click to this part of the podcast, you're a jerk. You're like the guy who drives up alongside that line and then, tries to put his turn signal on at the last second to get in and just, I'm kidding. No, I'm just kidding. I'm kidding. I hope that we can summarize a lot of this for people. I appreciate that you've been patient with me in kind of indulging my meandering. I feel bad, like a guy like Peter Zhang from last week on Aaron's podcast, who is 20 times as well-connected and bright and experienced as I am. I think he nailed everything in an hour, hour and a half, hour and 15. Here I am. I'm stumbling over for 2 hours. I'm just babbling.
Not at all. It's been incredible. It's been really good. I think listeners will definitely pick a lot of gold out of this one. Good
stuff.
Before we wrap things up, let's do two different things. So if you just have a question for Zach, and you just want an answer on that one, just go to chatwithtraders.com/Zach. That's ZACH. If you want to do, he's also offering to do a 30-minute one-on-one sort of consulting, coaching session with listeners. So if you're interested in that, just shoot me an email and I'll put you in touch with him. So my email is Aaron, AARON, @chatwithtraders.com. And we'll do it that way.
Yeah, absolutely. I appreciate you being the intermediary. I'm very flexible. Obviously, I'll give people my Xauusd email address. So this is for any future questions, or if you're looking to get in touch with me. Zed, I should say. I almost said Z because I'm a Yankee like that. Zed HURWIT as in Tom, Z or Zed again at Xauusd. That's SANGLUCCI.com. And anyway, if you reach out to Aaron or reach out to myself, I'm happy to field any questions. It would be a wonderful problem to have if people were eager and excited to push themselves further along the path of trading. You know what I mean? We need more of those people and fewer of the guys who are sitting around saying, what should I be trading today? Well, I have no idea, dude. You know what I mean? We need more students in the market. We need more people like you and I, Aaron, more young guys who are committed to this. So.
Yeah, word. So I know a lot of our listeners are very active on Twitter, and you also have a Twitter account. I know you're just starting out, so don't be too harsh on them. But
please, I tell people, tweet at me and prove me wrong. Prove to me that I should have been on Twitter a long time ago.
Last time I checked, your display picture was still an egg. Is that still the case?
No. Look, man. I got the lecture from Charlie this week. He was like, "Dude, I appreciate you putting your Twitter handle in the blog post, but you look like a sketch ball, man. We got to get." I said, "You're right. No, it's actually me. I'm so bad about social media, and so guys, you can laugh. This is where I am absolutely the infant learning from the master. You know what I mean? So I appreciate anything that I can pick up on from anybody out there on Twitter. If you want to tweet a chart at me, if you have a question, any of that. You can feel free to put my Twitter handle. It's just my name at Zach Hurwitz. No spaces, no dots, no nothing. ZACHHURWITZ. There we go. Got it. There we go.
Awesome. And
I'm learning slowly.
A link to that will be in the show notes, of course. And
awesome.
Hopefully we can get you a few more followers and get you a bit more active on Twitter.
No problem. Well, and that's the saddest part is people are like, "Hey, should I follow you on Twitter?" I'm like, "You're going to be exceptionally bored, but I'd appreciate it because it will motivate me to use it as a smarter medium for disseminating my ideas." And I really do love it. I love that it's like we were saying, democratizing. There's a really low barrier to entry right now to a lot of the intellectual realms or skill sets or networking tidbits that you would normally not have access to. Take advantage of that, my friends. Oh my God, if that's what I would do, I would go back in time and tell myself at the very beginning of my career, just wait a few years, things will get a lot easier. There's a thing called StockTwits coming out. You should pay attention to that. I would also probably tell myself to buy some Tesla. I guess theoretically, if I could, that's what I should have said as my my answer to, what would you tell yourself when you're just starting? I'm kidding, of course.
All right.
But,
Great.
Well, thank you so much for having me on, Aaron. I mean, seriously, it's an honor to be included with this high caliber of a crowd.
Right
as well
back
as
at
to
you.
be talking to,
No, I really appreciate you coming on.
To
let's make it a wrap, and we'll keep in touch, and we will speak soon.
We sure will. Hey, thank you guys, everyone out there on Aaron's podcast. Really been a pleasure.
All right. Thanks, Zach. Talk to you soon.
Cool. Talk to you soon, Aaron. Thanks, man.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Every decade, the market reinvents itself. Online brokers opened the doors. Mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool, limited risk trading. From now on, your trading risk is capped and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade large positions and scale your strategies without risking your own savings. It's time to trade with more capital, actually worth more of your time and effort. Ready to trade the pool? Click the link in the description and join Stock Trading Revolution today. Doesn't your portfolio deserve the best? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Trade smarter with advanced charting tools, backtesting, a pre-built strategy selector, and more features. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory, exchange, and clearing fees still apply. Options involve risks and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Hey, what's going on? Welcome back to another episode of Chat with Traders. This week, I'm pumped to introduce an incredibly humble, relatable, and overall genuine trader, Adam Ryan of Optic Trader. He's actually also the first Canadian guest on the show, which is really cool. But just like the majority of those who make it, Adam will not hesitate to tell you he was no overnight success. He went through the same struggles and faced the same challenges that many of us can relate to. However, the one thing that set Adam apart was the fact he never gave up. And it was that determination and perseverance that landed him in the hot seat with a trading mentor who was able to steer him in the right direction. Jumping forward a few years, Adam has now forged his own method for success and actively trades crude oil, gold, and the S&P 500 futures. During this interview, you'll hear about his journey on a much deeper level, and you'll pick up many great pointers, especially around the topic of setting goals and how to actually achieve them. Okay, here it is, this week's interview with Adam Ryan. Adam, how's it going?
Pretty good. Yourself?
Not too bad at all, man. Thanks so much for coming on. It's really good to have you on the show.
Oh, no problem. Thanks a lot for having me. Glad to be here.
Awesome. So, how'd you go in the markets today? Did you do all right?
Yeah, today was a pretty good day. Pretty easy going. I went long in the S&P in the morning. A little break out of balance, but we were actually in a longer term balance, so it kind of chopped midday till it got up there. Not too exciting.
Okay, good stuff. We'll just run through a few different topics. We'll start off with sort of how you got started. And I know you had a mentor early on, so we'll have a few questions around that.
Okay.
And then we'll speak a little bit about your actual trading style and how you're approaching the markets. And I noticed you're using some sort of probably not so common indicators on your charts. So I'd like to ask you a few questions around that. And then just some advice for other traders who are at that beginner intermediate level who are, on their way to becoming pros. And, that should probably take us through. How does that sound?
Oh, yeah, it sounds good.
Awesome. So, this is going to be great. So let's just get right into it, eh?
Okay, perfect.
So, Adam, if you'd like to just give us a bit of a background on yourself and tell us how you actually got into trading.
Okay. Well, I got back into trading. I was actually working 2 full-time jobs at the time, back to back. I only had about 45 minutes gap in between the jobs where I could quickly run over to the bus, get on the next job, and I was doing it to save up for a car. Now, I couldn't really keep this up because it was just 2 full-time jobs. It was pretty tough on me. And then when I did get the car, I quit one of the jobs. But having half the income, I was kind of like, man, I need to do something else to get up there again. I want to make some money, and I don't really know what to do. And I stumbled across the stock market, and I thought, yeah, this is it, this is it for me. And I did a little more research, and I seen that, the same guys year after year were coming out ahead. The hedge fund guys, they were on top. They were able to make money. So it was more to this than just gambling. And I thought, I'm going to open an account, and I thought I'm going to start with penny stocks because it's affordable. I only had about a $10,000 account, so it was a pretty small account, and my thinking was if I trade penny stocks, they're more affordable, they're cheaper, then I can get started that way. Now, at this point, I had no clue about anything. I didn't know about how the market works, risk, control, nothing. So I didn't even have a strategy. I just went in there and I knew I wanted to buy penny stocks. So the first stock I ever bought was Turbo Power Systems. I don't even know what it did, what the company did, but I went in there and it was trading at 1 cent to 2 cent, 1.5, going up and down like that. And I figured, wow, if I just buy this at 1 cent, goes up to 2 cent, I got 100% profit right there. So it went down to 1 cent. I put an order in. And it just sat there for a while. It moved off. It sat there, moved off, sat there. And I wasn't getting filled. I'm like, well, what's going on here? The market's trading at my price. Why am I not getting filled? So I decided, I'm just going to put a market in put an order in above the market, and I'll get filled for sure that way. So I got filled at 1.5 cents. And I was like, this is awesome. Once it goes up to 2 cents, I'll sell and I'll still get a 50% profit. So the market ends up going to 2 cents. And I just can't get out. And I'm wondering, okay, what's going on here? So the market goes down, keeps going back up, and then the market closes, and I didn't get out of the position. So I'm like, okay, maybe I'll get out tomorrow. So the next day comes, and the same thing happens, and I'm unable to get out of the position. And at this point, I don't know anything. So I'm thinking, this is the broker's fault. It's definitely the broker. So I call up my broker, and I say, hey, what's going on here? The market's trading at 2 cents. I'm trying to get out. Why can't I get out? And he's like, well, there's not anyone on the other side of the trade. There's a long line of people waiting to get in at that price. And I'm like, well, what do you mean there's a long line of people? Like, how long's the line? And he's like, it's really long. So I thought, okay, I better just, liquidate the position at a lower price again. And I did that, and I ended up losing half my account in 2 days because I put all my money into that thinking it was going to be this great idea. And at that point, I thought, okay, I'm going to have to step back from the markets for a little bit, and I'm going to need to learn something. So I stepped back, I stopped trading for a while, and I just did some research, looked around on the net, and I found technical analysis. And I thought, okay, this is it, technical analysis. So I got to learn this technical analysis stuff, and then I'll be golden. I'll be a professional trader, and that's it. So I went on Amazon. I bought this 600-page book on technical analysis, all the patterns, all these setups and everything. And I thought, this is it. I got it now. But they don't teach you why the patterns are occurring or what context you need to take the trades in. So it really didn't really get me anywhere. But after about a year of doing this, I started seeing a little bit of results. And I was paper trading because after that big hit, I didn't want to put any more real money into the market without having a system and knowing what I'm doing. So I was paper trading for about 6 months or so. And I started seeing some decent results. I thought, okay, well, maybe I should take this live again. But doing it with a job, I didn't feel like I was fully committed, and I wanted to be a trader, and I just thought this is for me. So I quit my job, and just before I did that, I was about to buy my first home. I had $25,000 saved, and I said, you know what, I'm going to just trade, and then in 6 months I'll have 100,000. In a year I'll have $1 million, this crazy idea. And I just went at it, and it didn't go as well as I thought it would go. I was struggling at the beginning. I never really lost too much money because the main thing for me was I made a million mistakes, every single mistake a beginner trader could make except one. I always respected the market, and I never went above and beyond my risk parameters. I set risk for myself, and I stayed within it. And the main reason for that was because I had no job. This is all the money I had. I had the $25,000 account, and then I took out a $10,000 line of credit on top of that. And if I lose this, I was just done. I don't recommend traders doing this, but it's what I did. And I went that way. And then I kind of stayed, even a little bit up, a little bit down. My first week, kind of what set me up, what I thought I was going to be so successful, is because I made $2,300 in my first week. And then it was just back and forth from there. It was kind of a little beginner's luck. And I thought, you know what, I need to get some education here because I'm definitely not doing something wrong here. So I found this educator, and I thought, yeah, this guy seems like he knows what he's talking about. They got a couple of courses. I took their courses, and then I spent months and months and months learning this guy's system, executing it in the market, practicing with it, and to only find out that I had no real edge in the market. What this educator was teaching me was nothing. It wasn't even proper anything. It was just terrible. He didn't trade for himself. And I was devastated. I was like, man, I spent all this time learning this guy's system, and now I'm back at square one. It doesn't help me at all in the market. And I just kind of kept chugging along, went back to my old system, and here and there I would look online and see, okay, let's see if there's any good education out there, if I can learn something from some forums here and there. And this was about a couple years into my trading now, and I still wasn't where I wanted to be. I was seeing marginal success, but I wasn't really getting ahead. And I found this one trader, and just by hearing him talk, after being in the market for a little while, I could understand who didn't know what he was talking about and who did. And this trader really sent different. He wasn't just pressing, oh, make easy money here, buy this, you're going to be rich in a week. He was saying it was difficult, it was tough. And he laid out, kind of a little path for success, and he had a course. And I thought, I'm going to take this guy's course. So I took this guy's course, and it was quite a bit more expensive than the previous course I took. But I figured that, if it's a better course, it'd be a little more expensive. And I was just blown away. I couldn't believe it. What I was learning was just totally different than what I was doing. And I was using all these different indicators and, always on this quest for the Holy Grail. And this was saying, no, get away from the indicators, learn price action, market structure, and kind of simplify the trading a little bit. And that's what I did. And then from that on, I started moving forward. It wasn't an overnight success. I still wasn't doing that great with my trading, but I could see it kind of moving in the right direction. So then I shot this trader an email because I was just blown away. And I said, yeah, I'm blown away with your course. It's such a breath of fresh air to finally meet a real trader who's offering this education. And he was living in the US at the time. I was living in Canada. And just by chance, he emailed me back pretty quickly, and he said, hey, I see in our records you're from Calgary, Alberta, Canada. And I'm like, yeah. And he's like, yeah, I'm actually there right now. You want to go out to lunch? And I was like, yeah, sure, I'll go out to lunch. And I was just like, wow, this is awesome. I'm going to get to sit down with a professional trader and talk. At this point, I've never even met a professional trader or even known one, because around where I'm from, no one even trades. I don't even really understand what I do when I explain it to people. And here I am going to get to sit down with a professional trader, and he's going to take me out to lunch. So we went out to lunch, and we ended up talking for about 2 hours. And it was just, I kind of got to pick his brain a little bit. He was kind of picking my brain a little bit, as how I found his course and why did I choose him and all that. And we kind of left it at that. And I went on my trading for a little bit longer. And I had my first really devastating loss a little while after that. Now, the account wasn't that large. It was maybe 35, 40,000 around there, just a little bit higher. And I took a loss of around 3,500 in one day. And I was a guy who always respected my risk, but I was into this position and I thought, yeah, it's going to go up. All the market signals are pointing this way. I'm going to get long. And then I got stopped out right away. And I let the emotions kind of take over. I got really angry, and I thought, you know what? I'm going to revenge trade. I'm going to double up my size. I'm going to get this back. I'm going to show the market kind of thing. And I went in there, and then I took a bigger loss. And I was just like, what the heck have I done? This is just massive. And I stopped trading for the day after that, and my heart kind of sunk. And at this point, I was actually moved back home with my parents. I was renting a condo. I decided to move back home so I didn't have to be forced to earn. And there was a spare bedroom beside the office I had upstairs. And I just walked over to the office, and I collapsed in the bed with my head down. I felt like I was in the dumps. And my dad came home from work a little while after that, and he walked in and he said, hey, what's going on? And I'm like, my life's over. I just lost so many thousands right now. Like, I don't know if I can make it as a trader. Like, it's just too tough for me. And then he said something to me after that I don't even think he knows kind of picked me up and motivated me. He said it as a joke, but it actually is what got me up and going again. And he's like, don't get so down on yourself. One day you're going to be the professional trader taking money from a sucker like you. And he kind of laughed it off and walked away. And as weird as that sounds, that actually kind of motivated me, because I'm like, wait a second, I am a novice trader. One day I will be a professional, but I'm still learning. I got to stop putting so much pressure on myself to earn here. I'm going to make it one day, and I just got to keep going. And I got up, I went back to the charts. I started dissecting what went wrong. And, I typed the entries into my journal, and I went from there. And that kind of gave me the courage to message the trader who kind of mentored me again. And I said, hey, man, I just had this terrible day. I kind of explained it to him in an email. And he said, you know what, I'm going to call you up and we're going to have a talk, and I'll get through this with you. So he called me up and he said, listen, Adam, this happens to the greatest traders, okay? Everyone makes mistakes, but the way you feel right now, you don't ever want to feel that again. So don't ever do this again. I'm like, yeah, I feel terrible. Like, I don't want to go through this again. And we talked for a bit, about 30 minutes or so, and I was really feeling a lot better. And he was telling me about how some struggles he went through in his trading and how he overcame them. And then I was like, hey, man, do you think you can do some private coaching, kind of mentor me a bit? I'm close. I know I'm close, but I need that extra little push. And he said, I don't know. I'm getting ready to write a book here, and I don't know if I'm going to have the time to do it. But, I've already met you, and I've seen, how dedicated you are and how much you wanted. And you remind me of me when I was starting out. And he's like, you know what, I'll do it, but we got to start on Monday, and it's only going to be a month long, right? And I was like, oh, that's all I need. Thank you so much. So we started on Monday, and every day after the close, I would write down my trades. I'd mark them up on a chart. I'd send them to him, and then he'd kind of critique my trading over Skype. And we did that it was only a month, but just doing that for a month and seeing where I was going wrong, having a professional trader tell me, okay, you know what, the market gapped way down here and you're still thinking you're getting long, a change has occurred now. So I was like, oh, wow, I never really thought of that. And a bunch of other aha moments I had. And after that, a little while after that, consistency started to set in. I really started reaping the rewards of all that hard work. I paid off. So I was pretty happy with that. But it wasn't an overnight success. I didn't just take that mentorship and then I was doing crazy. What really boosted me up there was when I started going above and beyond the training. I started making my own observations. I started understanding what's really going on in the market. And I started to be able to understand, at different times in the day, price is being controlled by different participants on a given day. So sometimes the higher time frame participants are controlling the market. They got different buying and selling patterns, and the market moves a lot different. Sometimes day traders are controlling the market, and they have different buying and selling patterns, and the market moves different when they're controlling it. And I got a really deep understanding of how the market operates and what drives price. And that's kind of what really took it from there. I was able to buy my first home. My son was born. I started a family, and trading's been really good to me. And I decided, you know what, I want to start a business and help traders like me, because I remember how it felt when I was just struggling and somebody helped me out, and I want to do the same for other traders. And that's pretty much my story in a nutshell.
And here we are now.
Yeah.
That's awesome, Adam. Thanks for sharing that in such great detail. That's awesome.
Yeah.
Just taking a step back there to the mentoring side of things. So how important do you feel that was to your success? If you hadn't had that, where do you think you would be now?
I think it's absolutely crucial to anyone's success to get a mentor, because I think I would have done it because just the kind of person I am, but I think it probably would have took years and years longer, because a mentor's already been through all that. They know what works, they know what doesn't, and they can kind of get you on the right path very quickly. And they can say, okay, you're doing this wrong. You kind of need to come this way. This is not going to work in the market. You got to get away from all these crazy indicators, blinking things across the screen and doing all this crazy stuff, and just understand price action. And having a mentor there who's already been through all the ups and downs and who's where I want to be, like he's right where I want to be right now, is huge.
Yeah, no, definitely. I agree with you on that one. That's really good. So for others who might be in sort of like a different sort of situation, who might still be in that learning period, and sort of still trying to get profitable and trying to get some consistency in their trading, what would be the best way for them to find a private mentor? Like, how would they reach out to someone who they think could, teach them, on a private sort of level? Like, that's not an easy thing to pick up. How would you say would be a good way to approach that?
See, that's extremely difficult to say because it's very difficult to find a mentor, first of all. And second of all, you may find one, but the majority of them out there, they're teaching terrible methods and they don't really know what they're doing. So it's really difficult to find a mentor. But if you do find a mentor, you want to hold on to that mentor and stay as close as you can. And that's kind of why I offer a mentorship program as well, because I've seen that there's a void here that's not being filled.
It's definitely an important one and a tough one to get hold of. So you might have touched on it in your story at the beginning there, but how long was it after you got started before you were reasonably profitable and sort of consistently profitable with your trading?
Okay, well, about year 3, I started seeing like the consistency was going pretty well. I know that's seemed like forever to me, but 3 years is a decent amount of time to not be really making much money. But it wasn't long after that. Once year 4 came around, it was like exponentially, it grew right away because consistency is just the hardest part. And although that's just one step, once you get consistent, then you can move on from there. And it kind of grows very quickly after you get consistent.
Would you say that the sort of 3 years is a reasonable time to allow yourself, or to like go in with that expectation that learning to trade and become profitable could take me up to 3 years or more?
Yeah, I think you should definitely think like that. Now, I know my mentor, it took him, I think, a year and a half or something like that. Like, he was really quick at it. So I kind of always thought, I got to do that. That's how quick I got to be. And when I didn't get that quick, I was thinking, well, am I really straggling behind here? And he said, no, like, I just did it quick. This is a normal timeline. So I think you should expect 3 to 5 years around there. If you can get a mentor, you can definitely shorten the time of that, but it's not a get rich quick kind of thing at all. It's going to take time.
Yeah, that's really good. So I'd like to talk a little bit more about how you're actually trading the market right now and get a better understanding of that. So let's focus in a little bit on your approach to the market. I believe you're mainly a day trader. So was this something you naturally gravitated towards, or did you try other various styles of trading as well before you sort of stuck with that?
Yes. So first I started off swing trading. And I actually wanted to start off as a day trader, but it just seemed way too complex and too much going on. So I thought, I'll start swing trading first, and then I'll move my way into day trading. So I swing trade at the beginning, and I was just holding for 2 to 10 days. This is when I just had a simple moving average crossover system, nothing else. And I was doing that for a while, and it was actually going not too bad. And then I wanted to move into day trading pretty much after I had a pretty big hit overnight. And I didn't really like that overnight exposure. I tried to get out of the trade pre-market, and I couldn't get out. So I just thought, yeah, you know what? I want to get my risk lowered and just exit positions at the end of the day. And then I decided I'll try to day trade from there.
Okay, so what do you think are the sort of main advantages of day trading compared to swing trading? You mentioned the overnight exposure, but is there anything else that has you sort of more in favor of being a day trader?
Yeah, the risk, but also I believe that it's easier to predict the shorter term moves than the longer term moves, which is kind of not what everyone else says. And I don't mean like moves within seconds. I mean like the intraday swings, like when I can see the higher time frame players coming into the market, I can expect price to go a certain way. And it's just easier for me to predict short-term market action than it is long-term, because many different things can happen. Many different news items can come out and change the way that a market can move long-term.
Okay. I mean, what are you trading? Are you trading stocks, indexes, commodities, currencies? Like, where do you sort of lean towards?
So I trade futures. Like, I'm actively trading futures. That's what I mostly trade. But my method works on any instrument with sufficient liquidity. But what I do is First, I take a top-down approach to the market. So I look down at the furthest time frame. Even though I'm just a day trader, I have to be aware of key reference areas on the bigger picture scale. So I'll start with a monthly chart where each bar represents 1 month, showing me several years of data. And then I'll drill down to the weekly chart, and then I'll drill down to the daily chart, and then I'll drill down to the 5-minute. And I'm drawing key reference areas on each of those charts, finding support and resistance zones where I think buyers and sellers are likely to become active and where one of the two is going to be aggressive. Now, once I pinpoint that, I go to the profile charts, which they're market and volume profile. And market profile is showing me how much time the market spent at a particular price. And volume profile is showing me the actual quantity that's traded at each price. And without getting too in depth with that, I use that to find key reference zones as well. And I'm pretty much trading around those levels.
Yeah, that was actually one of the things I was going to ask you about, was those profile charts that you've been using. So for those listening who might be unfamiliar with this, it kind of looks like a volume bar that's running, instead of horizontal, it's sort of been turned 90 degrees and running sort of vertical up the side of the chart. So can you just speak a little bit more on those and what they sort of actually show you?
Okay. So they show me where value is at any time. So when the profile gets fat and you see a lot of those bars running, that's showing me that a lot of volume is transacting at that price. So that's where the market perceives value at. So now I don't trade price as much as I trade value. So if the price could be going up, but value is moving lower, so the volume on the profile where the fat area is going down, and that's where I'm thinking the market's likely going. Now, it's kind of hard to just do a quick rundown of this without kind of pulling up a chart and showing what I'm saying, but that's kind of the gist of it.
Yeah, no, that's cool. I noticed you've got some good videos on it on your YouTube channel that you sort of touch on it briefly.
Yes.
What I might do is I might put those in the show notes underneath the episode on our website. So if anyone wants to find out a little bit more about that, they can do so.
Perfect. Yeah.
Are you ready to get serious about options trading? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including a $10 cap per leg on options trades, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, and more features to help you trade smarter. Manage your positions with speed and precision using Active Trader Mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory exchange and clearing fees still apply. Options involves risk and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Ever watched a stock explode and thought, if only I had the capital, or sat on the sidelines because your account balance felt too small to matter? Good news. With Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, and even the newest IPOs. And short anything you like with zero locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. It's a game changer. Create your account and start trading real shares within minutes. No subscriptions, no minimum deposits, just a one-time evaluation fee starting at $47. That's it. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you ever pay a cent. Every decade, the market reinvents itself, from online brokers to commission-free trading. Now, the new era of limited risk trading has begun. Click the link in the description to start trading with Trade the Pool's capital.
Just taking a step back, do you have like a select few markets that you follow religiously, or are you sort of more looking across a broader range of markets and just looking for a very particular kind of setup to trade?
Yeah, so I've pretty much narrowed it down to crude oil, gold, and the S&P 500 mini contract, all futures, and that's what I trade actively every single day. Now, I look here and there for other setups in other futures markets and maybe a couple stocks here and there, but this is what I'm actively trading every day. And pretty much I come in the morning, I see what happened overnight, I write my trade plan out, I get ready to trade the day, and I have 11 setups that I use. It sounds like a lot, but some of them don't occur that often. So I have 11 different setups I use, and I'm just preparing myself for when I'm going to see one of these setups. And I'm just hunting for the trade. So most of the times I have my orders just sitting at the market, waiting for the market to come to me. And then when I get filled, I go with the position.
Okay, that's really cool. What would, maybe if you'd like to just share one of those setups with us, not in great detail, but just sort of give us an idea, maybe one of your favorite sort of setups that you tend to watch?
Okay, one of my favorite setups is actually the balance failure. So when we talked about market and volume profile, when the market's chopping around and the profiles are getting fat, that's the market coming into balance. So if you see a consolidated range, tight range on the chart, that's all a balance area. And when you're in a balance area, you want to be trading from the low of the balance area to the high of the balance area, because the extremes are where the real opportunities lie. In the middle is just a bunch of chop most of the time. And when you break out of this is when that's what starts trends. So when you break out of this, because there's a lot of stops accumulating above these highs and above these lows, and they just get hit, plus new money steps in and you get an explosive trend. Now, what you can also get is you can get some smarter, larger traders that come in and they purposely push the market up because they want to hit those stops and get the liquidity there, and then they want to slam it back down right away and it goes violently the other way. Now, this is one of my favorite setups because it gets so many traders off guard. They think, oh, a huge breakout's coming. Yes, they're getting ready for the breakout. And then when the failure comes, it just stops all those traders that were getting long out and it flushes the opposite direction, and it goes pretty fast and violently, and it's one of my favorite setups.
Nice. I like it. So let's talk a little bit about maybe some advice for those sort of in the beginner, intermediate level of trading. Where is one of the areas you often see traders who are not yet pros continually getting it wrong? And maybe what would you like to say to them?
I gotta say, it has to be searching for the holy grail and using way too many indicators, just always trying to find a new indicator, always switching your chart, going from a new time frame, not being consistent in applying the method you're using. You got to get away from searching from the holy grail. There's no holy grail, and get away from indicators altogether at the beginning. I think when you're first starting to trade, the most important thing you need to do is understand price action and market structure, because in order for an indicator to populate, it needs price. So it's populating from price. So why not cut that off and learn what price is doing yourself, because no indicator is going to be able to tell you something better than you can tell yourself. So don't use the indicators at the beginning. And now I'm not against indicators. I don't say no, indicators are bad, but you got to get that price action and market structure down first. And then if you want to add indicators later on, you can move on to that.
Okay, that's a really great point, Adam. Thanks for sharing that. And this question might be a little bit similar, but what is it that you believe stops the majority of traders from ever making a huge success? Like a lot of us start out with sort of big dreams and hopes of, becoming a pro trader, making a lot of money. But I mean, as the statistics say, 90% of traders, or I don't know, it might even be higher, fail. So is there anything particular that you think sort of stops traders from ever reaching that level of success?
Yeah, I think it's got to be two things. One is they give up too soon. They don't realize how difficult it's going to be. And I probably would have given up too if I didn't throw myself into it with no other option. Because if you look what other educators are saying, or some videos you see where they're just ramming it down your throat, trading so easy, look how I made $1,000 with 30 minutes of work. And people get into it thinking, wow, this is going to be so easy. And then they finally get into it and it's not easy. It's extremely difficult and they give up. So I think traders are giving up too soon.
Yeah, no, that's really good. I mean, and it comes back to what you said earlier on about how it, sort of took you around about 3 years to sort of start getting a little bit consistent with your profits. So yeah, that's good to keep in mind. Do you have any pointers around sort of keeping your emotions controlled and maintaining a level head when you're trading?
Yes, it's important to keep yourself in the optimal mental state when you're trading, especially when you're starting out, because once you get a little more skill and you develop, you don't really need to focus too much on it. But what I used to do when I first came in is I would do some visualization exercises, some breathing exercises, and really get myself in the optimal mental state to trade. I'd go through what I need to do to be successful, things that I'm struggling, and I'd visualize myself going through those struggling times and doing them successfully, and just making sure that you're calm, because you're going to go through a lot of emotions at the beginning. It's going to be tough to control, but the main thing is confidence takes away 90% of all the emotional garbage that's going to affect you during the trading day, and that's going to take a while to get that confidence. But during that confidence, I definitely recommend, during that time period when you're trying to gain that confidence, I'd recommend what I took the Peak Performance Home Study course for investors and traders by Dr. Van Tharp. And that's just loaded with great information about how to control the psychology of trading and the emotional side. And I definitely recommend that to all traders.
Okay, nice. We'll put a link to that in the show notes. Yeah, on your blog, you've got an awesome post about how to achieve your trading goals. And, this is something I personally have questions around too. So what are some of the key points to note if we want to actually achieve certain goals this year? And in addition to that, how and what sort of goals should we even be setting when it comes to trading?
Okay, that's a great question, because I'm big on setting goals and measuring performance. Now, when you're setting a goal, it can be anything like, I want to trade a more challenging market. I want to make a certain amount of money in the month or so, or get my trading account up to this much. But if you're just setting the goal itself, it's not going to do anything unless you're writing it down, and then you're also writing down the necessary steps to achieve that goal. And the reason for this is you always want to have something you can periodically review and say, okay, am I moving towards my goals still, or am I straying off to this side? Do I got to move a little bit more back to center? And by writing down your goals, you're going to give yourself a method to achieve those goals. Now, that method may change as you get closer to the goal and be like, okay, I thought I needed this, but really I don't need that. And I guess I could give an example with that is when I was first starting trading off, I was trading, when I first was getting successful, I was trading crude and gold. And those were my main markets. And I really wanted to trade the S&P 500, but it was just very difficult for me. It seemed like it didn't move as fast. It was more choppy, and I couldn't really get it under control. So I set a goal at the beginning of 1 year that I want to successfully trade this market this year. So I had that as my main goal. Then I had to write down, okay, what are the steps so I can achieve this goal? So my first step was, I'm going to go through historical charts, and I'm going to draw my key reference areas in on the chart, write my trading plan out, and forward through the chart just like I'm trading that, and try to get some consistency doing that. Then my next step is, while I'm trading crude oil and gold, I'm going to add the S&P 500, and I'm going to trade it on sim while I'm trading my two markets every day until I can get that consistency up. And then once that happens, I'm going to add it to live with smaller size, and then build my size up to the same markets when I feel comfortable. So I gave myself a goal, and then I also gave myself ways to achieve that goal.
Okay, that sounds really good, actually. I like how you sort of, while you were trading, you did that, on sim, like not real money. That seems like a really good way to do it.
Yes.
One thing you said in there was about sort of setting goals around certain amounts of money you want to make. For someone who's not sort of consistently profitable, is that a good goal to set? Like, is that realistic?
Yeah, that's a good point there.
You know what I mean? Like, they want to make, $5,000 this year off a $5,000 account, but they're not yet making money. You know what I mean?
Yeah, so you don't want to get too fixated on the dollar amount, but it's still good to set a goal like that and set the necessary steps that it would take to achieve that goal. So what's it going to take for me to earn X amount a day? Well, first, I'm going to have to show up on time every day. I'm going to have to make sure I do my prep work, and I'm going to have to make sure I do this consistently. I'm going to have to make sure I dissect my trades after the day's over. I'm going to have to make sure I fill out my journal. I'm writing my stats in my Excel sheet as well, keeping metrics so I can review for later date, and just not get too fixated on the dollar amount, but the process it takes to get there. And if you follow that process, you're going to get there. You may not get there on your time frame, but you're going to get there, and following that process is key.
Yeah, that's really good. Okay. Well, this has been awesome, Adam. I really appreciate you coming on. It's been, really, really good. So let's just go to the closing bell, which is just a few short questions that we ask to all the guests. So the first one might be a little bit tricky. Sometimes people get a bit thrown off by it, but what's the best piece of advice you've ever received?
I gotta say, the best piece of advice I ever received, I don't even know if it was really advice, but it was probably the thing my dad said to me when I had my worst day laying on the bed.
That's good. That was a top point. What's the number one trading resource you couldn't live without today?
Yeah, I gotta say it's my trading platform, NinjaTrader. I've been using it for a number of years. I got all the hotkeys down. I'm really comfortable with it. So
okay, nice one. Is there one book you believe is a must read for any trader just starting out?
Yes, Reminiscence of a Stock Operator.
That's a popular one.
Yeah.
Yeah, awesome. Well, again, we'll link to that in the show notes. I've had I think you're probably maybe the third person to say that, and I still haven't read it myself, actually. I've got to get onto that.
Oh, you got to read it. It's a great read. It really lets you know what the trading world's like, what you're getting yourself into.
yeah, definitely. I know I need to get onto that. And the last one is, knowing everything you do now, what would you have done differently come day one?
Day one, if I had to do it all over again, what I would have done is stay on sim until I was profitable. Now I know it's so hard. You just want to get in there live right away. But if you can't make money paper trading, there's no way you're going to make it trading live money. So I would have stuck it out sim trading a little bit longer and saved myself some devastating losses.
Okay, cool. So before you go, you've recently launched Optics Trader. So do you want to tell us a little bit about this and why you've now decided to start teaching?
Yeah, once I got to a certain level in my trading where I hit the professional point, I really remembered the early on days in my career when I was struggling and I wanted someone to turn to. And, luckily I found someone, but I still went through a lot of hell, and a lot of traders don't find a mentor. So I thought, I'm going to make a program built by a professional trader of what actually works in the market. And I set out to make the best program there was. And I also want to make a mentorship program so I don't just leave traders. If they want a little extra help, I can work through their issues and kind of be with them one-on-one.
That's really good. So before we part ways, do you want to tell the listeners where we can find out more about this and where we can connect with you also?
Yes, you can go to optictrading.com and check out the professional trading course. I'm also on Twitter at Optic Trading, and I have a YouTube channel, Optic Trading, as well.
Okay, awesome. And we'll put links to all three of those in the show notes at chatwithtraders.com. So definitely make sure to check those out. And again, Adam, man, been really good having you on. So thanks a lot.
Oh, thanks a lot for having me here. I appreciate it.
All right, we'll talk soon.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Every decade, the market reinvents itself. Online brokers opened the doors. Mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool. limited risk trading. From now on, your trading risk is capped and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade large positions and scale your strategies without risking your own savings. It's time to trade with more capital, actually worth more of your time and effort. Ready to trade the pool? Click the link in the description and join Stock Trading Revolution today. Doesn't your portfolio deserve the best? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Trade smarter with advanced charting tools, backtesting, a pre-built strategy selector, and more features. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory, exchange, and clearing fees still apply. Options involve risk and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Hey, what's happening? It's really great to have you tuned in to a brand new episode of Chat with Traders. This week, our guest on the show has upwards of 15 years in the game, so we had no shortage of deep trading knowledge to reflect on for our interview. Let me introduce you to Lance Beggs, a price action trader that is a little different to most. While he still relies on technicals to a certain degree, his edge comes from the ability to adapt to the mindset of other participants and gauge entries based on their fear. Lance refers to this as the meta game, which he breaks down in much more detail during the interview. Lance also goes into how he controls tight stops and uses an aggressive risk management strategy to trade successfully. This segment also includes some great tips on how to nail the re-entry that many traders struggle with, mainly due to the psychology reasons. Also, Lance will be keeping a close eye on the comments for this episode, so go to chatwithtraders.com/Lance and leave a question in the comments that you would like him to answer. Alright guys, enjoy this week's episode with Lance Beggs. Here it is. Hey Lance, how's it going?
Yeah, really good, Aaron. Great to be here. Thanks for the invite.
No, I'm stoked to have you on. It's I know you had to juggle a few times around to make this fit in with your schedule, but I really appreciate it. And like I mentioned when we were talking before, I spent a lot of time on your blog yesterday and I found it very insightful. You have so much great content on there, and I especially like how you take some of your readers' questions and turn them into like detailed blog articles. I found that really cool.
Oh, man, that is awesome. I've been up for about 2 hours and you've made my day already. So we're off to a good start. So no, I'm really glad you got some value out of reading through the blog. So thank you.
Yeah, no doubt. So let's start this off by telling us how you got into the field of trading, because I believe you were a military pilot in a previous career.
Yeah, that's correct. What appealed to me with trading and what really attracts me to this business is not so much the money, not so much the large incomes that it can provide, but rather the freedom to set your own, to live according to my plans and not be subject to someone else's agenda. That is what I really love about this business. How I got into trading, the short story is I was in a job that I absolutely hated. It was just a frustrating, mind-numbing, soul-crushing experience day after day. And I think a lot of people go through similar stuff. I mean, you look at them on the commute to work each day, and I think, a lot of people are stressed and depressed, and that was me. And it's kind of interesting. A lot of people have trouble relating to that because, to be honest, I had a job that I think a lot of people think is like the dream job. I was a military pilot. I flew helicopters for the Army. But, really you do any job for several years. And when you're only flying for about 200 hours a year, that's a whole lot of hours just to be stuck in the frustrating bureaucracy of a large organisation like that. And I was just not suited to that environment. I needed some change. I needed something different. So that's really the short story. How I got here is I just hated my job. The process of that leading to trading is a bit longer story. It wasn't an immediate sort of, hey, I hate flying, let's go and trade. It's a bit of a longer roundabout process. Do you want me to go into that?
Yeah. So let's go into that. So maybe sort of talk about where you actually got started once you decided that you wanted to sort of move in the direction of trading.
Yeah, initially it was a roundabout process because I didn't discover trading till I was about 30 years old. I had absolutely almost zero exposure to it. My parents aren't involved in the industry. My friends' parents weren't. None of my friends did economics or markets trading or anything like that. I really just almost did not know it existed, with the exception of about a 10-week period where I did a share market game. I see some of your other interviewees did something similar in about grade 9 or 10, but that was really the only exposure I had to the markets. I didn't know it existed. What triggered the initial change, I'll try to make this quick, but a guy came into the pilot's crew room one day, one of the other pilots, and he said, guys, I have a plan. We're all going to get rich. And he laid out a roulette strategy. It's a really simple one. It's called a martingale approach. You just put all your money on one of the colours, let's say black, and if it loses, you then double your bet, and you keep doubling until it wins. And at that point, you've won back all your losses and got your initial stake back. And so we were like, no way. We plugged that into Excel. Took about 5 minutes, and just confirmed that theoretically this works really well. We're going to get rich. But it doesn't take much longer to look into this and realise that, hey, this is really common. It doesn't work in practice. Because you reach psychological limits for the size of the bet, you reach limits of your bank, and also the casino limits the table. So it was a real high and then a quick back downer and back to work for us all. But that planted a seed for me. And it led to just a really dumb decision that, hey, the way for me to get out of work was to become a professional gambler. And so I just immersed myself for about 2 years into study of money management and staking plans for roulette, blackjack, and a lot of time on horse racing. I was, this industry we have in trading where, the systems industry and the indicators, and you go on the forums and it's like, buy when the moving average crosses the other moving average and RSI is rising, etc., etc. There's a whole industry like that in horse racing as well. You can buy systems and strategies, and I spent a fortune on those sort of things. I actually talked a friend of mine into going halves in a $2,500 black box horse racing system. Of course, that didn't work. Thankfully, he's still a friend. But so for about 2 years, I just immersed myself in every piece of spare time I had was like in gambling. If I had been smart, I would have looked at poker, which is the only one that sort of really offers a good sustainable edge if you've got the skill. But I wasn't smart. That looked like too much work. I was chasing systems approaches. So, but around year 2000, somehow this then led to seeing the financial markets, and I guess it offers kind of a legitimacy that the other forms of gambling don't have. So that attracted me as well, and I hit the books and I hit the charts and got started then in 2000. So it was about a 2-year process from first realising I hate my job, I've got to get out, to when here I am, this is what I want to do, I've found the markets.
Okay, so when you went down that path of you found the markets, you want to learn more, what were some of the first sort of things you started to learn about it?
Yeah, very first things I did was hit the books. With my background, I have a computer science degree from university. There's a lot of study required for the flying that I did as well. So I'm really comfortable with the process of self-directed education, and so I hit the books. A lot less books available back then than there are now, but I went out to the shop, bought everything I could get, and just sat down and just immersed myself in them. Got a trading platform, a charting platform, and got started. It was probably about a 6-month period of just solid immersion before doing my first real trade. So there was a process of learning, of growth and development there.
Okay, and what sort of level of success did you experience fairly early on?
You hear a lot of people have stories where they got massive success initially before crashing, or massive failure initially. I didn't get either. It kind of just ground out results around break even, which is very frustrating, and quite lucky, to be honest. I mean, this was, we're talking sort of 2001, 2002, the first couple of years of my trading, and you look at the charts there. I was trading stocks on a weekly time frame, if you can believe that. The stock markets then, 2001, 2002, it's all going backwards. It's all massive bear market. And yet I was still able to grind out round break-even results. And to be honest, that was nothing to do with my skill. I just lucked upon a really good strategy. It was, which I traded with some slight variation, but a guy named Alan Hull had a book, Active Investing, which is still around in published new editions since then, but it's just a really simple approach to the stock market, which the real strength of that is it identifies really strong and stable trends. So despite the fact I was long only and just buying into a bear market and getting losses, you'd get the occasional win as well, which would just keep the results around break even. Had I been smart enough to continue that from 2003 onwards in the bull market that went for about the next 5 or so years, probably would have kicked some serious butt. But unfortunately, I'd moved on before then to options trading. So the problem I had was more so than just wrong market environment for strategy, but it was the wrong time frame for me. I think that's one of the biggest challenges we face in the beginning, is finding our niche in the markets in terms of time frame and strategy and the right market, something that fits our personality and our lifestyle. And the longer time frame equity stuff just does not suit my sort of control freak personality. I hate overnight risk where I'm not there watching it to control it.
Okay, so is that what you would say was probably your biggest challenge when starting out, was trying to sort of find the right time frame that fits your personality, or was there something else as well that you sort of struggled with?
Yeah, initially, I mean, I thought I was a pretty smart guy, so I thought, hey, this looks easy. You look at the charts and they show you a moving average cross. How hard does that look? It's really simple. So I thought I was a smart guy and I'd have this sussed out and be making money in a few months, but of course it doesn't work out that way. And so a couple of years of break-even results was pretty frustrating. So I had trouble there. Mindset issues, of course, was massive. I guess we'll talk about that at some stage later. But really and of course, failing to recognise that a strategy should suit the environment, and trying to trade long into a bear market all the time was not necessarily the best. But yeah, absolutely. The biggest challenge for me was the timeframes I was trading did not match me. They did not suit my personality. They did not suit my lifestyle, and so they're just wrong. And it took me like a 6-year process to get from equities on weekly timeframes down to Forex and futures markets on really short timeframes to find this place where I thought, yes, this suits me. This is where I belong. It's where I fit. It's where I can feel the market as it moves and understand what it's doing. So I think that's something we don't discuss much in the industry, is people need to go through this process of trial and error. I think initially, if we spent maybe the first 6 months of our career just immersing ourselves in different timeframes and different markets and different strategies and just playing on demos just to find what fits our lifestyle. You just, if you're trying to fit something that's wrong for you into your life, it just won't work and you'll underperform, and it'd just be a frustrating result. So you need to go through that trial and error. I didn't realise that initially, so it took a lot longer than it should have.
Yeah, so how long would you say that trial and error period took you until you were sort of somewhat consistent with your profits and you started to feel like you had a good handle on your trading?
Yeah, it's the initial 2 years, as I said, was kind of break-even stuff. I moved then in when was it? It was probably early 2003 across to the options market. Part of that was I recognised that was maybe more suited to me, in that it's a little more action, being a bit more leveraged. And I had a change of strategy as well, going to more of a pattern breakout price action type strategy. I got some okay success with that. And, at the time back then, once again, I thought, man, I'm good at this. This is fantastic. Because I was getting some good results, but I'd get some periods of not so good results as well. I kind of thought I had it then. I kind of thought I had it worked out and I just had to iron out a few of the kinks. But I was wrong again. That was options on a daily time frame. Options on Australian equities. So once again, being a daily time frame, it's not a good match for my mindset. If you're waking up in the morning freaking about what happened in the US markets overnight, how's that going to affect my my open option positions? It's not a way I like to live. Where I am now, if I'm not in a trade, if I'm not watching the screen, I'm not in a trade. Everything right now as we interview, I'm sitting on the side in cash. So there's no stress. And that's how I need to operate. So it took me, to answer your question, about 3 years, sometime late 2003, I thought I had it all sussed. I thought I was a good trader. And that's where I was wrong. But that's about how long it took. Ultimately, though, to get to the stage where I thought I knew what I was doing, and it turns out I did, it took about 6 years. So I don't know if that's typical of most people. I see some who can do it in months. I see some take about 3 years. I see people who are been going for a decade or longer and still not there. So I guess it's an individual journey.
Yeah. I think that's some really great points you touched on there. So during that time, was there ever a point when you felt like you weren't going to make it as a trader? I believe you hit a rough patch around 2004.
Yeah, absolutely. I couldn't say that I ever thought I wasn't going to make it, but I hit absolute bottom in 2004. Combination of good results through 2003, making me think I was better than I was. Perhaps, the option strategies. There was some option selling, covered calls, credit spreads and things, but mostly it was just buying puts or calls, mostly calls because it was a bear market. So I think part of the good results was just I was in a suitable market for the strategy. But 2004 was a real low point. Not so much the trading. It was that combined with other factors. 2 years prior, we'd sold our house and we'd moved to get involved in another business opportunity. It's not trading related. We don't need to get into that. But things went really sour with that. And we essentially, 2004, lost everything we had. So it's myself, my wife, 2 kids. They're about 5 years old at that stage. And so I was... mindset-wise, in a really bad place. You're meant to provide for your family, and I clearly was not doing that. And I thought, 2003, I had some good results with trading. I will trade myself out of this hole. And that is just the dumbest thing you can ever do. And so I just I scrapped everything else out of my life so that I could just focus on trading and just immerse myself in that. But it didn't go well. I wasn't in the right mindset. There was too much pressure to put food on the table for the family. And so, the trading was dumb. The trading decisions were really dumb. I even took some of the money and put it into another brokerage account with a full-service broker. So that I called him up and said, "Man, give me some tips. Give me some options trades." And that is really dumb as well. That's just the worst thing. Looking back after that with hindsight, some of his trades were very good, but I wasn't in the right place to manage them appropriately. So 2004 was tough. Took only a couple of months to realise this is not working. The family situation is getting desperate. We're in debt. I need to go back to work and sort myself out. So there was probably a 6-month period there where I didn't really trade. I still sort of followed the markets a little, but I really just dropped back, just a tactical withdrawal, regroup, reset myself up better to launch again. And what that involved, the second time I went full-time, 2006, we were structured a lot better there. I'd set myself up so that I had income on the side that was sufficient to cover but sufficient to cover all our living expenses. And I think that's so important when you're planning to go live. You get a lot of people giving advice that, before you go live, save up 6 months of income so that you can just focus for 6 months or so. But what if it takes you 8 months to get it? So you've just run out of money and you're back at your job that you hate. So I think a better plan is structure your life some way to get some other income streams, whether that's, maybe if you can survive off your partner's income, that's fantastic. But if not, just get some part-time work or some consultancy or something such that, and fit trading around that. So that, and that's essentially what I did. So 2006, I was back full-time, but with the income covered. If I made nothing off trading, that's cool. We're surviving. So, 2004 was really bad. 2005 was just hell. That's where I just got so lost and off track with, stuck in indicators and systems and all of that sort of stuff. I don't know when it was, late 2005, early 2006 is when I just said, enough with that. Get rid of all these indicators, get rid of all of the systems. I had some success earlier with price action, basic price action stuff. Let's go back to first principles. And, I sat with the chart, just a naked chart, and it's like, what is price? What causes price to move? How do I see that early in the price move rather than waiting for lots of confirmation? And how do I profit? And by just taking everything back to first principles and starting again, with the background knowledge and skill and experience that I had, things fell in place pretty quickly then, in a matter of months.
Yeah, I really like that about how you talked about having a side income to sort of take the pressure off yourself to actually sort of be making money every day or every week sort of thing. That's a really good point. So let's talk a little bit more about your actual trading and your approach. So how would you best describe your approach to trading?
All right. Best describe it. I'm a short time frame, technical discretionary trader. So short time frame, I'm operating on a trading time frame of 1 minute charts at the moment. That's the trading time frame. Technical, meaning it's essentially just price action only. There's very little indicator use. I do have volume on the charts, but that plays a very small part as well. It's essentially price action. And discretionary in that there is some discretion involved. There is some subjectivity. It's not a fixed rule-based system. I don't believe that works, at least not the way retail traders apply them. But and so basically, if you look at my screens, it's a 3 time frame approach. There's a higher time frame, which for me is the 5 minute chart. That provides the structure to the market through a support and resistance framework. There's the trading time frame, which is the 1 minute chart, and that's where I'm following the price action as it flows within the higher time frame structure. So looking at the trend and looking within that trend for areas of trade opportunity. And then there's a lower time frame. I actually operate with 2 of them right now as a 15-second chart and a 2 range chart. They both give a different perspective, but the lower time frame is just for fine-tuning that trading time frame analysis and for just timing the entry and exit. So the 3 charts there, and I operate. There's really only 5 trade areas if you want to sort of summarize them all. I'm operating 3 of them on price interaction with support and resistance levels. So it's standard swing trading stuff as breakout failures, there's tests of the support and resistance that haven't quite broken, and breakout pullbacks when it is a successful break. And then within the structure, between the SO levels, I'm looking at different kinds of pullbacks within the trend, just being a simple pullback or a complex pullback. So that's essentially how I would describe it. Short time frame, technical, discretionary price action trader. Beyond that, I go a little different in how I sort of look at price compared with most price action traders, in that we get into I guess you saw that looking through my blog. I'm not really a pattern trader, but more of a looking at the internal nature of price, the strength and weakness of how the price swings show on the chart, and also metagame aspects. Do you want me to get into that?
Yeah, go for it.
All right, how do we do this? The ultimate aim of my approach is to identify, if I want to simplify it, a short-term bias for market movement. Okay, so price, is it the next 2 or 3 price swings going to be bullish, or are they going to be bearish? Okay, and then we're looking for a price movement against that bias. So I'm looking at people pushing the price against that bias. Now, as I'm looking at that pullback against bias to try and time my entry, I'm not looking from a pattern perspective. I'm looking from 2 alternate perspectives. The first is the nature of how price is moving. Is it pulling back? If we take an uptrend, for example, is the bearish pullback sort of occurring with bearish strength, or is it weak? And I'm really looking to fade weakness. If it pulls back with strength, that's information I wasn't expecting. I'm standing aside and waiting. So I'm looking at the internal strength and weakness of the pullbacks, but I'm also looking at a metagame perspective. And this is the people perspective. I'm really trying to get in the mindset of the people who are trading that pullback. Who's getting trapped? Who's in a losing position? When are they feeling fear? When are they praying to the market gods that, come on, please, just once, give me a winning trade? And I'm trying to feel that fear, and I use that to time my entry. Basically, I'm looking to identify the point where these people know they've got it absolutely wrong, and then profit from their exit order flow by entering at or before that point of their failure. So while I'm a price action trader, it's a little different to most. I'm not looking at heads and shoulder patterns and triangles, etc., etc. It's really looking at the internal way that price is moving and the people aspect. The idea metagaming, for people not familiar with that term, it's really, to put it simply, it's just the game hidden behind the game. And for me, most people are stuck in the game of price. Just they look at price moving, and they're trying to identify, when do we buy, when do we sell, based on these chart patterns. And for me, I recognise that that's not actually the real game, because the price itself and the price movement comes from order flow, and that order flow comes from traders making trading decisions. So in trying to identify the cause of a price move, you really need to be getting down into sort of analysing what the traders are thinking who are making these price patterns occur. And so that's the metagame. That's where I operate in timing my trades.
Yeah, and I think that ties in very well with something I read on your site yesterday, actually. And you mentioned the aim of analysis is to identify where you know others will buy after you, and identify where others will sell after you.
Yeah, absolutely correct. And that's the metagame approach. And actually, I think the article that comes from was the rock, paper, scissors one. Is that correct?
Quite possibly.
Yeah, the rock, paper, scissors is a good analogy for what a metagame is. And there's a Simpsons episode, which I mentioned in that article, where Bart and Lisa they're disagreeing over something. And so Lisa says, well, Bart, there's only one way we can solve this, and that's rock, paper, scissors. And then they go to Lisa's thoughts process, and she's thinking, poor predictable Bart always chooses rock. And Bart is thinking, good old rock never fails. So he throws rock, Lisa throws paper, Lisa wins. Lisa was playing the metagame. She's not playing the rules of rock, paper, scissors, which is basically that, hey, it's all random. You've got a 30% chance of winning, 33% chance of losing, 33% chance of draw. She is actually playing the game of thinking, getting inside the thought processes of her opponent and using that to her advantage. And that's what I'm trying to do in the charts. When you break it down to first principles and go back to sort of what is price, how does price move, what causes price to move, and I think that was a critical part in my development when I actually stopped to look at cause and effect. I realised that it's all trader decisions, and it doesn't matter what technical patterns or indicators you use for entry. If you buy in the market and no one buys after you, they're not going to drive price further. So you lose. So really the game comes down to sort of identifying the places on the chart where people are going to buy that after you. You're getting in before them. Or if you're short, people are going to sell after you have already sold. And that is essential for driving price in your direction. It's essential for profit. And so I think if you're not looking at the market from that perspective, you're doing yourself a disservice. So, that's essentially it.
Yeah, that's really good. I like that that analogy there. So we'll try and dig that article up, and we'll put a link to it in the show notes.
Cool, yeah. I've done like 380 articles on that site, and of them, that's my favourite by far.
Nice.
Are you ready to get serious about options trading? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including a $10 cap per leg on options trades, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, and more features to help you trade smarter. Manage your positions with speed and precision using Active Trader Mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory, exchange, and clearing fees still apply. Options involves risk and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Ever watched a stock explode and thought, if only I had the capital, or sat on the sidelines because your account balance felt too small to matter? Good news. With Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, and even the newest IPOs. And short anything you like with zero locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. It's a game changer. Create your account and start trading real shares within minutes. No subscriptions, no minimum deposits, just a one-time evaluation fee starting at $47. That's it. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you ever pay a cent. Every decade, the market reinvents itself, from online brokers to commission-free trading. Now, the new era of limited risk trading has begun. Click the link in the description to start trading with Trade the Pool's capital.
So what sort of markets are you mainly sort of trading in?
Yeah, it's been interesting. Like, you know, the evolution of my trading over the what are we, 15 years now, gone from equities on a weekly time frame down to equities on daily, options on daily time frame, down to CFDs on daily time frame. There's contracts for difference. Across to Forex on 15-minute charts, Forex on 5-minute charts. So it's a gradual process of getting shorter and shorter. Then to, where were we, 2009, we went to futures, dropped down to 3-minute charts. And then futures on the 1-minute chart, and I'm really comfortable where I am now and absolutely loving it. So the primary market I trade right now is crude oil markets, crude oil futures market, with a little bit of dabbling in the E-minis as well, sort of E-mini Dow or E-mini Russell. I would absolutely love to trade the S&P, but I just cannot get in sync with that. It's just a slow, frustrating, boring market. I kind of need directional stuff that's got a bit of action and a bit of feedback on how the market's moving. And so I go for the more directional ones. Crude oil, and E-mini Russell are just perfect. Unfortunately, there's nothing in my time zone for that. I'm living same as you, Aaron, living on the east coast of Australia, which is just, it's got to be the most awesome place to live on the planet, unless you're a trader. And so for me, my trading work starts pretty late. I'm almost permanently night shift, which is not good at all. Actually, yesterday I was happiest guy on the planet because US daylight savings kicked off, and means my training session starts at 11 p.m. rather than midnight. So that was cool.
Oh, nice. Very good.
Yeah, it's only an hour, but it makes a big difference.
It does, yeah. From what I gather, you like to keep your stops fairly tight on your positions, but you've also got no problem re-entering a trade if you get bumped out. And you mentioned many people struggle with this. So where do you draw the line about sort of how many attempts and losses you're generally willing to take before you step aside and just let the trade go?
Yeah, cool. That's absolutely correct. I am, one of my things, I'm very risk averse, or risk aware perhaps is the better term. I hate big losses, so I keep the stop loss very tight, and I keep small position sizing. And I recognise that I get emails every week from people going, "Oh my God, this trade stopped out before it went on without me, and where did I go wrong?" And it's like, you didn't go wrong. It's just, do you seriously expect that every entry will be perfect and it's going to move to profits straight from the go? It just doesn't happen that way. We're imperfect people just operating in an environment of uncertainty, and so there is some, you're going to get some drawdown. So there's two ways to approach that. Perhaps some people are better just with wider stops. That doesn't work for me, doesn't work for my mindset. So I prefer to operate very tight stops where I'm controlling this risk. I'm entering at the point where I believe it should go very quickly in my favour, and if the trade's going to work, it usually does. But I'm also then managing. If it doesn't do that, I'm very quickly I'm very comfortable scratching and getting out on the sidelines and reassessing. Easy to reassess with no exposure on the sidelines and look at the trade. And, I'll get back in if I think, the premise is still valid. Influenced by a few people in that regard Mike Reed from tradestalker.com was just brilliant. He really put the final touches on the way I operate with regards to risk and with an active trade management strategy. Larry Williams was good as well. He says in some of his books that when he enters his trades, he expects every time that's going to be a loser, and he manages it appropriately. So it's a really aggressive way of controlling that risk. When I get in a trade, it's going to move in my favour really quick. Otherwise, I'm going to reassess. Whether that's just scale out a little, take partial profits and reassess, or scale fully out and reassess. It will depend on the circumstances. But I'm quite comfortable scratching a trade and reassess and get back in. I'm quite comfortable as well because of small position sizing to take that first loss if it does go fully against me, and then reassess and get back in. And I think it's not easy. It takes exposure to it, to get on a sim and just practice and play with it, but reduce position sizes as well. And I think, people will know pretty quick whether that style suits them or whether they need the wider stops. But, it suits me, and I'm quite comfortable getting a scratch or two and re-entering, scratch again, re-enter, or even a full loss. Now, I think you asked at what point do I go enough is enough. I'm wrong. Really, if I hit two full-size losses in one setup area, I'm not in flow with the market. I'm not reading it well, and that's when I will really step back and usually just let that one go, and we'll wait for a totally new setup area. On a 1 minute time frame, they come along quick enough anyway, so sometimes you get it wrong, and rather than trapping the other traders in a losing position, I find I'm the one getting trapped, and you just let that go. It's part of the game. So I think that's a problem a lot of new traders have, is their relationship with risk or with loss. And this takes time and exposure to markets. Everyone, they understand the probabilistic nature of this game, that not every trade is going to win, and that if you've got, say, a 55% win rate, that you're going to get a hell of a lot of losers as well. And yet their actions don't show that they really get that. They're emailing saying, "Oh, this one lost. Where did it go wrong?" And it's like, well, where you went wrong is you didn't get back in after you got stopped out. So, it's not the only way to trade. It's just how I do it. It's what fits me really well.
Yeah, I think you said that really well. So I appreciate you breaking that down, Lance. One of the other things, I'm sort of just going to quote this from the website, and you said the real damage is often psychological and not financial. So what do you mean by this statement?
Yeah, I don't recall where that was written or the context, but, essentially, I think any extended losses or extended drawdown that we do, the real damage is to your mindset, because you're losing your confidence, you're losing your belief in yourself, to make money in this game. The money doesn't matter so much. I mean, if someone with no cash could... If you can trade, you will find the money. Others will provide it if necessary. So the money's not a big deal. For me, it's all mindset. You don't want to damage your mindset. You've got to nurture that and protect it. So that's part of why I trade quite aggressively with the risk management, at least in the early parts of the trade, because I don't want those large drawdowns. So very risk averse, and I manage my losses. The profits take care of themselves largely. So I guess that's it. Look after your mindset. If you damage that, it's game over. It's you look at people who have lost all confidence, and they've got to step back and take a couple of months out of the markets and reevaluate whether this is the right thing for them. And if it is, they come back and you've got to start again. But starting again is so hard. Like after the 2004 experience, just getting back into the market was just incredibly difficult, because every trade, was fear. It's not about the loss of money. Every trade, I'm putting my whole future and my wife and my kids' future on the line and gambling it. You've got to have a clear mind, and you've got to have self-belief. So protect that more than the money.
Yeah, it's a big responsibility, especially when you put it in perspective like that.
Yeah, I so wish I got into this game as a young guy, sort of, before family and everything, but it would be so much easier. But it wasn't to be, we all have our own path. Look, protect your money, but more than that, protect your mindset.
Yeah, no doubt. So how extensively do you record and sort of reevaluate your trades, maybe from the past day or week or however you do that?
Yeah, this has changed over the years, but it is fairly extensive, and it frustrates people because I say, here's the process I use for my pre-session preparation. Here's the process I use for my post-session review. And you get people say, I can't fit that into my life, and it's too much. And that's fine. You do what you can. But I do review the session. I review the session from a structural perspective. Did I assess it right in terms of ranging or trending? Did I pick the transition from one to the other? I also review the trades. Now, there was a time when I was longer time frames, I'd review every trade. When you're on a 1 minute time frame, if you get, say, a dozen trades I'm trading a 3-hour session at the moment, but if you pick up 10 or 12 trades in that session, I don't have time to go through them all, except for just a cursory glance. What was that a valid trade? Did I pick the structure correctly? Did I and did I time the entry in good wholesale areas? The only ones I'll look at in depth now, because there's so many trades, those I assess that significantly underperformed what was available, or those that significantly outperformed. You sometimes get market conditions where, I had no right taking a profit out of that, but I did. So I'll look at that and see what I did, trying to get the lessons out of that. So really looking at trades, those that underperformed, those that outperformed. Those that were just like a normal trade, I'll let them go now. In terms of tracking, I used to track stats for every trade. A few years back, I went off that and moved to a different approach where I was just tracking daily stats, just looking at daily results, win percentage, win-loss size ratio. I did that for a while. I'm now back to sort of tracking every trade. I mean, it's pretty simple when your platform gives you a spreadsheet. You can export all your trades and you can just plug it straight into your trading spreadsheet. So I put all trades, but I monitor them from a group perspective. What I think, actually I'm getting a little off track here, but I think a good exercise for people to do is to start tracking their trades in small groups. Chatting by email with a trader yesterday who was talking about his long-term stats that he's got. I won't give his win percent, but let's say 55% win rate across the last 1,000 trades or so, and I think a lot of people track their business in that way, and I think such a long time frame perspective there, it does them a bit of disservice because you don't get any sort of indication as to short-term current performance levels. And so what I recommend people do is track their results in small groups, whether that's 20 trades or 50 trades or 100 trades or just weekly results. But look at your business reviews from the perspective of your group results rather than individual trade results. For each group, let's say 20 trades, what's we're tracking the win percentage and the win-loss size ratio of that group. and looking at the what runs of winners did we get, what runs of losers, what's the largest winner, largest loser, etc. So you're looking at group results rather than individual results, individual trades, and rather than decade-long 1,000 trade results. And by looking at small groups, they come around often enough that you get some context that you can examine them against. You're looking to compare that 20-trade grouping against your expectations of what you should normally get across 20 trades, and you're looking to compare it against previous groups to look at some degree of consistency. And so that way you'll pretty quickly see if you're going off track and current sort of performance is deviating from recent performance in quite a way. So I think it's a bit off track there. But to answer your question, I'm pretty thorough. I do hours each day of review and preparation.
Yeah, I really like that idea how you sort of explained it of grouping your trades together. I think that's really cool and, obviously quite important.
Yeah, it is. And it's something that just everyone gets it. Everyone understands it when I say it. But, they're not doing it. And they're still looking from an individual trade perspective. And, your individual trades don't matter. If you're comfortable with the risk and you're appropriately position size, you should take a loss without any stress. If you've taken just a single 1R loss, 1 times risk, it shouldn't be any drama. If that's causing you stress, you're trading with too much position size, so cut it back a bit. But you need to be not concerned so much with individual results, but looking at group results. It's a very different game if I say, Aaron, you've got a profit on this next trade. That's very different from, Aaron, show me a profit over the next 20 trades. Suddenly a single loss is not so much of a big deal, and you're looking to sort of manage your wins and losses to get, you might just get 50% of them right, 50% wrong, but you're looking to sort of develop your win-loss size ratio so that gives you a positive expectancy over 20 trades. And by taking that 20 trade perspective rather than individual trade, it's a very different game, and I think much better for the mindset.
Yeah, that's really good. Thanks for really breaking that down. That's awesome. This is probably one of my favorite questions to ask, and that is, from your experience, what is it that you believe prevents the majority of traders from ever reaching a high level of success?
Man, there's just so many things. The first one we've just been talking about is their relationship with loss. Okay, people come from different backgrounds and jobs and whatever, where income is pretty secure. In this game, you eat what you kill, is what they say. If you don't perform today and get some kills, you don't eat, you don't get money. So it's a performance activity, but it's one in an environment of uncertainty. So you need to expect losses. You need to learn how to. That's just part of the game and manage them. And that is something that people don't get and you can't get until you've got experience. So it takes time. But, what else are people doing wrong? They don't have a proper process of growth and development. They're looking at this game, a lot of people, not all, but a lot of them are looking at it from a systems perspective. And that's why there's a whole industry geared around this, because it makes the easiest way to make $1 million in trading, I reckon, is to sell systems. There's a whole industry geared around it. And the forums are just filled with systems full of mediocre advice and failed traders just sharing their systems, and so they get stuck in this systems mindset. And I make fun of it, but that's where I was for many years with the gambling stuff, and it's where I was early days with trading as well. So I've been there, we've all been there. They're looking at it as a systems game instead of one of a process of growth and development. There's been a lot of good material. A lot of people write about this. SMB Capital write about it. Mike Bellafiore quite a bit about deliberate practice and effective methods of growth and development. So I think that's important. They're approaching it from the wrong perspective. I think as well, by looking for that shortcut, people just aren't immersing themselves in the game, in the study of price action. They're not building, a great term I heard the other week was deep domain knowledge. So you've got to hit the books and study this game, and you've got to hit the charts, and all the answers, everything you need is in the charts. They've got to get in there and study them. And so I think people just aren't using the right process for learning. They're looking for the quick buck, the systems, and not treating it as a process of skill development. So that's probably the main thing. But there's heaps more. There's heaps more traps and shortcuts. It's not an easy game.
No, you're right there. It's a very tough game. But let's move along into the closing bell. So this is just a few questions which will take us out, and these are fairly generic. I asked them to most of the guests. So the first one, is there one piece of advice that has really stuck with you ever since you originally heard it or perhaps read it somewhere?
Yeah, cool. One piece of advice, probably forgive yourself again and again and again, because you are going to stuff this game up big time over and over again. It's going to be frustrating. So you need to take time out just to laugh at yourself and the stupid things you do, and just forgive yourself and learn from it and move on. So, yeah, if people just forgive themselves a bit more than they do, it would be fantastic.
Okay, that's great. So you mentioned sort of getting involved in books throughout the interview. So is there one book that you strongly recommend as a must-read for any new to intermediate trader?
Not one book. Not beginner either. If we go technical analysis, let me put a few in different categories. Technical analysis, more for the intermediate rather than beginner. Go for The Art and Science of Technical Analysis by Adam Grimes. Trading Psychology, which is massive field. I absolutely love it. Read everything by Brett Steenbarger, all of his books. Same with Steve Ward. For general read, just general trading stuff. Just looking at my bookshelf here. Mike Bellafiore, who I mentioned before from SMB Capital, has two great books, One Good Trade and The Playbook. So you've got to read those. There are probably so many others, but actually the one best book is not one that you get from the bookstore or Amazon.com, but one that you make yourself. And that's something I talk quite a bit about on the website, is a market structure and price action journal. So get a folder every day, print out the charts from the session and go through and examine the structure. Look at, was it ranging? Was it trending? How could you have picked that early in the range or the trend? What price action features show that that was the structure of the market? Look at the transition from one structural environment to another as well. Look at the price action. How does it move as it interacts with support and resistance? How does it move when it is overextended to the upside or downside? How does it move when it pulls back to the day's opening range? So build your own book, your own market structure, price action journal. A couple of chart printouts every day. It takes maybe 10 minutes, and it's just invaluable. Do that over the next year and you'll thank me. You're going to have just a massive resource that's a hell of a lot better than any book you're going to buy. So if it's one book, market structure journal, make it yourself.
That's awesome. Yeah, I saw you wrote about that quite extensively on your website. So again, I'll put a link to that in the show notes, and anyone who's interested can check it out.
I do, but it's amazing. So, people sort of contact me and they're struggling, and it's like, well, show me your market structure journal. It's like, oh, I don't do that. It's like, well, come on, I've been beating my head here against the wall for like last 5 or 6 years writing about this stuff, and you've got to do it. It's just so important. So in terms of immersing yourself in price action, there's nothing better than a daily review of structure and the price and how it moves, and ongoing reviews. Do it on OneNote or Evernote if you prefer, but I've tried that, didn't work for me. I don't make use of it. I don't refer back to it. So it's hard copy folders.
Okay. And knowing everything you do now, is there anything you would have done differently come day one again to shorten your learning curve?
Two ways I could answer that. One is to say no, absolutely nothing difficult, because all the struggle has led to exactly who I am now, and I'm pretty comfortable with where I am right now. So let's go through those struggles again. But I guess if I had to say a few things, I'd like to, if I could go back and talk to myself 15 years ago, it would be more patient. Do not go full time until I have other income streams set in place to cover all living expenses. And forget the indicators. Start with basic principles. What is price? How does it move? How do we profit from that movement? How do we identify the cause of the price movement on a chart in real time? How do I identify traders who are trapped and struggling and stressed out and fearful? And just immerse myself in the chart. The answer's in the charts. Everything is in the charts that you need, Aaron. It's not on a forum or in a book. And the other thing is get into trading psychology, read up more on that. I've got trading psychology is a massive part of my game, just keeping in the right mindset, keeping in the right state, and keeping focus on process. So get into the mindset side of the game more.
All right, awesome. Well, that pretty much brings us to the end of the interview, and I must give a special mention to Jonathan, who put me onto you and introduced me to your site. Jonathan suggested I try to get you on for an interview, and I'm pleased he did because your answers have been outstanding. So thanks again for coming on.
Awesome. Thanks, Aaron. Thanks, Jonathan.
And to learn more about Lance, make sure you go and check out his website. It's yourtradingcoach.com.
Yeah, come to the site, check it out, yourtradingcoach.com. It's mostly just an archive for all my blog articles and posts. It's years and years of them. It's just crazy. So come and check it out if you like it. Sign up and you can get them each week. If you don't like it, that's cool. Good luck with your journey. But also Facebook, yourtradingcoach.com. I'm on Twitter, YTC Trading, or also at Lance Beggs. You should find me pretty easy.
Very good. All right. Well, all those links will be in the show notes. And this has been awesome again, Lance. So thanks a lot for coming on. And take care, and we'll speak to you soon.
Cool. Thanks, Aaron. It's great to be here, man. If anyone has any questions, I believe there is a comment section on your page that you post this. So put them in there. I'll monitor that for a few weeks and be sure to answer anything if anyone has questions.
Absolutely. So, yeah, just go to chatwithtraders.com. You'll find Lance's episode there. And if you just scroll down to the bottom, there will be a comment section. So, yeah, that's really cool. Thanks for offering that up, Lance. That's really good.
Awesome. Thanks, man. It's been great.
All right. Talk soon.
Cool. Bye.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Every decade, the market reinvents itself. Online brokers opened the doors. Mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool. Limited risk trading. From now on, your trading risk is capped and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade large positions and scale your strategies without risking your own savings. It's time to trade with more capital, actually worth more of your time and effort. Ready to trade the pool? Click the link in the description and join Stock Trading Revolution today. Doesn't your portfolio deserve the best? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Trade smarter with advanced charting tools, backtesting, a pre-built strategy selector, and more features. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory, exchange, and clearing fees still apply. Options involve risks and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
What's going on, guys? Hope you're all doing great. I've got an interesting interview lined up for you this week. But first of all, I just want to say real quick, a massive thank you to everybody who's left a rating or review in iTunes. We're almost at that 100 point in the US iTunes store, so that's really cool. iTunes is sort of like a numbers game. The more ratings and reviews that I receive, the better the show will rank and the more listeners I can reach. So thanks so much to anyone who's already left a review. Also, a big thank you to everyone who has been sending in emails with some really great feedback. And it's also really cool to hear where you guys are all sort of at with your journey. We're all in sort of various states, and it's just cool to connect. And also, get an awesome response on Twitter. So if you don't follow me on Twitter, the Twitter handle is just @chatwithtraders. And yeah, really cool to sort of engage with you guys on that sort of things as well. So let's talk a little bit about this week's guest. His involvement in trading started in his early 20s, and he's got a background in mathematics and computer programming. So it was really a natural progression that he would adapt a completely algorithmic trading approach. My friends, I would like you to meet Ilan Aizbil. Ilan joins us to discuss algorithmic trading and share some insights on a side of trading that is unfamiliar territory to many, especially in the retail space. While we spoke for close to an hour, in the scheme of things, we only just managed to scratch the surface. But all in all, I think you'll find this really interesting and enough to get you curious and maybe even excited about the possibilities of algorithmic trading. Here is this week's interview with Ilan Aizbil. Hey Ilan, how's it going?
Good, thank you, Aaron. Thank you. How are you?
I'm very well. How's your week been?
Yeah, it's been an interesting week with all the volatility in the markets, but good. Yeah.
Yeah, very cool. So thanks a lot for coming on. I mean, I know you're pretty flat out between your trading and running a hedge fund and your own companies and that sort of thing. So I'm glad you could squeeze it in. So really appreciate you coming on.
No, it's my pleasure. You're doing some good work. So I'm happy to be involved.
All right, good stuff. So we've spoken in the past and we discussed some fairly interesting topics. So that's sort of the reason why I was eager to get you on the show and share with the listeners some of your insights. So in addition to that, I'm really keen to dig into your knowledge on automated and algorithmic trading as well. But before we do, let's start this off by giving us an overview of who you are, your background, and then lead us into how you got started trading.
I guess I started trading when I was pretty young, around in my early 20s. I think it was about 23 or 24 years old. I was, lucky enough to run into a little bit of money, not crazy, ridiculous money, but a little bit of money, enough certainly, to give a 23-year-old the guts to go out and mess around on the markets. And I did that for quite a few years, actually, on the Johannesburg Stock Exchange. And I built some of my own little tools and gadgets, because my background is actually in computer science and mathematics out of university. And so I used that knowledge to program a few of my own tools to trade. And then, one thing led to another, and I guess my life diverged in two different paths. One is continuing to trade. Another is running a company that sells certain trading software. So that's pretty much how my life has been since my early 20s is running a company as well as trading on my own book.
Okay, so what would you say initially sort of sparked your interest in trading?
I guess I have to say greed. I mean, like any young guy who's got a lot of zest in him and thinks he can take on the world. I think that was a big factor in it. Knowing what I know now about the markets, I'm not sure whether I would have chosen the same path. I'm glad I did, but certainly it's been intellectually very challenging in all respects. So. I think it's a lot of the youthful energy that got me into it, and a bit of greed, I guess.
Yeah, right. So I guess that probably led into what you called your gambling stage when you first sort of got started. So what were some of your early experiences?
It's interesting. People talk about a gambling stage. I don't really classify myself I never did classify myself as a gambler. I think I was always pretty analytical about the markets. I certainly did learn my lessons from a financial perspective, yeah. But I think I didn't do too badly. I approached the market in using my mathematics and statistical kind of background and looking at the numbers rather than simply trading according to my gut feel. So I guess my learning lesson could have been much worse. But I am pretty analytical.
I'm really keen to get into that side of your trading. I'm really eager to get into that. But before we do, what sort of markets are you predominantly sort of trading in at the moment?
Right. So I was predominantly trading the Johannesburg Stock Exchange. That's obviously, as you can hear by my accent, I'm originally from Johannesburg, South Africa. Now I live in the US, and I trade now predominantly foreign currencies. I have lost touch a little bit with the South African stock market, not living in the country anymore. And to be honest with you, I've only been in the US for about 2.5 years, and I find the markets here a little bit overwhelming. I think in South Africa there was 20 or 40 stocks that were liquid enough to trade. In the US there's thousands of stocks which are liquid enough to trade, and so I think any trader taking on the stock market in the US has a big job ahead of him. Just to have the computational power, certainly the way I look at the markets, to have the computational power to find the opportunities, the good opportunities in the market. I mean, it's an enormous task, and I haven't wrapped my mind around it as yet completely. I've kind of set myself a 5-year goal that within 5 years, that means in kind of 2.5 years or so, I'll start trading US markets, but I'm guessing that it'll only be in the form of trading ETFs or some type of index derivatives, and not actually the underlying stocks. That's kind of where my thinking is right now. But in general, right now, my exposure is primarily in foreign currencies.
Okay, sure. So what is it that sort of really attracts you to foreign currencies?
I guess there's a number of things that do. I think firstly, the margin levels are very attractive. So for a person that's analytical in the market like me and is able to write systems which are emotionless, it's quite attractive to have those high margin levels, obviously, because you can get a lot of exposure on the market with putting less capital down. I think many people burn themselves because obviously getting more exposure is obviously also giving you more risk. So if you're trading manually, then I think you're prone to making those kind of errors and letting your emotions take hold of you. But I guess I suffer from that to a lesser degree because of the way I trade through an automated fashion. So that's one thing, I guess, is the margin level. Obviously, the next thing is obviously the extremely cost-effective way of trading. I mean, the margins in the FX space are extremely so not the margin, the spread is extremely low, and you can. Certainly at the level that I'm trading, it's not small, but certainly even at the amount of capital I'm trading, you can get in and out of the market pretty much at any time. There's almost always a counterparty to the trades. So I think that those two things really fit in with my style of trading.
Okay, that's great. How much of your trading is systematic or algorithmic versus discretionary for screen trading?
I would say my personal book that I actually trade is almost 100% algorithmic. In fact, not almost, it is 100% algorithmic. I do certain manual trades, actually not on my own book, but in the company, in my company, where we have foreign currency income, and so I have to hedge certain positions against fluctuations in the foreign currency, obviously, because in a business it's not about making money but rather preserving cash flow. So I do trade a little bit manually, but it's more kind of longer term 3-month hedging positions rather than speculative trade. But all my speculative trades are algorithmic.
Okay, that makes sense. So what do you believe are some of the key pros and cons of both approaches?
Between algorithmic trading and manual trading, is that right, Aaron?
Exactly, yeah.
Well, a big pro, obviously, for algo trading is the fact that emotions don't get in the way, right? I think that's one of the big pros. I guess one of the major cons for me is it takes a long time to see, I guess, a return on the work that you've done. If you sit in front of a trading terminal and just push buy and sell, you're immediately making money or losing money. So you're in the market, you're active, right? So you're there immediately. Whereas in automated trading, the investment comes up front. So you do less thinking while you're actually trading, but you make an absolutely huge investment up front, right? So you're talking about months and potentially years of time invested before you even see a cent, before you're even opening trades on the market. Mostly it's sitting behind backtesting engines and, things like that, and before you place a single dollar on the market. So in that sense, it is pretty frustrating, and even taking a new algo and a new strategy to market really takes a long time. If you think about taking all the time that you've spent manually trading and evaluating when to exit, when to enter, if you take all that time and literally shift it to the front of your trading process, that's how much time you need to invest in building your strategies. And then of course many people have the incorrect perception about algorithmic trading. They think that you build something and you're done, then you go sit on the beach in the Bahamas, right, counting the money. But in fact that's not true, because any knowledgeable trader will tell you that market conditions change, and no strategy will work for more than 3 to 6 months at best, maybe a year at best, certainly in kind of highly volatile markets like the FX market. So you're continuously working, except it's not real time while you're trading, right? I mean, it's not within the trading process, it's outside of the trading process. So it's a different type of investment in time. And I guess I'm not sure if that's a pro or a con, but you end up in the algorithmic trading world. There's always work to be done, even if there's no trades to be taken because the markets maybe aren't open, or the market, there's low volatility in the markets when you should be kind of avoiding trading. There's always work to be done. There's always new strategies to think about, new indicators, new statistical methods to try and add into your strategies. There's so you can literally roll out of bed and do work and then roll back into bed. So it takes a lot of discipline to run in an algo trading environment. I think it's quite difficult to run a well balanced lifestyle. If you've got kids or family or whatever it is, because there's always an excuse to go and work.
Yeah, I think you put that really well. That's great. So you touched on something interesting there, which I was going to bring up. And, you often hear people say the problem with algorithms and systems is they work well in certain market conditions or for a limited amount of time, and then they become out of sync with the markets. So how do you deal with this? Like, what's your experiences around this?
My experience is that I almost never trade a single type of strategy at any one time. Firstly, I like to be in multiple instruments. You'll never find me trading one instrument or two instruments. I'm always in 5 or 6 different instruments, because I think although some instruments are highly correlated, I think it's there's a higher chance of being in different market modes when you're in different instruments, right? So I think that's the one way that I circumvent the problem that you're talking about. The second way is that I trade multiple strategies. So if you look at my basket of strategies, I have some mean reversion strategies, trend following strategies. I have only one, I guess, kind of, I would call a statistical arbitrage system. But I'm not really into that because I'm not really into high frequency trading, like thousands of trades a minute. I'm not into that kind of stuff. I am obviously an intraday trader, but I think to do real statistical arbitrage, you need to be in and out of the market pretty quickly, and that's not really where I am. I guess it's not my style. But I'm running, trend following and mean reversion systems simultaneously and across multiple instruments.
Okay, so do you just want to expand a little bit on what you mean by mean reversion there?
It's described as an instrument always going back to some type of middle ground, and So let's say it's really the theory of saying that something, I guess in layman's terms, people call it overbought and oversold, right? So if you think of a share going, or any financial instrument going to an overbought state and then up to down to an oversold state. So overbought, oversold, so that's what we call mean reversion, where it's kind of bouncing between these two extremes. So that's what we call the mean, right? The mean is somewhere in the middle, right? So it goes up too much, then it comes back down. I think in kind of simple terms, if I put in simple terms, maybe, some of the mean reversion indicators more commonly found in the kind of the simpler trading consoles are like an RSI or a stochastic, right? Where the indicator is basically telling you, you've gone up too much, it's time to come down again, or you've gone down too much, it's time to go up again. So that's what I mean by mean reversion.
Okay, cool. So do things like news have any sort of impact on how your systems or algorithms operate, or are they strictly just focusing on the price?
So news is, in my mind, quite a contentious issue. The first thing I have to say is that I find, obviously, dealing with a lot of retail customers in my trading business, in my software business, I hear a lot of people saying, avoid trading the news. But if you actually take the calendar of news events and actually, plot them on your graph to see where they actually happen, I'm pretty confident to say that it's almost impossible not to trade news. You're consistently trading news, whether it's low impact news or high impact news. There's always something happening in the markets, and so, people ask, do you avoid trading news or do you trade the news? What I normally do is I try avoid trading the very high impact news events. So I would trade through normal news events, assuming that they're normal market conditions, and then through like very high impact events I would avoid. Like, for example, a few weeks ago, Yellen was speaking, or something like that, something that would, where I know definitively it would significantly move the market. I normally kind of push the big red button, get out the market, and see where it goes. I'm not a gambler. I don't really want to place a red or black kind of a bet. So I trade news, not specifically news events, but I trade through the news as if it's like normal market conditions, but I avoid the very, very high impactful events.
Okay, that's great. That's really cool. So do you do any back testing on your algorithms and systems? Because I've heard it's often tough to back test these effectively. So how do you manage that?
Yes, I think you hit the nail on the head. I think that many people struggle with effective or with accurate backtesting. I don't really want to advertise any companies or any software specifically in this talk. I don't think that's the purpose of this talk. But I think certainly, if we're talking about retail traders, they're really using retail quality software, out there. Certainly in the FX market and some of the equities platforms I've seen as well. The kind of software that retail traders use is not used by professionals to backtest. Professional traders use backtesting engines that are event-driven, that are portfolio, that can do portfolio backtesting, that can actually simulate real spreads in the market for certain times of day, and so I think that people say that it's difficult to effectively backtest. I think have a limited view of the kind of high-end software that's available. So if you're prepared to spend $5,000 a month on a piece of software like I do, then you certainly can backtest very effectively. If you're getting a backtesting engine for free from your forex broker, then you have to you get what you pay for, right? You get something which is mediocre and can only test a limited amount. So I've seen some scary stuff in my life. I've seen some retail traders take equity curves, put them in Excel, and then try combine equity curves and seeing like how well the system has performed, whereas an equity curve is actually meaningless. Professional traders look at mark-to-market curves, right? So they can see what their real drawdowns are throughout the history of their system. So not only when they actually kind of open or close the trade, but actually throughout the lifespan of the open trades, open positions. So I think you need a different level of software. I think you need a lot of data. You can backtest easily on 1 hourly data or 30-minute data, but when you're really doing serious backtesting, when you're ready to launch already, right? Not kind of broad testing, but when you're really doing the final kind of QA on your systems, you're backtesting on 1 minute data or even tick data. I personally don't really backtest on tick data. I don't think it's necessary, but I know guys that do backtest on tick data. So I think it depends on who you're speaking to. That'll tell you how effectively you can. I mean, I guess it's not perfect, to backtest, but I think you can get 95% of the way there. At the end of the day, you have to put your money down and run the thing forward. And when it stops performing, you have to push the big red button and say stop. Right, and relook at things, and hopefully by then you've got some more strategies in your pocket that you can go ahead and deploy to replace an older model that's not working that well anymore.
Okay, great. So recently, I believe machine learning has been a big thing in the markets. Do you apply this at all to your trading, or what are your views on this?
Yeah, it's actually interesting that you asked that. I have quite a bit of academic knowledge in machine learning, a little bit of practical experience. I wouldn't say I'm an expert, but I know enough to understand what people are saying and to have a meaningful conversation about it. My view is that of machine learning in general, and please, this is just my personal view, is that I feel uncomfortable with a model in which you put something in and you get something out and you don't actually understand what's going on in the middle. I have applied machine learning concepts, but using traditional statistical methods. So what you'll find is that a lot of machine learning tools, like multi-layer perceptrons, are really just classification tools, right? And there are other ways of doing classification tools, from very simple k-means clustering all the way through to, high-end clustering. I'm not against it. I just feel a little bit uncomfortable with them, and I prefer to use the equivalent statistical methods to achieve pretty much the same thing. But then at least I understand the input, I understand the processing part of it, and I understand the output, which is more than what machine learning gives me, which is just an input and an output and some unknown stuff in the middle.
Right. So that's really good. So just broadly speaking right now, how would you say the industry has changed over the last 10 years as a result of the technology? Like, what's the sort of impact that you've felt yourself?
Yeah, I mean, I think certainly there's a lot of companies out there that are still doing, a lot of price arb, and I'm not at that level. Certainly I don't claim to be, and I don't think I will ever be. These are, multi-billion-dollar funds that can invest millions of dollars into infrastructure, next to the exchanges. I'm not at that level. I think those have been the primary drivers of the large swings in the market. But I think that certainly those kind of companies that are investing these massive amounts of money in these low latency trading environments actually help. They help in increasing volume. They help in reducing costs for the brokers because they're seeing a lot more volume. I think in general, the more volume you see on a market, the better for everyone, because at the end of the day, you need a counterparty to your trades, right? Whether you're trading OTC FX, Forex, and the counterparty is your broker, or your broker takes your trade and takes it all the way up to an ECN or up to a bank liquidity provider. At the end of the day, there has to be a counterparty to your trade, right? And so I think the more volume there is, the better for everyone, because the spreads reduced, the costs reduced, the entries and exits in and out of the market are are almost instantaneous and at the price you expect them to be, which is a huge thing. If you think about your backtesting question earlier, how do you, one of the difficulties in backtesting exchange traded markets is like you can easily say, I'm going to buy 1,000 Apple shares, but what if at that time there wasn't 1,000 Apple shares to sell? No one was selling it. So, when you talk about these guys that are doing high frequency trading and pushing a lot of volume through the markets, they're almost guaranteeing a small or kind of, I guess, relatively professional guys like myself. They're almost guaranteeing us a counterparty, and I think it's making trading a lot easier and a lot more accessible for everybody. So I think it's a great thing.
Yeah, that's really interesting.
Are you ready to get serious about options trading? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including a $10 cap per leg on options trades, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, and more features to help you trade smarter. Manage your positions with speed and precision using Active Trader Mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory, exchange, and clearing fees still apply. Options involves risk and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Ever watched a stock explode and thought, if only I had the capital, or sat on the sidelines because your account balance felt too small to matter? Good news. With Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, and even the newest IPOs. And short anything you like with zero locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. It's a game changer. Create your account and start trading real shares within minutes. No subscriptions, no minimum deposits, just a one-time evaluation fee starting at $47. That's it. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you ever pay a cent. Every decade, the market reinvents itself, from online brokers to commission-free trading. Now, the new era of limited risk trading has begun. Click the link in the description to start trading with Trade the Pool's capital.
Something else I wanted to bring up, and because you're so involved in the space of algorithmic trading, do you feel there are certain things that your average retail trader is just really in the dark about? Like things which perhaps impact their day-to-day trading that they're just oblivious to?
Wow. I guess the answer to this question is actually maybe driven by my exposure to retail customers through my software business. I think in general, I see a few characteristics of retail traders. Firstly, they're lazy. They don't want to apply themselves. They don't want to apply the time. You're applying the time in an interesting way, which is, talking to traders and finding out what works for them, what doesn't work for them. But I see so many people, not trying to understand the markets, just going in there blind and trading. So I think the first thing is laziness, which is a huge problem for retail investors. I think the second thing that I see is actually more fundamental than actual trading technique. I think people don't understand the game. It's almost make the analogy like someone inviting you to a game of Texas Hold'em, right? But you actually don't know whether 3 of a kind is better than a royal flush, right? It comes down to people actually not understanding the rules, not understanding the game. I see people trading FX that don't understand what margin means, right? They don't understand what a pip is and how much a pip is worth to them. You can ask them a simple question, like if a price of euro-dollar goes up by 5 pips, how much is that worth to you? Like they wouldn't be able to answer that question. And I think if retail traders actually just, spent the time understanding, but really understanding. I'm not talking about, sitting through some online video where you're, checking your emails, while you're, while you're watching the training video. I'm talking about really applying yourself with a piece of paper and a pen and make sure you understand all the concepts. I think that would be an absolutely huge step forward for most retail traders. And the second thing I think people don't spend enough time doing is actually understanding the dynamics of the market. I see people trading, I'm specifically talking about Forex here, but I see traders trading, euro dollar in the afternoon in the US. No one trades euro dollar in the afternoon in the US. There's no volatility. People trade it during the London session or very early in the morning in the US, New York time. It's, again, it just shows the ignorance of people going into a game where they actually don't understand the rules and the strategy around like certain basic principles. So I think that people really do need to try and understand. They need to, if they're not trading FX, if they're trading futures or they're trading, let's say futures, for example, you need to know what a futures closeout means, right? You need to understand what impact that has on you. You can't just trade a futures closeout day the way you would normally trade, a future during any normal day. And similarly with stocks, you have to understand, the seasonality of the stocks. When are retail stocks moving a lot, during Christmas time and, shopping periods. And so there's a lot of interesting dynamics that people, just completely ignore. And I think that's very, very important. And I guess that's, makes me think about coming back to the question why Forex at this stage is because I find it manageable. The 5 or 6 pairs that I focus on, I understand how they move. I understand the dynamics. I understand the seasonality. I understand, the high impact events. I understand all the stuff around the instrument before I actually go and, start building strategies and trading the instrument. I just try and get understanding of the beast that I'm actually dealing with.
Yeah, that's really good, Alan. So thanks for really expanding on that point. This kind of brings me to another interesting topic while we're talking about, retail traders in particular, and something we've spoken about in the past a little bit, and you've got some strong views on, and that's education. So what do you believe are the main flaws in, some of the education and the material that gets taught to new traders?
Well, I think there's different levels of education, right? So education, like, what does it mean when something moves a basis point? What does the word margin mean? What is a stop loss? What is a take profit? What is a trailing stop? That is one level of education. That is what we call, what I would call kind of fundamental market education, right? Just understanding the terminology and the basic concepts. And then, I do have strong views about people that go out and tell you that they're gurus. I hear so many people at dinner parties, people ask me, I heard this guy talking on CNBC. He sounded like he knew what he was doing and he's so knowledgeable. I say to those people, man, if that's what you want to listen to, you can listen to, but that guy's a talking head, and similarly, many educators, are not real traders. I think there are certain educators that are real traders, that really actually do trade the market and have their own book. When I say their own book, not a written book, I mean like their own book, like their own funds that they trade, right? But there are many, people out there that are selling education to traders that is going to make them into millionaires, and and people just go there with false hope, right? Hoping that they learn some kind of secret in the market. I can tell you right now that if someone had the secret sauce in the market, they would not be selling you, a trading course telling you how to trade the market, right? They'd be trading it themselves. That's how prop shops work. Proprietary trading shops. They have a group of traders who know what they're doing. They're out there trading. They're out pounding the markets. They're not out there selling educational tools. Wasting their time talking to traders, because every hour they spend talking to traders and educating someone, they're losing out on backtesting. I hate to sound like doom and gloom, but I am pretty skeptical. I mean, I know how much time that I've invested in into building algos and building strategies. And Aaron, even before this conversation, I said to you, whatever you do, don't ask me about what my strategy is, because I'm not going to tell you, right? So in the same way, you can't expect. I mean, you can't expect someone who knows a good strategy to go out and just tell it to you, for free, for or $100, whatever the cost costs you. So, certainly I hold that kind of stuff very close to my chest, and I expect most professional traders, real professional traders, also do. They keep it very, very close to themselves.
Yeah, that's really interesting. So in that case, how should someone who is new avoid the fluff and the nonsense and really equip themselves with a solid knowledge base for their trading career?
It's actually a really, really interesting question, and I kind of have I'm not sure if it's a different view, but I do have a view on what you're saying. Firstly, I think that before you even get into trading, you need to make a commitment to learn how to trade, right? If you're not going to firstly make that commitment to actually say, I'm going to understand the markets, I'm going to understand the terminology, I'm going to understand how things are priced, I'm going to understand the news events, I'm going to understand the seasonality, the volatility, I'm actually going to understand. If you are too lazy to do that, then you should not even be pursuing any kind of career path in the markets, because then what you should do is you just take your $10,000 or $100,000, whatever it is that you're trading, and place it with an asset manager or someone who can actually trade. So that's I think the first thing. And I think, from what I've seen in retail traders, I think 90% of people who like to think they're traders should actually, just take it on the chin, walk away and say, you know what, I'm actually not prepared to put in the time, because I have, a wife, 2 babies at home, and I can't spend more than an hour a day trading or learning the market. So you need to be realistic and walk away when it's not for you. If, however, you've made the commitment and you've taken that step to say, you know what, I'm actually going to commit the next few years of my life to actually learning and to understanding, I think the first step, the first step before you place a trade is to understand the dynamics, to understand how things move, to understand, which instrument moves at what time of day, to understand what, from a macroeconomic perspective, what are the drivers of that instrument, right? If you're trading REITs, then you need to look at interest rates, right? If you're trading FX, then you need to look at, also interest rate, money flow, a whole bunch of other stuff. You need to try and understand, what are the drivers that are macroeconomic drivers that are influencing the instruments that you're actually going to trade. Once you got your head around that, and it's never an answer, right? But you have to understand, the game. Then you can start looking at actually trying to figure out what I would call like the cyclicality of the instrument you're trading. Does it go, simply put, does it go up 5 candles and down 5 candles and up 5 candles and down 5 candles? Is there any kind of cycles that you can see in the market, right? Are they, how is the market moving? Segment the market by hour of day. Many people look at the market in this kind of continuous line. but actually, let's just talk about FX for now. I almost completely discount anything that's out of the London time session. For me, it's almost irrelevant what instrument does outside of the London time session, because I know the entire movement of most forex pairs happens during London, right? So I focus on the dynamics during London. If I pollute my mind and look at what euro dollar does, at the afternoon of the US, of New York time, then I'll see like little slow upward movements, and I think, oh wow, it's going to be great to trade euro dollar in a trend following manner, But actually, that's complete rubbish, right? Because when it's really moving, it's not moving in a straight line, right? It's moving up and down and up and down. So, maybe I'm kind of giving you how I think about things, but I think about things in a big picture, macroeconomic, political, then I move down into, what are the drivers, then I move even deeper into what is the cyclicality, when does the action actually happen on this instrument, and then I start building ideas around that. I can see that there's always, a few ups and then a few downs, or, there's this kind of pattern, or, whatever it is. Then I start formulating in my mind, the possibilities, and I write them down. Many people don't write stuff down. You wouldn't believe that. Then I write things down and I say, this is what I observed. I look at the same time yesterday, the same time before that. I start putting some ideas together to actually find some pattern, something that I'm going to exploit in the market, right? And then I start thinking about how to actually build a model around that. And that, I think, for me, is like the last step. The last step is actually building the model. So much, research has to go into it.
For people who are, sort of in that retail space right now, let's say they've got an interest in algorithmic trading and systematic trading. Is that something they should be considering?
They can consider it. I mean, most people don't have the ability to program, but I think there's a lot of programmers out there that'll program your idea for you. But I think the problem that people face is the fact that they're not willing to spend money on it, right? They're actually not willing to learn lessons, because if you come up with a model, then the reason why you're getting it automated is so that you can actually test whether the model works over a certain period of time, right? And people say like, oh, I had this idea for a model, and then I gave it to a programmer and it didn't work. What a waste of money. I can't believe I just spent like $2,000 or $3,000 developing this model. Now I'm so upset. I'm not going to build a model ever again. I don't want to waste money. I say the opposite to people. I say, well, thank goodness that you spent your $2,000-$3,000 building that model, because now you've just saved yourself tens of thousands of dollars of losses, in the market, right? Trading that stuff manually, So I have a different view. I think that everyone should be automating their trading. Even if you decide to execute it manually, you should be going out and spending a few $1,000s, getting a programmer to develop it, backtest it for you, and showing you that either the thing, yes, it's feasible, it works, which is great, go ahead and trade the thing, or no, it doesn't work, it's rubbish. In which case you should be delighted that all you did was, pay some school fees, right, to actually learn your lesson. So in an ideal world, I think every retail trader should actually have a programmer buddy that actually, that they can communicate and say, hey, I want to test when, this moving average crosses that moving average, what happens, and, try it out, even if it's not detailed backtesting, just in general, whether there's even a vague possibility that there's an opportunity to make money using that strategy. So I think it's very accessible. I mean, you can go to all these well-known websites, Freelancer, Odesk, all these different websites that have got outsourced programming. Find yourself a programmer, spend the money, spend a few $100s or a few $1,000s, to prove yourself wrong, that your model doesn't work, before you go and lose your cash on the market and get really despondent and walk away. Set yourself a budget. If you have $100,000 to spend or to invest in the market, you need to be able to budget, $5,000 to $10,000, to get your model right, in hard cash, because then you'll get the payout in the long term. So I think everyone should be getting into at least testing their ideas in an automated fashion. You might decide to execute manually, but you have to test.
Yeah, that's a really good perspective. What were some of the things that you first started automating?
Yeah, I first started automating what you read in every technical analysis textbook out there, which is like moving averages, RSIs, MACD, all that kind of stuff. I won't tell you what my formula is, but I can tell you that all that stuff is rubbish. It works for a bit, doesn't work for a bit. It all really depends on what parameter you put into them. If you want a reason to go long, you can put a 200-bar moving average. If you want a reason to go short, you take the same price graph and put a 5-candle moving average. You'll get a short signal. So in terms of technical indicators, I think traditional technical indicators, I have found them to be, it is a bit extreme for me to say they're rubbish, but yeah, pretty much, I don't trade any of that stuff. I just think people are lying to themselves unless you're prepared to re-optimize, every day, every few days to try and get the parameters to fit exactly the market conditions that you're in. So if you're prepared to do that, in terms of optimization, then that's fine. But if you're planning to say, a 15 or 14 candle RSI works for me, then I think you're lying to yourself. And that's what I kind of, the hard lessons that I learned initially in my career is almost having to pay to disprove that these technical indicators, is certainly even in the medium term or definitely not long term don't offer, or they offer very, very little value. So yeah, that's how I started.
Okay, no, that's really interesting. That's excellent. Well, this has been really cool. I mean, we've touched on a lot of subjects that I have sort of never really brought up in previous interviews. So before we let you go, do you want to share with listeners where they can perhaps learn more about you and connect?
Sure. You can just Google my name on LinkedIn. You can connect, and I'm always around. I'm happy to chat. I'll never give you the secret sauce, but I'm always happy to chat. Just Google me on LinkedIn, and I think that's the best way.
Well, this has been really good. So thanks a lot for coming on, and we will touch base soon.
Thank you, Aaron. Thanks for the time.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Every decade, the market reinvents itself. Online brokers opened the doors. Mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool. Limited risk trading. From now on, your trading risk is capped and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade large positions and scale your strategies without risking your own savings. It's time to trade with more capital, actually worth more of your time and effort. Ready to trade the pool? Click the link in the description and join Stock Trading Revolution today. Doesn't your portfolio deserve the best? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Trade smarter with advanced charting tools, backtesting, a pre-built strategy selector, and more features. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory, exchange, and clearing fees still apply. Options involve risks and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Traders, what's going on? I hope you've been having an awesome week. This episode is actually a first for Chat with Traders because I'm telling you, I've actually run out of fingers and toes to count the number of emails I've received in the past month or so requesting an interview with a Forex trader. Initially, I was avoiding this area because my knowledge on Forex is pretty much non-existent. To be honest, it's just something I've never really traded. But when I was introduced to this week's guest, I knew he would be a great fit to fill the demand of having a Forex trader on the show. Joel Kruger has been involved with foreign exchange since the very beginning of his career in investment banking as a currency strategist. This was after he came to the realization that he just wasn't cut out for law school. But nowadays, Joel is in the trenches as a self-funded Forex trader who has pushed on through many failures and created a tremendous lifestyle for himself and his family. It's also worth mentioning, even if you're not a Forex trader, Joel has a bunch of really good psychology tips that he shares throughout this interview. I also want to give a special thanks to the guys who submitted questions over Twitter before this interview. Joel does a great job of answering these, so keep listening. I'm sure you'll pick a lot up. Enjoy, guys. Speak to you soon. Hey, Joel.
Hey, Aaron.
How's your day going, man?
So far, so good.
Good stuff, good stuff. Thanks a lot for coming on.
No, it's great. I'm glad to be on.
Yeah, it's great to have you here. You're actually the first Forex trader I've had on the show.
Ah, very exciting.
Yeah. So I've actually had a few listeners who have sort of reached out and say they'd like me to interview a few Forex traders in the mix. So here we are.
Yeah, that's exciting. I mean, Ryan, who I guess reached out to you, had heard some of your stuff and he was excited about trying to get us to connect. So I'm very glad to be the first FX trader. And have you had any exposure to the space a little bit, or?
Yeah, so I mean, Forex is definitely not my playing field. I've never taken a foreign exchange trade.
Yeah.
So my knowledge in the field is a little bit limited.
Yeah.
So what I did this morning is I posted a tweet and I said if anybody had any questions that they wanted answered around, Forex, because you were coming on the show.
Yeah.
And we got a pretty good response. So we'll be sure to run through those.
Sounds good.
All right. Well, let's get this underway by taking us back to the very beginning of your career. So we're keen to hear how you got started.
So I guess I had a bit of an unconventional start into the market. I sort of, I was going way back to my college years. I had, I'm always surprised. I don't know where you were at, but I'm always surprised at how so many people have such a very strong idea of, their direction out of university or college, and they know exactly what they're going to do. I had no idea what I was going to do, and so I defaulted to going to law school. And I had no intention of practicing law. I realized that very early on. Most lawyers realize that after a couple of years of practicing. I knew right away I didn't want to practice, but it was a few years to get a little bit of experience. And then out of law school, I went into investment banking. I sort of got introduced to the world of finance, and I thought that this was an exciting thing, not knowing much about it. I was a history major in college, and I went to law school, but I started out in investment banking, working in an area called debt capital markets. And then when I was in banking, I got exposed to the different areas of banking, and one of those areas was, I remember one day I was working on a floor in the bank, working in this debt capital markets group, sort of behind the scenes, preparing deals, putting together books, and going out and trying to raise money for companies that needed loans to do deals. And I had to go downstairs to another floor, and this was the trading floor. And I was like, why am I not down here? I mean, this is a lot more exciting. I mean, what the heck am I doing upstairs on this other floor? And so that was my introduction to the trading floor. And then I was exposed to the different groups, and I was just immediately intrigued to the FX desk and all that it had to offer, and the fact that it was exposed to this global macro desk that was gave you exposure to different countries and the politics of different countries, the economies of different countries, and I just found it to be fascinating. So that's kind of how I got into FX, and from there it was just off to the races. Okay, so were you actually trading while you were working in investment banking? Yeah, so I was working in investment banking, and then when I transitioned to an FX, it was not in a trading capacity. It was in a research and strategy capacity, and so my career, the breadth of my career, and a good portion of my career then was devoted to working on the FX currency research and strategy side. Before then, years later, getting into the trading. Okay, right. So at what sort of point did you decide to leave those firms and become a full-time trader, sort of playing with your own money? And what was sort of your motive behind that? Well, I was always attracted to, I remember, even going back to my elementary school years, I was always attracted to markets and the idea of speculation. So, that was what, got my juices flowing. And so when I was exposed to the FX desk and to this market, I I was drawn to the idea of, being able to, speculate on markets that I knew that were very difficult, and that probably one of the toughest things to do out there was trying to, beat the market over time. And so I was drawn to that. So when I got pulled into this market and into the world of trading, it was always because I had this idea of, wanting to go off on my own. I knew that this was a very lucrative career, or could be, and there was intense challenge. I'd come up in sports, and so I think that athletes find a lot of similarities between trading and sports, and so I wanted to sort of get to that point. But I knew that to jump right in for me, at that time wasn't going to make sense. I wanted to sort of learn about the market a little bit and cover the market and sort of be able to sort of figure out who I was and what my methodologies and strategies were and what made sense to me. Because, and we could talk about this, but a lot of your trading is a reflective of your approach to trading should be reflective of your personality as a trader. So one strategy that might be good for me, I for example have developed a more of a counter trend type of a trading approach, and then that's maybe good for my personality, as I'm a bit more of a contrarian in life, and I sort of like to go against the grain. And so you need to find strategies that complement your personality. And so that's basically was a path for me to find out who I was before, taking that saying, okay, now I'm ready to get out there and put some real money to work.
Yeah, okay. No, that's really good. So when you did make that transition, did you find it easier or harder than what you had sort of originally anticipated to trade your own money?
I think that's a great question. I think that there's no way that I'm going to stand here and tell you that once you jump into that water that maybe there are certain areas where I think it helped me a little bit, but you're never going to really learn or feel what it's like to be a trader until you actually, step into those shoes. So while I did have experience and an understanding of the market, as far as trading was concerned, you really only learn once you get your feet wet. And so, when I stepped in, there was still a nice learning curve before, finding my stride.
Yeah, okay. I'm keen to hear about that learning curve. So what would you say were some of the difficulties you experienced early on?
I think the difficulty that I experienced early on, that's something that, you need to figure out, quickly or sooner than later, that just surprisingly takes so long. It's, with trading, it's the thing about trading is that we make it more complicated than it is. And some of those things are just, we have this built-in sense of, wanting to be right. Intuitively we want to be right, and especially maybe coming from the strategy side, you get into the market and you have an idea, and you want that idea, you believe in that idea, and you take the position, and you're committed to that idea. And so sometimes your stubbornness and inability to sort of understand that being wrong is a part of it is a tremendous obstacle, and it can be destructive. And so that's something that you really need to get your ego in check. And with trading, it's always this big paradox, because to trade you need to have a tremendous amount of self-confidence, and you need to be able to be decisive and make decisions and almost have an arrogance about your opinion. But at the same time, you have to have a humility and be able to say, okay, this is not working out, I'm wrong, I need to move on to the next one. And so these are things that I'm sure you've discussed with a lot of other traders that you've met, but the idea of sort of understanding how to take a loss is just there's nothing. I'd say that's the biggest first step of getting on your way to trading is knowing how to take a loss. And for some reason, and just because of our nature, it takes a lot longer for us to for people to get over that. I don't know if you've heard this, but intuitively, traders are fearful in a winning position, and they're hopeful in a losing position. This is the way that we're built in. This is how we're wired. So if a position is going in our favor, right, we're fearful. We see the money and we want to take it. And if a position is going against us for some reason, the way we're wired, we're hopeful. We want that position to work out, and so it goes against us, and it goes against us, and inevitably, that leads to a path of disaster. And so what you need to do as a trader is you need to be able to flip that around. You need to be hopeful in a winning position and fearful in a losing position, so that you see a position going your way. You don't want to take the money off the table. You want to let the position run. And if a position is going against, you need to be fearful. You need to say, I need to protect my capital and preserve my capital at all costs. And so these are things that for many people take a lot of time. And the funny thing is that so many people spend too much time reading books and focusing on strategies, and really these are the obstacles that need to be you need to be handled first. And if you overcome these, then you're 90% of the way there.
Yeah, so that's sort of borderline on the psychology of trading, which I'm really keen to get into that a little bit more with you later in the interview. So I think you have some good points to share on that. But how long would you say it was before you sort of found yourself to be consistently profitable with your trading?
Oh, for me, it took many years. I mean, I would say, for me, it took, I'd say, 5 to 6 years before I was, feeling comfortable, with my trading, and a lot of that had to do with, developing a methodology that made sense, an approach to market that made sense, and just sort of fine tuning my strategy and what I was comfortable with, and getting to know the markets that I was looking at. So it took me, I'd say, about, there were a couple of years where, I struggled, and I'd say into my third year started to things started to come together a little bit, and then by, I guess, 5 years out for me, it was when I started to start to really feel like I was you never want to be too comfortable. That's for sure. And I don't want to say that I'm comfortable to this day, because, the market will knock anybody down. But, I guess as comfortable as I can be at this point, it took it into my 5th year, I'd say. For some reason, people feel like they can jump into trading and be making money within a couple of months. But people need to understand that, this requires a tremendous amount of commitment and devotion, like any other, profession that you're going to, that you want to be involved in, and that you need to be in. It requires the same amount of passion and interest. And so these things, you're never going to jump into, you don't jump in and you're not performing surgery on the first day you go to medical school. And so these things take time like anything else. And people need to understand that. And it's a process. And if you have the passion and you're committed to it, then you'll get there. But it takes time like anything else. And people seem to forget that, given the instant gratification part of the business. But, it's something that shouldn't be overlooked.
That's a really valid point. So thanks for adding that in. I mean, I agree with you 100% on that. So let's run through some of these questions from the listeners. So we've got one here, and that's from John. And he says, were you successful in equities or futures? So I think what he's asking here is, had you traded in other markets before actually zooming in on Forex? And did you see any success in these areas?
I had not. My first exposure outside of, a retirement fund and trading, in that capacity, which wasn't really trading, it was just, sort of long-term investing. My first exposure to the world of trading was through the FX market. And, for me, that was where, I'd come from a background where I didn't come from a finance background. And so the first market that I got my hands on was where my focus was. So there was no experience on the equity side for me, or on the commodity side, was right into the world of FX.
Yeah, right. Okay, cool. So he's got another question here, and that is, I think this is a really good one. So in your view, what are the different dynamics and forces that separate FX markets from other instruments?
That's a good question. And so FX is, I love FX, and you learn to discover this as you get into the market. The beautiful thing about FX from a trading standpoint is that there's no bigger market in the world. And so when you want to trade a market, you're looking for two major things when you're trading a market. You want to see liquidity and you want to see volatility. So you want to see the market is deep, and you want to see that it moves quite a bit. And so these are two things that a large market is going to give you. And so FX is the largest market in the world, and so when you're trading it, it gives you certain advantages of, for example, you look at in other markets, you get gapping. So a market will, close at a certain, time one day and then open up at a different time the next day. And whenever it opens, and you see there's a large gap in the price. In equities, you have earnings and things that come out pre-market. And so, with those types of trades, when you're trading those markets, there's a lot more of that. So there's a lot more of sort of, I'm in a position, but I'm stressing overnight because the market's closed about, what's going to happen, earnings. And, with FX, the market that never closes. So, you open in Asia or New Zealand, you open up on Sunday and the market closes on the New York close on Friday. And so, you're always there. You always can see what's going on. The market's always trading. And so even though you have these events that are coming up that can, inspire volatility, the market is so deep that you're not getting these, penny stock like moves, and you're able to be there ahead of it. And, the other great thing about FX that I find, extremely attractive is how accessible it is and how available it is at all times. So it's a fantastic market in that you can be anywhere in the world. And basically from the same hours, if you want to, work from 8 a.m. to 5 p.m., well, you can do that anywhere in the world and trade FX. Obviously you're trading different markets depending on where you are in the world, but, no matter where you are and what you're doing, you always, can sort of, provided it's not the weekend or Christmas or New Year's, you're always, you're looking at the market. So I think those are the key standouts for me.
Okay. No, that's really well said. So those were sort of mainly benefits in the favor of Forex. Would you say there are any disadvantages to it?
Yeah, I mean, one of the biggest disadvantages is really not a function of FX. The biggest disadvantage is more regulation side, and so FX or Forex gets a bad name. Not because of the market itself. People get confused. It's more because of the lack of regulation in the market and the amount of leverage that retail traders are given and are afforded. And that's a big problem because when you ask somebody to step into a game where they have no experience and they need to put so little up on the table and they're basically margining all that up, and they're using they're 100 to 1 or 200 to 1, or even people are crazy that brokerages have had to now come down to 50 to 1, but that's crazy. And so if I give you $10,000 to trade and you're taking $1 million position, one move in the market is going to wipe out your account. So that's not reflective, or it's not a function of the FX market, but it's a function of the leverage that's afforded to the trader. And that's been the killer, and that's been what's caused so many problems. It's brokers taking advantage of and preying on the new trader that comes in that doesn't know what he's doing, that wants to, a lot of them are misguided and they just want to they think they have that casino mentality, and the leverage lets them take advantage of that. If I told you that FX now only had maximum 3 to 1 or 4 to 1 leverage, well, it wouldn't be the same market, it wouldn't have the same attention, and it would be no different than any other market. You'd be putting your position down. You take a $100,000 position and you'd have to put up $100,000 or $50,000 to trade that position. And so a movement of 1 or 2% really means 1 or 2% of your entire equity. So you take a $100,000 position, you put $100,000 up like you would in the stock market, and the market goes against you 1% and you lose $1,000. So, that's the biggest problem is the leverage. So if traders could just, I can't stress enough, the biggest, thing that I can recommend anybody that's listening, that's starting out, is instead of taking 10 years to keep blowing up and trying to figure this out, or taking 1 year to blow up your entire account and walk away, take 6 months or a year and trade your account unleveraged. So whatever you put into that account, if you put $10,000 into the account, your position sizes should be $10,000 position sizes, so that if the market moves against you 1 or 2%, that's how much of your equity you're losing. And if you do that, then you'll be way ahead of the game.
Yeah, those are really valid points. So we've got another question here, and that came through from Brad, and he's asking, what timeframes are you working on? And how do you handle high volatility around news? So pretty much two separate questions there.
All right. So the first question, the time frame. So I consider myself to be a short-term trader, but I'm certainly not a high-frequency trader. I'm short-term in the sense that I'll take a couple of positions a week, and I'll sort of sit on them. I tend to focus in on really the four major time frames for me are hourly, daily, weekly, and monthly. I don't generally look at anything shorter time frame than hourly. And for my positions, I tend to sort of start with the bigger picture. So I'll look at a monthly and a weekly and a daily chart, and I'll try to get the bigger picture to determine, what my views are. And I also like to, I consider myself to be techno fundamental. So, I try to sort of look at everything and sort of have a fundamental view. So if I feel that right now the euro has broken to a fresh 11-year low against the dollar, trading down below 110, I feel fundamentally, clearly the trend fundamentally has been in the dollar's favor given the Fed's, impending rate rise and the differentials between the central banks, between the Fed and the rest of the world. Fundamentally, the dollar's been benefiting tremendously. But maybe fundamentally, I believe that, today's employment report out of the U.S. there's a risk that it might, come in lower than expected. So maybe I believe that maybe there's a risk for the dollar to come off. So that sort of starts there. And I look at the chart and I see that the euro is dramatically overextended on the monthly chart and on the weekly chart and on the daily chart. So now I understand this big picture. And then now intraday, I start to look at the hourly chart. And once I see the hourly chart is sort of looking at a point where, I feel there's a good entry. So I try to isolate my entries based on the short time frame, but I formulate my ideas on the larger time frames. I don't tend to look at anything below an hourly chart or shorter time frame than an hourly chart.
Okay. How do you handle high volatility around news?
So with this, I would recommend, personally, I think whatever you do, you need to be consistent. So people always ask me these questions. Do I trade around news? Do I not trade around news? If you have a strategy that is sort of, purely technical, but you have to deal with these things, then I think the best thing to do is to sort of commit one way or the other. You say, okay, there's a big news event today, and I have this strategy that tells me to buy, and I don't know what to do because, there's this news event. I think you need to decide whether you're going to, not trade around large news events or you are going to, and then just let it be. And so if you're, as long as you're consistent, you'll again, it goes back to psychology. You need to make sure that your head is on right. So if you're consistent, now you'll know that you'll benefit just as much from the strategy in those times as you will not benefit from it, but at least you'll know that that you sort of eliminated that doubt in your mind. I personally I'll trade at any time, with exception of course, but I actually welcome the volatility from the fundamental event risk. I welcome it because it's just an opportunity to sort of act as a trigger for the trade that I'm expecting. So if technically I think there's going to be a rebound in the euro today, maybe I'm excited about the non-farm payroll number in the U.S. because that could be that spark that gets that volatility going. So for me, I trade no matter what, but my recommendation to the fellow who asks is just to try and be consistent. So if you want to trade news, if you want to trade around news, then be consistent and always trade around news, and if not, then don't.
Okay, that's really great. So yeah, thanks for sharing on that. And another question here came in from Glenn, and he's asking more specifically around what do you look at for entries and exits?
Okay, so for me, I use so exits is the hardest part for traders to exit when you say stop loss, I'm assuming, is the hardest part for a trader to initially overcome and to get over it, being able to take a loss. But it's so easy to do. So from strategically, it's very easy to say, okay, I'm looking at this market, and if it doesn't work out, I'm going to get out here. That's very easy to do. And so taking a loss or understanding that, if I lose more than 1% of my equity or whatever it is that you do, that's the easy part. The hard part is and I'm still learning to this day, is the risk management once you're making money in a trade. But specifically, I use two indicators as a contrarian. I like to use two indicators. One is called RSI, Relative Strength Index, which is well known across all markets, which gauges how the market's performing relative to recent price action, and it's an oscillator, which basically means that the indicator as it goes from 0 to 100. Anything when the indicator is showing above 70 is considered to be technically overbought, while the indicator shows below 30 is considered to be technically oversold. So that's sort of a starting point for me. So I'll only look at markets, really. I go well on both extremes. I go well above 70. I look at only and well below 30, but that's where I start to look for entries. Sort of when an RSI shows that the market's deviating from its mean, and the market's sort of moving a little bit out of control. That's when I first sort of get that light goes on. I also use something called ATR, which is average true range. It's an indicator that many know, but a lot don't, and it's for some reason it's not used as much. And I think it's a very easy to use indicator, simple. There's nothing to it, and it's so valuable. And it basically just tells you, based on the last several days, what the average range of the market you're looking at what the average range of the market that you're looking at is. So if for the euro, if it's 100 points a day or 100 pips, that's the average range a day. So when you're in the middle of it, and if something's going on, and the market shoots up 100 points, from high to low within the middle of the day, well, you can at least find comfort in the probability that, okay, the market's already now matched its average daily range, so maybe it's not going to move much more. So these are tools that give you, that help give you confidence. And so these two things I use to help with my entries and my exits as well. So for example, I might use an RSI to tell me that the market's oversold. It looks like it's bottoming here, and so I might use that to get in, looking at a high or a low, and I might use that as an entry. And then maybe I'll use the ATR for an exit, knowing that, okay, I got in, now the market's moved to its, its average range high for the day. It's moved within that range, so I'll use that as an idea to exit the position. But generally speaking, from a risk-reward standpoint, you always want to be at more than 1-to-1 risk-reward. A lot of people will tell you 3-to-1, 4-to-1. It depends on your strategy, but you should always be thinking, I want to make more than I'm risking.
Yeah, no doubt.
Are you ready to get serious about options trading? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including a $10 cap per leg on options trades, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, and more features to help you trade smarter. Manage your positions with speed and precision using Active Trader Mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory exchange and clearing fees still apply. Options involves risk and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Ever watched a stock explode and thought, if only I had the capital, or sat on the sidelines because your account balance felt too small to matter? Good news. With Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, and even the newest IPOs. And short anything you like with zero locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. It's a game changer. Create your account and start trading real shares within minutes. No subscriptions, no minimum deposits, just a one-time evaluation fee starting at $47. That's it. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you ever pay a cent. Every decade, the market reinvents itself, from online brokers to commission-free trading. Now, the new era of limited risk trading has begun. Click the link in the description to start trading with Trade the Pool's capital.
So, Joel, we've got another question here that's come in, and I think a few people sort of probably share this viewpoint. And this guy says, we know Forex is where fortunes are made, but in most cases lost. In truth, is Forex best left to the pros? What's your take on this one?
My take on this goes right back to that question we talked about when we talked about the disadvantage of FX. It really is nothing to do. It's there's no better market in the world to trade than the FX market. The problem is that when you open up a market to people that are just getting in and you give them excessive leverage, that is why these people are having a hard time. So certainly engage in the FX market. You're not going when you trade, you need liquidity and you need volatility, and these markets are open all the time, and they're efficient, and there's no more efficient market than the FX market. So it's a fantastic market to trade. The problem is that people just get sucked in and they're victim to the leverage, and they don't know what's going on and they don't understand. If you would just make sure that your account ask your broker, or make sure to set your settings at leverage of maximum 5 to 1, then you'll be fine. And you'll find that it's no different than any other market, except for the fact that you might have a little more volatility, which is great, which is, giving you opportunity.
Okay, cool. That's really good. So we'll take one more listener's question, and that's from Phil. And his question's pretty much around, do you have sort of like a daily routine that you follow each day before getting ready for the market?
Yeah. So I tend to follow a routine. I never really left the research side. That's still a part of me, and it's a great part of my process. So I recommend to everybody. I am constantly. I get up in the morning. And I scan. I'm not gonna lie. I mean, it's I am constantly watching the market. I find myself getting up in the middle of the night, not because I'm stressed about the market, but just because I'm excited about it. So I have my monitor or next to my bed. Or I have my rates, so I check. But when I get up, I generally take a quick look and see what's going on. And then I start the process of scanning through the markets and looking for where I think there might be opportunities, but not looking to force anything. And then, I have a process of writing. So for me, it's a wonderful process. I try to sort of get out and formulate my ideas, just not necessarily about a trade, but just what I'm thinking that day, how I'm feeling that day, what I think about the market. And it allows me to maybe take on a little bit more of an objective approach, or, it's maybe a bit of a therapeutic process. And it helps me because I find that, one of the big problems with traders is also that traders are too impulsive. And so if you're able to sort of, pen down your ideas or pen down what you're thinking and take it, then it keeps you honest. So for me, it's about, going through that process and sort of, figuring out what it is that I'm thinking and sort of, keeping myself, allowing myself to stick to that. I think that in life in general, when you want to do something, there's no better way of being able to sort of follow through than telling yourself repeatedly that you're going to do that, and reminding yourself repeatedly that you're going to do that, because it becomes you, and you can't prevent that from happening. So if you want to take a trip to Hawaii and this is what you're committed to, then get that picture up, talk about it every day, and the more you do it, the more it sort of becomes a reality. And that's very important in life, as it is in trading. So you need to be able to get that out. So for me, it's about putting things down on paper and writing them. And then the biggest, really, this might be a surprise to a lot of you, but the biggest luxury that you have when you're trading on your own and something that's really necessary, and something that people that are trading professionally at banks and hedge funds don't have, is the ability to walk away. So I'm a lot of the time during the day, I'm completely away from the market. I'm completely removed, and I have my alert set up, which is critical to me. I get them by my phone if something's moving. Otherwise, I just sort of step away, and I look into other things that I'm doing in life. And if the market comes to me, that's great. Then it comes to me. But don't force your positions. Let the market come to you. So a lot of the day is just, going around, going for a run, doing some shopping, looking at other things. I do some consulting work, and waiting for the market to come to me. And so that's pretty much it. I mean, as far as my routine is concerned.
That's really cool. So let's, now's probably a good point to sort of roll into a bit more on the psychology of trading. And I believe you recently spoke with, I hope I pronounced this right, a psychotherapist, about how to reduce trading stress. So what were some of the best pointers you took away from this?
Yeah, I mean, I think that, it's again, there's nothing more important than psychology as far, when you're trading. So again, I can't stress enough. I find that too many people focus in on, going out and buying books on what strategies to take and what risk management they should apply, without really understanding that, intuitively, if you just look at a chart and you sort of pick out, what you think is going to go on, just start like that, and don't worry as much about that side. I'm not saying that that's not important, but you need to have a sound mind, and you need to have a healthy mind. And if you feel good about yourself and you feel confident, then that is what's going to help you along the way. And so that's the most important thing. And so some of the takeaways, from this were just, there's a lot of this, when you're trading, unfortunately, a lot of what trading brings is, there's this world of, this mentality of, being impulsive and this casino-like mentality where I want to win and I want to make a lot of money. And so you need to figure out who you are and what your motivations are when you get into this. And so if your motivations are right and you want to be in this for the long term, and you see that and you realize this is not an overnight thing, that's what's going to help your process. And so I guess the biggest takeaway is really understanding yourself, knowing who you are, and knowing what your limitations are, and what risks there are to your own personality, what things might cause you trouble, and being able to know how to handle those things in life, not in trading, but in life. Knowing that if you're an impulsive person, try to figure out things that might, tips that might help you be less impulsive. If you find that you're taking too big risk, well, there's obviously something inherent built into your personality that is making you want to do that, and that extends to the way you are in life. So it's understanding who you are as a person, and trying to have some sort of a mechanism that you set up to sort of explore within and understand how you're going to overcome those setbacks in your personality. And then once you understand, and you have a strategy with that in life, and then you approach the markets, you'll find that it makes a world of difference. So it's really just, figuring out who you are as a person in life, and figuring out what your drawbacks and limitations are, and who you are as a person, and then working on those things and bettering yourself as a person, and then that will help in your trading. So if that helps at all, I hope that makes sense.
Yeah, definitely. That's great. So how do you handle a run of losing trades? And what would you suggest to other traders who might find this hard to deal with?
So the first thing I would ask, and we keep going back to this, is, the first thing you need to make sure of is it's a lot easier to swallow a round of losing trades that are with little leverage than it is with a round of losing trades where you're leveraged up at 100 to 1. So that's the first thing. So that's easier said. That just make sure that you're not trading on excessive leverage, because if you're doing that, then 3 or 4 losses is going to be life threatening as far as your trading is concerned, career is concerned, versus 3 or 4 losses where you're unleveraged and taking a 1% hit on each, or 2% hit on each trade. So that's the first thing. The second thing is you need to go, again, this all ties into the psychology of trading. You need to understand that that's a part of the process. You're going to go through periods where you're going to take hits on trades. And so if you understand and you believe and you know that this is a part of the process, that there are these periods, just like if you have a regular job or another job, you're going to have, bad weeks, and that's going to happen. And you're going to go into the office and you're going to have stretches where things are, you're not hitting it. You're not on your game. And that's fine when you're in, another job, which many of you are out there, you know that you have these periods, but you don't get too down. You know that you're having a bad day or a bad week, but you know also confidently that, things are going to turn around the next week, and you don't even stress about it because you know that you have that confidence. It's the same thing with trading. I mean, you're going to go through these periods and you need to be able to be positioned right so that you don't take huge hits on each trade. But other than that, you just understand that that's a part of the process, and I think that helps tremendously with that. Now, I will say one other thing, people try to quantify how they should trade and what strategies they take. There are a couple of rules, or there's one of the best things that I've applied in a qualitative way, not quantitatively, but it's just if you just say, I'm going to make sure that I love every trade that I take, love, not like, but love every trade that I take, you'll find that that's an amazing risk management tool, because there's so many trades that you'll take where you just like them. You say, okay, this looks good, I'm going to take it. I kind of want action, and I want to get in. So I like it, so I'm going to take it. And then it doesn't work out. But what happens when you do that is when you take trades that you like, you find that you're taking them a lot more often, right? And you find that when they don't work out, you're kicking yourself. You're saying, oh, why did I take that trade? But if you take a trade that you love, then they come around less frequently, which is great because they still come around a lot. And when they don't work out, when they don't work out, you're not looking back and saying, oh, maybe I shouldn't have taken that. You know that you should have taken the trade and that it just didn't work out because that's the way the markets are. So that's, I think, a very big secret for me. It's helped me a lot in my process where I don't force anything, and I only take trades that I know that if they don't work out, that I'm not going to regret.
Yeah, that's great. I really like that one. And I read this kind of leads into it, and I read this on your site, and I think it would be great if you could expand on it just a little bit. And that was a line that read, failure is a stop on the path to success. So would you like to share with us sort of the importance of understanding this statement?
Yeah. So that comes from, I believe, you're pulling something from one of my favorite quotes. It's from a Bob Dylan song. But basically, the path to success is rooted in failure. And, you need to understand that. And so if anybody, it's like, when you look at the world of, sex and glamour and supermodels, people get this supermodel idea where, right away you look at a supermodel and you're like, this is what my idea of a woman, the perfect woman is. And when you look closer, you realize that that's not a reality, that's not life. That's not the way things are. And so, things don't just happen. There's maybe, the lottery ticket person or the super brilliant person who, hits his stride right away. But, certainly from my point, that didn't happen. And things take time, and there's a lot of failure along the way, and failure in a good way. It's you can't learn without failing. And if you're afraid to fail, then you're not going to be able to succeed. And so this is, and failure, it's such a harsh word, and there should be another word for failure in a positive way, but it's just a part of the process. And if you can't fail, then you're not going to learn where the mistakes are and how to correct them are. And it's so important to be able to go through the process and say, I know that I'm not good at this, I'm probably not going to succeed right away. And if you have that, then it just, all of a sudden it opens you up to success if you're willing to embrace that. And not only that, but I'd like to think that, the harder you struggle, the more you can sort of look back and say, wow, look what I went through. And you could feel better about your achievements and feel better about yourself as a person, that you worked really hard. I mean, who wants something that's going to come easy in life? It just doesn't, we all say we do, but is there anything to that? I mean, what kind of person are you if things just go your way all the time? You're not interesting. And, you probably develop a pretty, warped perspective of the world around you. It's not fun. I mean, so we need to struggle. and certainly been a part of my process, and something that I embrace. And you come through so much stronger from the losses than you do the wins. I mean, you come out on, if you can get through that other side of a loss. I know many of you out there have probably traded and you've blown up your account, but that's fine. That's good. That's part of the process. If you can get through that and get up and say, okay, I screwed up and I made a mistake, but that's fine. That was supposed to happen. Then you're going to come out so much stronger.
Yeah, that's a great piece of advice right there. All right, Joel, well, this sort of brings us towards the end of the interview, but it's been awesome having you on. So before we go, we'll just go to the closing bell, which is just a short lot of questions that I ask to all the guests. So the first one would be, is there any piece of advice that has really stuck with you ever since you originally read it or perhaps even heard it?
I think the best piece of advice that I've had over the years is just to keep it simple. I think that, if you keep it simple and you don't overwhelm yourself with people are always asking me about, when should I take profit? When should I get in a position? If I'm, 5% within my profit, should I take the profit or should I wait? You need to trust yourself and you need to keep it simple. And, a lot of the problems that traders have are not on anything complicated. They're simple, silly things. So if you keep your strategy simple and you focus on, the psychology and just understanding, what it is that you have within your capacity, you'll be fine. So just don't try to overcomplicate things. Simplicity is genius, and keep it simple, and you'll be fine.
Okay, great. I like it. Knowing everything you do now, would you have done anything different come day one again?
Looking back, if I had perhaps, these questions are always difficult because, you look at your life and you sort of try to look back and say that this is, how I guess I would have, if I could do anything differently, I would have, not gone to law school, I guess, and just gotten right into the market right away and got maybe a bit of an earlier jump, in trading, but you never know what it is that you're going to do until you figure it out. So, I can't feel too bad about that. And maybe, maybe, getting in and not wanting to, if I could go back, not wanting to sort of feel rushed about needing to succeed. I think that's a big problem for traders that are younger and they're starting out. You feel you need to hit your stride quickly. And maybe because I came over from the strategy side, I felt that I needed to, accelerate that process and get there quicker, or I deserved to. And, maybe I was trading a little bit more aggressively. So one of the things that and so I was maybe using a little bit more leverage than I should have. So I guess one of the things that I've for my people that I've said over the last couple of years is I posed this something called the unleveraged challenge, which is specifically for FX, given the leverage that people are afforded, is to take 1 year, like I talked about a little bit earlier, take 1 year and forget about making money. Don't focus on the dollars and cents. Focus on the percentages and trying to succeed, and don't worry about the money. And so open up a small account of, a few $1,000s or whatever, even a few $100s you can do. And, you need to feel like you have skin in the game, but open up a small account and trade that account unleveraged for 1 year. Give yourself 1 year where you are completely removing yourself from the idea that you're going to hit it out of the park and make a ton of money. Forget about that. Just try and focus on and enjoy the process of trading without the money, worrying about the money and the losses and the wins, and just focusing on, say, if I can trade unleveraged for 1 year and generate 10% returns, or even in my first year, if I can generate positive returns, then I will know that going forward, that if I leverage myself up, because you can in this market, a wonderful thing about FX is that you can leverage yourself up tremendously, that you can scale yourself up, so you don't have to worry about that. So do that for 1 year, and then you'll find that you'll be on your path to success much quicker.
Good one. I'm just going to throw another question in there. And when it all boils down, what would you say motivates you to trade? Would it be, the money, the lifestyle, the freedom? Like, what would you put it down to?
I think if I'm going to be completely honest, at the end of the day, for me, it's the challenge of it. It's the challenge. It's knowing that so many people fail at this, knowing that it's been this impossible obstacle for so many people to overcome. and knowing that the rewards, if you can get it right, are so tremendous. And so that is, I think, what it's just getting up every day and knowing that you're trying to tackle something that is just so difficult for so many people. And it's like, I'm never going to be a professional athlete. I never will be. I don't have the build or the skill to be a professional athlete. But with this, I know that if I dedicate myself and I devote myself to, trying to overcome these things that are, again, a lot of them are rooted in psychology. If I can overcome, they're simple, but yet they're so difficult. If I can overcome these things, then I can get to a level just like anybody else out there that's sort of, succeeding in this business. And so the idea that I know that with this, I can get and reach that highest level and I have the capability of doing so, and yet it's so difficult and challenging, is probably at the top of the list. Obviously, the lifestyle is tremendous. If you can do it, then having that time to sort of be able to focus on other things and not having a boss above you that is stressing you out about things is tremendous. But at the end of the day, for me, it's just being attracted to that challenge of something, and speculating in something where it's so exciting and it's so difficult, is I guess what draws me the most.
All right, that's great. I mean, Joel, this has been awesome having you on, and I really appreciate you going into so much depth in the answers. It's been really good. So, before we go, do you want to share with listeners where they can find out more about you?
Sure. I mean, if anybody wants to, reach out, I have a blog that I write on every day. It's called JK on FX, JKONFX. Come over and check us out, and all the information's there. And always feel free to reach out to me. I love engaging with traders, and anything I can do to help. I always try to get back to people as soon as I can, and that's another great thing about this market. It's a global market, and probably one of the best parts of my career is when you're trading FX, you meet so many people from around the world, and that's amazing. I mean, you get to meet people from Australia and New Zealand and South Africa and South America and Asia, and so it's just been amazing. So reach out, come over to the blog if you want, and happy to help you in any way I can.
Awesome, I appreciate that, Joel. Are you also on Twitter?
Oh, I am. Yes, I'm at Joel Kruger on Twitter. So feel free to come over and check me out there as well.
Awesome. All right. Well, all those links will be in the show notes at chatwithtraders.com as per usual.
Thanks, Aaron. It's great. It's great. I really appreciated being on, and it was a pleasure.
Not a problem. All right. Thanks a lot, Joel. Let's keep in touch, and we'll speak soon.
Okay. Have a good one out there. Take care.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Every decade, the market reinvents itself. Online brokers opened the doors. Mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool. Limited risk trading. From now on, your trading risk is capped and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade large positions and scale your strategies without risking your own savings. It's time to trade with more capital, actually worth more of your time and effort. Ready to trade the pool? Click the link in the description and join Stock Trading Revolution today. Doesn't your portfolio deserve the best? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Trade smarter with advanced charting tools, backtesting, a pre-built strategy selector, and more features. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory, exchange, and clearing fees still apply. Options involve involve risks and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Alright guys, welcome back. Hope you've been having an awesome week. You know, if you think back, it's almost unfathomable to think that there was a time when it would take a couple minutes to execute an order. Nowadays, we have traders taking extreme measures just to get filled a nanosecond quicker than the next participant. But for this week's guest, Tim Bigham, that was the reality when he first entered the world of trading during 1985. And that entrance was straight onto the floor of the CBOE. Just a couple years into his journey, Tim experienced the full force of the infamous 1987 crash. While he survived and was still in good shape to trade the following day, this gave him a true appreciation for the importance of correct position sizing after seeing so many traders get wiped out. Tim really goes into the topic of position sizing and why it is absolutely vital to get it right during the later part of this interview, so make sure you stay tuned in. Additionally, Tim does a great job of explaining some of the terminology associated with options, how he uses scanning technology to generate trade ideas, and a whole lot more. I also want to point out that Tim will be keeping a close eye on the comments, so be sure to leave a question you'd like him to answer. Just go to chatwithtraders.com/Tim, scroll down to the bottom of the page and you'll see the comments section. Drop a question in there and Tim will be sure to get back to you with an answer. Alright guys, enjoy the interview and I will catch you soon. Tim, what's going on, man? How are you?
I am doing fabulous, Aaron. Thank you. We finally got some warm weather here in Chicago, so enjoying 60 degrees and won't last long. Tomorrow maybe snow again. So kind of like the market where, one day it certainly looks good, the next day not so good. So the ups and downs are kind of the things that keep life interesting in a way as well.
Absolutely. I think last time we were speaking, it was actually snowing where you are as well.
Yeah, no, it was definitely winter last time we talked, Aaron, and we're in spring, but it's not been much of a spring so far. So kind of like the market too, a good analogy. Again, we haven't had, much of a market this year, pretty flat across the U.S., equities year to date. So certainly struggling to, make any kind of headway. And I think, given where valuations are at and the fact that the free money, parade may be coming to not a complete end, but certainly has been ongoing for a long time now. It may be a struggle going forward here, in my opinion, to kind of grind higher. Might be kind of range bound for the next, several months, certainly.
Okay. Well, that could be a little bit boring for the people who are a little bit more long term.
Yeah, so and there's strategies, and we might delve into that a little bit. Using options where you can actually make money if nothing happens, which is a nice use of options that I focus on. But in a sideways market, if you're just flat out long stocks, a lot of times nothing happening, you tend to lose interest. But there's ways to take advantage of that as well, and hopefully we can get some people interested in some option strategies that are useful and fairly easy to implement as well.
Okay, good one. We'll definitely get into that a little bit later. So, Tim, you're a true market veteran. You're incredibly passionate about trading, especially options. And, I'm just really thrilled to be speaking with you today. So thanks very much for coming on.
No problem at all. And a true veteran means I'm an old guy, I guess it's a nice way of saying that. But I certainly have the scars to prove it. And, I am, as you mentioned, absolutely passionate about options. That's why I'm still, in the game. It's what gets me up in the morning and, keeps me going throughout the day. And, having the battle scars and being able to share them with people who are newer to trading, I think is not only something that I enjoy doing, but I think it's almost something, you should do as a trader, is to pass on, what you've learned to the next generation of traders who are just starting off. I know, when I started off in the mid 1980s, a bunch of guys who I learned from passed on their knowledge to me. And a lot of that was just, stuff you couldn't even put a price tag on, how useful it was. It was, real, useful, kind of through the war information. And, you can read books, you can read everything else, but until you've actually been in the trenches and gotten beat up a little, you really don't get the true flavor. So talking to the veterans who've been there around and having them pass it along, I think, is invaluable. And I look to do that, with anyone new to trading, or especially new to option trading. And I love doing shows like this to, kind of get that, if you will, new generation of traders, people interested in trading, excited about it, and pass along what I know to maybe, help guide them, so they might miss a few of the landmines. You're going to get blown up a little bit, believe me, as long as you keep all your limbs and everything. Getting blown up not too bad is the key to trading, as we find out. If you can take away your 2 or 3 worst trades, if you look back, usually those are the ones that wreck people. It's not being wrong, it's being wrong in a big way.
Yeah, absolutely. And I mean, we really appreciate taking in your insights. So, it's great to have you on. But let's kick this off by taking us back to sort of, I think it was around 1985 where you sort of first got started in trading. So tell us how you got into it, and then we'll sort of go from there.
Yeah, absolutely. Actually, I was finishing up getting my undergraduate college degree at DePaul University in Chicago, and a friend of my dad's was a trader on the Chicago Board Options Exchange. So I basically, in between classes, would go over and kind of hang out with him, help him out, basically, be his errand boy, if you will, take out orders, do whatever needed. And, within probably a half hour of being on the trading floor, I instantly knew this was a place I wanted to be. It was just a, world that I'd never seen before, and the excitement level and what was going on there, I just found, intriguing. And, from really day one, I kind of was hooked on it. I really love the environment of trading and the culture of trading, and being a trader too. It embodies a lot even off the trading floor. So I actually started then. I got a job as a runner on the trading floor. They don't have those anymore, but that would literally, call up on the phone. They'd tear off a piece of paper. You'd walk it out. You couldn't run, but you were called a runner. Walk it out to wherever that particular option was trading at. I was on the options floor, so if it was, say, IBM, you would walk it out to the IBM trading pit, hand it to the broker there, wait, and then bring it back, and that's how they reported the fills. Hard to believe in this day of electronics where, a half a second is an eternity. Back then it was, 2, 3, 4 minutes many times before the client knew if he got it or not. So, and then as a runner, kind of worked my way up the ladder, and then got my own seat in June of 1987, which was, just a few months before the crash of 1987. And the one thing I learned is, take care of your risk, and everything else will take care of itself. As long as you have an edge and you make sure that your risk is defined, that's really all you can do as a trader. Just take every trade. It's kind of like almost being the casino in Vegas, right? You just want to make sure you do have a slight edge, and you want to make sure that not one particular trade or one particular gambler, if you're in Vegas, right, is going to take you out. So surviving the crash of 1987, being able to trade the day after, that day after, Aaron, was by far my best trading day of my career, because I was, number one, able to trade. Probably 30 to 40% of the traders were being taken out by the risk managers. So I'm trading against the risk managers, and they don't care what price they pay or sell. And, if you were able to trade, if you had taken care of your risk and didn't get hurt by the crash, you were able to make back everything and then some the following day. So that really taught me the lesson that I live with to this day, which is, make sure you number one, have an edge in whatever trade you have. And number two, make sure you have your risk defined and, get out when it's time to get out. So from there, I moved upstairs as kind of the world changed to more electronic. Started managing some money, had a little volatility arbitrage hedge fund. Now I still manage some separate accounts, more trading on my own now, and employing a lot more of the technology that's just come aboard recently. The other thing in this market is you absolutely have to, change. Paul Tudor Jones, who actually made a ton of money in the crash, and that was his claim to fame. But, one of his saying is evolve or die. And he certainly is, a trader that I try to, embody. Another saying of his is losers average losers, which means, don't, just because it's a bad trade, don't add to it to dollar cost average. Getting out of a losing trade for a manageable loss is the key to long-term survival as well. So again, it's not, being wrong, it's staying wrong that gets you hurt. And that's, what I've certainly learned along the way. So, that's kind of been my road till now. So I am, managing some separately managed accounts, the fund post Bernie Madoff. Hedge funds certainly aren't performing like they were. And being in a hedge fund with the inability to, have that transparency, most people prefer what's called a separately managed account, where you trade the same style, but you're able to see your account every day, get your hands on it, look at it. So you won't have that kind of Bernie Madoff scenario where, they can make up the reporting and so forth. So I've, evolved as we go along. So I just love going in, and I like the fact that, every trading day is new and you are judged every day by the market. It's very easy to tell how you did, right? It's not like a regular job. There's no politics. At the end of the day, if you're, in the green, that's a good day. If you're in the red, it's a bad day. I like that with the market. It has, no mercy. And there's no BS, so to speak, in the market. So, and I still love the culture of the market, even though it's changed. And the mentality of the people who tend to gravitate towards the market tend to be more, I guess, entrepreneurial, risk takers, okay with making mistakes. And, I think that's another thing probably for all the, people out there is make sure you can handle being wrong a lot if you want to start trading, especially if you want to start trading for a living, because you're going to be wrong probably more than you're right. And if you're not okay with that from a psyche standpoint, it's something, you truly want to maybe reconsider going into trading as a career.
Yeah, no doubt. The numbers don't lie, do they? So I'm keen to just sort of take that back a notch and talk a little bit more about how you were sort of learning. So what was it like learning how to trade sort of from the heat of the pit? Because the majority of us sort of learn by the means of the internet now in sort of one way or another. So how did that work for you?
Yeah, absolutely. And it was invaluable being actually on the trading floor and kind of getting my feet wet, not as a trader to start. And I got to learn kind of how the trading floor worked without having, money at risk, without really trading, but just getting a feel and knowing how things operate. And I did see right before the crash of 1987, a lot of people coming in because the market was red hot, very akin to, the late 90s, when the internet craze kind of hit, where, hey, this is easy to do, where they came in and they couldn't even look at a screen and tell you what all the numbers on there meant, but yet they were risking a lot of their money without even having an idea on how things work. So number one, it's changed because, as you mentioned, Aaron, now it's electronic and there really isn't a trading floor. I do some TV spots on the Chicago Board Options Exchange every Thursday, and there are 2 trading pits left on the floor. There's probably, hundreds of guys instead of thousands down there now. And it really has become a pseudo ghost town. Kind of sad to see, but, it is what it is. So, but in the old days, the trading pits was as much about being physical as it was about being, if you will, intellectual or trading ability. I mean, a lot of it was, yelling the loudest, getting the attention and so forth. It's kind of what you see in the movies, where people are screaming and yelling. Most of the time, I will be honest with you, I think trading is 90% boredom, 10% sheer terror without much in between. So a lot of the times you're just sitting around screwing around, to be honest. Making stupid bets, doing, it's basically daycare for adults a lot of the times. But when the market does start to move, you have to be ready and you have to be prepared. The other thing is we have gone from, using fractions in stock and option trading to using decimals. And it's much easier using decimals, I'll tell you that. I mean, it's, there were more cases than I care to admit where guys using fractions, because we are using in options especially, where you're using 16ths and 30 seconds, right? And trying to figure out what 5/30 seconds, right, plus a quarter equals, right? A lot of guys would mess up the math and, end up basically screwing up the trade because they weren't mathematically inclined. So there was a little different edge to having, a fractional kind of mind. Now with decimals, it's, very easy. Everything's much easier to add. It's almost like, the cash register at McDonald's that spits back the change to you, or trying to figure it out in your head. So, but, the one thing, being a trader on the floor versus being, a trader, if you will, upstairs, or a retail trader, a regular trader, let's call it, completely different environment. A trader on the floor is just looking to make money by buying on the bid, which, is the lower price, selling on the offer at the higher price. So if, for example, the stock is 112 bid, offered at 113, right? They're just hoping to buy at 112, sell at 113 all day long as orders come in and make that dollar spread, to use that analogy. Whereas from a retail standpoint, usually you tend to, be directional in nature. You're saying, I'm buying at 113 because I think it's going to 114. So most retail investors tend to need to have an opinion to make money, whereas most floor traders, it's almost better not to have an opinion. You really want to be hedged. It's almost like being a, bookmaker, where you want to make sure that you don't have too much lean on one side or the other.
Okay, that's really interesting. Just on that sort of that learning process, though, I just had another question around that, and I sort of feel like there's kind of an assumption that if you're a pit trader, you make money. But would you say you sort of experience the same struggles that many other traders go through when first starting out?
Oh, absolutely. I mean, the attrition rate for traders is probably, about 80% don't make it. Either they blow out in a bad way, right? And I saw a lot of guys blow out, believe me. Some of them deserve to be. Other guys just happen to be caught with, too big a position at the absolute worst time. A lot of guys just kind of eroded out where, they didn't really lose or make a lot, but it wasn't working out for them. So, being a pit trader, doesn't ensure success. You have to know what you're doing down there. You have to know basically, how to identify the edge and then lay off your risk, right? And you're really looking to just capture little edges throughout the day. That's kind of what I'm doing upstairs now. The world has changed. Most of, the market makers it's called upstairs, in an office off the floor now. And because of the technology that's available, you can really, run a very similar operation, upstairs as you do downstairs and capture that same kind of edge. So, but there again, you do have to know what you're doing. And, when the market moves against you, you have to act quickly. I think that's really what it comes down to, Aaron, is, a lot of guys, when they start to have it move against them, are refusing to just cover for a small loss. And then that's where it gets to be a, big loss and then that unmanageable loss. Or they'll add to the position saying it's got to come back. I'm right, the market's wrong. I've always expressed the opinion the market's the market, and I'm, just trying to figure out what the market's doing. I don't know if I'm right or wrong. All I know is that, if I do this over the long haul, I probably will make money because there's an edge to what it's doing. How the market moves, I can't control. How I move is the only thing I can control. So a lot of market makers who don't make it is because they are, again, have that, hubris, that psychology, as I talked about in the first place, where you have to be okay, with being wrong a lot of the time, because, like I said, it's almost a, coin toss, but if your winners out, weigh your losers, you make 20 cents and you lose only a dime, you can be right, only one out of, 1.3 times, right? You can lose a little bit more than you win, but because your win's bigger than your loss, you end up making money in the end. And that's really the mentality you got to espouse if you're going to be a market maker on the floor.
Yeah, that's really well said. And I just want to make sure everyone listening is clear on this term, because I'm positive it'll come up again. Could you just give us an in-depth explanation of who is a market maker and what is their role?
Yeah, and it's changed. Back when I was on the trading floor in the options markets, right, I would literally quote markets, right, and if someone came in who wanted to buy or sell at those prices, I would have to facilitate that. So basically, I would set the market, and if someone wanted to trade at the price, so I would say I would buy it at $1, sell it at $2 to keep it simplistic. If someone came in and said, I'll pay $2, I was obligated, right, to sell at $2 because I'm making a market in that particular option. Same thing with stocks, same thing with futures, whatever in the trading world, they make a market, they will give a bid, a price where they'll buy at, right? And an ask or offer a price where you will sell at, and you're obligated to buy or sell at that price. How much, again, is dependent. You can quote for a certain amount of shares, certain amount of contracts, whatever it may be. But that's what a market maker does. And usually the fair value price lies in between where you're willing to buy and you're willing to sell. So basically, if someone comes in and pays $2, right, you can sell it there. It's only theoretically worth $1.50. You go out and hedge it, and then you've captured that little bit of edge. You've sold something that's worth $1.50 theoretically for $2, and then you've hedged it off, and then you just keep doing that day in and day out. Of course, the problem can arise if someone comes in and buys it at $2 and you can't get your hedge on because the market starts moving against you. So in this day and age with electronic trading and how fast things can move, I will tell you, being a market maker is a much different and much dangerous and really less financially beneficial game than it used to be. I think there's a big advantage to being a market taker, if you will, being a trader who can just wait and, not be obligated to be on the bid and ask spreads. So I think the market's really changed and the structure has changed. It's a great time for, the retail guys here because, you don't have to trade. Whereas if you're making a market, if someone wants to trade with you, you're obligated because you've set a price on it.
Yeah, okay. That's really great. So thanks for breaking that down, Tim. And it kind of leads into another point about change. So if I was to ask you, say, 25 years ago, what was your edge? I'm presuming you would say something like it was the fact that you were sort of in the pit and just sort of amongst the action. But as we've recently seen the pit action sort of fading out and technology slowly taking over, where would you say you can now find an edge in the market?
Yeah, edge is actually basically in the same manner, but not in the same place. Being an upstairs trader now, we have technology that allows us to identify, either unusual activity or, bids and offers that are worth more or less than the theoretical price. And then we're able to view those and quickly act and say, do we want to take advantage of that or not? So, with the option scanning that I use at RB Trader, we're able to identify a lot of stuff, coming in out there. there that will give us, a look at what's going on, very similar to being on the trading floor, right? So it's almost like bringing the pit upstairs. And they have a great web-based scanner, too, that does the thing, for the retail guys, that allows you to, jump in and kind of level the playing field as well. So the thing about technology is, it really does really give almost everyone the same kind of advantage. Obviously, the speed differential, the guys who are willing to, build a, microwave tower on the top of a mountain to, be able to be quicker by, a nanosecond, right? You're never going to compete in that game, the real high frequency guys, the latency guys. But as far as getting, information and stuff, it really is becoming more and more readily available as we move on here. Certainly news has become, more available. Almost everyone gets the news at the same time because in this world, everything is, out there in a matter of seconds. So it used to be, you got the news, many times hours before the public did, and you're able to act on it. Now the news, if it's, a second or two, that's a long period of time. So everything is quick now, and everything really has favored, the retail traders, the guys newer to trading. It's really a great time, I think, to get into trading from a level playing field aspect. The high frequency where they're saying, hey, they're, making, half a penny on you. Who cares, right? We're not going to beat that game. But the benefits have so outweighed that. The pit trading is a game of the past. It's gone upstairs. But, the idea of being able to take advantage of order flow will always be there.
Yeah, that's really interesting, Tim. So you talked about sort of scanning for trades there. So do you want to give us some insight on how you're actually scanning for your trades, sort of currently?
Yeah, absolutely. I use rb-trader.com. It's basically an option scanning tool. And you can go on the web and, get a trial of that for free, but it will come up with what's called unusual option activity. It will have size activity. It'll have volume activity. So it basically takes all the trading that's going on at that very moment and populates it with something that's, let's call it interesting, actionable, something that's, unusual, out of the norm. So you get big size, right? You get unusual, something that normally doesn't trade a lot, trading a lot. So it provides, the idea for, trade generation, and it provides that kind of edge that you're looking for. You can also see what, the big guys are doing out there in the marketplace in options. And the nice thing about options, and I'm sure, a lot of the listeners might not be that familiar with it, but the options market is really starting to be a place where, the big funds and the big players are starting to express their market viewpoints in a way they really hadn't done until just recently. Carl Icahn probably is a name familiar to most listeners out there. But a lot of his, plays that he's done recently has actually been with options. They were over-the-counter options for the most part, but those bleed through to the listed option market. So I think, the option trading uses is getting more and more predominant. So it's, I think, the last kind of growing field out there. So if anyone's, interested, certainly they can get a hold of me, and shoot me an email if you want any, more information. But it is a way to, express your viewpoint by the big guys out there. And it really sometimes is a tell. Kraft Foods just had a recent merger, Heinz, right? And about a week and a half before that deal was announced, there was huge volume in the options market. Guys were buying calls that these things normally didn't trade, and sure enough, a week and a half later, boom, here comes the deal. That's happening more often than not. I have no idea if it was, insider buying, right? But all I'm saying is that a lot of times you'll see big volume come into the options marketplace, unusual volume, and then a move foul in the stock. So it's a way you can kind of take a look and see, hey, this is getting a little bit interesting out here. Maybe we want to take a look at. So it's a great way to generate trade ideas. And it's also a great way if you trade, kind of spreads like I do, to take a look at where prices get a little distorted as well. So, and like I said, it's available for the retail guys out there, and it's, really leveled the playing field. Options, even if you don't understand, the minutia of them, looking at the options market to see how the stocks may react is many times a good use of the options market as well.
Are you ready to get serious about options trading? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including a $10 cap per leg on options trades, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, and more features to help you trade smarter. Manage your positions with speed and precision using Active Trader Mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory exchange and clearing fees still apply. Options involves risk and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Ever watched a stock explode and thought, if only I had the capital, or sat on the sidelines because your account balance felt too small to matter? Good news. With Trade the Pool's limited risk platform, you don't need millions or even thousands to start trading the U.S. stock market. Bypass the PDT and tap into over 12,000 U.S. listed equities, from penny stocks to big caps, ETFs, and even the newest IPOs. And short anything you like with zero locate or hard to borrow fees. Start your evaluation, get funded with up to $200,000 in buying power so you can go big without risking your own savings. It's a game changer. Create your account and start trading real shares within minutes. No subscriptions, no minimum deposits, just a one-time evaluation fee starting at $47. That's it. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and build confidence risk-free before you ever pay a cent. Every decade, the market reinvents itself, from online brokers to commission-free trading. Now, the new era of limited risk trading has begun. Click the link in the description to start trading with Trade the Pool's capital.
Sure. So those couple examples you gave in there, is that what you'd call unusual options activity? Because this is a common term in the world of options. So do you want to just explain that a little bit more? Like, what does unusual options activity actually refer to?
Yeah, absolutely. I'd say, our definition precisely is there's a term called open interest, which in essence is, how many of these things have, traded kind of in the past. It's a look at that. So it's kind of, like how many, are out there that people have. And then unusual, if all of a sudden, for example, with Kraft, there was, I think, about 500 open interest, 15,000 of these contracts traded, right? So, that's, definitely unusual. Now, if you had Apple, right, 15,000 contracts would be just a normal day because Apple trades so many options on a daily basis. So it's it really depends on, the normal kind of trading activity. And when you see a big pickup in volume, right, especially in one particular option, and if that buyer of the option is aggressively paying the offer price, paying the higher price, right, that's showing that he really wants to get in. That's even a bigger kind of, interesting look. Here's a, big trade going on, and this guy is just saying, I want in, I'll pay whatever price. So that's what the scanning technology kind of allows us to identify. So, big volume doesn't necessarily mean unusual. If it's big volume and something that normally has big volume, that's just a normal day. And, sometimes even, say, 1,000 contracts, right, which isn't necessarily a big volume sort of option trade, but 1,000 contracts on something that hardly trades is definitely unusual options. So it's really a comparative. Again, we use the term open interest. and compare that to the trade volume. With open interest, again, is a fancy way of saying how many contracts have kind of been out there already in the market that haven't been closed. It kind of gives you an idea on how much activity normally is for that option. And when, that day's volume exceeds that by a, factor of 4 or 5 to 1, that then becomes, kind of unusual options activity, something that doesn't normally happen. And that piques the interest, certainly, to take a look closer to see what's going on out there.
Okay, so once you detect that sort of unusual options activity, how early do you have to be to sort of detect that to be able to actually trade it and then profit from it? Like, is it too late? Like once you recognize the big volume sort of coming in that's out of the normal, are you already too late to it? Do you sort of need to anticipate it building up to that? Or can you just sort of break that down a little bit further?
Sure, there's two ways to play it, and I prefer the second way that I'm going to talk about it. The first way is you basically get into, kind of the game of musical chairs where, everyone rushes in and just keeps buying, right? Hoping in essence to sell to the next person who's paying a slightly higher price for it. So usually how it works, Aaron, is the order will hit, right? It becomes kind of unusual activity. It's kind of, out there now. It becomes general knowledge. And then there's people who think, hey, this is unusual activity. I'll follow along with it. Certainly there's guys on TV and websites who just buy them because they're unusual, right? Blindly just saying, just because someone else is paying a lot for these, I'm going to pay a lot for these because he must know something. That's fine, and that game can work and it can't work, right? But at some point, you're paying a lot for those options. It drives what's called the implied volatility. Implied volatility is a fancy way of saying the price of the option to really an extreme level. So if you're, too late to enter into the early stages, what, we're doing is we are selling those inflated options and we're buying the shares of stock against it. So we'll buy the stock, for example, in Kraft, we would have bought the stock, sold the calls that people were, overpaying, right, to get into, and then basically wait for that buying to subside and, that price will slowly come back in line. We're hedged with the stock and we kind of take the trade off. That would be another way to play it. You can do it certainly with spreads trades, but you're right. I mean, jumping into the, game of I'm just going to jump in because this option's hot. That's a very difficult game to win in the long run because, anytime you're trading kind of a froth, you don't know how high it's going to go before people say enough's enough.
Okay, right. So let's move along a little bit to just sort of some more general advice for traders who are listening, because, I'm sure you've picked up a ton of lessons over the last, however many years. So what would you say to any trader who is perhaps struggling with the psychology of trading? Like, how do you now deal with this aspect and keep motions under control?
That's a very tough thing. I mean, that is, and I've dealt, I don't care how good a trader you are, you are going to have periods of drawdown. You're going to have periods where, to put it bluntly, it just kind of sucks bad, right? And, it starts to spiral down, and that's a tough thing to, dig out of. But if you trade long enough, you're going to have, hopefully many times that happens, because that means you're going to have many upswings as well. I'm a big golfer, and it's akin to having kind of the yips in golf, right? And the only way to cure it is to start making some, short putts, right? Then your confidence comes back. So, if you start to get beat up, it's number one, it's okay always to take a break, right? The market's open every day. You don't have to trade every day. Two, I would say bring your, position size down. I always use, how my P&L is going to, kind of increase or decrease my position size. Same thing I used to do when I used to play a lot of blackjack and poker, right? When you're up money is when you should increase your bet, if you will. When you're down money is when you should pull back. Most people are exactly the opposite. I mean, there's been studies on there as well. Kahneman and Tversky, right, have a great one where, people basically do the exact opposite. When they're up money, they want to hold on to that. When they're down money, they, start to say, I'm, going to be all in, right? So again, just take a step back. It's okay. You're going to have drawdowns, understand that. And, the one thing I think if I had to have to remember from the podcast here is position size, position size, position size. So the way to control your risk, right, is not to be risky when you put the trade on. So position size accordingly, have your stop in place, stick to your stops. Again, the nice thing about options is you can do spread trades that have defined risk, before you even, get going what your maximum loss could be. But if you're trading something like a stock or futures, make sure when it hits your level, you're out. If you can't pull the trigger, make sure you actually put that stop out there. But position size accordingly, so if it does hit your stop level, right, you can live with that kind of loss and just move on to the next trade. And you may have a series of losses. You have to understand that as well. And at some point, stepping away, I think, is key to doing it. But, understand going in, you're going to have losers, you're going to have drawdowns. And again, if you have your position size in place, those losses won't be the ones that really are kind of psyche ruining. If you lose 1 or 2%, I don't think anyone's going to be, fearful of putting on the next trade. But if you lose 10 or 20%, all of a sudden you get much more gun shy. So that's why position size is absolutely vital. And I've seen, people don't blow out because they're wrong. People blow out because they're wrong in a big way. Long-term capital management, I might be, talking to too young a crowd, but that was certainly one that blew out, not because they were really wrong, but because they were wrong in such a over-levered way. If you look at any of the great blow-ups in trading history, it wasn't being wrong, it was because they were huge positions. The London whale we recently saw, JP Morgan, classic example, right? He was wrong, right? But he was wrong in a massively levered way. So it's that leverage, that too big a position, right, that kills you. It's not being wrong. So again, position size, if you even have to write that down, I have notes all over my trading screen to help me throughout the day. And I've been doing this for, many people say way too long, but I'm not quitting anytime soon either. But I actually have little notes that will help me, remember even after all these years to follow, those rules. And, it's kind of like, once you break it once, it's, you don't want to make sure you break it again. So, that would be my high advice to everyone. Accept the fact you're going to have losers. Accept the fact you're going to have drawdowns, that, it's going to be lousy sometimes. And if you look back over the course of 12 months, usually all your money is made in probably 2 or 3 months. Usually 6 months you're kind of, treading water. Another couple months are probably losers. So, it's inevitable you're going to have periods where you're not doing much. Inevitable you're going to have periods where you're, dropping a little bit. But, the key is not to have those losses, be so big that, even if you have gains, you're not going to get back to break even. So position size is everything. And position size allows you to keep your psyche in place, too, when you go through the inevitable tough times.
No doubt. I think that's super important. That was really good. So let me ask you one last question, and then we'll probably sort of start to wrap this up. So what is it that you would say motivates you to trade after such a long stint in the game? Is it the challenge? Is it the lifestyle, the money? Like, what would you say?
Well, I mean, the money is kind of, it's nice, obviously, and you do need the money, but the money really is a way of keeping score, and I'm a very competitive person. And I also love the challenge every day. I like the fact that it's really unknown every day that you go in. I love the lifestyle. I love kind of the mentality that traders have, the ability to, if you're wrong, you get out, and guess what? You get a fresh start again. That's rare in this, kind of world, right? Where, you can have 50 or 60 fresh starts, throughout the day, and you just keep on keeping on. And perseverance, I think is, a key, absolutely trait of great traders, to kind of carry on. And, it's also, I really just love the, kind of the challenge every day of trading and the ability to find that kind of, edge, that trade where you just say, you know what, this thing, worked out exactly as I anticipated. It's, it doesn't happen all the time, believe me, but throughout all the years, it's, again, to use golf as an analogy, it's like hitting that, great drive straight down the middle. That's what keeps you back golfing. You can have a series of not so great shots, a series of lousy ones, but then you have those, shots that you can just sit there and watch. Trading very much the same. And I like the challenge, the fact that it's not, mundane, boring. Every day is a fresh start, a fresh day. And it's really challenging mentally all the time. There certainly is no, drudgery to trading. And, I wake up every morning, looking at the markets and kind of go to bed every night looking at the markets. So I do have a life outside of that. It's not all consuming, but it is something that, gets me revved up every day, even after all these years. So again, make sure you're revved up, but not for the reason for excitement, but for the fact that you're kind of passionate about it. There's a difference. If you're looking for excitement, I'd say go to the casino. It's a lot cheaper. Trading is more of a business approach. I think you need to look at it more as a, kind of business approach rather than that excitement level approach.
That's awesome. That's really good. So again, thanks so much for coming on, Tim. It's been an honor to have you on. So I really appreciate you, making the time to, for this interview. So before you go, do you want to tell listeners where they can learn more about RB Trader and also connect with you?
Yeah, absolutely. I mean, it's rb-trader.com. The dash is soon to be gone. From what I understand, I'm not the web guy by any means, but so it's rb-trader.com. And then if you want any information, I've also started a new initiative, deltaderivatives.com. The website will be launched soon. But if you need any information, we're also offering some free research if you want, or just general questions. You can just email marketing@rb-trader.com and just say you heard, me and Aaron talking and you're interested in, some free research, or if you have an options question or, anything at all. I love talking options, especially with people who are new and interested in it. So, again, marketing@rb-trader.com. And whatever you have, there are no bad questions. And if you have any interest, hopefully you get the fire lit and, have the passion that gets you through the tough times.
Awesome. Yeah, that's really good. We'll put all those links in the show notes, of course, at chatwithtraders.com. Would you be open to, answering questions? Maybe if people just leave a comment on the site, that might be just as easy. Are you open to that?
Oh, absolutely. I love that. And more the merrier. I mean, there are no bad questions. So if you're brand new and you have any question on it, I love to, answer them. Again, it's akin to, I am not a doctor, right? But if I had a medical question, I would ask my doctor, right? If you're interested in options, you don't have to be an options expert, but you would ask a question about options. So, feel free to ask anything, and I will make sure they're all answered, because we all started at the ground floor. I know I did, and I know where it brought me. So hopefully you get the same kind of passion out of it than I did. And if you do, then I consider it a job well done on my part.
Okay, that's awesome. I really appreciate that. So let's make that, if you just go to chatwithtraders.com/Tim, you'll go straight to the page, scroll down the bottom, leave a question in the comments, and Tim will keep an eye on that to sort of answer any questions you might have, especially in regards to options.
Absolutely, and would love to.
All right, awesome. And if you want to check out more, just go to rb-trader.com, and of course those links will be in the show notes as well. So thanks again, Tim, and let's keep in touch, and we'll speak soon.
Appreciate it, Aaron. Take care, and thanks everyone for the time. I really liked doing this the first time and hope to do it again soon.
No doubt. Speak to you soon.
Thank you. Bye-bye now.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Every decade, the market reinvents itself. Online brokers opened the doors. Mobile apps made trading seamless, and commission-free trading erased barriers. Now, a new era has begun. Meet Trade the Pool. Limited risk trading. From now on, your trading risk is capped and your trading opportunities are limitless. Trade the Pool funds home-based stock traders with up to $200,000 in buying power. That means you can trade large positions and scale your strategies without risking your own savings. It's time to trade with more capital, actually worth more of your time and effort. Ready to trade the pool? Click the link in the description and join Stock Trading Revolution today. Doesn't your portfolio deserve the best? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Trade smarter with advanced charting tools, backtesting, a pre-built strategy selector, and more features. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory, exchange, and clearing fees still apply. Options involve risks and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Hey there, what's going on? Welcome to episode number 17. This week, we're swinging price with equities trend trader Jason Levitt. Like many who get into trading, Jason had no formal education in the field. Actually, prior to trading full-time, he was waiting tables in a restaurant as well as bartending. This is where he began swing trading, and to this day, Jason is still primarily a swing trader, riding trends anywhere from a few days or a few weeks. Sometimes it's even a matter of months when his aim is to take out the large chunk of the move. Ultimately, the market environment dictates his holding time. This is somewhat similar to the way I like to trade, so I found many of the answers Jason gives out during this interview to be particularly interesting, and I'm sure you will too, regardless of the time frame you trade. Also, in the later part of this interview, Jason shares a story about the wildly successful independent traders he's met and the one standout trait they all have in common, which is again really insightful. Also, just want to mention that Jason is prepared to take anyone's questions, so if there's something you'd like to ask him, just go to chatwithtraders.com/Jason, scroll to the bottom of the page and drop a comment in the section there, and Jason will get back to you with an answer. Alright guys, enjoy the interview and I will catch you soon. Hey Jason, how you going?
Good, Aaron. Good to be on your show. I've listened to a lot of your shows that you've already posted, and I'm happy to be part of the bunch.
Nice, man. I appreciate it. I'm certainly not going to say it's the same, but from what I've seen, I think there are quite a few similarities between how you trade and how I trade, as far as sort of swing trading the bigger moves. So hopefully I'll have some great questions to ask you, throughout the interview, and listeners will learn a lot from your answers and insights. Let's just kick this off by telling us about your early days when you were just beginning to get into trading, and sort of where did the interest come from?
Okay, so I don't really have a sexy story to tell where I started out on. I wasn't raised in a finance-oriented family. It's not like on Sunday mornings there were, the stock tables were thrown on the kitchen table, and we went over things. I really I didn't know that much about Wall Street. I had no interest, but it was the late '90s. Tech stocks were doing great. I just wanted to make some money. I didn't think it would end up being a career. I actually didn't have that much interest in it. I just saw people making money with tech stocks, and I figured, I want to get involved. I want to make some money. Once I got involved, and I kind of saw the problem-solving aspect of it. My background was as an engineer. When I saw the problem-solving aspect of it, the puzzle aspect, Wall Street was kind of a mystery to me. That kind of drew me in closer. I saw stocks do things that didn't make sense. And while to some that would be confusing, I actually thought it was kind of fascinating. I saw companies come out with earnings and they'd beat and the stock would go up, and I'd see another company come out with earnings and they'd beat and the stock would go down. Or analysts would come out and upgrade or downgrade stocks, and sometimes they go up, sometimes they go down. Sometimes things made sense, other times they didn't. And again, while this to some people would raise a red flag that they would just throw up their hands and say this doesn't make any sense, it actually was fascinating to me. To me, it was a big problem-solving thing. To me, it was like a puzzle that needed to be put together. So at first, it was the money that kind of pulled me in the door, and then it was like the problem-solving aspect of Wall Street like kind of kept me there. Then after watching the market and familiarizing myself with things, just playing around, buy a couple stocks, sell a couple stocks, and just kind of learning a little bit about what's going on, I actually realized that like, hey, this could be a career. I could make a solid income. I had no big grand illusions on being like a hedge fund manager and managing billions of dollars, but I thought like, hey, this could be a pretty good career. I could make a solid income. I could trade from anywhere. Like literally, like I just got back from Costa Rica. I lived in Costa Rica for 18 months, and I would not have been able to do that if I had a normal job. I saw that it potentially could give me freedom, not a ton of freedom because the market opens and closes at the same time every day, but still more freedom than I'd have in a job. But so overall, it was kind of appealing. So I guess you can say like the money was initially what kind of drew me to it, and then the problem-solving aspect kind of brought me in closer. And then when I realized that like, hey, this could be a career, I can make a decent income, I decided to go for it. I decided to dedicate myself to trading and see what I could do. Okay, that's great. So what was your job sort of at the time when you started to get into trading? Okay, at the time I got into trading, I was a bartender. I went to college to become an engineer. I have a BS and MS in engineering, but I spent most of my 20s working in restaurants, bartending, waiting tables. So that's what I did at the time, and it actually helped quite a bit because I could work. A lot of traders they start out and they dream, they wish, they're like, man, I wish I could be a full-time trader, and I'd accelerate my learning process if I could actually be in front of the market all day. And to that, I was actually kind of lucky because as a restaurant employee, I'd work nights and weekends a lot, and so my days, at least a couple days a week, I was free to closely monitor the market. That's cool. So what were some of the first things you started to learn about when you were getting into trading, and where were you actually learning from? I went to the school of hard knocks. Everything I know about the market, I read from reading books, reading a little bit on the internet. But when I started in the late 90s, early 2000s, it's not like today where you have podcasts and like really good blogs and financial websites. I mean, back then it was, you go to like the Yahoo Finance pages or the Yahoo Finance message boards, and they weren't very good, as you probably have heard. So everything I learned was reading books and just making trades and being very objective and keeping track of what I did, keeping track of what worked and what didn't work, and just kind of slowly iterating my way towards like a solid strategy that I could execute. I wish I had somebody who could put their arm around my shoulder and say, let me show you the way. I wish there was like a book or two that I could point to and say like that one book really, everything I do, like I got from that book. But it wasn't like that. It was more like read a book and grab like one little nugget out of it, read another book, grab one little nugget out of it. And over the course of time, reading, 30, 40 books and making hundreds of trades, I literally just iterated my way towards a strategy that I could, that worked for me, and something that I could execute on a pretty regular basis. Okay, something you mentioned in there, which I'd just like to pick up on, is you said you were tracking your trades and your progress. How'd you go about documenting that and actually tracking it? Because I wasn't formally trained, I didn't have, it's not like I was handed a spreadsheet and someone said like, you got to fill this out for every single trade. For me, it was just do a trade, and did it work? Did it not work? Why did it work? why didn't it work? Did it work because like, hey, this is a good setup in a good conducive environment. You got in at a good time, you managed it well, and it worked out. Sometimes they were like that, and I could say like, haha, I'm onto something, that works. Other times I do everything right and they didn't work. Sometimes I get in, it would be an average setup and I'd get lucky. Sometimes I was unlucky. So I didn't have an official, way back at the beginning when I didn't really know what I was doing. I didn't have an official record keeping system. But I, generally speaking, just kind of kept track of like what was working, what wasn't working. And I was very objective. I would never, if I was lucky, I would admit that like, all right, you did something stupid, but you got lucky. So don't do that again. And other times I'd make a good trade and it wouldn't work out. And I would say, hey, I did everything right. It didn't work out. That's just the way it goes. Do that 100 times and you're going to win more than you lose. So no official record keeping system because I didn't know even what one of those would look like. But I generally would just kind of keep track of everything and be as objective as I possibly could.
Okay, that's great. You obviously didn't stay a bartender forever. So how did you transition from being a bartender to becoming a full-time trader? Like, what was the tipping point for you?
Luckily, the tipping point was just like you go through a period where you just feel like, holy cow, everything is starting to click. Mistakes that you had made in the past, you're not making. Losses that may have gotten away from you in the past, you're not letting that happen again. That was back in the day, like in the early 2000s, where you'd get an analyst that would go on CNBC and they'd talk up a stock and the stock would gap up and then like immediately fall down after the open, and you wouldn't fall for that kind of a trick. You go through a period where it's like, wow, this is actually happening. I'm like, things are starting to click. I'm just more consistent with my methods. I'm not like flying by the seat of my pants. Like I actually have some sort of like clear strategy that I can execute, and things are like falling into place. Now for me, luckily, being a restaurant employee, I did not have to just suddenly make the jump. Okay, if you're a regular employee and you work a normal job and you like dream about being a full-time trader, at some point in time, you might have to make the jump and actually quit your job and do it, which I don't know if I'd advise, because there's nothing wrong with being, per my way of trading, there's nothing wrong with having a job. Like you can actually trade and have a job at the same time as long as you can have access to the market once in a while during the day. But as a restaurant employee, it was easy for me to transition because I could work nights and weekends and basically be in front of the market on most days. So like the very last year that I bartended, I actually worked once a week on a Saturday night. That's all I did because I was pretty much a full-time trader Monday through Friday, and then I just worked every Saturday night. I made I made whatever money, and that was just the money I had for the month. Luckily for me, I didn't have to just take the plunge. I could just ease into it because of my job.
Something you said in there about sort of how things just started to click. When things weren't clicking for you, was there ever a point when you sort of questioned yourself and maybe thought, maybe trading's not for me? Did you go through a stage like that?
I did not. And that is more of a function of my personality type, that I was young. Risk meant nothing to me. It meant absolutely nothing for me to, take huge positions that were way beyond what I should have taken. It wasn't uncommon. When I had like 50 grand, it wasn't uncommon for me to buy 4,000 shares of a stock and hold it overnight, even though you're not supposed to do that. And the market could open the next day up or down, or that stock can open up or down like 2 points the next day. And I could immediately be up or down 8 grand on a $50,000 account. And it didn't even faze me. So for just a personality type of mine, I never doubted it. Even when I had a bad day, bad week, bad month, even when I got, my account got cut in half, which happened numerous times, and I've had some pretty big losses. I never doubted it. Maybe it's a fault of mine, because maybe I'd pursue something someday that I don't have any business pursuing, but it never fazed me to the point of wanting to give it up. But usually if I had a bad day, I was living in Chicago at the time, I can just go for a walk down Lake Michigan, clear my mind for a couple hours. And I usually can come back and kind of give myself a little pep talk and say all right, we've done it before. Let's do it again. Let's circle the wagons. Let's start from scratch. Let's do this. Let's not make these mistakes again. So it really didn't faze me that much. I never really had thoughts of giving up, even when I had some tough times early on.
Okay, so you would sort of say that your psychology was in a pretty good place right from the word go?
In regards to my confidence level, yes. It doesn't mean I didn't get pissed off when things wouldn't go my way. But yeah, from a confidence standpoint, and I'll admit that if I was starting to trade right now, it might be harder because I'm older. But back then, at my age, I don't know, I guess there's something good about being really young and slightly naive that actually helps you succeed a little bit.
Yeah, I think that's a really good point. What sort of time period are we talking about from when you sort of started to get into trading to when you actually became full-time and really going for it?
So I started in 99, traded late 99, early 2000. I would say about the fall of 2000 is when I really went like full-time. Not full-time because I could, not full-time because I was making enough money to justify going full-time, but full-time because I finally had enough money in my account to actually, to consider myself kind of a full-time trader. Like up until then, like I started my account with very little, with just a couple thousand. I eventually deposited more and more and eventually got it up to 10,000. And then I traded it up to like 65,000. And I went from there, and I lost money when the dot-com bubble burst, and then I made it back. And then as I started making it back, that's kind of when I went like full time. Again, not because I had enough money or not because I was good enough, but just because like I had enough money that I could actually trade. Like when you first start out and you only have 10 grand, there's not a whole lot you could do. But when you have 50, 60 grand, upwards of 100, which is what I had, that's when I could like, hey, I can actually take like 2 or 3 positions and I could hold them for a little bit, and I could get out of one position and move into another position if I wanted. So that's about it. So about a year after I started, I like started acting like a full-time trader, even though I wasn't good enough. And then I would say like it was probably another year to a year and a half before I was like really, like I said before, where I really like kind of crossed a threshold and said like, wow, things are clicking, and I'm really like, this is actually happening. I'm actually doing it. I'm actually, no more hoping and that it'll work, and no more having to rescue myself after getting my account cut in half. So the total amount of time was probably about 2.5 years between when I started and when I actually got to the point where I could go full time and actually live off my trading.
Okay. And when you made that transition, did you sort of notice any difference in your actual trading? Did you sort of experience new challenges when you were solely relying on your trading for an income than what you had in sort of the 2 years prior?
Yeah. Well, first of all, like I said, like the last year I was only working like once a week at the restaurant, so I had a little bit of an introduction. Like I didn't make enough at the restaurant to actually fully support me. I mean, I was young. I just had like a small studio apartment in Chicago. My bills were really low. I was very accustomed to living well below my means. So I made almost enough to cover my expenses, but not quite. So I had a little bit of an introduction. It wasn't like, boom, your job just got cut off and you're relying on 100%. But yeah, at the beginning, there's definitely some, you wake up in the morning, you're like, holy cow, this is like, there's no more paycheck. There's nothing else to rely on. It's like it's all you. There's nothing else. There's no safety net here. Well, there's a safety net. You can go get a job again, but there definitely was a couple months where it like felt really weird that like, wow, I'm truly on my own here.
Like I mentioned at the start, I'm keen to dig into more about your methods of trading. So firstly, how would you best define your style or approach to the markets?
I would describe myself as a trend trader. I mostly zero in on chart patterns, but the bigger picture is I am a trend trader, and within the trends, and like I'll keep knowledge of like what the big picture trend is, and then within the trends there are going to be minor trends. So if I were to sum it up in one sentence, I would say like I trade chart patterns within the major trends.
Okay, 2 questions. What markets are you most active in, and what would you say is your average holding time on any given trade?
Okay, so I trade U.S. stocks. That's pretty much it. I've done futures, and I still do them occasionally, but I don't focus on them. I've done options, and I've done well with them, but I found that like if I try to do too many things at once, the distraction actually takes away from profits and such. I'm 100% focused on just U.S. stocks. My average holding time is a good question. I would group my trades into two broad groups. Okay, trades are either relatively short term, which means I'm in, I'm out within a couple days, maybe a week at the most. I'm only looking for 4, 5, 6%, maybe 10% if I get lucky. It's a good pattern. The market environment is good, but for whatever reason, maybe there's resistance overhead. Maybe there's a lack of support in the group. Maybe the entire market is maybe trading in, like, the big picture might be up, but maybe in the short term it's like trading range bound. Maybe the personality of the stock is such that, like, hey, you're only going to get a quick pop for 5% and that's it. So trades fall into that category of like I'm in, I'm out, and I'm not going to bargain. I'm not going to negotiate. I'm not looking for a big move. I just want to make a quick buck in a few days or a week. The other group of trades I have are actual longer term trades where I want to ride a bigger trend. I want to ride a bigger trend, not the market trend, but I'm trying to ride like a trend within a particular group. And those are trades that I want to hold for as long as I can, 6 months, 9 months, 12 months. Okay. So again, I'm either quick. I just want to make a quick buck, or I really want to give stocks time and space to play out because there are like prevailing winds that are going to carry a particular group for several months, and I want to be able to ride that as far as I could. Okay, so it's important. Like before I enter every trade, I literally like tell myself, like, is this just a quick trade, or is this the type of trade that you're trying to hold? Because how you manage those is going to be entirely different.
Okay, and when you're analysing the trends, what sort of chart are you looking at? Are you looking at maybe sort of a daily, or maybe even zooming out further to a weekly chart for those?
Yeah, I do almost all my work on a daily chart. Occasionally, I will look at the charting software I use, which is Telechart by Warden Brothers. They have a function where you could, instead of having, you can have a daily chart, which is 1 day, is each candle is a day. They have a thing where you can switch it to like every candle is 2 days, or every candle is 3 days, every candle is 4 days. And then, of course, the weekly chart is every candle is 5 days. So I find that the weekly is like too far. Like I can't make decisions based on the weekly chart because it covers too much ground. So if I want to take a step up from the daily chart, I'll jump to that 2-day candle. So it gives me a slightly longer term view. But most of the work I do is on the daily.
Okay. And how do I say this? Why do you have the two sort of really defined approaches? So you've got your one trade where you might be in it for a couple of days, and then the other you said could be upwards of 6 months. What's your sort of strategy there of having the two different approaches instead of, maybe just only taking the shorter term trades?
Yeah, I think it just goes back to the beginning when I was taking a lot of trade. I'd get into a trade, and let's say I'd buy a stock at 30 and I'd get out at like 32 or 33, but then it would go up to 40 or 45, and I'd say like, oh man, why did I sell that? It went up to 33 and it pulled back a little bit, and like there was nothing wrong with the overall trend, and there was no reason to like panic and get out. Like I could hold that and make, it's a lot easier to just nail a 15 or 20 point move one time than it is to nail a 2 or 3 point move 10 times. So then like the next trade I would get in and I'd say, all right, this is it. I'm going to use a loose stop. I'm going to let it go. I'm going to give it some time and space. I want to see if this thing could fully play out. I want to try and nail a big move. And that one would just go against me, and I'd have like a 10% profit turn into like a break-even trade or even a loss. And I did this, I did this like dozens of times over the course of like a long time, like at least a year. And then I kind of came to the conclusion that, like, you know what, you have to categorize trades. They either need to be quick or they need to be longer term, and you can't mix them up, because if like oil stocks last year, like in February, March, April, May, all the way up until the July high, I had a handful of oil stocks that I just held for like 6 months, and like I held a core position, and every time they pull back, I would buy some more, and then when they'd like make a new high and make a higher high, I'd take some off, and then I would trade around a core position and just hold and trade around the core position. But if I would have gotten out 3 days later, then I would have watched 30, 40, 50% gains go without me being in it. But then there's other trades that like they're not going to go 40, 50%. Like a housing stock is, maybe it could pop 5%, but like to sit back and hope that it's going to go 50% over the next 6 months, it's just not going to happen. So, I mean, the reason why I categorize trades like that is simply because I made so many trades early on. I got lucky sometimes. I was unlucky sometimes. I made good decisions, bad decisions, and getting feedback, real-time feedback from trades just made me realize that like you got to be one or the other. Because if you're somewhere in the middle, you're probably gonna lose. Because if you're in the middle, that's where a stock will go up 10% and then pull back, and you panic right at the worst time, and then it keeps going. So just making lots of trades, forced me into this frame of mind where I'm just trying to make a quick buck. Or, hey, there's a major theme that I'm riding here, and I want to give it every opportunity to play out.
Okay, and I think you sort of touched on it there, but just to sort of elaborate a little bit more, how are you defining if this trade is going to be a short-term, or when we say short-term, sort of like a week-long trade, or one of your trades that's going to be a big picture move? Is it just sort of what sector that stock falls into, or is there something more?
It's a combination of what sector it falls into and if there are like prevailing themes. So, for example, with oil, and I'll say like solar is somewhat related to oil. So as I said, like at the beginning of last year, I rode several oil stocks up for big gains, and I just held stocks and traded around a big position. But that's because oil was trading up at like 90 and over 100 for several consecutive months, and it was a pretty safe place to be. And I mean, it felt safe. Like you could tell that like stocks would gap down and then they'd rally, or they'd pull back and then they'd immediately get bought up. Like you can sense the strength in the market. Oil was high. Everything was kind of hunky dory. There was, everything was good. When things turned down, the entire group went down. So you got to sell. And if you want to go short, you can go short. But yeah, and right now a major theme is the dollar. The US dollar is super strong. Pretty much all the currencies across the world are super weak. So anything that is going to, do well in a strong, well, not much is going to do well in a strong dollar environment. That's not my trade. That's not the trade that I want to get into. But any commodity based stock that is not going to do well because of a strong dollar, such as oil, such as gold and silver, such as other commodities like steel and iron, or like not building materials, but just like industrial metals like copper or aluminum. This would be a major theme. The dollar is strong, therefore any of these commodities that are going to be priced in dollars are going to be weak. And this is a trend that could last for months or much longer. So yes, like the short answer to your question is yes. It's based on the sector, and it's based on like some sort of prevailing theme or story that's going on at that point in time.
Okay, and just expanding on that a little bit further, how does the overall market sort of impact your trading decisions on individual stocks? So, if the Dow or the S&P is sort of in a sideways range, are you hesitant to sort of enter into a big long-term move?
Absolutely. This is one of the things, if you were to ask me, like, what got you over the hump, like, early in my early days, when you cross that threshold, what got me over the hump? I would say the one important thing that like enabled me to cross the hump was when I was trading early on, I would trade in a vacuum. Okay. I would just, if I had a good setup, I would take it and be completely blind to what was going on in the overall market. And when I realized that, like, hey, I need to be somewhat in sync with the market, that's when I started to be more consistent. That's when I started to keep my profits, because I was really good at making money, but then I was really good at giving it back. And when I started to realize that, like, I can't just trade in a vacuum, I have to be synced up with the market, I started doing it much better. So yes, absolutely. If the market's in a range, which it's been, other than the February rally, it's been in a range since like the beginning of November. Without question, I'm telling myself, Jason, this is a short-term trade because the market is in a range and, you can't expect a big move right now. So yes, it's a huge thing to keep track of what the overall market is doing and what a particular group is doing.
Okay, so if it is sort of in that sideways range, you're just sort of disregarding the long-term positions for sort of 6 months and upwards, and you're just sort of focusing on your shorter-term trades. So that's sort of what helps you decide additionally.
Yeah, like I've had some oil shorts over the last 6 months, which I've been able to hold, for longer than a week. I haven't held them for like 6 months, but I've held them longer than a week. But yes, if the market is range bound, like I immediately shift into like I'm just trying to make a buck. I'm in, I'm out within a few days. I just want to make 5%, maybe 10% if I'm lucky. I'm not going to force things. I've done that before. If the market's going to be trading a range, then I'm gonna take what it gives me. That's all I could do. It's it's like I play baseball, and it's like if the pitcher throws you a curveball in the outside corner, like you're probably not going to hit it over the fence. So just try and get a base hit. And that's all I do. It's like I can't call the market. I can't tell the market what to do. If it's going to trade in a range, then I have to mentally shift into a frame of mind where like, hey, I'm just trying to make 5 or 10% over and over and over. I'm going to be ahead of the curve taking profits. I'm not going to really use a trailing stop or something like that, because by the time the stop gets hit, I've given back most of my profits. I'm just in and out, quick trades, last a couple days or a week until the range resolves one way or another, and then maybe I can shift. So I'm more careful. I'll still do longer term trades. For example, like with oil being so weak, and some of the industrial metal and mineral stocks have been pretty weak. But yeah, my focus is definitely like, hey, the market conditions are such that you have to be content and happy with smaller gains, and just go with those. Because you fall into you get yourself in trouble when it's like, hey, here's a great setup, and it moves, and you're like, hey, maybe this could be a long-term trade, and then after it moves, a few points, it comes right back down, and you realize like, well, what I expect, the market's range bound. Of course, it's going to happen.
Yeah, that's a really valuable point. I really appreciate you sort of digging into the details there.
Are you ready to get serious about options trading? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including a $10 cap per leg on options trades, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built shit. Join if only I had the capital or sat on the sweeties from big without risking your own savings. It's a game changer. Create your account and start trading real shares within minutes. No subscriptions, no minimum deposits, just a one-time evaluation fee starting at $47. That's it. Not ready to trade yet? Trade the Pool offers a free demo and educational resources. Practice on live data, master the platform, and trade the Pool's capital.
So like the first thing I'll do is
for potential setups.
Invents itself from online brokers to commission-free trading. Now, the new era of limited risk trading has begun. Click the link in the description to start trading with Trade the Pool's Capital.
How do you go about scanning stocks for potential setups?
I use Telechart. I think it's called Telechart TC2000 by Warden Brothers. I've been using it for almost since day one, since like 2000. The first thing I'll do is Telechart categorizes they have all the indexes already broken out, so you can look at every stock in the NASDAQ 100 and the S&P 100 and the S&P 400 and the Russell and blah, blah, blah. So the first thing I will do is I will just literally like visually scan through a bunch of charts. I'll go through all the stocks in the S&P 100, the NASDAQ 100. I'll look at like the top volume stocks in the S&P 400, the mid caps. I'll look at the top volume stocks in the Russell 2000 small caps. And I literally, like with Telechart, you can just hit your space bar and go click, 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 and you can just go from one chart to the next to the next. And so my first scan through is I'm just visually recognizing patterns that look attractive to me. Okay, so I've done it long enough that I guess I'm pretty good at just like pulling out the ones that I like. So once I go through all those, I'll have a list of, if trading is good, like I might have 100 stocks on that list. If trading is not so good, it's up, it's down, it's all over the place, and you don't have a really good trend, I may only have like 20 or 30. Once I have that list, I like to zero in on the stock on I trade stocks. I tend to trade stocks in groups. So once I have that list, if I notice that there are like a couple of solar stocks on the list, I immediately pull up like the solar list, and I want to look at all the stocks on the solar list, because if one or two or three of the stocks look good, hey, maybe there's more. So that's my second run through. The first run through is I'm just going to visually look at 400, 500, 600 charts and pull out the ones that look the best to me. The second step is I'm going to notice which stocks or which groups are most represented in that list, and I want to like look inside those groups, because at any given time there tends to be a handful of groups that are doing either really well or really poorly, and I want to focus on the ones that are doing really well. That was one of the other realizations I made early on. I said, like, one of the things that got me over the threshold was like not trading in a vacuum and actually being aware of what the overall market was doing. Another thing that helped me get over the hump was when I realized that like the stocks that tended to do well, the trades that tended to do well, tended to come from groups where the entire group was doing well. It had group strength, and a lot of the trades that didn't do very well, they were just an isolated stock that looked really good, but it didn't have group support. So that's what I'm looking for next, is after I go through the whole thing and I narrow down, then I'm going to go inside the groups and pull out the ones that look best. After that, it just becomes a question of like, let me go through them and pull out, maybe like narrow it down to like my top 10 or 15, like as I head into the week. And then each particular day, I'll probably narrow it down to like 1 or 2 or 3 or maybe 0, just depending on what's going on.
Okay. So if you're swing trading over these periods of time, it's possible that a lot of opportunities could start to sort of come onto your radar and start to trigger. So how many positions could you be into at any given time? And what are your views on diversifying between long and short trades?
Generally speaking, I think like diversification is something you do when you don't know what to do. I tend to be weighted in a couple different groups at any given time, and not diversified very much as far as like the number of groups that are represented. For example, if I'm in 6 or 7 positions, it's typically like 3 stocks in one group, 2 stocks from another group, and 2 stocks from like a third group. I don't, so from that standpoint, I'm not represented as far as like the number of groups that I'm in at any given time. I tend to just realize that like, hey, this particular group is weak or this particular group is strong, so I want to like focus on that, and I might have 2 or 3 trades within that group at any given time. As far as number of trades, if they're short term, I'd rather not have more than 4 or 5. I'm not a hedge fund. I'm not trading $1 billion. I'm trading my own account, just trying to make money. And I find if I have too many positions, then I get distracted, and I don't like the feeling of having too many positions open at one time, because I find that it just kind of pulls me in different directions. I end up like hoping something happens because of this one stock, but another stock is doing something else. So 4, 5, 6 positions is good enough for me as far as like shorter term trades. As far as longer term stuff, I could definitely have again, like 4 or 5, I'm still not going to have a ton. But those, because I don't follow those as closely, they don't kind of weigh on me mentally, because I'm not actually watching them very closely. I just kind of have them in the corner of my screen, and I kind of glance at them once in a while, but I'm not following them that closely. Okay, excellent. So as a trend trader, where do you feel is the safest point to enter into a trend? Like, what is your confirmation that you're now sort of potentially out of a consolidation period and actually now sort of starting to break into a trend? Are you talking about the overall market or for an individual stock?
When you're entering sort of an individual stock, when you're taking a new position.
Okay, so I'm mostly a chart pattern trader, like within the trends. So I tend to have pretty like clearly identified resistance levels that I'm looking to buy. So if the market is on an upswing and a stock moves above resistance, like that's my entry. If I was going to work on something going forward, it would be like, hey, if I can get better at buying dips, that would be great. But for whatever reason, just the way my brain works, it's like I like playing breakouts from patterns. If my favorite setup is probably just a consolidation pattern within an uptrend. If a stock rallies from 23 up to 30 and then consolidates sideways for a month and then breaks out, that's probably my favorite. That's probably my favorite setup, is like a breakout within a trend at the same time the market is acting well. So that's it as far as entries go. One thing I've learned over the years is to not sweat the entries, I guess I can say, is that, because if a stock is going to move from 30 to 45, it doesn't really matter if I get in at 30 or 30.1 or 30.2 or even 30.3, or to come up with to stress the entry. That never really made me much money. To me, the money is made managing the position once you're already in. I don't know if that answers your question, but to me, entries are less important than the exits, or less important than the actual plan that you have in place and how you plan on managing the trade, and whether it's going to be a shorter term or longer term trade. So if I have a strong stock that's acting well and it's riding a theme, and the market's acting well, then I try not to sweat the entry too much.
Yeah, that does answer the question. And it also sort of leads to another one. And that's sort of, if you are entering around these breakout levels when the stocks or the price is going through resistance, how do you avoid buying into breakouts? Obviously, we're talking about long trades here. Is that part of your strategy, as in not sweating the entry too much, that you might buy when it's a certain level past resistance? Or are you buying sort of the cent it ticks past?
I'm watching it closely. If it's a stock that I like and I say hey, this is a good stock and I really like the story here, and this could be a 6-month hold, I could buy right as it's breaking out. I could also, sometimes I'll buy within the pattern, just because I could just kind of tell that hey, this is a really strong stock and it's moving up and it's inevitable that this thing is going to go up, that it's eventually going to break out. So I'll buy in the pattern sometimes, and sometimes it'll go against me a little bit, but if my plan is to hold because I'm riding a major theme, I don't sweat the entry and I give it some space to move around. Now, I would never do that with a short-term trade. With a short-term trade, I'm much more precise. I have an exact level that I'm looking to get in at, and I would never let it go against me too much. But with a longer-term trade, with a stock that I think could be held for a longer period of time, I've never made money by sweating the entry. And more times, I should say it a different way, that more times than not, when I pinched pennies on the entry and I was very demanding as far as exactly where I wanted to get in and under what conditions, those conditions never happened, and I ended up not getting in, and then it would move 20, 30, 40%, and I would miss out on a trade simply because I was demanding something that the market wasn't willing to give me. So if I really like the setup and I really like the stock, I don't know if I have a magic entry formula, because it never worked for me.
Okay, so if you are taking one of these sort of longer term trades, would you say you sometimes find yourself working into a position and buying throughout that period or the sideways range, so the accumulation or distribution area? You might be sort of buying up in that period?
I tend to be all in, or mostly all in initially, and then if I add to the position, I'm adding to the position at a higher level.
Okay, cool.
Yeah, so if it breaks out and it moves 2 or 3 points and pulls back a little bit and finds some support and starts moving up again, then I'll buy there. So so if I have a consolidation pattern that lasts a month, I'm not just buying every fourth day and just accumulating a position, but I'll add after it breaks out and maybe rests a little bit and breaks out again, or pulls back to some moving average or previous resistance and starts moving up. Then I'll add to my position, but I tend to only add at a higher level.
Sure. So again, on these longer term trades, where you could be in for a matter of months, do you give any thought to how the fundamentals might affect your trade on this time frame?
No, none whatsoever. I have no clue what the fundamentals are. Wouldn't even know how to read a balance sheet.
Nice, same here. All right, so let's keep it moving, and let's sort of talk a little bit about some advice, some general sort of advice for other traders out there. So I've heard you say in the past you're not in control over the market, which I thought was a really interesting point. So if that's the case, what can you actually control?
When I judge myself, how well I'm doing, I don't judge myself based on whether I made money or lost money. I judge myself based on whether I did the right thing, whether I entered a good position for the right reasons, whether I made good decisions, whether I managed the position well, whether I exited well. Those are the things I judge myself, because you can get into a position and get lucky, or you can get into a position and be unlucky. and you could ride an emotional roller coaster whether you made money or not. But like you don't always have control over how much money you make, or even if you make money, but you do have control over what you do. So when I'm judging myself, I judge myself based on whether I did the right thing, because over the course of many trades, my P&L is going to be just fine. Okay, to like give an analogy, like in baseball, if you judge yourself purely based on whether you got a hit, like what if the pitcher fooled you and you threw the bat out and you hit it off the end of the bat and it barely went out into the outfield and you got a hit? Well, that was a bad at bat because you were out on your front foot, you got fooled, you didn't take a good cut, but you got lucky. But you can have another at bat where like you work the count, you foul a pitch off, the pitcher makes a mistake, boom, you hit a line drive and you hit it right at someone. Okay, so like in that case, you did everything right. It was a good, solid at bat, but you just happened to hit it right at someone. So at the end of the day, like I look at that at bat and I'd say, you know what? If you do that every time for the entire season, you're going to have really great stats. And I have the same approach with trading, is that I don't judge myself trade by trade basis based on whether I made money. I judge myself based on, did I do the right thing? Because if the answer to that question is yes, then I know over the course of 20, 30, 50 trades that the money will take care of itself.
Yeah, that's really well said. Is there a common trait you find amongst the successful traders that you've met?
Yeah, I would say there's one thing that stands out. The obvious thing is you can never, ever like let a small loss turn into a big loss. That's just like the kiss of death for any trading or any trader at any level. You just simply can never, ever let a small loss turn into a big loss. But the one thing that is probably most consistent among the really good traders I know is that they specialize in doing one thing really well, and they don't deviate from that whatsoever. And this goes for traders who make millions. I'll tell you a story. It was many years ago. I was actually fairly close to when I was first starting out. I was at a Cubs game with my brother. My brother was a trader on the floor of the Chicago Mercantile Exchange. And so I was at a Cubs game with him and like 10 or 12 traders from the Merc. And these guys were like really, really good independent traders. They made, anywhere from like a couple $100,000 to like a couple million a year. Really good traders, not like hedge fund traders. They're not trading billions, but as individual traders, they were as good as you can get. And I'm sitting there next to my brother and he says, "You see that guy over there? He trades just the first 5 minutes of the day. The market opens, he looks for one specific thing. If it happens, he takes a trade. If it doesn't happen, he walks off the floor 5 minutes later." And I was like, "Really?" And he said, "You see that next guy? He only trades the unemployment report. That's it. He shows up to work once a month. He knows more about the unemployment numbers than anybody. He knows he can tell you anything you want to know about them, exactly how the market's going to react. He only shows up to work once a month, trades just that report, and he makes like $300,000 just on that report once a month." And he went down the line and he told me, generally speaking, he didn't know specifics of what each trader's trade was, but he went down the line and he was able to tell me, generally speaking, like what each guy did. And I thought, like, wow, these are really good traders. They're $1 million traders. These are guys who pay $5,000-$6,000 a month in order to lease a seat on the floor of the Merc. Yet they're so specialized and zeroed in on just they found something that works for them. They found something that works. They found something that kind of jives with their personality, something that they're able to execute, and they just do that one thing over and over, and they don't deviate from that whatsoever. And that hit me pretty good. That was like in my first couple of years of trading, and it made me realize that, like, okay, successful traders aren't these brilliant people who could flawlessly float from one trade to the next, because there's a million products out there. You could trade long term and short term. You could day trade. You could trade technicals. You could trade Fibonacci or moving averages. And I mean, when you consider all the different products and all the different ways to slice and dice the market, there's literally a million different ways to trade. And yet these guys who were like really great traders, they had zeroed in on just doing one thing, doing it really well. They didn't deviate from that, and they just stuck with that. And that was reassuring to me, because I was thinking, at the beginning I thought, like, I have to be really smart, I have to be very knowledgeable, I have to, like, understand all these reports and this and that. And that made me realize that, like, that's kind of a relief. That's actually, like, a big relief. And I thought to myself, like, wow, like, I could just find one simple thing that works and just zero in on that and just do it. And I don't have to have a PhD in finance in order to do this. So that was a huge relief. And so to answer your question, as far as, like, what is the one common characteristic that I see among successful traders, I would say that's it, is that they're, like, really specialized in just doing one thing really well, and they just do it over and over. And they don't, one of the problems that newbies have, or, like, traders that are just starting out, is they do what's called style drift, where they're trading one way, and then, like, 2 weeks later they get exposed to a different strategy, and because what they're doing isn't really working that well, they suddenly change. They're doing stochastic 1 week, and then in a month later they're trading, like, an MACD crossover system, and then the week after that they're doing Fibonacci retracements and this and that. And, like, 6 months later, they realized if they would have just stuck with their original plan, they would have done just fine. But by jumping from one thing to the next, they basically just treaded water for 6 months. So that's the biggest common characteristic I see among successful traders, is that they've just kind of honed in on something that works, and they've just ignored everything else.
Yeah, that's a really great story. And, thank you for sharing that, Jason. On the other side, are there any obvious traits that you see amongst traders who don't succeed?
Yeah. So first of all, traders that don't succeed, like, they don't have a plan. They just don't. They hope, they fantasize, they dream, they want things to do, they want things to go their way, but they don't have a plan. They don't know what they'll do if the market goes up. They don't know what they'll do if the market gaps up. They don't know what they'll do if the market gaps up and then sells off. They pretty much just wing it. They get into a position and they don't know where their stop is. They don't know if it's a shorter term trade or a longer term trade. They don't know if they're going to scale out. They don't know if they're going to add to a position if it breaks out and it pulls back. They literally just fly by the seat of their pants, and they just don't actually have a plan. Think about, like, a football team here in the United States. Can you imagine if they just showed up and didn't have any sort of game plan? I mean, that would never happen. I mean, they spend an entire week looking at game films and actually practicing certain plays, and based on the type of defense that the opposing team is likely to be playing, they actually work out, they practice many different plays in order to, like, capitalize on that. And traders have to do the same thing. They have to have, like, a detailed plan. And even though, like, 90% of the plan, like, will never matter, because they'll contemplate, like, well, what will I do if the market does this, or what will I do if the market does that? And if they have, like, 10 different scenarios that they've kind of thought out, like, obviously, like, most of them aren't going to happen. But going through the motions of having a plan is extremely helpful. It's extremely helpful exercise. So that's like a big thing, is that they just don't have a plan. They, like, if you sit down and say, what's your plan today? What are you going to do if this happens? What are you going to do if that happens? Play devil's advocate. They need to do that, but they don't. Another thing they do is, like, as I just explained, is, like, style drift. They're, like, constantly jumping from one strategy to the next, to the next, to the next, to the next. One day they're swing trading stocks and they're playing chart patterns, and the next month they saw something on a message board, so they got tempted to do Fibonacci retracements, and now instead of playing breakouts, they're buying pullbacks, and maybe they want to do, slap a technical indicator on there, and they're just constantly shifting from one to the next, which is necessary. You have to do that when you first start out, because in order to zero in on, like, what works for you, you have to actually kind of experiment with several different things. But once you zero in on what works, you have to stick with it and not be tempted to go elsewhere. So that's another big thing, is, like, just style drift. They're constantly changing. Another thing is, like, they don't take a loss. They're, like, afraid. They get in a position that goes against them. They should get out, but they bargain and negotiate with the market. They think, like, oh, if it can just go back up, then I'll get out break even, and then it goes against them more. And then they say, like, well, if it could just go back up to where it was 2 days ago, then I'll get out with a small loss, and then it keeps going against them. And before they know it, a perfectly normal, no big deal loss turns into a huge loss, and now they're in a big hole. So that's a big problem they have. And not only do they suffer because of the money that they lost, but they also their confidence is shot, their emotions are shot. and it just spirals from there. Another problem they have right now is like information overload. It wasn't a problem when I first started, but it is right now with TV is less prevalent now than probably back then. But with all the websites and the blogs and the services and Twitter and stock twits, and there's no end to the amount of information that you can get. And no matter what a trader wants to do or what their opinion is, they could easily go find support for that opinion. So those are the main things. It's they don't have a plan. They're constantly changing their strategy. They don't take a loss. They don't know how to zero in on just doing something and kind of ignoring all the information that's out there. So I guess if you flip all that around and you want to know how to become successful, it's hone in on something that works and works for you. Have a plan, have a detailed plan, exactly what you're going to do in different scenarios. Dedicate, make a deal with yourself that you'll never, ever, ever take a big loss or never, ever let a small loss turn into a big loss. And just hone in and try to ignore all the information that's out there, because most of it's just noise.
Yeah, that's awesome, Jason. All right, well, that pretty much brings us to the end of the interview. So thanks a lot for coming on and talking about these answers in such great detail. It's really awesome. I think listeners will be able to take a lot away from this one.
You're welcome. Thanks for having me on.
If anyone's got any questions for Jason, just go to chatwithtraders.com/Jason and scroll to the bottom and leave a comment. And post up any question. Jason will be keeping an eye on that and happy to help you out where he can. Before we let you go, Jason, do you just want to share with listeners where they can find out more about you and connect with you?
Yeah, so I have a website where I offer market analysis and trading ideas to hedge funds, independent traders, financial advisors, and that's leverbrothers.com. So you can reach me there. Probably the best way to reach me is to actually just go to leverbrothers.com and just go to the contact us page. I get all the emails that are sent there. I'm on Twitter, but I don't use it that much. So best place to go is just go to leverbrothers.com and contact me through the website.
Awesome. All right. Well, we will put links to your site in the show notes so people can check that out. And again, if you've got any questions, just go chatwithtraders.com/Jason and leave a comment. That'd be awesome. All right. Thanks a lot, Jason. Let's talk soon.
Thanks for having me on, Aaron.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Every decade, the market reinvents itself. Opportune time and tool. More 26. Tasty Trade Incorporated is a registered broker.
Get in on the strategies and tactics they use.
And SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Hey, what's up, guys? Welcome back to another episode of Chat with Traders. This is episode 18. This week's guest is a little different to many of the guests I've had on in the past. Instead of giving very little weight to fundamentals and news releases, these two things actually form the foundation for his trading approach. In fact, he almost disregards charts altogether, and he relates the reason for this to his background in accounting and finance. John Welsh has been a full-time trader for over 10 years, and he's racked up millions of dollars in profits along the way. His trading consists of both intraday and swing trading, and he concentrates mainly on biotech stocks, making roughly 90% of his trades within this sector. But now that I've given you the 1,000-foot view on John's trading journey, here he is to fill in the blanks and give us a lot more depth around his approach. Hey John, how you going?
Not too bad. How's your weekend going?
It's good, man. It's good. It's early Monday morning here, and it looks like a busy week ahead. How's your weekend been?
Excellent. Did a nice little race today, half marathon, my best time ever. Things are going well. I can't wait for trading though tomorrow.
Oh, very cool. Very cool. So I'm keen to have you on the show, and I'm excited to have you here. So, thanks a lot for coming on.
Thanks for the invite.
Yeah, no problem. So let's just get this underway and tell us a little bit about how you started trading. How'd you get into it? What was your background? Just give us a bit of an introduction.
Sure. I didn't really like stocks until the market exploded during my college years in the late 1998, 99 period. That was when the dot-com bubble, took off, and you couldn't lose any money and anything when stock splits were going up. And I took a lot of risk of investing my MBA checks in the market while I was going to school. And I instantly got hooked because I was making money all the time. And ever since then, I've just been feet first into the market, and I've been trading full time now for almost 9 years.
Good stuff. So when you first started getting into trading, where were you learning from? So how did you know what you were doing?
Well, I'm old school and I'm 40. So, there was no Twitter, there was no Facebook, and, there was Yahoo message boards, which I still use today. And I had to learn through my own experience and my accounting and finance background. And I learned a lot about companies, what moves stocks, what people pay for in news and pay up in speculation, and all through my own experience. I don't have any trading tools or level 2 or charts or anything like that. I just do it all from what I see on the screen.
Okay, great. So when you were sort of studying and trying to sort of learn and find your feet in the markets, did you have sort of a regular routine where you were sort of you would spend a certain amount of hours a day focusing on trading, or did you have some sort of schedule around that?
Well, when I was trading part-time and working full-time, it was really hard. And that's what a lot of people in today's markets are trying to do. You have a lot of young traders coming on board trying to, make the quick buck by working full-time, and it doesn't really work that way. So basically, for me, when I was trading part-time, I traded a lot in the morning and did research at night. But for the past 10 years, I have the same process that I do every day as a full-time trader. And that is, I wake up at 7 o'clock. I kick up my news wire that I use, which is currently TradeTheNews.com. And I look for news they're moving stocks that has potential to move during the day, or for swing trades, anything that I think that's important. And I have the same pattern from 7 to 8 a.m. in the pre-market and during regular trading hours. And I never trade in after hours. So basically every day I work from 7 to 4:30.
Okay, good stuff. So let's just talk a little bit more about when you were sort of getting into the market. So what were some of the main things that you struggled with early on, would you say?
I didn't really struggle because in 1999 and 98 is when the markets were going up huge, and I didn't know anything about short selling at the time. So my best stock was AOL, and unfortunately, I had a lot of success in the beginning, and that's what hooked me. And even when the market corrected, when I learned about short selling in the following 2000, 2001, I learned how to go the other way. So you can just say my timing was right, but I have, a lot of tendencies that I think are bad that I've learned within myself that I corrected, and which probably affects a lot of traders, such as over trading and trading trying to make up after a big loss.
Okay, cool. So how do you sort of avoid that type of thing from over trading? Do you have some sort of rules you've set for yourself, or how do you go about sort of trying to avoid over trading?
Well, the two main factors that I see with myself that probably affects a lot of traders is, of course, the overtrading. And I have 10 rules that I developed over almost 10 years ago since I started trading part-time that I have taped on my computer and on my desk. And whenever I get new furniture or a new desk or a new monitor, I tape it right up there to remind me that each day is independent of each other. And I learned that through my own experiences, my own shortcomings. Because truthfully, I mean, all traders are fucking gamblers. That's what we really are. And that's my shortcoming, that if I ever was addicted to anything, it would be gambling. So in order to rein that in, what I developed is rules that I follow every day, because when I didn't have them, where my shortcomings is when I did a trade for an unexpected loss, I would then follow it up with a bigger forced loss trying to make back the money. And that's typical of what a gambler does, and from my observation, and that's what I am. So I try to take those feelings out of trading by following my systems, techniques, and rules.
Okay, yeah, and I saw those rules on your site, and I noticed that number 4 was bolded as though like it really is quite important to you, and that was the more stubborn you are, the more you will lose. So would you like to elaborate on why this one is especially important to you?
Because I learned that one the hard way. And, I love talking about, again, my shortcomings, because what I've learned from losing is a system that I can turn into consistent, profitable trades. And with that one is that I used to trade biotech stocks into events. And this was before I became a full-time trader. And if a stock is trending down and there is an event coming, especially with biotechs, technically the stock is going to do bad because someone may know something, and it doesn't matter how much homework you do, the market is always right. So what I've learned in rule number 4 is don't be stubborn and listen to the market. Is when something goes wrong for me, I immediately sell it. And of course, if you hold overnight and there's bad news and something happens, I still immediately sell the stock. And people don't understand that, and they try to break even on the stock. Well, I save a lot of money by taking my losses quickly, whether I'm wrong on the day or whether it's gapping down on news. You got to listen to the market and get out. And that's what good traders do. They save money by taking their losses quickly.
Yeah, I think those are some really great points you touched on there. So, yeah, really cool. Nowadays, how would you define your sort of trading style? So just tell us a little bit about how you're actually trading sort of right now in today's markets.
It's interesting because it depends. In today's markets, I'm more of a long short trader. And I need to explain why that is, because for, I would say, the past 5 years, I've been mainly known as a short seller. And I'm pretty keen on, spotting stocks that look like potential red flags or frauds in accounting, and especially biotech. And I have a nose for this stuff. But the thing is, what I've noticed, and if you take last year, I attended a conference that I spoke at, and it was mainly the speakers were short sellers. And there was about, 7 to 8 speakers that were short sellers. And I just found it very strange to me that all these people are migrating over to the style that I used to primarily be known for. So what I've been doing in the past 2 years is learning a strategy that's completely different from what I'm known for. People don't understand why, because everybody's making the big dollar short selling. I still do that. But guess what? I think a lot of changes are coming to the short selling industry that people do not expect. And when it occurs, their business could go poof because they did not learn how to do both sides of the trade. So I do long and short, and still I'm slanted 60% short, but I have no problem going long in today's market environment. We're hitting market highs almost every day.
Okay, cool. So you're predominantly day trading, is that right?
I day trade, and I also swing trade, mostly swing trade long positions. and I would only swing trade short positions when I'm up for the day and I carry some over for a couple of days, because I don't like to swing trade shorts as much as I do longs.
Okay. And is that swing trading, is that something that's come through from when you were sort of learning trading when you were still when you were still a part-time trader? Is that something that's come through from there?
I wish, but no. Because 2008, 2009, and 2010, I was so short biased and cleaned up on the market. It was, like taking candy from a baby. And that's, I refined my skills and I became so, biased to shorting that, I did for I would say between 2010 and 2012, I was still looking for shorts. And then I would say, wait a second, we're in the middle of a turnaround here. I need to learn new techniques to go long and to go long on companies that I'm skeptical of. And I've really picked up my game the last few years by doing that.
Okay, cool. So when you are taking a swing position, how long would you say you typically hold that for?
Could be as high. I usually never hold for more than 3 to 6 months. I like to keep it for a couple of weeks if I could. I've never held a stock for longer than a year. So I'd definitely say it's short-term oriented.
When you're in those positions, how do you sort of manage those? Like, what's your sort of trigger to get out of those? Is it based on the news and fundamentals, or are you just sort of trailing stops? How do you manage those trades?
I always enter with a max loss in mind, and my position size is always reflecting in it. So I'll talk about a trade this year that I got killed on, and it was my worst trade of the year. Was a KBIO, which is a biotech that I thought would be a great rebound play for January 2015, because in 2014 it was the worst performing biotechs. And it got halted for data, which was supposed to come out later in the month. And I took a nice 5-digit loss on the trade. And I ended up selling it for like 80 cents or something, and it went down to 40 cents. On something like that, I can't manage my loss expectations, but I can sell it quickly to save money. So when something goes wrong and I don't like what's going on with the company, I immediately sell it.
Okay, good point. So you do factor in quite a lot the news and the fundamentals into your trades? That's something you take on board?
That is my entire trading style, is news and fundamentals, because that's how I learned how to trade. And people laugh and say, well, why don't you learn technicals? I just do not like charts. It's not for me. I definitely think with an accounting and finance background, that's much stronger than looking at lines or pictures on a wall that's going in triangles. I don't know. But I also don't use level 2. So I am a pure tape reader.
Okay, that's really cool. So you don't even use technicals for sort of like timing your entries or anything like that?
Nope. If anything, I'll pull up a 5-day chart. If I had to use a chart, it's a 5-day chart, because 90% of my trades are less than 5 days. So if anything, I'd pull up a 5-day chart, but mostly I keep points in my mind and memorize when stocks hit certain levels. Say, for example, for my big short that I'm doing in May, which is CRMD, which is a biotech, I know that the high for the year is 1040 without even looking at the chart. I mean, I have a keen mind for memorization, and I train my mind for certain things to look for and filter out the noise. So if I'm shorting this stock for next month and it broke over that level, I would instantly be out of it. So that's how I try to control my thinking.
Okay, and where are you pulling that level from? Is that a certain resistance level?
That's just a 52-week high of where it hit in April. Okay. I believe the shares closed at 860-ish on Friday, and that level, I don't need to look at a chart. I know from watching it, and this is one of the stocks that I heavily watch for last month, that 1040 is a 52-week high. In fact, I should probably check it, but I'm pretty sure that is.
So you've mentioned biotech sort of a few times throughout the interview. Is that sort of a sector that you really like to specialize in? And is that sort of the way you like to trade, by specializing in certain sectors and then sort of ignoring the rest that are out there?
Yeah, I love to concentrate on the biotech sector, probably about 80 to 90% of my trades, because it's pretty simple. The biotechs can be valued at whatever they want to be valued, because they're trading at potential future dollar amounts of income that may never come from FDA sponsored trials. So there's so much room for wiggle room. And plus, there's so many shady, garbage CEOs in the business that it's just too easy to short these things and pick them off. And it's also what I've learned in the past few years. It's a good way to go long biotechs that you think that are shady and corrupt because they want to pump their stock price up. So it's been a great learning experience in biotech, and I love focusing on them because I love price, I love beta and volatility, but I also like to manage my risk. So that's why I seem to repeating it, but whenever a stock goes against me, especially in a day trade, more importantly, if the news isn't what I think it should be, I sell immediately because I can always buy it back. People need to understand you do not need to break even on a trade. You could sell for a loss.
Okay. And so if you're relying on the news so heavily, is there certain news topics that, like, how do you determine what news is going to impact the market and what's just sort of not going to impact the market, I guess you could say?
It's hard to determine that, but mainly what I do is, usually my news service spits out the headline. I'll immediately go to the press release and I'll start digging through the details of what they're saying, because a lot of times the headline looks a lot better than what the detail is. And if I think I have something in the detail that the market doesn't know, I'll take a big position size in it and let the market know what it is. I have a large Twitter following. So if I find something that I think that the market doesn't know, I put it out there. So yes, I react to news basically as quick as I possibly can and do research on it.
Okay. And are there certain sources that are probably more reliable than others?
I love the I love the Yahoo message boards. I know I seem like a broken record, but I'm old school, and I still think they have a lot of value. Twitter is a good source for information. I don't particularly like to interact with many people on Twitter because it could distract you. But for quality people and followers, I mean, you can get good information from Twitter, instant information from Twitter that analyze news just as fast as me. So and it's free too if you follow the right people.
Yeah, awesome. Great tips there. So let's move this along a little bit and let's start talking a little bit about the mental aspect of trading, because we were talking a little bit off air and, this was one of the topics we were going to bring up because I think you've got a lot of good tips to share on it. So what's the best way you find to keep your emotions in check during the trading day? And even outside of hours too, like let's talk about that a little bit.
Well, the thing is, being at it for as long as I have been, I would definitely say that what I've learned is never to overact to a gain or a loss. And people don't really understand that. But, if you have a gain, you can't be jumping up and down, yelling, fucking booyah, something exploded, take a look at me. It doesn't work. And that's what everybody does in today's environment. That's definitely not my style. What I like to do is point out and yell about my losses, because from those losses, I then get to quietly start accumulating my gains. So, so mentally, I do not react to a loss or gain in any way, shape, or form. I completely strip it out. Stock symbols, I don't fall in love with any stock. Simply put, if something's going against me, I sell it. And if something is winning, I move my stop to entry and I let it go. That's it. I mean, it sounds easy, but you would be surprised how many people cannot follow those two steps.
Yeah, that's really cool. So this is something else I wanted to ask you about also, and that's like, when trading, how do you keep a healthy balance between being confident without being over cocky?
Well, that's the thing, and this ties in directly to, the mental aspect of trading, which never gets enough attention in my eyes, which to me, the mental aspect of trading is 90% of trading. And let me explain. Like, I know a lot of successful traders out there, a lot of traders that have made millions of dollars in the stock market. But let me tell you, they do not make a trade unless they check in with my opinion first. And that may seem like a bold statement, but people need to understand that no one knows anything. And people in general are insecure, and they always want a confirmation and support from groups. And that's how the mental aspect of these stocks, of stock trading works, and that's why my style works, is it's contra to the market. So people always try to travel in packs. They're insecure. They need confirmation from other traders, but that's not the style that I do. I know that. I know I like to trade against that type of style, that emotion.
Okay, very good, very good. So this is something we were also talking about a little bit off air, and that's traders talking about other traders. So I think you've got some sort of thoughts to share on that statement there. I
do, and what I think is, I left the corporate world 10 years ago, and I don't regret it for 1 second. I hated everything about the corporate world. And what I've noticed is, especially after the past few years, is that, I use Twitter, not a lot, but, I've used it for the past 5 years. And what I noticed is that Twitter traders love to talk about what everybody else is doing, whether they're in a position, whether they're out of position, how much money they're making, what they're saying. It's literally like working at a corporation and hearing the chitter chatter about your coworkers. I mean, I think it's completely bullshit, because if you're concentrating on somebody else and what they're doing, you're never going to make any money. Why do one other person's profit and loss statement makes effect on yours? It makes no sense to me. And why someone would hate on somebody else and troll on somebody else when they make a trade or say something, who cares? I mean, I know this is a business and people sell things on Twitter, but the bickering, I can't take it. Like, I had to cut a lot of traders out of my life because all they do is talk about other traders. I mean, I think it's lame.
Yeah, no doubt, no doubt.
Are you ready to get serious about options trading? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Stocks, options, futures, or features double commission Tasty Trade Pro because your account to big caps savings. It's a game. Data, master the platform, and build confidence risk-free before you ever pay a cent. Every decade.
Main reason why such a large majority of traders never succeed in this game.
Because of limited risk trading has begun. Click the link in the description to start trading with Trade the Pools Capital.
So, moving along, what do you believe is the main reason why such a large majority of traders never succeed in this game?
Because it all goes back to the mental aspect. People do not understand that people's flaws in life about being insecure, or about not being humble, and needing confirmation from other people and needing support. People do not understand that applies to trading. And all because the group is thinking one way, that doesn't mean the group is right. So mentally, what happens is that when say a group trade goes wrong and someone loses money, especially a new trader, they always try to then chase the money back and make the money back. It doesn't work that way. So that's why a lot of traders fail, because they're getting confirmation from other people and they're not doing the research themselves and the homework themselves. I mean, the most profitable product on Twitter is alert services. And what that tells you everything you need to know about where trading is going for the next few years. It's been like this for 2 to 3 years now, where people just want to know what to buy, no questions asked. And those people are truthfully not making any money. There's only a few people that are making money even in today's market because they're over trading. They're not doing the research themselves. And, you know, if you want to learn how to fish, I mean, someone needs to teach you how to fish. And in order to do that, you need to do research and homework on why somebody is buying and not just do it and follow someone blindly because they made a good call two months ago. So that's why I think a majority of people fail, because they're too busy in that groupthink and the mental aspect of trading.
Yeah, I think those are some really good points you brought up there. So yeah, thanks for sharing those. Now let's just sort of start to wrap this interview up. So we'll just sort of go to the closing bell, and this is just a few questions that I asked to a majority of the guests. Is there any recommended reading that you would suggest to someone? Perhaps something around the topic of psychology.
I haven't read many trading books myself. I don't know of any good books out there currently. There probably is some good stuff on trading psychology now, but I'm not up to date on the reading of it. I try on my Twitter to put out as many articles as I can about trading psychology, because, you know, I love the world of finance. So I'm always trying to do something free and give back to the world of finance. So that's what I try to cover. But I guarantee you nowadays there's probably some good books out there, but I don't know of any.
Yeah, that's cool. So you've learned most of it from just sort of being in the trenches, right?
That's correct.
Good stuff. So when it all comes down to it, what would you say motivates you to trade after sort of 10 years in the game? Is it the money that you can make from trading? Is it the lifestyle it provides? Is it the freedom? Like, what would you put it down to?
Well, the money's nice. I mean, the money's great. And, you know, obviously we all want to make money. That's why we're in the business for this, why we're in this business. But, I mean, you cannot put a price tag on your freedom from the corporation in a cubicle and having to work for other people that you do not like, and you know, other coworkers that you do not respect. The independence is just such a massive key. I mean, that's all everyone who always reaches out to me for trading advice. They're like, they want to be independent. They want to be free from a corporation. I mean, trading is awesome. I mean, there's days where, you know, especially after tough losses where, you know, trading sucks. But I don't let myself get too down on those days. I try, once again, to keep the steady emotion. I love getting up. It's weird. Like, my family friends and, you know, my son's, friends in the neighborhood, they don't know what I do for work. They don't know that I'm a stock trader. A lot of them, I think I'm homeless, because I never talk about what I do, because when it comes for trading, that's just something that I like to do. I even use a phony name as a trader, because back then I never really wanted to brag about how much money I made. So it's something, if you're independent and you're tired of the corporate world and you do the research and tools, I recommend that trading is for you. I mean, everybody wants to do it, but no one wants to put in the correct time. Or a lot of people don't want to put in the correct time. I should say that.
Yeah, so important, so important. So in there you talked about days that just really suck. So say you have a really bad day one day, how do you treat the next day? Do you just come back to it treat it as a fresh slate, or is there ever a point where you decide not to trade for a day?
Yep. What I've learned is, due to my degenerate gambler tendencies, is that when I have a bad trade, like say like a 5-figure loss in the morning, I shut off my computer and I don't trade anymore. Because the reason why is what I try to do is make trades, or I used to do, the old Welsh 5 to 10 years ago when he was first starting out full-time in his game. I would try to make that money back as quickly as possible. And stats show me, because I keep a personal journal of all my trades, and I analyze them. And what that showed me is that whenever I tried to make my money back quickly, I would lose it. I lose more. So the most profitable thing that I can do when I have a losing trade, especially an unexpected one, is turn off the computer, and I honor that. I turn it off, and then I come back the next day like nothing happened. And even that day when I lose money, my wife can't tell whether I make or lose money. Because one, when I'm making money, I sure as hell don't want to tell her because she's going to be spending it. And when I'm losing money, I don't want to bring my family down. I like to keep my business separate than family because I trade in the same house. I don't like the mood to overcome the house.
That's great. That's excellent. So just one other thing that you touched on there, and that was documenting your trades. How do you actually journal those? Is it sort of a written notebook, or do you keep how do you go about that? Is there a file on your computer? How do you journal your trades? I journal
even to this day, I journal I have an Excel spreadsheet. And basically all it is, I put down the day when I make the trade, how much shares that I trade as percentage to my balance. And, whether it's short or long, it's gain or loss. And I do this every day, either during the day or end of the day. I fill out the spreadsheet, regardless of whether I win or lose. And I put in the correct amounts. And I keep it as my personal, second pair of eyes. Because being a trader, is really a lonely business. I do have trader friends. But, no one, when you're in a bad streak, no one really likes to talk about it. I like to talk about it a lot, but I know when I've lost friends over the last few years that just completely dropped out, probably because they were losing so much money, some trader friends. So I use that Excel spreadsheet as my accountability. If I'm doing things stupid, I want to see it on that Excel spreadsheet. I want to look at it. I want to see it every day when I do something wrong. And guess what? When I'm doing something right, I want to see it. I want to press harder, and I want to go bigger in size, and I want to make money. And that spreadsheet, it's sad to say, but I need it, and I keep it, and I've been doing it for so long. It's just second nature for me. So that's like my second pair of eyes.
That's really good. If you find something that works, you just keep doing it, right?
Right. I love to ditch it, but I'm afraid what would happen if I did.
I think it's more important to be making money. So if it's helping with that, stick with it, I say. So this has been awesome, John. Thanks so much for coming on. I really appreciate you taking the time on a Sunday evening. Before we go, do you want to share with listeners where they can find out more about you and connect?
Yeah, just you can go on Twitter at John Welsh Trades. That's it. And some days I hop on, I give some trade ideas and some commentary. I try to do what I can and give back for free, whatever I can for finance. And you can see me there. And I'll try to tweet quality stuff whenever I can.
That link will be in the show note to John's Twitter page. Go along, follow him. And yeah, thanks a lot, John. Let's keep in touch and we'll speak soon.
Aaron, thanks again for the opportunity. Have a good weekend, or in your case, have a good week.
No problem, man. Talk soon.
Take it easy. Bye-bye.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Ever Every decade, the market reinvents itself. Online brokers opened the doors. Mobile apps made trading seamless and commission-free trading erased. And buying doesn't earn risk.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Hey, what's up, team? Welcome back. It's awesome to have you tuned in and listening to episode 19 of the Chat with Traders podcast. Now, I'm not sure how this happened, but this interview somehow slipped through the cracks. I actually had the conversation with this week's guest around November last year, being 2014, and it's been tucked away in a folder ever since. So let me introduce you to this week's guest. His name is Stuart McPhee, and he comes from Melbourne, Australia. He's an equities and forex trader who has been involved with the markets for around about 20 years, and he is also the author of Trading in a Nutshell. Our discussion was heavily based around trading plans. Stuart shares a very simple discipline hack that will help you to follow your trading plan for the long term, not just the next week or so. Even though it's taken a while for this to surface, I'm pleased to finally share the interview with you. Alright, this is Chat with Traders. I'm your host, Aaron Fifield, and here is this week's guest, Stuart McPhee. Hey Stuart, thanks for making time to come on the show today. It's really great to have you here.
Yeah, thanks for having me.
Great, so you just got back from Singapore. What was going on over there?
Yeah, I go over there quite regularly. I've been doing it for a number of years now. Last week I just did a number of events in the evening talking to aspiring traders, people from all sorts of experience levels, from absolute beginners who have no idea what's ahead of them and all the challenges they have in front, to some that have been trying for a few years and have won some money and lost some and just sort of battling along trying to make their way through the journey. So that's all I was doing last week, and I do that on quite a regular basis.
Awesome. Were you speaking on stage there, or just sort of a bit of networking?
Yeah, no, it was on, not quite on stage, in a room, no doubt, no less, but I do the occasional sort of big expo invest fair is one in particular in Singapore, which is quite popular, and that involves, yes, a very large stage, and last time I was there in August was like 500 people in the audience and standing room only, but last week was just small groups of 30 or 40 people.
Okay, good one. No, that's really cool. So Stuart, if you could, give us a rundown on how it all started for you. How did you get into trading, and what was the appeal?
The appeal is obviously money, and I say to people all the time, it's nothing to be ashamed of. It's generally the primary motivation that most people have to get into it, and I just get that out in the open and say, when I talk to groups of people, you're surrounded by people who had a similar motivation, and it's nothing to be ashamed of. So that was my motivation, just like everybody else. Excuse me, that was my motivation. I'm just trying to think of your other part of the question. What sort of sparked my interest? I think,
how did you get started trading? What was your introduction?
Yeah, well, it was having some money. This is before I bought it, any assets or any property, and it was just having some money saved up and thinking, what am I going to do with this money? So I went and saw a financial planner at a bank, and this is a few years ago now, who just said, why don't you buy some shares? You're young enough and you can afford the risk and ups and downs and the like. And I thought, shares, I've heard of them before. Like, I've heard of buying shares in companies. So I did just that, and I remember buying shares in the actual bank that I was physically sitting in. It just made a lot of sense. There's 2,000 stocks on the ASX thereabouts. So where do you start? Do you start with the A's and work your way through to the Z? So I just bought, shares in that particular bank. But then I realised with the ups and downs and that I could probably do more and be a little bit more active. So I was just on the lookout for ways to learn how to do it better and perhaps a little bit more active in trading. So sure enough, newspaper, and I'm just flicking through newspapers and I see advertisements all over the place saying, sit by your breakfast table and, sit in your shorts and T-shirt and make, X thousands of dollars before morning tea, blah, 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 all that sort of rubbish. But that sparked my interest, and sure enough, I went along to a few of these introductory free, in brackets, sales seminars. And that just really sparked my interest.
Okay, good one. So how did you get started from there? What was the next step? Did you begin paper trading, or you just sort of dived right into it, started putting some money on a few trades and sort of see how you go?
Yeah, the first real probably big step was actually one of these sales seminars lured me in and got my checkbook out, and I paid a lot of money to attend quite a series of, it wasn't a one-off event, it wasn't a weekend course. It was a very structured, ongoing, quite a number of, like the curriculum, the syllabus was actually quite extensive. So I thought I was getting reasonable value for money, and probably in reflection, I probably did get pretty good value for money. So I undertook this course, and it took me probably 6 months of going to evening classes and, on the weekend, Saturday morning for 3 hours. And I did all these classes, and I was learning about what I refer to now as quite simple things, as like charts and candlesticks and drawing support and resistance levels and learning about risk and position sizing. And sure enough, I just started to appreciate how much there was to learn.
Okay, sure. So once you did get started, what were some of the things that you found yourself struggling with? What was sort of the most difficult part for you?
Losing money. Yep, pure and simple. Buying something and it just didn't go where you wanted it to go, and then not knowing what to do. And, it's intuitive to just bury your head in the sand and hope and wait and pray that it comes back up to where you bought it so you can break even. Losing money. Pure and simple, and I think probably that's the case with 95% of the people. I mean, clearly being proven wrong on a regular basis is very humbling, and it's not something that a lot of people are comfortable with or used to because of their character or perhaps what they do for a living in their real life. But all those things with managing risk and losing money and getting it wrong often and not knowing what to do, they're probably more, I could give you specific examples, but they're probably the more general issues that I really struggle with.
Yeah, right. So losing money was certainly the big one. What was the best way you found to overcome losing money, or at least sort of be able to deal with it a little bit better? How did you approach that?
It probably wasn't anything conscious it wasn't anything deliberate. What happened was, and I say this a lot to people now, what happened was the more it happened, the more I became desensitized to it. So I think if you have, 50 losing trades, you are able to handle that a little bit better than someone who's just had their first monumental loss. And when you've had 100 losing trades, and intertwined in all of this is the journey of you learning a lot more about what it takes to be a trader, and you're attending the occasional workshop or seminar, or reading another book or reading another article. And the more you do that, the more you appreciate that you're not the only one who's losing all this money, and you're not the only one who loses money 1 out of every 2 trades or 2 out of every 3, that it happens to absolutely everybody. So the more you learn that and the more you go through it, I really do believe you become desensitized. So it was nothing, as I said, deliberate that I did, or this is the path that I'm going to take to address this problem. Not knowing really what to do, you just keep ploughing on and keep persevering and just, save up a bit more money and start trading again. And the more that happens, the more chance sometimes you have of pushing through and getting through to the other side. So that's probably what happened in my case.
Yeah, so time and just sort of sticking with it was sort of one of the big ways that you got
time. And I think, yeah, absolutely.
That.
And I think one of the things so many people don't appreciate is how much time it's actually going to take to get some measure of success and consistency and the performance that people actually initially dream of. People don't appreciate that. There's no obvious barrier to entry to set up a trading account. There's nothing you need to do. There's no licensing. There's no exam you have to do. So no barrier. So you go in there with very false expectations and you don't appreciate the time.
Of course, yeah. Okay, Stuart. So now that you've had a lot more experience, how would you define your trading style?
Well, I've got 2 very distinct, very separate trading styles. One is I address once a week, the other one is every day. So I can talk about both of those. One's purely trading equities in my retirement fund, my self-managed super fund, which I've had for many, many years now. So that really only takes once a week. Very conservative, very medium-term outlook. Stops are very wide. It's not something I need to manage every single day. And for the last 5 years or so, I've been trading currencies a lot more actively. So that's the thing that does take my time every day. But even then, it doesn't take, I don't spend 10 hours looking at a screen, looking at numbers flashing. But my process that I go through, I do every day. Takes a little bit more of my time. But even that's reasonably conservative in currency terms. I'm probably taking maybe 4 or 5 trades per month. That's it. Some will take that every hour. So, but that's nothing right or wrong about that. That's just everyone has to work out an approach that works for them. So 2 very distinct approaches, 2 very distinct financial products. Yeah.
Absolutely. Okay. So what would you say are some of the key benefits from the account that you trade with the currencies, taking 4 to 5 sort of trades a month? What would you say are some of the key benefits of that trading style you have versus maybe a day trader or someone who's buying and holding? Obviously, that's sort of a little bit different from trading,
Sure.
But what are some of the benefits from that method?
Yeah, I think a key benefit is being a lot more selective. So rather than sometimes taking the best of a bad bunch and just looking for opportunities and actually really sometimes lowering your standards and just trying to find something, I am on the other end of the scale. I'm far more selective. So I think whilst I trade fewer, I think generally speaking, my signals and the setups I take are far higher quality because I'm just being a lot more selective. That I think is one definite benefit. Certainly time. I just have a life right now where I just don't want to be, again, looking at a screen an hour for me looking at a screen is too long. And I don't want to be doing that. That's just personal choice. That's not right or wrong. That's just, I do a lot of other things and, balance that up with other things I do in my life. But I think being far more selective with your opportunities rather than, as I said, sometimes taking the best of a bad bunch, which I don't think is a good thing.
Yeah, okay. So you're sort of saying you're very selective in the trades that you execute. What are you actually looking for to get into a trade? Do you have some favourite signals, some patterns that you like to trade?
Yeah, within currencies, I'm a huge follower of just simple key levels, so support and resistance levels. I don't want to timestamp this particular interview too much. I could talk about current levels with the euro or the Australian dollar or whatever, but in years to come, that'll be miles off the mark or something, and it'll very much date the video. But key levels for me are paramount. I think currencies respond to key levels all the time, and they're a big component of the way I look for opportunities. And the other thing is just pure trend. I know people trade counter trend, and I know currencies probably lend themselves more than stocks do to trading counter trend. But I'm a big trend follower. Currencies can move so far. Admittedly, for a lot of this year, they haven't moved a lot. But just the last 2 or 3 months, they have moved unbelievable amounts. And we're talking about all the majors, and it's all been dominated by the US dollar, but there's been significant moves. So simple trend following strategies can just absolutely clean up.
Okay. So when you talk about key levels, that's much the same as sort of support and resistance levels. So you're just looking for it to sort of break tops or break bottoms?
Yeah, it can be that way. Or it can be, if you want to trade the counter trend, is the actual testing of those levels and the levels standing firm, and holding up. And then, of course, when there's 2 levels involved, then all of a sudden you have a range established. And then people, not myself generally, but others can then take advantage of those ranges because you know the limits and expected outcomes and how far it might move to the upside because that's where the level of resistance is and so forth.
Yeah, great. So it sounds like your trading's predominantly technical based. What are your views on fundamentals and news, and do they have any impact on your trading approach?
They have a massive impact on the markets, but they don't have any impact on me. So there's no doubt currencies are a very news-driven market. Every time a governor or a head of a central bank says something, markets normally respond, and they're saying things often. And they're certainly never been more in the limelight than they are right now. Excuse me. So the currencies markets are very news-driven. For me, I love simplicity, and I love price, and I love price action, and I love technical analysis, and I love the clarity of charts, and I love that price captures everything that everybody is thinking, even if I don't agree with it or not. And I think sometimes fundamentals can be too opinion driven and can be too story related, too much sort of like telling a story, and that's just not something that resonates with me, and I just love the clarity of charts.
Okay, good.
Sorry, I should just add on to that. I'm the last person to say, as a technical analyst, I'm the last person to say that fundamentals don't work or are horrible or whatever. No doubt, as I said, currencies are very fundamentally based and very news driven. It's just each person just has to work out what suits them, what works for them, what resonates with them. And for me, and I say this a bit tongue in cheek, I think with fundamentals there's too much to learn. You just got to know so much about economy and GDP and all these figures and jobs and yields and interest rates, and it's just not something that's ever interested me, to be perfectly open.
Yeah, no, I think you put that really well, Stuart. So the point you made there about finding what works for you sort of brings me to the next point I'd like to discuss with you, and that's trading plans. I know you're very big on this, and in fact, I saw your interview with Mark Cook, the market wizard, and it was good to see he's also extremely passionate about trading plans and having a solid one.
More than me, and more so than me. Yeah.
Yeah. So, Stuart, I'd like to ask you, what does a trading plan mean to you, and what should entry-level traders do to create one?
I think it'd be very daunting for beginners to put a trading plan together. You wouldn't believe it. I did a brand new session last week in Singapore, never run it before, and I just was ad-libbing a bit to start with. And I had a room probably of 35 people, and I said, hands up, who here has a trading plan they can present to me right now? Out of those 35 people, you could probably have a fairly educated guess. One person put their hand up, and everyone sort of sniggers and feels a bit uncomfortable and has a bit of a laugh about it. I said, okay, from that then, who here in this room believes that they can make money consistently, not today or tomorrow or just the next week, but consistently over an extended period of time without a trading plan? Who believes they can do that? Not one hand goes up. So I said, well, there's clearly a disconnect here. There's clearly a problem where you all accept that you need one, yet with the exception of one person, no one has one. So clearly that's an issue. I cannot overstate the importance of a plan. Plan is simply a compilation of your rules. Your rules are there to protect you from making silly decisions. And if you don't have a plan and don't have something to base your decisions on, you'll make silly decisions on a routine basis. That's just human nature. I mean, all the things we do intuitively in the markets generally have you losing money. So the plan actually provides you some structure and hopefully assists with some discipline to actually have you moving away from intuition and doing more what's required of you. So what does it mean to me? It's look, to be very open with you, I don't necessarily have it written down anymore, but I do believe in that. I tell people that, and I do believe that. I probably got to a point now where I'd have it maybe somewhere as a Word document, but I've done it. You do it so many times. You see the same setups all the time. You set your stops the same way all the time. You position size the same way all the time. Talk about becoming instinctive and routine and do it in your sleep, because that's what happens when you've done it thousands of times. But yeah, I can't overstate the importance of it.
Yeah, but to get to that level, you obviously did have a trading plan that now you just know it so well that it's just second nature.
Sorry, yes, and I didn't really answer one of your questions. That was, how do we start off? Where do we go? First thing is, don't be daunted by it. Don't think it's a book. It's not 200 pages. Mark Cook, you mentioned before, his was very, very long. And in his, and I saw a copy of one of his, he addressed questions that I never even thought were possible in the market. So, I mean, that's just probably a product of how much experience he has, and he is far more active in the market than I am. But where do we begin out? We just break it down into basic levels, and you need to answer 3 questions at the very basic level. How do you get in? How much do you risk? How do you get out? So under what conditions do you enter a trade? How much do you risk? How many units do you trade? Where do you put your stop position size, etc.? And then how do you get out at a loss or at a profit? So yes, each of those questions takes a bit of time, but just break it down to those 3 basic questions, and that forms the basis of a plan.
Yeah, no, that's really solid information there, Stuart. So, after creating a trading plan, I guess the next most important thing would be to follow it. And I've heard you say before, following a trading plan is pretty simple unless it's your own. Could you elaborate on this a little bit and maybe share some tips on how to actually follow your trading plan once you've created it?
I talk to people a lot about discipline, and I've had a number of people come up to me and say, I know I'm undisciplined, whatever the correct wording is. I know I'm undisciplined, yet I know I have to be disciplined, and I don't know what to do about it. And the advice I give to people is to take small steps. So most people know, and I just related back to perhaps losing weight. There's no secrets to losing weight. People know about, burning energy or burning calories and activity versus what you put in your mouth. So, there's no secrets to that. So the problem is, though, people say, right, as of 1 Jan or as of 1 July, I'm going to lose weight, I'm going to stop eating all that, and then I'm going to exercise 30 minutes every day, I'm going to go for a walk. That becomes too daunting. People can't follow that. It's all too much. Because we are very habitual creatures, and we get into habits, and we are very routine, and, when the sun comes up, shortly after that, we get up, and when it goes down, shortly after that, we go to bed. We're very much habitual creatures. So to change a major behaviour takes a lot more than me saying, 1 July, I'm going to, walk every day for 30 minutes. So what I say to people is take small steps. If I was to say to a group of people, right, tomorrow, all of you need to find 30 minutes and go for a walk, everybody would be able to do that. Easy. But if I said, right, you need to do it for the rest of your life, well, after a period of time, after 5 days, X% will drop out. After 10, more will drop out, and so forth and so forth. So the idea being is just say for the next 3 days, I'm going to walk every day for 30 minutes, and you'll get a high completion rate. Because of the 4th day, I don't care what you do, sleep in all day, eat as much food as you want, but you don't have to do that change of activity. There's a sort of a light at the end of the tunnel, so it's very easy to achieve. Let's relate that to trading. To say, I'm going to cut my losing trades every trade from now on is just not practical. It doesn't work. But you say to someone, just for the next 3 days or the next 3 trades, do that, and then the 4th trade, I don't care what you do. And everybody will be able to do that. And after that, they can say, wow, I actually was able to change my behaviour. Perhaps next time I'll do it for 4 days or for the 4 trades. And then we just slowly but surely change behaviour over time, as opposed to saying, as of tomorrow, I'll completely change. So discipline to stick to the plan is incredibly, again, cannot be overstated. So to me, it's all about changing behaviour, changing habits, and just basically saying to yourself what you believe is important and what it takes to be a good trader, and work out how, professional you want to really be at this.
Yeah, so you're saying that small steps are really the key to being able to follow your trading plan.
To change behaviour, yes, and to become more and more disciplined.
Yeah, and I guess sort of as you do that, you sort of prove to yourself that it does work and it does make you money if you stick to your rules, instead of it's sort of been a bit hypothetical to begin with. It then sort of sinks in, and you soon realise it's the way to do it.
Exactly. The 3rd trade that you sort of cut your loss, a week later you might look back at it and go, wow, had I not cut that, look at the position I would have been in right now. I would have been miles down. Well, this thing may actually work.
Yeah.
So it sort of starts to convince yourself that 1, you're capable of doing it, and 2, it's the right thing to do.
Yeah, no, I think it's very important, the topic of trading plans.
Are you ready to get serious about options trading? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Stocks, options, future, and more, and earn a $. Learn more about sidelines, because stocks to big caps eat savings. It's a game on live data, description to start trading with Trade the.
Are the right ones to share with you.
You're trading a little bit. Are there any trades from your career that you'd like to share with us, either for all the right or wrong reasons?
Definitely the wrong reasons are the right ones to share with you.
Yeah.
I can think of when, and all of a sudden now, this is a long time ago, but back in 2000 when the NASDAQ crashed and markets really stumbled, I was very heavily involved, very active for the 12 months leading up to that, and did okay out of it. But then when all that crashed, gave basically all of it back and some. But the lesson I learned was that I had been so conditioned that markets just went up. And they went up incredibly strongly and with real venom, real strength. So as markets started to fall, I had been so conditioned to markets going up. As they fell, I was just all in buying, thinking that this is just a blip, this is just 1 or 2 days, not appreciating the fact that things had turned and markets were about to move very, very strongly lower. And as things just dropped so sharply, I did what was intuitive, and that was, wow, look what a bargain it is. Look how cheap this is. And I just jumped right in to make all that money back. And I just continued to do that. And I was so conditioned to markets going up. So when they didn't, I was just flabbergasted. I mean, had no idea. I'm just trying to think of the right word to describe how I felt. I certainly felt helpless, and I felt like I was just an absolute amateur and that I was being just completely run over. But the thing was that I was so inexperienced and I was so conditioned that just markets go up all the time. And I just vividly remember being at a friend's place in Perth, and I live in Melbourne, but being over in Perth and using their phone line, and I had hooked up the phone cable. I thought I was really smart, dialed into the local ISP phone number, and I logged into my account and was actively trading on their kitchen bench because I was that active. And I just look at that now and just realise how stupid that was. But the thing is, with so many, if you don't know any better, you think you're doing what's right and you think you're doing what makes a lot of sense. And most of what people do, they think is the right thing to do. They don't deliberately sabotage themselves. They think they're doing the right thing. And when you don't know any better, that's what you'll do.
Yeah, no, really good points there. So I believe you've been trading for nearly 20 years now.
All of a sudden.
Was there ever a point when you thought to yourself that I've got this, I know how to trade profitably now? I guess the question would be, was there ever a transition from learning how to trade to now being able to trade? Did it ever just sort of click like that?
It's a great question, and it wasn't a single moment in time. I think it was a 12-month period, though, where slowly but surely I started to feel that way. And it was after I'd lost all this money, and therefore I had no more money to trade with, and in fact I was then committed to paying back money that I had lost, where I had no choice but to not be involved. But what had happened, fortunately for me, because I could have easily have turned away and never touched the market ever again. Fortunately for me, in that 12 months prior, I'd actually made some decent money. So I saw it was possible. And I still to this day have people come up to me just quietly. They will not ask this in front of everybody. They'll come up to me individually and say, is this real? Like, is it actually possible? Because I'm not yet convinced. And I can understand that. I can understand why people would think that. Well, I had been convinced because I actually had made some fair cash. The problem was I gave it all back. But I saw it was possible. I just realised I had to do it a lot better and be a lot more conscious of the other end of the trade. That's when to get out and managing risk. So when I had no choice but to hit the books and attend more workshops and seminars, and I'm not a big reader, and I probably should be ashamed to admit that, but I'm not. I have not read a lot of books in my life, but I've actually read a lot of trading books because it was a topic that really interested me. So Market Wizards was probably a defining book for me, and I wish I had $1 for every time I've mentioned that book as having a significant impact on me. So the Market Wizards books and a few others I could list off, but I'm reading all these and going, wow, I can relate to that, and that makes a lot of sense, and I can understand where he's coming from here. And all of a sudden then I did a lot of testing, because prior to that I wasn't trading with any consistency. There was no real strategy. It was just, hey, that's going up, I'll buy it. And sure enough, it did well. There was no process. There was no strategy looking for opportunities. So all of a sudden now I started to think more about consistency and having a clear-cut set of rules. And then I had to validate that. So I had to go through this process of testing. And because I had the time, I did most of my testing manually. And the good thing about that was I had confidence in the results because I'd seen them bar by bar. I'd followed all these trades, but I actually learned a lot about technical analysis by following all these trades manually, by studying price action. And I noticed when price did it did this, and then it did this, and all of a sudden I'm learning a lot more about TA. So throughout that 12-month period, I'm starting to think, I'm going to be in a far better position to go at this again than I was, say, 2 or 3 years ago.
Okay, and when you say testing manually, are you talking about back testing there?
Correct, yes.
You are, okay.
Yes.
Good one. So just sort of proving to yourself that certain patterns, cause this sort of reaction and that type of thing.
Yeah, and I'm quite open about this, and I share this elsewhere, where I thought trading's difficult, you need a complicated solution. So I thought I'll start off with a few basic rules, and I'm just going to add lots and lots of things to it to make it really complicated and complex and everything. And all of a sudden, these simple rules were actually getting results. And I thought, do I need to go any further? Do I need to add complexity to this? Maybe I don't. So that was another learning point, that simple rules actually do work. And whenever I sign my book now, and I sold some books last week, whenever I sign my book now, front cover, I write keep it simple. Because we have a very natural tendency to complicate things. Yet in trading, I think simple works very well.
Absolutely, yeah. So, that might be relevant to this question here, but where do you often see entry-level traders slipping up, and what would you say to them?
Failing to understand and manage risk. Entries won't kill you as a trader. I'm not saying random entries work well, but certainly your entries won't kill you. It's what you do at the other end of the trade. It's failing to manage risk. It's failing to understand the risk. There's so many products out there now. Many are leveraged. People are attracted to leveraged products, but they don't understand the risk. And they just blow themselves up really, really quickly. They don't understand that leverage is double-edged. They just completely fail to probably realise how difficult trading is. And I've never, ever said trading is easy, ever. And I still don't think it's easy. It's actually a lot more difficult than people realise. So that's probably a big slip-up, is entering it thinking, give me a weekend course and I'll be okay. I'll be giving up my job and trading full-time, not appreciating, you read about competency, 10,000 hours of sort of work to develop a level of competency with a particular skill, and maybe trading is one of those in the 10,000 hour bracket. But risk is one word probably to sum up. Where do beginners slip up? It is absolutely risk.
Okay, very good. So, again, maybe sort of similar question, but what is that? What is it that you believe stops the majority of traders from making a huge success?
Not taking the time to do all the things that need to be done. Not taking the time to study and understand and manage risk. Not taking the time to become more and more disciplined as a person, as a trader. Not taking the time to develop a plan and validate rules and test and prove and disprove different strategies. So not taking the time to become very methodical in their process and structured and organised as a trader. So not treating it as professionally as they should. And I'm going to say the word again, time. Not probably investing the time. Thinking that, I use the analogy, I play a lot of golf, and I talk about not wanting to look at a screen for 10 hours a day. That's one of the reasons. And I'm very lucky I get the opportunity to play a lot of golf. But I'm not a professional golfer. I don't make any money. I don't make 1 cent from playing golf. In fact, it costs me money. I just bought clubs earlier this year. They cost a lot of money. My membership fees cost a lot of money. So I don't make any money playing golf. I'm not a professional. But to me, I love it, and to me, it's a hobby. And for me, too many traders treat trading as a hobby, in that they enjoy it, they spend a lot of time doing it, they're happy to do it, but at the end of the day, it costs them money. They don't take that next step of becoming professional. So to many, trading is a hobby, not a profession. Golf for me is a hobby, but I think trading demands a little bit more of my time and respect.
Yeah, so failing to treat it like a business is probably another way to put that. So another big factor in being successful at trading would be the emotional side of things. How do you manage emotions, and what gives you the confidence to push on after a few losing trades?
Yep, it's again desensitise. So, excuse me, I mentioned this. I can't remember the specific point, but I talked about over a period of time you become more and more desensitised. And I think to myself, a surgeon who might cut the chest open of a human being, the first 10 times they did it, thought, And if you and I walked in there, we'd go, I don't want to look at that. It's uncomfortable. But this guy who's done it 1,010 times has become incredibly desensitized to that. So when it becomes to emotions in trading and having confidence in what you're doing and having a string of losing trades and the like, time, trades, the number of trades, the number of times you've gone through all these emotions and what have you, just you become desensitized. So I have no issues taking a losing trade. I haven't for years. But when I started, I had massive issues with taking a losing trade, as does everybody. But over time, you become absolutely desensitized.
No, it's good to hear that. So this has been really good, Stuart. It's been great having you on here, and thanks again for you taking the time to come on. So
it'd be my pleasure.
But before you go, we'll take it to the closing bell. So the closing bell is just a round of questions that we ask to all the guests, just short,
rapid fire questions.
Pretty much, that's it. So
okay.
First one would be, what's the best piece of advice you've ever received?
Hard to be simple. It's simple to be hard. If you talk about trading, as human beings, it's very difficult. As human beings, it's very easy and simple for us to complicate things. It's actually very difficult for us to simplify things. So realizing that it's actually a very conscious, deliberate decision for us to try to simplify what we're doing with our trading. Otherwise, because if we don't, we'll overly complicate things because that's what humans do.
I like it. Really good. So what is the number one trading resource you couldn't live without today?
Probably easy. Internet.
Internet, that's a good one.
Yeah, I mean, everything is online. It's on my tablet. So I never do things on my phone. I mean, I've got a big screen on my phone, but I don't like it being that small. So laptop, tablet, but all that's, of course, connected somehow. So internet is probably it.
Great. What's one book that you believe is a must-read for any trader just starting out?
Now, Aaron, that's easy. My book, of course. Trading in a Nutshell, 4th edition. But if I can't provide a shameless plug for my own book, I think I've said it already once today, and that's Market Wizards by Jack Schwager. And I think it certainly had the most significant influence on me. I think also with that book, if you've read it before and then you trade for 1 or 2 or 3 years, go and read it again because you'll actually learn more, because from your experience, you'll be able to relate to other things you didn't pick up the first time.
Yeah.
So that would be it.
No, that's an incredible book, the Market Wizards, and we'll put a link to your book in the show notes for sure.
Oh, thank you.
Knowing everything you do now, what would you have done differently come day one?
Maybe not started. Sorry, you probably haven't got that answer before.
It's a new one.
it was a few times early on were horrible. I mean, after I lost a fair amount of money and then 3 months later lost more trying to win that back, that was an incredibly horrible time for me. So no, that's probably not my final answer. That's just penciled in. But realising that most of the decisions I needed to make were counterintuitive. So I needed to have steps or processes in place to ensure I didn't make decisions intuitively, i.e. have a plan.
Okay. Really good. No, thanks again, Stuart. It's been awesome. So tell us, where can listeners connect with you or find out more about you and more about your book and that type of thing, and then we'll leave it at that.
Sure, thank you. Probably I'll just give you 2 URLs. My book you can find at tradinginanutshell.com. That's all one word, trading in a nutshell. Or my website, yet to be developed, stuartmcphee.com.
Okay, awesome. All right, we'll put those links in the show notes, and we'll keep in touch. Thanks
Terrific.
again, Stuart.
No, you're very welcome. Thanks.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
Every decade, the market reinvents itself. Online brokers open the doors. Mobile apps made base stock in the broker, dealer, and member of FINRA, NFA, and SBA.
You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
All right, what's going on, guys? Thanks for listening in. I know I say this nearly every week, but I really mean it. It's great to have you here. So this week, I was thrilled to speak with a well-respected, high-energy, and incredibly insightful trader, and who many of you probably already know as the head honcho at Bulls on Wall Street. His name is Kunal Desai. I've been trying to bring him on as a guest for quite some time now, but it's finally happened. So I'm glad to be sharing this with you. If you're unfamiliar with Kunal, I'm going to give you the super condensed intro because we discuss his journey in great detail for the first part of our interview. So Kunal is essentially an intraday momentum trader. He's been trading since his teens, and just like many of us, he really struggled for many years going into his 20s. Eventually persuading one of the few profitable traders he knew of to show him the ropes, who taught him how to actually work the market like a trader. From there, overall, it's been onwards and upwards. But during our discussion, we cover quite a range of topics. To mention a few that are really interesting, Kunal covers his go-to setups, which he also commonly refers to as slump busters. So that should really prick your interest. We also talk about why it's dead important to master one or two things and understand those really well. I know this is a topic that's come up several times in previous episodes, but it was really interesting to get Kunal's take on this as well. We also discuss some of his rules around risk management and how he applies these to his own trading. We also discuss how to combat FOMO, which is really just a silly word for fear of missing out. But this can be a real issue for traders and has the potential to really mess you up. So that was a really cool topic that we went into quite a bit of detail on. Also, we talk about the reasons why you must have an undeniable passion for trading, as well as trading for the right motivations, both really important. So before we get into this week's interview, I'd just like to mention that over the last few weeks, I reached out to 17 proven traders to ask them, what was the one thing you wish someone would have told you before you ever started trading? So essentially, I asked them to share the single most valuable lesson they've learned to date. From there, I've combined each one of these 17 lessons into an easy-to-read 28-page guide. It's a free download, and you can get your hands on it at chatwithtraders.com/17 lessons, and no spaces, of course. Some of the traders that are featured inside have appeared on the show in the past, as well as there's a few traders that have not appeared on the show too. So hopefully you can take something from their most valuable lessons and use it to avoid similar struggles and condense your own learning curve. Again, you can pick that up for free at chatwithtraders.com/17 lessons. All right, let's get into it. Here is this week's guest, Kunal Desai. Hey Kunal, what's going on, man?
Hey Aaron, how you doing? Thanks for having me on.
I'm pleased to finally get you on. You're hard to get hold of, and I'm glad to have finally locked you in and got you on the show. So thanks so much for coming on.
My apologies. I was on a 1-month hiatus.
Yeah.
And the email is the last thing I like to do when I'm on hiatus.
No doubt. I can't blame you for that. So tell us what's been going on. You've been traveling around. You've just returned from, I think it was St. Martin. Tell us about that. How was it, man?
Yeah, so I went to the Dominican Republic for 2 weeks, and then Las Terrenas, and then St. Martin for 2 weeks. So typically I do, I'm always on the road. So when I have boot camp class, I teach these trading boot camps. I'm at my house in Florida, and I'm just working and trading and running our businesses. And as soon as class is done, I take off for a month, and I recharge, and I'm still trading and teaching and doing stuff. But I do it in a different location, and I relax because I don't have the nighttime classes, so I can actually go out. When you have, when you teach live classes, like ours is 8 o'clock every night, so, you don't have any social life. Like it's, you're just teaching class all night. So I like to get out and about. I have a good friend of mine, Cameron Foose from Foose Alerts. He's one of my best friends. So obviously we're of the same age, and we're in the same business. So I drag him with me, and we go on these trips together. So we've been to Colombia, Costa Rica, St. Martin, Dominican, and after this next boot camp is done, we're going to Spain for a month.
Very cool. Nice. So since you like to travel so much, what would you say is probably one of the coolest locations you've ever traded from?
My favorite place to go is Costa Rica, and it's probably similar to a lot of the spots in Australia. Costa Rica is very like a rugged place. If you like adventure stuff, surfing, kayaking, jumping off bridges, anything that's wild, Costa Rica is like Jurassic Park. There's a lot of that type of stuff going on. There's not like the party scene, nightlife that you'd get like in Europe, but if you want to like do some real manly stuff, that's the spot to do it.
Very cool. The fun stuff, eh?
Yes, I've been there 4 times in the last 2 years. It's one of my favorites.
Nice, man. Well, let's get this rolling. So let's talk about how you got into trading, because from what I hear, your parents weren't too hot on the idea of you being a trader. So tell us about that. Also, tell us about how you funded your first account, because I think that's also an interesting story. So I'll let you take it away.
Sure. So my dad has always been trading. My dad is an engineer. He works at a software company in Michigan. And so he's always dabbled in the stock market. He's just like, we laugh about now, my dad is like the worst trader in the world. Like, he's terrible. Like, I remember so many instances as a young man, my dad having margin calls and having to scrounge for money and stuff like that. He was just bad. But it was always like in the back of my mind, like, what's he doing all day? And then it happened to be, me graduating high school happened to coincide with this incredible world-changing events and timeline of the dot-com boom, and so the world was changing. This new thing, the internet is, right, the new hot thing. And so everybody now at this point is trading internet stocks. So you will see, right, the janitor, the guy at McDonald's, everybody has internet stocks. And so that's like the talk of the town. You'll see regular people with all of a sudden these new riches. Like they had E-Trade would have like cafes in New York City where people go to trade, Everybody was a day trader because you just turn on your computer, you buy a bunch of stocks, and the next day you're up a lot of money. And so I was seeing all these people. So like I had a neighbor, Bob, and he was like the biggest jackass. He really was a jackass. I mean, and all of a sudden Bob has like a BMW with like a Yahoo ticker on it. And I'm like, whoa, like, dude, Bob is a jerk. Like, how does he have a BMW? And I come from a very middle-class background. So the BMW is like the pinnacle of middle-class lifestyle. You get a BMW 3 Series, it means you've made it. So Bob had made it. And so I became very interested in what he was doing. So I started researching all the stocks, and, I couldn't get any info from my dad because, he obviously doesn't want me into this thing that he's caught up in. And so I just started on my own, just going on and trying to figure all this stuff out. So I read a bunch of books by Warren Buffett, and I'm like, okay, I think I figured this out. And so that was it. Like I had to open, an account. And so I had like $500 laying around. And so at that time, there were all these new discount brokerages. So there was one called buy and hold trading where you could open with like $50 and you could never make real-time executions. They had 3 times a day where they would execute your trade. So it's like, the open, the middle of the day, and the end of the day. But, you could only, it was cheap. And so I opened an account with there, and I'd go on MSN Money, which was like the big hot financial site at the time. And I'd always look for ideas. And so what was his name? Gary Jubak. There was a guy with a crazy mustache on MSN Money. I always talk about different small cap stocks. And so I'd always be reading them, and they'd be like, oh, this one is growing and it's cheap, and this one's cheap, and this one's cheap. And so I just started throwing a bunch of money around. And because this is the dot-com boom, a lot of these picks started to work. And then from there, I got into tech stocks. And you throw the money around and everything works. Like, it was like this amazing thing I discovered that I was like, wow, none of my friends know. They're so stupid. They're in class right now. Like, I've got this. Why would I want to go to class? And so I would sit there and skip class, and I would be trading, and my account started to grow. So once my account got to a couple $1,000, my dad was like, hey, cool. And so my dad floated me like $1,000. And so now I had enough money to get a margin account. And so then I could really start to trade, and so I started just building it up. And I got lucky a couple times with Amazon and a couple other tech stocks, the networking stocks. And so, all of a sudden now I was over the pattern day trade rule, and I could day trade. And I just kept going and going, and I built up some cash, and then the dot-com bubble bust, and I lost all my money in just less than a week, basically. When you're holding stocks that are up so much and they all drop 10, 20, 30% in a matter of days, you're basically wiped out, because I didn't really know anything about trading. I was just throwing money at the hot stock of the day or hot stock of the week, but I didn't know anything about trading in terms of risk management, money management, position management. Those are really the key parts of trading. The stock picking is really a very small part of trading, in my personal opinion. So I didn't have any trading skills. So I lost all my money. And so I actually went through this cycle a couple different times. I took some time off, and then I started up again, and I built up my account. And I always had a knack for finding the stocks that were about to explode. That was my gift. But, my curse was I didn't know anything about trading. So as soon as I build it up, I'd lose it all. So then the telecom bust happened. I lost all my money in Global Crossing, Nortel Networks, and Lucid Technologies, which is like the three hot, like, kind of networking telecom stocks. And they all went to like under $1. And so, I blew up all my stuff again. And then I had to take some time off. And so I had this spin cycle for quite some time. I wasn't like a lot of the hotshot traders you see that like just make $1 million in their first few years. Like, I had years of this up and down, like, disappointment. And that helped me really kind of build a lot of the things that make me a really good trader now, that resiliency and, stuff like that, of being able to handle defeat. I think that was really formative. But at some point, I had to stop this spin cycle of losing. And so, at some point later on, and this is like 5 years after I started, when I was starting to really study trading on my own and try to develop myself, because at some point I realized I needed these rules and things that make a trader. I met a gentleman online, Paul Singh, who's my mentor, who actually works with me now on my website. And I used to leave comments on Paul's blog all the time about all his different setups. And I'd be like, Paul, because he's Indian. And so Indian people love trying to like get free stuff from other Indians. That's what we're all about. Indian people, they live for that. Can I get anything free from another Indian person? So I was trying to get some free stuff from Paul and hoping he'd mentor me because, I'm his brown brother. And he was not having it at all. And so I just kept leaving comments, and he was very nice. He'd, answer back, but he was just not going to give me his secret gift or whatever. So finally I said, Paul, I want you to mentor me. I'm going to pay you. And he said, really? And, he had like a little mentorship program, and I was probably one of his first students anyways. And so he said, well, okay, let's do it. And it was like this eye-opening thing because I had all these years of knowledge, but I didn't have like a system or methodology to kind of corral my knowledge into, a set system. So I kind of threw everything I knew at Paul, and he's like, wow. He's like, you know a lot about the stock market. I'm like, no, Paul, I've read 1,000 trading books, and I've made all these trades. And he's like, yeah, I see that. He goes, your problem is that you don't know anything about trading. And I'm like, what do you mean? He's like, well, you got all this knowledge. That's great. You have obviously this knack for picking stocks. That is great. But you actually know nothing about trading. And I'm like, yes, I do. I trade every day. And he's like, no, you don't. He goes, Canal, what happens when you're, when you have a profit on a stock and then it reverses on you? What do you do? Like, what's your system for them? Like, I don't know, man. I do stuff. And then he's like, and Canal, what happens like if you're into this stock and it goes up 20% the next day? Like, what do you do at the open? You wake up and it's up all this money. Like, what's your parameters? What are you going to do? I'm like, I'm going to watch this thing and do what I do. And so, he asked me all these questions, and I didn't really have any set answers for him. He goes, Canal, that is trading. The answers to those questions, that methodology, that is trading. He's like, what you got is just a bunch of random knowledge. You might as well just go on Jeopardy. And so that's where we started, was to corral what I had known and put it into a specific methodology, so that, like a cookbook, where when I see something, I know I got to do X, Y, Z, D, and when I see this, I'm going to do 1, 2, 3, 4. And when I wake up in the morning, I turn on my computer, I'm going to do 1, 2, 3, 4. And we start to systematize my knowledge to take a lot of the thinking out of, the stuff that I don't have to think about, and, start building your routines and processes and things of that nature. And, that's really how you kind of build a trader. And so that process I use to this day for my students. We dumb everything down, and we have specific things for every single thing. What do you do when you wake up? What do you do at lunchtime? What do you do at the end of the day? On Sunday nights, how do you review your results from the previous week? Everything is down so that the trader can sit there and they know exactly what they're supposed to do.
Yeah, excellent. So you would say when you were starting out, probably the biggest thing you struggled with was actually sort of knowing how to manage a trade once you were in it.
It's just having a specific methodology for the different variables that you're hit with as a trader. Like, how do you size your position? How do you know when to go in big and when to go in small? I used to just buy 1,000 shares of everything. So you have to have a very specific routine and process for how you determine how much size you're going to have in a stock. And so that's a trading thing. For me, I had very big problems with risk management all these years. I knew how to build up my account, but I didn't know how to keep it when things turned against me, because I'd lose one small trade and I'd be like, oh my gosh, I got to get my money back. And then that would turn into another loss, and it would turn into another loss. And now it would take me 3 months to build up these profits, and then you let it unravel in a few days. And so, you have like a reverse risk management there. It takes you 3 months of work, and it's gone in a couple days. Well, that's not very good. So those are the things I had to learn. And I see it with the majority of the students that I coach. I have some students, they'll win, they'll trade 50 times. They'll win 35, 40 of the times. But it's those 10 losses that make them losing traders. They're actually down on all their trades overall, even though they have a very good win ratio, because they don't know how to handle the loss and get out of it when they're supposed to get out of it, right? It snowballs. You hit with the deer in the headlights when you finally get a loss. You freeze a little bit, and then you don't have a very specific methodology to kind of get yourself out of that trouble.
Yeah, no doubt. So when you're still very much learning how to trade, there's always some uncertainty about whether you're going to maybe even make it as a trader. Was there ever a turning point that you experienced when something just sort of started to click and you knew you were onto something good here?
Sure. So all traders at some point will have these aha moments. And where that comes from is it's a matter of competence and then having repetitions behind there. So people always come to me and they say, part of my problem is I lack confidence. Well, confidence comes from competence of actually knowing what you're doing and then having that practice time and repetitions behind it. And so what I noticed is once I had the knowledge that I actually needed, the right knowledge, I needed a certain amount of screen time, a certain amount of practice time in front of the computer without blowing up my account, where now all of a sudden you have built up the repetitions and you start to have some real competence. All of a sudden you start to see things a lot more clearly. You know, every trader needs that screen time. And the problem that happens with traders is they usually blow up their accounts or they give up before that requisite screen time that each person needs before they get there. And so a big part of a new trader has to be doing whatever they can to extend their life cycle. You know, so if you have $10,000 or $20,000 or, you know, you have this much emotional capital and financial capital, you cannot deplete it till you get to that magic aha moment. So that takes thousands of repetitions. Now, the thing is, you can get those thousands of repetitions in a lot of different ways. It doesn't mean you have to make necessarily thousands of good trades, but there has to be thousands of specific things that you have to do, whether it's on a simulator, whether it's live, whether you're reviewing your trades or sharing them with somebody else. Those are all different repetitions, and you literally need thousands of that before you get to those aha moments where you start to connect them and you're really seeing things clearly. You know, it's like a small child. You ever see a small child when they're discovering new things? They have this like wonderment on their faces, like they're seeing something for the first time. And then, but all of a sudden, right, it's starting to connect. Like when they start to understand something or they get something or they do something right, you ever see that big grin on their face because it's like, wow, they just saw something and it makes sense. Traders are the same way. You know, you got to think of a trader as like, right, a small child, and they're learning something that's very difficult. So you got to have that screen time. And it's sad. It's just most people blow out before they get there. And that comes from, you know, a whole multitude of reasons. And number one, they don't even know they have to get there, right? A lot of people just open their accounts. They come in and they think they're going to make $1 million because they see other people do it. And that's not the case. They don't realize how hard it is or the process and road they're going to have to take to get there, which is often difficult.
Yeah, so how long would you say it took you to get there? So from going as an unprofitable trader to someone who's now making sort of consistent profits, how long did it take you to get there?
Years. It took years. Now, the caveat is this, that I did it by trial and error. I didn't really know what I was doing. So I had years of the trial and error, and that didn't work. But once I met Paul and I was able to put things in very specific systems and methodologies, right? You're having a veteran trader pass down his knowledge of what to do. Then it took me a year of really doing it the right way before I was like, okay, I can do this for a living. You know, I've had all these years of knowledge before that. I've been working with Paul for this last year, and I've really made the inroads. And that took, you know, a good year after I met him to make the move and say, you know what, I've got a future in this. So it's no small road. It's no small road, but it's worth it. Because you think about it, I don't know how old you are. I started this in my teens. And then if you're even in your early 20s or 30s, people live till they're 80 years old, right? 90 years old. You could be doing this for 50, 60 years. So what is, you know, spending a year or two to really nail this down? And if you think about what a good day trader makes, well, it's no different than a doctor or a lawyer. This is a job. So how long does a doctor go to school before he ever makes $1? Years. How long does a lawyer go to school before he ever makes $1? And think about the time investment they put in. It's years. And so this is no different. It's a profession. It's a job, you know, and it's going to take that type of time. Sure, you can get all the knowledge you need in a handful of months, you know, your basic course knowledge and stuff like that. But you still got to go out and practice it. And then you've got to get your screen time in and start building up your expertise. And those things take time.
Yeah, I think you said that really well. Like it's definitely helps to put things in perspective when you think of it that way. So let's talk a little bit about your sort of trading method. So how would you best describe your approach that you've adapted?
Sure. So I trade momentum stocks. You know, I'm a trend trader. So throughout my career, you know, I've tried a lot of different things. Yeah, I have tried the Warren Buffett thing, the value investing. That was the first thing I got into when I was a kid. But that didn't work. Why? Well, I can't sit on 20% returns a year like Warren Buffett because I only had $500, right? That doesn't work. Even if I had $1,000, it's not going to work, and not to mention you just kind of sitting around a lot. And I didn't find that wasn't really trading. That's more of an investing thing. But that's just what most people are subjected to when they're new because he's the most famous investor of all time. So then I tried from there. I'm like, I got to get into trading. So I tried growth investing. It didn't really work. I tried this and that. And so I tried all these different methods. And none of them suited my personality. And then I started getting into stocks. Like I read a bunch of the books of like the IBD and William O'Neill's, How to Make Money in Stocks, which is more of a trend following techniques. And that made sense to me. It vibed with, how I think and how I look at things. And so that's where I started to focus, my attention. And from there, I realized, okay, that's probably that type of trend following system is not going to be my particular thing. So I took the basis of what I liked out of it. And, I started to adapt it into my own. So now I'm a day trader, but I trade momentum stocks that are in trend and stocks that are in play. And I'll trade anything with momentum or anything that's trending, whether it's long or short.
Okay. And is there a difference between, just so we're clear, is there a difference between momentum stocks and stocks that are trending?
Yes. So, stocks that are trending, trending stocks are stocks that have been in a trend for, sometimes months to years, so on and so forth, and so I like to use those for like swing trading. Momentum trading is you'll trade anything, and it could be a trending stock that's coming out of a pattern on a swing trade basis, or it could be a stock that's in play, a stock that has some type of PR out, earnings out, and is exhibiting a momentum burst.
Okay, so in that case, are there any particular types of news and sort of PR events that you like to trade around in particular?
Yeah, so like, for example, when earnings season comes out, earnings breakouts are really the most powerful thing I have seen in trading. When you get a stock, and you always have to have a good daily chart. A good daily chart is the absolute necessity because without a bigger picture pattern, they don't work as well. So you get a really, really good daily chart. And then you get a stock that has some type of earnings surprise. A surprise is always great because what that causes people to do is you have to reevaluate the stock. When a surprise means it's out of left field. So what happens is that stock has to be reevaluated. And there's a rush of people that come into these stocks as they're trying to figure out what it all means, this earnings. And so you get this period of price discovery of people trying to figure out what that earnings mean, what that stock is worth. And so these stocks can make these explosive moves while all of this is happening. Now, the good thing is when you're trading these type of stocks, because it's got a fundamental catalyst like in earnings, you have this intensive amount of volume that comes in, that high relative volume. And because it's got that near-term catalyst, your technical patterns will work much better and much cleaner because you're marrying both. You've got that great daily chart, you've got that earnings surprise, and now the different techniques and tactics that you use to enter stocks intraday will work much cleaner, and you're going to have these stocks, they will move independent to what's going on in the market. So, for example, if you just say you go through your scans tonight, okay, I go through my scans and I find 10 stocks I like for tomorrow just based on technical patterns. Well, those technical patterns may or may not work depending on a lot of what happens with the market, right? The market takes a dump tomorrow. A lot of the stocks that you looked at for longs based on just pure technicals, they're probably going to dump with the market, right? The market takes up or down 75% of the stocks with it. That's just always going to be the case. Stocks that are in play, that have a PR or earnings breakout, they will have order flow that moves independent to the market. because they have that near-term catalyst. And so now, whether the market's up or down, it's chopping around, doesn't matter. Those stocks are going to move, and the chart patterns you trade within them are going to move a lot cleaner, and that makes these things hot.
Okay, that's really good. Thanks for really breaking that down for us, Kunal.
Are you ready to get serious about options trading? Then join Tasty Trade, Investopedia's best platform for options trading. Backtesting of if you need risk thought. If only I had the 1,000 US so you can go big. The pool offers a free limited risk trading.
So when I talk about go-to setups, guys, what I mean by this is that in trading, you have this inherent need to have a lot of knowledge. Everybody I run into, they want a lot of knowledge. They want to learn about swing trading, day trading, options, futures. They read this book, that book, and it's just this hodgepodge mess of stuff. In trading, being a generalist, having a very solid understanding of a lot of different facets of trading will not make you money. In trading, you have to be the best at something because you are fighting and playing against the smartest people in the world. To be a master of one or two things is a lot more profitable than having knowledge of 20 or 30 things. Now, when you have knowledge of a bunch of things, it makes you feel smart because when you're in a discussion with people, you can talk about anything, right? You got all this knowledge. You're the man. It makes you feel smart. It satisfies your intellectual curiosity, but it doesn't make any money. In trading, you have to be the master of one or two things. And that means that you have to know every single thing about one setup or one pattern, down to the microscopic detail. And when you can do that, at any given moment, when you see that pattern, no matter what market conditions or variables are surrounding it, you know how to extract money out of that thing. And that is very powerful because then when you wake up in the morning, you know, if I see this, I can make money. And that's a powerful thing. It will give you confidence, but it also takes a lot of the thinking out of the trading. See, trading is very emotional. Where people really lose is the mental mistakes. Well, when you have mastery over something and you down to a microscopic detail, it takes a lot of the thinking out of the trade, right? Because you've covered all your angles. You know everything about this. And so that's what I believe in, having go-to setups, And so over the years, because I've been doing this now a long time, I have a lot of setups that I have a mastery over. But for my students, I always have them focus on a couple. And then as they nail those down and make money, let's add more to it. Let's add more to it. So for me, for example, I've been talking about these PR earnings breakouts, stocks that are in play. So for example, we've been trading this stock PTBI really for the last 5-6 days, and so the stock was at $3. The stock's been sitting around for $3. Some news comes out one day that it has been, I forgot who, George Soros has made an investment into this company. So the stock gaps up 50% the next day and it to $4.50. And during that day, it runs to $7.50. So this stock has that fundamental catalyst. It had a breakout chart, and then it had huge volume come in. And so we're day trading this thing based on, that big picture thesis and the setup. Now, what will happen is as this stock runs, after a few days, if it gets so extended, we'll actually take it and short it the other way. So once it's in play, that it has a chance to really have a huge move. And then if that gets too extended, we can take it back the other way and short it. And so, we played this thing long till almost $11 back and forth as it's going. And then once it got really extended, we've been shorting this thing all the way back down, and then so on and so forth. A stock like this, once it's in play, it may be in play for a few weeks. And so, you keep it on your radar every day.
Okay, cool. No, that's really good. So still on the topic of go-to setups, is this something that you perhaps develop over time? Because I'm thinking like someone who is new to trading and still not making regular profits, how are they going to know what is the right go-to setup for them? Or like I mentioned, is this something you discover with time?
So, I mean, if you discover with time, you may not last long enough to actually get there. You know what I mean? Because you may take on too many losses trying to figure it out. It's important when you're starting to start narrowing it down. And so part of being a trader is understanding your personality and what makes you comfortable, uncomfortable. You know, like, for example, in my class, I may teach 30 setups, but some of those setups are not going to fit everybody because they have jobs or they have this. They may not be able to do certain types of things. And certain things just make certain people uncomfortable. Like counter trend trading may fit some people and it makes some people very, very nervous. You know, and so finding out your risk tolerance, what fits your personality is huge. And then there'll be setups within there that kind of fit that. And that's where you want to start honing in, because if you trade something that makes you uncomfortable, you're not going to trade it well, right? So that can't be your go-to setup. So obviously you're crossing one off the board. You know, there's going to be stuff that you just naturally vibe with. And that's where your first focus is going to start being, because people trade, you know, their personalities. You've got to find a style that fits your personality. You know, I'm a momentum person. I'm an excitable person. So trading momentum stocks fits me. You know, for other people, you know, when I talk to some of my students and they're trading these wild stocks, and I said, why'd you make this mistake or that mistake? They said, man, Cadell, the stock was moving so fast, I froze. I said, hey, that happens, but this is probably the type of stock you don't want to trade. We need to find something that's more steady for you. And it doesn't mean you're going to make less money or more money, because if you find something that you vibe with, that you can trade, you're going to make money regardless. You know, nothing in trading makes you more money or less money. There's no one setup that makes the most money. It's whatever you trade the best that's going to make you the best money.
Yeah, that's very well said. So bring this back to how you trade. Talk to us about how you protect your capital and your rules around risk management. You often speak about how you have sort of max daily losses and that type of thing. So give us some insight into how you effectively manage your risk trading.
So that's a great question. So there's a couple things that happen. You know, when I've thought about risk over over the years of my life, managing your risk, like cutting yourself off. So the common trading theme is, if you're not feeling it, walk away. If you're not feeling it, walk away. If you take X amount of losses, walk away. You know, if you're not trading well, walk away. Well, I have this inherent ego of myself that doesn't allow me to walk away. Like I don't have that kind of control. And so for years, I tried to teach myself that type of control, you know, and rehabilitate myself. But I'm just a wild man. And so it's hard to tame myself in that manner, you know. And also when I do that, it takes away my strength, which is that I'm a wild, aggressive man sometimes. And that's where I get my energy. So rather than trying to, you know, psychologically repair my brain and teach myself to walk away, you know, what I sat there and thought about was, why don't we put in a mechanical structure that just says, hey, when I start exhibiting XYZ behaviors, my platform is shut off. And so, like, for me, I put a max loss on my trading account. So, like, I know, like, okay, if I lose $2,000 in a day, that's not a big deal to me. You know, that's just that's the price you pay to be a trader. You know, and so $3,000, $4,000, whatever it may be. So if I'm just in my normal mode, for example, you know, my max loss is $2,000. So what happens as soon as I hit $2,000 in loss, you know, there's basically a countdown for me to liquidate my positions or get under $2,000. And if I stay over, then I just can't trade the rest of the day, because there's very rarely am I going to go. So I have hard statistics that say when I'm down 2,000 and I keep trading, it's just going to go to 3. and then it's going to go to 4. It just gets worse and worse. Maybe 1 out of 10 times I'll make the comeback. I'm just that type of trader. So it's better to just cut myself off and come back fresh the next day. And so I put in this type of mechanical loss to keep myself out of trouble, because that's how I lost all my accounts when I was a new trader as, a young man, which is I'd build up my account and then I'd lose it all in a few days. So I have that risk management problem, right? I did that for years. I build up my account and I lose it in a few days. So instead, why not say, okay, I have $100,000 or $50,000. I'm going to give myself a max loss. And so if I lose, I'm going to lose 1/10 of, if I max loss, I'm going to lose 1/20th of my account or 1/50th of my account or whatever you want it to be. But that gives you the opportunity to fight another day. And that's the name of the game, because you're not going to lose 50 days in a row or 30 days in a row. I mean, if you do, you probably deserve to lose your account. That's not likely for a professional trader. You're going to lose once a week or twice a week. And so that once or twice you lose, you want to make sure that it's just a drop in the bucket compared to what your normal profits are.
Okay, awesome. So let's say you crush it. You have a good profit on your side within the first few hours of the morning. How do you treat this to ensure you don't wind up donating your gains back to the market? Do you knock off at lunchtime and cut the day short, or what do you do here? How do you play this?
So there's a couple different parameters of thought in something like this. Most people will just say walk away. Just say just leave for the day. You had a good day, so you don't give it back. I'm not under the belief that that's the case, because if you're actually seeing the market well, those are the days you want to push it. You want to push it as long as you're seeing the market well and you're not just starting to gamble. You're actually doing good trades. It's not over trading if you're winning, right? It's over trading when you're trading your P&L, you're making gamble trades, you're trying to win your money back. But when you're winning and taking sound setups, it ain't over trading if you're winning. So you got to keep going. Now, the problem is, at some point, the human brain can only make so many good decisions. What will happen is, as you're winning, if you lose once, you may shrug it off. If you lose twice, now all of a sudden you're going to want to get back to where you were. So if you had 5,000 profit and you lost 1,000, it's going to feel like you're losing for the day, even though you're up 4,000 mentally. You're going to want to get back to the 5. You're going to sit there and say, oh my gosh, I'm a good person. I'm not a gambler. If I can just get back to 5, I'll stop trading. So there's what we do is we have a give back rule. So like for me, say I'm at $2,000 in gain. If I give back half my gains, I'm automatically cut off. That way I have some leeway to keep pushing it if I'm actually seeing the market well. But if it does turn and I get in that slippery slope of starting to try to make my money back because I had a couple losses, I'm just out flat when I give back 50%.
Right, that makes sense. So let's flip this to sort of the opposite end of the spectrum. Let's say you miss a few trades that you intended to get on sort of earlier in the day and they run away from you, you miss out. What's going on in your head when this happens, and what conscious decisions are you making to ensure you sort of don't do anything irrational? Because this one thing can really sort of mess you up alone. You know, that fear of missing out.
You talk about the FOMO. Okay, so I do experience FOMO a lot too. And everybody does. Because if you do your homework every day and you actually miss out on some plays, I mean, you feel like crap because, you just did all this homework and you missed the easy play. But you've seen everybody else make money and you're not making money, and that sucks too. So like for me, the fear of missing out is actually more powerful than even taking losses. I don't mind losing $1,000 or $2,000, but I hate seeing stocks just explode without me even in them. It's a recipe for disaster. So, we have just a thing that we always say in the chat room, you chase, you die. So when you get FOMO and you just buy, right? I always have the mantra, you chase, you die, you chase, you die. We always just say it. And so you just kind of have to condition yourself. Like, that if you chase it, you're dead man. Now, the thing that you have to remember with momentum stocks and stocks that explode, they will always give you multiple entries during the day. So just because you missed the first entry doesn't mean anything, because that first entry, that first explosion, at least it got it on the radar for you. Now, the secondary plays will often have less risk and be easier to define and have just as much upside. And so you have to condition your brain to understand, like, hey, I may have missed it, but that doesn't matter because now it's on my radar. And I'm going to, when I get that low risk, high probability entry, the secondary play can be just as powerful as the first one. And the third or fourth ones may be just as powerful too. And if not, like I know with real momentum stocks, when you get the super hot ones, there's always that 1 or 2 p.m. breakout, towards the end of the day too. So I may miss all the setups that it has in the morning, but I'll be watching it for that 2 p.m. breakout. So you got to condition your mind. Okay, I miss one. There will be a next one. We always say on to the next one, on to the next one. And that's so true because that stock will give you more opportunities. The market is a opportunity generating mechanism. It will give you endless amounts of opportunity in the week. You just got to go out and get a few of them and you have made some serious money. So you miss one, so what? No big deal. On to the next one. Each stock is going to give you multiple entries throughout the day.
Yeah, on to the next one. I like it. It's so true as well. This here, I know it's a big one for you, and that is having a true passion for trading. But even more than that, having the right motivations to actually trade in the beginning. But do you mind explaining why it is totally crucial to have a passion for trading? And maybe if you could share with us an example of what the right and wrong motivations to trade could be?
Sure. So they have a saying, right? Skills are cheap, passion is priceless. Skills are cheap, passion is priceless. If you're going to get into anything for the money, there's a good shot that you won't be there at the end to get through the trials and tribulations. To be truly great, there is a cost. As people, we were put here to be great. We were put here to be successful. Everybody has it in them, but it comes at a cost. And so if you don't have the passion for this, you will not be there for the ups and downs, the account blow-ups, the amount of screen time you need to put in, the homework, the barking crazy Indian teacher telling you that you're doing everything wrong. You're not going to be able to withstand that, okay? Because if you don't have the passion, you're going to give up at the first sign of trouble. In trading, in business, in anything, to be the best, there's a long, rocky road. And so you got to have the passion for it because you're just not going to be there if you don't. So I always tell my students, in class, I teach them about not just stocks, but about business and being the best you can, because guess what? It may not be this where you make your money, but everybody has a talent. We were meant to be great. We were meant to be special. Everybody has a talent, and you got to go out and find it. Aaron, you can make $1 million doing almost anything, right? People are inventing shit all the time. People are doing stuff all the time. You can make great money doing almost anything, but you have to be one of the best at it. And so the only way you're going to get there is your passion. So don't do trading for the money, because if you want to make money, there are millions of things you can do. You got to find out what you're good at, where your passion is, and that's where you're going to make the money, and you're going to enjoy it and be able to actually make it past that rocky road, because nobody becomes rich in 1 or 2 years. It's a misnomer. People are lying to you when they say it. It takes years and years and years before you really make big, big money. And so how can you do something for that many years if you're miserable? It's probably not going to happen. There's something out there for you, and you got to find it and then become the best at it. But to be the best, takes a lot of work, and it comes at a cost, right? To be great always comes at a cost. You know, you look at somebody like me, I've worked so hard for so long, but you can't date. You can't do stuff. You're going to miss weddings and birthday parties and Friday nights outs and date nights and all of these things because you're in the lab and you're working and you're grinding and you're pushing, and it comes at a cost. Of course, at the end of the day, it's all worth it. But for many of years, right, you're always wondering, like, holy crap, did I just give up all my 20s working? Well, I did, but it was worth it. But it was because I had the passion to do this. I've always wanted to do this. This was my dream. You know, I had a desk job. So because I was so bad at trading for so many years, you know, I had to get a desk job. And I was working, and then I was studying at night, and then trading and juggling my job and all of this stuff. And this was all I wanted to do. This was my passion. And I was obsessed with it. I had to do it. But I don't think that would have happened if I wanted to make money, inventing something or doing something else. I just wouldn't have been able to pull it off because the hours were too long and the cost was too great.
Yeah, that's very well said. I appreciate you sort of really going into that, Kunal. From what you've seen teaching others how to trade, what would you say are some of the key characteristic traits that are common amongst the ones who are most successful, sort of beyond the fact that they've obviously got passion for it and they're trading for the right motivations?
So the thing that I've noticed from the really, really successful students is the resiliency. So I look at like some of my best traders like Skip Rick and Mary Beth and Chris Zielinski and some of these guys, and they're all, and because I know them personally, they're all actually of very different levels of intellect in terms of, you know, Chris is like very, very smart, analytical. Mary Beth is not like that, but she's very smart with her intuition. She's got a high emotional IQ. Chris has a high IQ. Skip Rick is just a genius. You know, there's all this different stuff. And so I think that the intellect is probably, it doesn't matter. You have to have a base level of intellect to be a trader, but, you know, anything above there is just icing on the cake. It's not needed. You know, the resiliency is what it really comes down to, because all of them, when they start, they're going to be really, really excited. So like I have a class starting in a couple weeks. There's going to be 50 students, 100 students. They're all going to be really, really pumped because they just spent some money. They see me and they're going to think I'm going to take this class and make a bunch of money. Now what happens is as class starts, I'm telling them how hard it is and I'm giving them all this information. They're going to be like, oh shit, this is going to be fucking hard. And so now all of a sudden, to see some people drop off once they realize it's not an icing in the cake. Then what's going to happen is you get this subset of people that kind of make it through class. They do their homework, their quizzes, whatever, and they're going to now try to do this. And they're taking their book knowledge and for the first time. Everybody's a hot mess those few weeks. Nobody's good. Doing something totally different than going class at night. They're all going to stay. And so do you get better every day, or do you kind of get frustrated and give up? And so then simulating will tell you whether you understand trading strategy and can see the patterns. But trading means you have to take that, but then you have the emotional part of, you know, having your hopes and dreams and your hard-earned money on the line. It's a whole different thing. Well, when you start off trading, whether you start off good or bad, at some point that first trading account, you're going to go into some really dark places, some real big slumps. Everybody goes through it. So how do you handle that? How do you make the comeback? You know, the guys that I've seen, they're very, very resilient. They blow up their accounts. Mary Beth took $10,000, turned it into $50,000. She got to $80,000. She got stuck in a halt. One of the stocks she was in, she got stuck in a halt. She lost half her account. Then she did some stuff. She lost some whole money. she blew up one of her accounts. So, she was just at the pinnacle. I mean, for a young woman to have so much money and it all be gone is a very difficult thing to stomach, because you're thinking, oh my gosh, I just blew all this money. There's so many emotions that come into play. So what happens, right? Can you pick yourself off the table? A lot of people just give up. And so having that resiliency is really, really important. And even on your day-to-day basis, we have statistics that we track at our hedge fund that usually when people lose their first 2 or 3 trades in the morning, it always ends up being an endless cycle. They lose the rest of the day. Very few people can lose in the morning. Like today, I made $5,000. My first 4 trades were duds. But I'm a resilient person. I didn't let it shake me. I kept doing the exact same thing that I needed to do, making the right moves and the right decisions, knowing that the numbers would turn out for me in the end. And if they don't, so what? That's where it really comes in, is that people will give up before they really make it. And it's a sad thing to see, and it happens all the time. Some of the people that have so much talent, when they realize how tough it's going to be, or they've been knocked down a couple times, they just can't lift themselves off the ground. They think they can, right? Everybody likes to think they can. Everybody thinks of themselves as a winner. Everybody thinks of themselves as a hard worker. Everybody thinks of themselves as tough. But when it really comes down to it, can you actually do it? You find out that very few people are like that. But the ones that make it, they're very resilient, because they're all going to go, all traders are going to be faced with either blowing up their account or getting damn well close, and they've got a decision to make. Do I change? Do I get better? Do I reach out for help and make something happen? Or do I give up and stay the same? Do I stay who I am and keep making the same mistakes? You find that most people take the easy road.
Yeah, that's on point. So as traders, I mean, we all know that we are never ever going to be right all the time, but we need to be mindful not to use that as a cop-out also, and actually recognize that we do make bad decisions from time to time. So what are some of the main reasons that you find lead us into making bad decisions?
So that comes from a few different things. I learned this from Dr. Andrew Miniker, who's a trading psychologist. He's done some work for some of our students in our classes, some webinars. And he told me something when I was talking to him. He said, at some point you're going to know everything there is to know about chart patterns, and it's going to mean nothing. I said, whoa, what do you mean? That's what I teach. He said, Canal, when you step up to the plate, he's like, you are not trading chart patterns. You are trading your hopes and dreams, right? The stock market can give you that, and that's what you're trading. And so when you put it like that, it becomes a very, very difficult thing, because you're not just seeing a stock, right? You are seeing your hopes and dreams, your future. People want to take care of their kids and their families and do good things. People are inherently like that. And so when you start trading your hopes and dreams, things can fall apart, and it becomes very, very tough. And that's where a lot of people get into a big mess. As traders, Aaron, our biggest advantage against the computers and the funds and everybody is, as retail traders, we have the ability and the opportunity to be opportunistic. We only need so many good trades in a week or a day, right? We have the ability to be opportunistic and wait for that perfect moment. We don't always have to be in the market. We don't have to do anything. But when you lose that ability to be opportunistic, because you need the market to do something, because you got to pay your rent, or you got to pay for your kid's thing, or you got to do this. As soon as you need the market or the stock to do something, and you're forcing yourself on it, then you've lost that ability and opportunity to be opportunistic, to lie in the weeds and wait for the right moment. And that's when it all falls apart. That's when it becomes huge. So in the beginning, if you think you're just going to trade for income, it's going to be too hard, right? It's always best to learn trading while you have your job, because if you're doing this and you got to make your mortgage payment the next day and you need a stock to do something, it's never going to do it.
Yeah, that's awesome. So everything we've discussed so far has pretty much been based around what goes on inside of sort of market hours. Let's talk about after hours for a minute, because trading can be pretty intense and requires a ton of focus. I mean, especially if you're trading intraday. So I'm keen to know, is there anything you do outside of market hours to sort of recollect yourself, de-stress, and make sure you're, good and ready for the following day?
For me, I'm always working. So, I mean, this is a 24/7 thing. As traders, the one thing you probably all have to do, almost every good trader is in pretty good shape. You very these days see any fatty traders. So you're going to have to go out and that's for sure. But, after that, you're back to the grind. This is a full-time job. It's no different than anything else. You can only de-stress so much. For me, I'm always by the beach. I find that, being by the ocean. So I vacation at the beach, of ocean. And you know what? It will manifest in your trading. So that's what you have to work on. So for example, Aaron, if you're an anxious person in general, you're going to be an anxious trader. And if you were a habitually late person, that will show up in your trading. And so all those things that are happening, if you have money problems, girl problems, whatever, those type of things, they manifest in your trading. So oftentimes, if you're finding that you have certain things that keep showing up in your trading, you got to go straight to the root of that and carve that out before you can really fix what's going on in your trading. So always remember that when you're thinking about recharging and you're looking at your trades and say, boy, I really fucked up today, you got to go back to the real root of the problem. Very rarely is it because of trading strategy. Everybody knows how to draw a silly flag pattern. I mean, right? Everybody knows what it looks like. Everybody knows what to do. Yet, maybe 1% of people trade them successfully.
Yeah, that's such a valid point. So thanks for bringing that up, Kunal. And again, this has been awesome and really incredible. So thank you so much for coming on. I really appreciate all your answers and going into so much detail. It's been really good.
My man, thank you for having me. Appreciate it.
No, my pleasure. So before you go, do you want to share with listeners where they can connect with you and find out more about Bulls on Wall Street?
You bet. So I'm the CEO, head janitor of bullsonwallstreet.com. I've had this website since 2008. We run trading boot camps every other month. I have a 60-day class, that takes people from A to Z. We have 1 month of coursework. Then we put our students on simulators, homework, quizzes. We have them do business plans, the works. It's a 360-degree program. My personal belief, after seeing and talking to thousands of traders, over my career, you cannot learn trading from a 2-day seminar or some DVDs. You need a mentor, a coach, a community. We put all our students in a community where they work together. You need all of that to really give yourself a shot. And even then, trading's a tough thing. The odds are stacked against you because of many of the things that we talked about today. But having that type of program is your best shot to really take in everything you need to, including the support and mentorship that you need.
Okay, so that's bullsonwallstreet.com, and you're on Twitter?
Yes, Kunal00, Kunal00.
Sweet. All right, we'll put those links in the show notes. And again, Kunal, absolute pleasure speaking with you. Take care, man, and let's talk soon.
My man, take care.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
What would your trading look like if capital wasn't the constraint? That's the reality for most traders. It's not freedom, strategy selector, and more fees still are NFA and S.
You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Hey there, what's up? Welcome to episode 21 with a very special guest, Adam Grimes. Adam is author of the very popular book titled The Art and Science of Technical Analysis, which covers market structure, price action, and trading strategies. He is also the Chief Investment Officer of Waverly Advisors and host of the Market Life podcast. Adam's career dates back almost 20 years. During that time, he has traded a wide range of asset classes, both independently and alongside a well-respected prop firm. Plus, he also did a stint on the New York Mercantile Exchange. Over the next hour or so, Adam shares his interesting outlook on the market and many aspects of trading. So as you can imagine, this includes plenty of discussion around technical analysis, but you'll also pick up a number of great psychology tips to help you with the mental aspect. Enjoy, team. Here's this week's guest, Adam Grimes. Adam, what's up? How you going, man?
Doing pretty well. How are you doing?
I am doing very well. Thanks so much for coming on. How's your week been trading?
Fantastic. It's been a interesting week to see the markets pushing up against the highs. I think there's a lot of hidden strength, but one of the principles of markets is they tend to do whatever will hurt the greatest number of people. And I think there's probably a lot of the quote weekend longs here, the weekend bulls that could set up a pretty good shakeout market. So really interested to see what happens over the next week and a half or so.
Yeah, I think that will be interesting and very true as well. So, I mean, again, thanks so much for coming on. It's an honor to be speaking with you, and it's, really great to have you here. So I'd like to kick this off by asking you, where did it all start for you? So take us back, I think it's like nearly 20 years, and share with us how you got into trading, and I'm also keen to hear what you were doing before this point in time too.
Well, I literally had no clue or knowledge about financial markets. I think it would be difficult for somebody to start with less knowledge than I had. I was a musician, and I had just graduated from college with a degree in classical music composition. I was a pianist and composer, and I had always, part of the formal education of a musician was really the discipline with the work on the art. And I was very accustomed to working for long periods of time on things that required a lot of detail. I'd sit for 8 hours a day and work, but that's not how I thought trading would be. I got this thing in the mail with a crazy guy in a cowboy hat that had a really good ad and send off for a few $100s. He's going to tell you how to open a trading account with $2,000 and basically corner the cattle or soybean market by pyramiding into trends and turn your $2,000 into $1 million. And I knew that was some marketing BS. And I knew that wasn't really possible, but I also, it was good marketing, and I thought there was probably a seed of truth in that. So I sent off for his course, and I studied, and I learned the magical patterns, and called in. This was the days of dial-up modems, and there was no internet to speak of. It was still a little bit more of a infantile stage, I guess might be the word. So you would call into the hotline, and an answering machine would pick up, and a tape recorder would play back a message. There was no emails. So armed with this, I opened a small account and promptly lost it in like 2 trades, and repeated that process a few times. And then really, I suppose that's the point where most people would have said, okay, my get-rich-quick scheme didn't work now. Move on. But something about the process really fascinated me, and about seeing the patterns in markets. And I dug deeper, learned more, and realized that it was going to be a lot harder, and started day trading. And I was fortunate and day trading was a little bit different back then, but I was fortunate to be day trading the British pound during the Asian financial crisis. And that worked out pretty well. It was good times. Along the way, I realized there was a lot going on that I didn't understand, and that I just didn't have the analytical tools, analytical mindset. As a kid, I was really into science and math, and